This is easily one of the craziest things in the trading space right now. This thing took me forever to create, but I made sure to add as much as I humanly possibly could to this thing to literally take you from what the heck do I do, like to what the heck do I do with all this money now that I made money trading futures. Like this thing is, I jam-packed this thing with so much stuff. It's not even funny. Like I literally just finished recording a couple extra videos and stuff to add to this. But yeah, so I'm pretty much done. This is gonna be like, this intro part is gonna be super raw. I'm just gonna get this out the way because I know there's some people that literally need to, kind of see this and say like, who the heck is this guy? What does he do? Blah, blah, blah. So I'm gonna get this out the way, right? So if you don't know who I am, my name is ceoashon. And I'm on track to do over 100K this year trading futures, specifically in personal profit in 2026 at 23 years old. And the year just started, right? So sorry if this is shallow, but this is what society values. So I just got to get this out the way. Bear with me. So you understand that, I'm not talking nonsense and stuff like that. And I've actually done this. I'm going to show people kind of just my life story and basically what I've done. I started trading at 17 years old in high school during, 2021, 2020, during COVID and stuff like that. So, didn't have school. I was online. I was inside pretty much all day. So we cheated on assignments, got work done. And I was like, okay, I'm about to graduate and I need to make some money. And my parents, they have 2 master's degrees, and they wanted me to go to college. They was like, you need to go to college. You need to do this. And I was like, so I had to figure out something else to do. Stumbled across the different business models that I was going through: wholesaling, real estate, e-commerce, just a whole bunch of stuff. And then I found trading and I was like, let me try this. This is something that I don't need a buyer or a seller. Like I need to do like a whole shop and stuff like that. This is a skill that I can learn. So I learned that. I made enough money from trading to straight up move down to Atlanta. I said 18 weeks, but I meant to actually say 18 days after graduating high school, because literally I graduated high school in June. I was down here in Atlanta in July, right? I think I was immediately down there. When I got to Atlanta, I was having a ball, right? I went on side quests. I did my first speaking engagement at 18, traveled just about every single month, started teaching people how to trade and hit their first, $10,000 and $100,000 from trading. Started a podcast that was on the Social Group Network. I stopped doing that to focus on trading again because I was just doing stuff. Not even gonna lie to you, I was doing everything. I locked in with my mentor, Wall Street Trapper. He definitely helped me with the fundamental aspect and like investing and stuff like that, to help build, with him and showing people how to get, free, obviously with the market. And now I'm focused on democratizing trading education so that you can make your first $10,000 from the market without having to pay anybody $1. Right? I genuinely believe you can do that if you have the right information and the right amount of information. That's why I literally put together this whole freaking thing. Like like literally once you go through this, there's literally no reason that you can't succeed. There's literally no reason. And again, I'm not the guy to flash Rolexes and Lambos and stuff like that. I take pride more so in fulfillment, like helping other people and stuff like that winning this game. So if that's not what you're looking for and stuff, I'm sorry to disappoint you. This video is going to print money for you though if you're a beginning trader, you're like brand new, or if you're an active trader, like you're a trader and you want a simple thing, like you want to trade a simple way, and you don't want to make stupid money doing it. You don't want to be overwhelmed and stuff like that, right? So this is where the real money is made. So again, I want to preference this before I even get started with anything. So if you didn't know, I do sell my own premium value coaching program. I teach people exactly what I'm about to teach you in this video, and I break it down to 4 steps. Obviously, I can't necessarily handhold you and stuff like that with the video, but I provide literally as much value as possible. I actually I hope they're going to be okay with this. I took some of the mentorship classes, and I actually added it to this video. So I already know you're going to get value from it, hands down. But the 4 steps that I'm going to take you through in this video is literally teach you how to learn how to trade futures, learn the trading system that I use, and then how to customize it to you. Use that system to make your first few thousand and then scale that capital to 6 and 7 figures based on where you are, right? So your options are pretty simple. You have 2 options, and I had to go through the same exact thing myself, right? Spend hours pouring through YouTube videos in order to figure out your strategy, and then spend time perfecting it enough for you to be consistent with it and profitable. and then spend years building up your trading account and the emotional ability not to blow your account and lose the money over and over, or you partner with somebody that kind of helps you build out a strategy for yourself and a plan for that trading system, right? So the answer was obvious for me. I rented out with option B. I thugged it out and I tried to do it myself, but I also had a luxury that most people didn't have. I was 17, turning 18. I was inside during COVID. We didn't have school. So I literally spent hours, literally all day inside. Literally, I would spend literally 8 to 12 hours a day studying all week. Now, that's a blessing in disguise for me because I got to learn and spend a whole bunch of time binge watching and figuring out what works and what doesn't work. But I know that everybody doesn't have that leisure. So again, if you have the ability to do that, go right ahead, literally spend the time to do that. But I decided, I was like, yeah, I'm trying to get to that next level and I don't want to spend another few years to try to figure that out. So that's what I did. But I literally spent the last 43 days. I calculated literally from today is the 8th that I am recording this part specifically right here. This basically took me 43 days. Right? Just to create all this stuff. And I genuinely believe like this is the biggest opportunity in internet money right now, trading futures. Like literally like I spared no expense like putting this thing together for you guys. I'm telling you, like this thing is going to get y'all right. I'm telling you, right? So I'm putting this out for free because when you make your first, I'm gonna be completely honest. When you make your first $1,000, $5,000, $10,000, you'll most likely come back to me so I can help you get to $100,000 or even get to that $1 million point. I'm not gonna say $1 million point because I haven't hit that yet, but I can definitely hit you, like 6 figures, you know what I'm saying? So that's honestly genuinely why I'm doing it because it's like I can literally give this away for free that people will literally charge thousands of dollars for in a course that you gotta pay for and stuff like that. It's like, I'm just gonna give this away for you for free, right? So a super quick breakdown of who I am and what I do so you know I'm qualified to be making this video. I help traders trade futures. And the strategy that I use is TheStrat, so I'll show you how to do that with TheStrat in a simple way that fits your personality and your profile so that you can be profitable. That's basically what I do. And I work with traders who already understand the market and how much they can make from it, but they don't have the structure yet to make it. So literally all I have to do is trade the right asset with the right system in order for me to scale up. And that's literally what I've done so far. And then that's what I show people pretty much how to do. I've been in the trading space for, again, 5 years. I started with swing trading options and stuff like that. As you can see, October 18th, 2022. I was trading options at that point when I had first got it started. I also learned how to, consistently hit 4-figure days and stuff like that in both markets. And now my goal is to help 1,000 people make $10,000 from trading. And I believe that I can do that from this video. So I've already helped a lot of people do that already. So literally just a week ago, another student of mine just got her third payout this year. And I can actually skip back literally like 4 years ago. My friend Alyssa, this was in 2022. She made $1,000 in a day. I think we were on vacation. I think we were in Miami at this point. I think, if I'm not mistaken, I gotta check. We were in Miami at this point. She made $1,100 on that trip. This is my girl Spin. She was able to make $1,100 trading. I think this was what, Tesla? Yeah, that was Tesla. So at that point, 2 years ago, I was still showing people how to do options and stuff like that too. And I still do a little bit, but futures is the way. You know what I'm saying? My guy Josh, he was able to make $1,250 profit in a day overall. He's happy with the day, definitely feel more comfortable in the market, actually more happy on this than the normal 1,500 because I understood the strategy better and everything was pretty much flowing all day. So this was about roughly a year ago, 2024, September. 8 months ago, my guy Chef Boy Artist, he hit $3,700 this week. Literally, and this is so crazy. 2 months ago, my girl LaShawn, she was able to get 7 payouts from, I think, one broker, literally, from one prop firm, which was Top Step. 6 weeks after that, she literally hit a $10,000 day, which was insane. It was crazy. And then my guy London, he got a $1,800 payout literally just 2 weeks ago. And then literally a week ago, another one of my students, she got her third payout this year, which was literally $1,100. And this was about a week ago, right? So, and I have some other ones over here. So last year in 2025, my mentee's profits generated. I put some of them over here. So I showed the one earlier down there, LaShawn, she got her 7 payouts, her $10,000 trade. Another student, $4,900 payout. Another student, $700 payout. Another student, $846 payout. This was Shine again. She was cooking up $1,600, $670, $1,500, $1,400, $3,900, $10,000. Again, she was going crazy. $4,500. Everybody was making $1,000. We were live trading. Everybody was making $1,000. $4,500. I got Delu Pass's account. My guy Kevin got a $50,000 account funded. My girl Maya made $1,700. My sis also got a payout as well. And another student also was getting payouts and stuff like that as well. Another student took $1,100 payout, and another one took a $4,900 pay. Honestly, and I literally put this here because I was like, I'm not reading through all this stuff, but I was like, you know what? Why not? To be transparent, I didn't feel like posting every single testimonial and student result, because if you want to see most of them, you can just check out my highlights. Go to my Instagram, go to like the highlight section and stuff like that, and then you just click through these. Like I was at Traffic Tuesday, and one of my students made $4,400 trading silver. I think I did. Was that me? But that was me. I think I posted that in the group for us to take and stuff like that. And then we were trading and stuff like that, and then you can check just all these. But yeah, so this was a lot. Not gonna lie. This is a lot of stuff. But yeah, you get the idea. So that's, I guess, enough about me. This entire process and trading model is broken up into two parts. So the first one is basically hitting your first win, and then the next one is hitting your first $100,000 from trading. So I kind of put it as like, getting your first win and then literally just getting wealthy with futures. So that's the goal of each of these parts. And then literally here's a quick overview of each part that I'm going to talk about. So this one is just like kind of intro to myself and like what you can basically do when it comes to trading and stuff like that. I'm going to talk about what to trade in this section. I'm going to go over futures 101 in this section. This section, I'm going to talk about the account pathways that you can basically take, like personal account route versus prop firms. I'm going to talk about platform setup and just trading and just literally taking and entering and exiting trades in this section. This section, I'm talking about understanding the chart so you can understand like just the candlesticks and the charts in general and stuff like that. This one, I'm breaking down my strategy and how I trade it and stuff like that. This section, I talk about trading archetypes. So I understand that most traders are different and nobody's completely the same. For example, you might not want to be on like a 15-second time frame taking trades, but you might be more comfortable on a 5-minute or something like that, right? Therefore, every trader is not the same. Some traders like to do that. Some traders don't. So I created a system for identifying what type of trader that you are. I actually have an assessment and stuff like that too, which I can't wait to get into. And I actually gave it to you inside of the thing as well. And I never really give that away, but I was like, I'm gonna put it in there as well. So you'll be able to know what type of trader you are, how to construct the strategy, how to validate and test out the strategy and stuff like that, and then how to take that and then get your first win. After you get your first win, I show you how to reinvest that, to scale up funded accounts, and like how to basically make like a few $1,000s and stuff like that, trading those, how to take that capital and compound your own personal account, the growing pains and issues that come with actually scaling your account and how to navigate those in a systematic way, not on some BS way like cut your losses and stuff like that. Like, bro, I'm so tired of that stuff. Taxes and preservation, like literally, I mean, when you make money, you don't need to pay taxes, so I cover that as well. And then also long-term freedom, like basically how to leverage futures to really build the life that you truly want. So I cover all of this, and I don't know how long this video is going to be. I just know this video is going to be hours long. I don't know how long, but it's going to be hours and hours long. If you want to access this entire Miro, I'm going to put it in the description. So literally, it'll just be a link to this entire board, so you can just access this whole entire thing. I'll make sure to put it in there. This is not one of those courses where I kind of compile, like where people like you just compile a whole bunch of old videos and stuff like that. This is literally all fresh right now, new information. Like some of these literally mentorship calls that I had added into here literally happened within the past month, or literally the past, I think like at this point, by the time I'm posting this, probably in the past 2 weeks or 3 weeks. And I literally took that to then upload that into this thing. So literally this stuff is fresh. And I split up each section of this video so it's easy to follow. I don't recommend skipping over parts and stuff like that you think you already know, because I drop sauce in every single part. So again, make sure you just don't skip around and stuff like that, unless you feel like you've already, like you already have your account set up, for example, or you're a little farther ahead and you're more so just trying to learn the strategy portion. But I'm gonna put the timestamps and stuff like that in the description of the video for you, talking about each individual part that I'm going to be covering and stuff like that. But I have no doubt that this will probably be the best information that you've ever gotten when it came to trading futures and stuff like that. I literally lay it out with like what the heck are futures all the way to what the heck do I do with all this money now that I've made it. I literally cover everything from A to Z. I guarantee, like, this is literally everything you need to start from zero and take all of that and then build yourself up as a trader. I can confidently say that. I usually don't guarantee anything, but that's the one thing that I can do guarantee because of the information and how I structured it inside of this. I know that you're gonna get a lot of value from it. So I can't wait to see you in there. Pray that you get a lot of value from this thing. And then, yeah, let's get into it. All right, so one of the things that I want to talk about first is why I believe that futures is the best asset to trade. So this part in the beginning is more so if you've already traded before, then you'll know kind of what I'm talking about. If you're kind of new and you haven't traded any of these before, then just hold up. For everybody that has traded either futures, options, Forex, or crypto, then this will make a little bit more sense. So which trading vehicle is the best? I made a diagram basically showing kind of like the table showing the different categories of the different things we have to factor in when it comes to trading in general. So one of the big things that I've seen just from multiple, I've like worked with multiple students and stuff like that, and a lot of them say that one of the issues was the PDT rule. So if you trade options, you know what this is, right? PDT stands for pattern day trader rule, right? Pattern day trading rule. So this basically means that you can't trade more than 3 times in the matter of 5 days, if I'm not mistaken. That's how it used to be. So if I took 3 trades, for example, within a 5-day period, you would get basically flagged if you had your account set up as a margin account. Meaning if I have, let's just say, for example, I have $1,000, right? I can spend $500 to get into a trade, and then let's say I made $100 on that trade. So I'll get back the 500 that I just had plus the $100 in profit. Now I'll have like $1,100, right, in profit in my account. And I'll be immediately able to trade that because I'm immediately getting the money back. When it comes to, if you don't have PDT, right, then you have to, let's say I had $1,000 in my account, I'll spend $500 on a trade, but then I won't be able to trade the rest of that. Like, let's say I make a profit or loss or whatever, I won't be able to trade the rest of that until tomorrow. So I only have $500 quote unquote left for the day that I can use to enter and exit a trade. So this limitation typically happens on options, not necessarily Forex and crypto, but this definitely happens for sure on options, right? So that PDT rule is definitely a big issue when it comes to for options traders and stuff like that, because it limits how many trades you can take, right? So it limits your opportunity to make money and different things like that, and it becomes like a big issue. When it comes to profit structure, right? It's also much simpler to trade futures. Again, it's fixed. There's no, so like for options, you have to think about the strike price and then the IV, like implied volatility, and then time decay and the Greeks and all this stuff. And it's like you have to think about all that, right? And then for Forex, you have to think about lot sizing and calculating that. You got to get the Forex calculator to calculate all that. And then I think crypto is the same thing. It's like futures, and you'll see this in a second, like futures is much easier to calculate. This moves strictly off of direction. So again, with options, you have to think about the volatility, time, and you have to be right on the direction in order to make money. For Forex, it's based on the strength of the currency and like how that moves and stuff like that. And then crypto is very similar, it's based on price, but then we might have huge swings up and down and stuff like that because depending on what crypto you're trading, it can be very, very speculative. So it's very dangerous to trade if you're a beginner, right? So regulation, this is simply just safety. Futures is safe. Like options is, safe and stuff like that too. You can have a regulated broker and it's safe to trade with. But yeah, futures is really good for that. And then tax-wise, you get treated as a 60, there's a 60-40 taxes on the money that you make. And I'm not gonna get into this stuff now, but you literally keep more money when you trade futures, and it's easier to trade, and it gives you more opportunities and stuff like that to trade. So now, to simplify this for everybody that, you might not be trading and stuff like that, PDT rule, you don't have any of that, right? Options, this is bad. Pricing, it's standardized. So like, for example, I'll show you what I mean. But in terms of how much you can make, lose, how much it costs to get into a trade, that is just standardized, right? That doesn't change, it doesn't fluctuate and stuff like that. It's rigid. So because it's rigid, it's easier for you to calculate and stuff like that. If I tell you I have let's say I tell you I have 4 quarters, you know that equals $1. You know that each quarter represents 25 cents. That doesn't change, it's standardized. Complexity, very, very low. Right? When it comes to regulation, it's strong. Taxes are just great, right? So there's a lot of strong points when it comes to trading futures. And one of these is why you might be here, right? But what futures allow you to do, again, no PDT rule. With futures, you can day trade multiple times per day. And there's no like $25,000 minimum that you need to have in your account. Because if you have the PDT rule restriction, you need at least $25,000 in your account to be able to trade multiple times per day. With futures, there isn't any of that. You can literally, so in simpler terms, you can trade all day with no restrictions. Now, granted, you still gotta be disciplined, but it gives you that opportunity nonetheless when you actually learn how to trade it. Profit calculation is also much simpler. So futures is much more straightforward with calculating profit when it comes to trading, and it's simple enough for beginners, right? It's literally pretty much 2 things, right? It's point value, and then it's contracts. So again, how much do you make per point? How many contracts do you have? So I'm about to get into that right now, right? So if I come down here, let's just say the futures that I'm trading, I make $50 per point, and the contracts that I have is $500 each. Let's walk through an example of what that would look like, just so you can show you like literally how simple this can be, right? This is the S&P 500. So if you're not familiar, like this is just the basket of the top 500 companies. This is a futures that you can trade, right? That stats that I just gave you earlier are the description of trading this. So each contract, you need at least $500 to trade each per contract to trade it, right? At least 500, and then you make $50 per point that it moves. So just for those who are like, what the heck is a point? Point, just think of point as $1. Right? Just think that's it. So if it moved, it moved $1 in my favor, $2 in my favor, 1 point in my favor, 2 points in my favor. That's what that means. So if I had, for example, if I had 1 contract of ES, right? So I had like, let's say I use $500 to get 1 contract of ES, right? If I catch a 2-point move, I make $100. That's it. No Greeks, no volatility, none of that. It's like if I enter, right, at a certain price and it goes down, and if I sell, I bet on it going down and it goes down $2, I am up $100 in profit on that trade. That is how that works. And it literally, there's nothing else to it. So basically, because it's based on price, you know exactly how much you're gonna lose and how much you're gonna make on any given trade. So let me ask you, how many times have you taken a trade and you didn't know what your risk was, or you ended up losing more than you were supposed to because you didn't know what you were risking on the trade? You kind of had an idea, but you didn't know what the maximum amount you could have like made or lost on that trade is. With futures, you can like predictably define what that is with simple math, right? And there's no time decay. So there's no time decay or outside factors affecting how much you make or lose on a trade, right? So here's an example of what I mean by that, right? Because there's no time decay, I can literally take trades like this. I catch a $2, $3, or $4 move. This is on the 1 minute time frame, by the way. This is a 1 minute, this was a reversal on the 1 minute time frame. So literally this happened in, like, you can make $100 in literally 1 minute. That was a 1 minute move. If that kept going, you make more. So it's very possible that with the no PDT rule, you can catch like a trade like this, you can catch that 2 times, 3 times, even 4 times in a day. or catch this move and then just let it go down in your favor, 3 points, 4 points, 5 points, right? And you can, catch some of these bigger moves and stuff like that. So as an example, let's just say you traded Monday and then you took 3 of these setups in a day. Literally, it takes 1 minute. You take a reversal setup, you catch that, boom, you made your money. You made $100. You do that 3 times, that's $300 in a day that you make. Tuesday, you show up, let's say you take 4 of these, right? You're able to make $400. Let's say Wednesday, you catch 2 of these, right? Or you catch 1 trade that ends up going 4 points. So it's $50 a point. I catch a 4-point move, that's $200, right? So I end up doing that, and then I make $200 on that trade. Wednesday, let's just say Thursday comes, and then I lose $200 because you lose. You're not gonna win every single thing, right? So let's say I took a $200 loss, and then Friday we come back and seal it off, and we make $300. So we catch like 3 of these for like easy 2 points, and then we catch that $300. Boom. The total profit that we just made for the week is $1,000. We made $1,000 in a week. Times 4, that's $4,000 that you make in a month just off of something as basic as that. And there's no external factors affecting you when it comes to futures. There is no time decay. There is no PDT rule. There is none of these things, right? So none of those things affect you when it comes to trading. So when these things aren't affecting you, it actually makes your trading much, much simpler for you, and it allows you to be able to show up to the market on a more consistent basis and have a more systemized strategy. When I say systemized, I just mean a simpler strategy you can do. It's basically like a chore list. You could just show up, do it, make your money, and then go about your day. That's why I love trading futures, especially if you're day trading. So again, this is why, I believe futures is literally the best thing you can day trade in 2026 and just in general, because they don't have all these things that will be weighing you back if you're a beginner trader. So I hope this was helpful for you guys. But yeah, that's why I believe futures is the best thing to day trade. Now let's get into a simple futures one-on-one breakdown. So in this part, I'm going to be basically breaking down literally all the nuances that you need to understand for futures in order to make money, and how simple and distilled down it can be. Because again, if you let these people online and stuff like that, they'll teach it and do all this other stuff. I'm literally going to give you everything that you need in order to make money, specifically day trading futures. So let's get into it with the simplest definition of what the heck are futures. Like, what the heck are futures, right? So a simple definition, a futures contract is an agreement to buy something at a set price, right? Literally, that's it. So for trading purposes, right? Let's just say we're trading an index or a commodity. You are trading the price movement of that. So kind of going back to this, whatever you're trading, right? So trading is the exchange of something. Somebody is buying, somebody is selling, right? So what futures allows you to do, right, is basically say, let's just say I think the value of, let's just say a Lamborghini, right? I think the value of a Lamborghini is going to go from $150,000, but in a week it's about to go to $200,000 because somebody famous is about to get a car or something like that, and that's going to increase the value of it, blah, blah, blah. So I say, you know what? In a week, I think it's going to go to 200,000. I want to lock in a futures contract for 150,000 and do it like that. So now what that does is I lock in the futures price, quote unquote, meaning I buy the futures contract of a Lamborghini for $150,000. If the contract goes up in value to, let's say the price of it goes to 200,000 in a week, I locked in my price at 150,000. So the value of it is now increased by 50,000. If I want to sell it, I make the difference, which would be $50,000 that I will make. For trading in a short-term day trading space, it's the exact same thing. So the main thing you would be trading would be an index or a commodity. So if you don't know what the heck it is, I literally put the definition literally right here. Simple Google definition search, like futures index definition for a 5th grader, right? Imagine you and your friend make a bet today about the price of a big basket of candy, right? A stock index in 3 months. A futures index is that bet, but for adults, businesses, in the stock market. So the index part, there's a giant basket containing 500 biggest candy companies, right? Hershey's, Mars, Three Musketeers, all that. Instead of tracking one candy, the basket tells you the whole candy market is doing, blah, blah, blah. What you're basically saying is, I'm going to trade this big thing. I'm going to trade this thing. It doesn't necessarily matter what you're trading because the value of it is what you're actually trading. So for example, if I want to trade Skittles, right? If Skittles costs $1 and I want to buy it at $1 and sell it for $2, right? It doesn't matter what I'm selling. It matters that I'm buying it for a lower price, selling it for a higher price. So for futures, I buy something at 1,000 and it goes up to 1,010. I make the difference. That's what futures is in essence. And that's what we're doing. And then a commodity, this is also pretty simple too. This is a commodity future is legally binding promise, blah, blah, blah. Imagine you think the price of gold is going to go up, but you don't have enough money to buy huge heavy bar gold. You'll buy an agreement to say that I want to buy 100 ounces of gold in June for $2,000. Let's say the value of gold in June ends up being $5,000. I locked in the price to buy it at $2,000. The value of it now is at $5,000. I have the right to buy it at $2,000. That's what futures allows you to do. It allows me to buy something at a future price, what I want to pay, or sell something at a future price that I want to pay. So that's a simple definition of futures. Now, here's the futures that I trade, right? Again, you don't have to trade all of these. These are just the ones that I trade. I only have 5. The S&P 500, the NASDAQ, the Dow Jones, gold, and silver. I have very basic descriptions of these. I talked about this earlier. The basket of the top 500 US companies is the S&P 500. The NASDAQ contains the top 100 largest non-financial companies, mainly in tech, right? So example for S&P 500, all of y'all familiar with Apple, Microsoft, Google, Tesla. These are some companies in S&P 500, right? So these are some of the companies in some of these. Dow Jones averages the top 30 US industrial companies, right? Gold is a price, like a precious metal used to store value, silver, a precious metal used to store value, blah, blah, blah. So these are the ones that I trade, right? The reason I like to trade them is, well, honestly, they just work for me. I just like trading them. I came from the stock market world. These were already in futures. I started trading these, boom, started cooking up. But I'll get into these a little bit later. Now, what are we actually trading? So when I trade ES, for instance, I am trading whether the S&P 500 index goes up or goes down. So if I buy, you make money when price goes up. If I sell, I make money when price goes down. And this is vice versa for losing, right? If I buy something and it goes down, I lose money. If I sell something and it goes up, I lose money, right? So make sure you understand that. How do we make or lose money? There's only 3 things. So remember I talked about points and contracts. There's one more thing I want to get into that's like, it's going to be very simple. Like the way I'm about to explain it, it's going to be very simple. The analogy is this. If points equal dollars, like a dollar bill, right? The ticks would basically be quarters, right? So, and then contracts, the contracts, I'll say them as employees, right? So if you're working, right? Right now, most likely you might be working or you might have a business or a job or something like that, and you're working, right? You are the asset that is being traded to exchange value in your company or in your business and stuff like that. With trading, the thing that's making you money or losing you money in your business is going to be these contracts. Because when you enter a contract or when you hire a contract, quote unquote, in your account, that thing will go out and make money for you. So I want you to treat the contract as employees, and you're the business owner, you're the CEO that is running the business strategically, watch this, buying and selling, right, contracts, hiring and firing employees in your company in order to make money for the business, AKA your trading account. So that's also, another thing that can kind of give you a different analogy perspective of it, right? So you make and lose money based on how your employees perform when they clocked in. So when you bought and sold these contracts, how did they perform? That's what determines whether or not you make or lose money. So here's an example of what that looks like. So this is if we're using the ES, like this is the S&P 500, right? Here's an example for points, right? 1 full point in ES, right, is $50 per contract. So 1 full point. So if it moves $1, right? If it moves 1 point for ES, I make $50 or lose $50 on that trade, depending on if I'm right or wrong, right? If ES moves, let's just say, for example, from $5,000 to 5,001, that's 1 point. That equals $50, right? Whether that's if I buy it at 5,000 and it goes to 5,001, I am in profit $50, right? Here, ES moved down 2 points. You can see it right here with this price range tool. This is showing we went down 2 points, right? Now, when it comes to ticks, 1 full tick in ES is equal to $12.50 per contract. So 1 point equals 4 ticks. So that means that 1 tick is equal, $12.50. 4 ticks equals 1 point. 1 point is $50. If you multiply $12.50 times 4, you will get $50, right? Now, as you can see right here on the same image, this was 2 points. Like this part right here is showing 2 points. This number right here on that price range tool is representing 8 ticks. So it moved 2 points down, but it also moved 8 ticks down. There's just a different way of just like, defining the same movement. So again, $2 equals 8 quarters, period. So like $1 equals 4 quarters, $2 equals 8 quarters. 1 point equals 4 ticks, 2 points equals 8 ticks. That's how futures works. There's points and then there's ticks. When you get a contract, you make or lose a certain number of points or ticks, depending on what you want to use, in terms of how you define the movement, and you just do it like that. Now, when it comes to contracts, a contract determines how much you can make, you allow yourself to make or lose per point. So if I get 1 ES contract, right, I am making or losing $50 per point. Now, if I get 2 ES contracts, I'm making or losing $100 per point. If I get 5 contracts, I'm making or losing $250 per point, etc. The more contracts, the larger the money move per point. Now, when it comes to margin, this is also something that's a little bit different for futures. Futures is like you have to trade with margin. And what that means is similar to credit, right? Like they want to, like you're not paying for the whole thing, right? You're leveraging margin, you're leveraging that in order to enter into a contract, because these are really valuable contracts that you're trading, and you only need $500 to trade something that's worth like hundreds of thousands of dollars, 5 figures. Like that's what you're trading. That's what margin and leverage allows you to do with futures, right? Margin is the amount of money required to trade 1 contract, in this case when it comes to futures. You are basically posting a deposit to control it. So by the way, margin doesn't mean, like margin just means they want to see that you have a certain amount in your account before letting you trade a contract. Margin isn't what you can lose, it's what you need to be allowed to enter a trade. So unlike premium, like for options traders, this will make sense. If you don't trade options, stuff like that, obviously it might not make sense. But when you're trading options, whatever you pay for your options contract, that's the maximum you can lose. You paid for that. That's not that's not necessarily margin. You paid to enter that contract, right? So you're buying something and now it has a value attached to it. All I'm doing with margin is basically saying, all right, bet, do you have enough in your account for us to allow you to buy or sell this thing and then make the difference on buying and selling that thing. So I'm just trading. That's why I say with futures, we're trading the price movement, right? We're not necessarily buying it to keep it and hold it and stuff like that. For day trading, we're trying to trade it, right, very quickly or relatively quickly, right, within a day, right, to make money. So again, margin isn't what you lose. It's what you need to be allowed to enter a trade. And this is what that looks like. So this is the symbol, ES is a symbol. The market, or like the thing you're trading, is the E-mini S&P 500. This is just the where it trades on. You don't really worry about that right now. The group is the E-mini indices. So the indices, like indexes, I talked about that earlier, like the S&P 500, NASDAQ, Dow Jones, those are all indexes, right? So, and then day, and then this $500, this is the margin. So remember I said you need $500 to trade one contract of ES, right? So that $500 came from this. This is the margin specifically for Tradovate. This is the broker that I use right now to trade futures. The margin for this is $500 on Tradovate, right? So that means you need to have at least $500 in your account to get into one ES contract, right? So that's what that looks like. Now, let's get into this example that I have for you guys. Now, when it comes to account balance, right? So let's just say you have an account balance of $10,000, right? Versus an account with $1,000 in your account balance, right? If the margin to get into one contract, for example, is $500 and we get one contract on both of these accounts. So I'm using, in this case, for the $10,000 account, we're only using 5%, right, of the account balance. That means we're only using 5% of the margin. So margin means like how much am I using of my account to get in this trade? $500 to 10,000 is 5%, right? So just do them, like you do the math on that. Like for example, $1 is 10% of $10. So if I have $10, like, right, and I have 10% of that is $1, right? For $100, 10% of that is $10. So forth, so on and so forth. So 10,000, 10% of that is 1,000. Cut that in half again. Instead of 10% is 5%, it's $500, right? So you don't need to necessarily do this math. I'm just trying to show you visually what this looks like. I'm only using a small portion of the amount of money I have in the account to enter this trade, right? So in this case, if I have $1,000 in my account and I get one ES contract, I'm using 50% of my account, right? So the margin used equals 50% of my account, right? Now, let's say I lose $550 on that trade, as an example. My account balance will go from $10,000 to $9,450. This is still above the margin. Margin meaning how much I need in my account to trade one contract. One contract is $500, meaning I need to have at least $500 in my account to trade it. Now, in this case, if I lose $550, I'm at $450 on a $1,000 account, right? So I am below the margin, right, to trade one contract of ES. So typically what will happen is with futures, you can lose more than you put in, right? But with brokers and stuff like that, you can, and I set this all the time, I've literally, none of my students have literally had this issue where they've lost more than they put in ever. Because, well, first off, the broker that we use, Tradovate, they literally will auto liquidate. So if you're below your margin right here, so in this case, the margin is $500. Once you're below that, they will actually liquidate your position, meaning they will cut the position for you if you're below the margin. So you couldn't if you want to. Like, they've literally not done that for me, but I've seen them do that in general when you're below that margin. Just to test it out, because I wanted to see what that looks like before I started using, like, recommending Tradovate and stuff like that. So what does that look like for a trade when it comes to like margin contracts and points and ticks, right? So here's a chart example. So let's just say we took a buy, this is ES on the 15-minute time frame, right? So let's just say we took a buy position right here at 6,000, right? And then we put our stop loss, right, at the bottom down here around 59.95, right? So just a preference, there's no strategy behind this right here. This is just an example, right? So our exit, so our stop loss is basically where we're gonna stop losing. Stop loss, stop losing, meaning we're gonna exit the trade for a loss, right? Once we get down to 5,995, right? So, and then our target is at 6,010. So if I go up here, you'll see that we have the target is set up here for 6,010. So I have a 10-point take profit and a 5-point, what's it called? A 5-point, stop loss. So I'm risking 5 points in order to make 10 points. That is what we call 1 to 2 risk to reward, or you might see 2R or something like 2RR, something like that. That's what that means. I'm risking 5 to make 10. I'm risking 4 to make 8, 3 to make 6, 2 to make 4, 1 to make 2. That's where the ratio comes in, right? So I'm risking 5 points to make 10 points. That's what the risk to reward means. So in this example, right, I will be risking, so if I had one contract of ES, right, I will be risking about $250 because that's 500, let's do the math. If I make $50, if I make or lose $50 per point, right, and I have a stop loss of 5 points, that means I'm risking $250 on that trade. If I catch a 10-point move, right, so 50 times 10, then I make $500 on that trade if it hits my take profit. So I'm risking $250 to make $500 on this trade, right? So I hope that makes sense. I'm gonna have another example without that when it comes to contracts. So in terms of like points, I'm risking 5 points. If you're labeling it as ticks, then I'd be risking 20 ticks. Because if it's 5 points, 4 quarters, 20 ticks. Just to like kind of give you the math behind that. And then vice versa for the 10 points, that'll be 40 ticks, right? You'll get used to it and stuff like that. Again, if you just want to use points, you can use points. But there's going to be that in between, like, we'll get into that. But again, it's still the same math. 5 points to make 10 points. Now, how do you make more money? Simple. Let's say we're using the same trade. Entry at $6,000. My stop loss is $59.95, so it's a 5-point stop loss, a 10-point take profit. Boom. If I have one contract and I catch a 10-point move, I make $500. If I do 10 contracts and I catch the same 10-point move, I make $5,000. So literally, traders scale by increasing contracts while keeping the same strategy that got them the 10 points in this example. So it's multiplication, not reinvention. You are not reinventing the strategy when it comes to futures. You literally trading the same strategy, the same approach, and then you just increase contracts based on your account size and based on your ability to grow your account. When you're at a smaller account, you use smaller contracts. When your account's bigger, you can use more contracts, etc. But that's literally what it looks like to make more money. And then this is just a simple overview of what futures is. Like literally this is pretty much all you literally need to understand about futures in order to make money with it. If you understand contracts, you understand points, then you understand ticks and stuff like that. But then you also understand just margin, like how much you actually need of your account to enter a contract. That's what you need. And then also once you learn it, you don't have anything else to learn, because that stuff doesn't change. The margin might change depending on your broker and stuff like that, but the points, ES is gonna be $50, right? it's gonna be $50. The ticks is gonna be the same, right? So again, this is the Futures 101. This is the basics of what you need for futures. There's nothing else you necessarily need to learn in order to make money, right? So if you wanna do anything else, that's fine. But to make money, this is it. Now that we covered what futures are, what trading them and stuff like that looks like, now we got to talk about the different ways you can trade them, right? So I'm going to talk about the two account pathways that you can take to basically trade futures. There's your personal account and there's your funded account. Let's get into it. So, so I understand futures. How do I actually do this? There's two paths. There's a personal futures account, and then there's the prop firm, which is a funded account, right? So I'll go over the personal account first and then go over to funded account. Your personal trading account is basically your bank account, right? But instead of buying, 444s at Wendy's, you buy and sell futures from it, right? So this is where you trade your own capital. Think about the buying 444s. This is where you trade your own capital, right? You trade freely. There's no enforced rules. Like, it's just your own. Like, you are in charge. You are responsible for your trading and stuff like that. You compound your money over time and you build real wealth with it. This is the end goal. Now, when it comes to the prop firms, right? A funded account is where you pay a small fee, example, like $100, to prove that you can trade futures under some company's rules, right? If you pass, they give you access to a larger account. And then you trade their capital and you can withdraw their profits. So you can withdraw $1,000, $2,000, even $10,000 or more from a prop firm account, and the investment up front is smaller. So again, there's pros and cons and there's a purpose for both. So in terms of like the pros and cons and stuff like that, again, there's no rules, right? So when you're on a personal account, there's no rules of how you trade, no profit limitations. You can compound your account literally and make 3, 4, 5 figures in a single day. Yes, in a single day. So you can make $100, $1,000, $10,000 in a single day, and it's yours. It's your personal money. It's your personal capital. You can do that. Again, so this is your money. So that's the pros of a personal account. Now, when the pros of the prop firm accounts is you can trade large size with less money. So I can spend a few $100s to get access to the like more capital to trade with, and then so therefore my upfront risk is lower. So the amount I'm risking upfront is lower than that of if I'm in a personal account necessarily in terms of how much I can make, right? This is decent for learning discipline, like with small skin in the game. So I'm only spending like $75, $90, $100 or something like that. So that's small skin in the game to still trade because there's something that I can make. So there's still emotion attached to it, but you know, it still helps you with, you know, building that discipline and stuff like that for the most part. You also get faster access to bigger payouts. So with prop firms, I will say I can spend, for example, if I'm really good at trading and I have my strategy dialed in, I can trade, I can get, let's just say, for example, like let's say 5 accounts, right? And I'll get 5 accounts, and let's just say I might spend $300, $400 to do that, right? I can trade those accounts. Let's say I get a withdrawal of $2,000 across all 5. I can get a $10,000 payout, but I only spent $400 to get those access to those accounts, right? So that's what I mean by faster access. Growing an account from $400, for example, on a personal account to $10,000, that's a little, you know what I'm saying? Like it takes a little time, you know what I'm saying? Because you got to compound and build it up, you know? The cons though, you're risking your own money. When you're on your personal account, it requires discipline, and small accounts grow slower at first. When they compound, you can make more, right? And then the cons of a funded account, there's strict rules, you know, drawdowns, daily loss limits and stuff like that. Accounts can be lost if the rules are broken. Their rules, depending on what you're trading, them rules suck sometimes, not even gonna hold you. But there are like pretty decent ones out there that you can go with that will still pay you out and stuff like that, and the rules are not like super crazy, right? Sometimes they do have them super unnecessary profit splits, though. I'm not even gonna hold you. I'm not even sugarcoating none of that. They take profit splits of the money that they pay you out, even though it's not actually a profit split because it's not real money, like it's simulated, like that's a whole other thing, but it's unnecessary profit splits, right? And it's also not designed for long-term wealth building because it's not your capital at the end of the day. You need to take their capital and put it in your account to grow that, you know, and compound that for yourself. So again, the personal account is designed for long-term. The funded account is short-term tool. So both paths are fine, but if you use a funded account, the mindset should be, I'm using this to fund myself, right? So again, withdraw the profits, move that money into a personal account, and then trade your own capital, right? So when it comes to the funded accounts, right? Like when you're creating a prop firm future trading account, here's an example with Lucid Trading. So I'll go to the website real quick. This is an example of what it looks like, right? So it's gonna pretty much all of them look like this. They'll have different accounts for you to choose from. This is an example of an account. I have these, like the 50K Flex Eval accounts. They're like, again, when you first start out, like the discounts are much higher. So you only have to pay like $65 for these as of right now, $65, $70 or something like that for these accounts. But you know, for me, they're like $91. But this is an example of what you can do. And then you can do max payouts on these accounts of $2,000, like just over the course of, I think, 6 payouts. And you can do those every like 5 winning days, I guess, basically. So you can make like 5 winning days, for example, and you could take a payout of $2,000 as an example. So you're spending $65 to $91 to be able to do that. And it's just based on your trading ability, right? So again, this is what it looks like. When it comes to creating a prop firm account, it's really simple. You literally, you go on the site, you click on get started, you click on the account that you want, you select the brokerage and stuff like that you want to use, and then you just select the account type you want, and then you're done. Like literally, they'll offer you to sign up and stuff like that, and then you just pay for the account, and then you just that's it. right? PS, this process, by the way, is of all the prop firms. They intentionally make it easier for you to set up accounts and purchase combines. You know, they'll ask you maybe for like maybe financial information and stuff like that when they are verifying you to give you a payout, right? So that comes later when you're about to get a payout. But if you're a U.S. resident or like the prop firm, you know, supports your country, then it's pretty simple as well. Like it's really simple. I'll walk through this section, like setting up the prop firms and stuff like that in the next section. But notice how I went here and it's asking you for data feeds and like the platform you want to use. So this you can either use TradingView, which is a charting platform that I use, or they have you allow you to use like a brokerage. So a brokerage right here you see is Tradovate. This is actually what I'm going to get into in this next section. So there's the funded account, then there's the personal account. So when it comes to creating a personal account, I actually use Tradovate for my personal capital. This is its own brokerage, right? So think of this like Chase Bank or Bank of America or PNC, whatever. This is its own bank, right? And it allows you specifically to trade futures, right? So creating an account is pretty easy. This is literally straight from the website. Opening a Tradovate account is simple. Log in, create your Tradovate user account, select the type of trading account that you want. You see the accounts right here. This is pretty self-explanatory as well. If you're an individual, like if it's just you, get an individual account. If you're getting it with a partner, get a joint account. If you want like tax deferred and stuff like that, and you want something structured and more complicated, IRA account, trust, corporate, LLC, partnership. If you want, that's for saving money and different things like that. But if it's just you, you just go individual, and then you can always create a new account later and stuff like that. It's not really like a thing, but it's really that simple. And then they're gonna ask you when you're filling out the information, they're gonna ask you for like same thing, like literally it's the same thing that a bank. So every single person that's watching this video, most likely you got a bank account. So if you have a bank account, whatever the process you had to do to open up a bank account, it's gonna be the same exact thing. So they're gonna ask for a social security number. They're gonna ask you for, you know, your information, your billing information, your address, all that stuff, so they can mail you stuff, all that. The only thing that's gonna be different is they're going to ask you trading questions about your experience. I'm just gonna say this. It's just the experience, like if you have decent experience, if you have 1 to 2 years of experience at least, like it's gonna make the approval process and stuff like that easier for the Tradovate accounts, you know what I'm saying? So, okay, anyway, after I got that out the way, creating a Tradovate account. It's basically like creating a bank account. They ask you for trading experience, done. You wait for the approval, and then boom. I'll walk through what that looks like in the next section, but this is pretty much it. I literally created a checklist, basically like a tutorial kind of, so you can kind of see like literally what it looks like to do that. And I'll kind of walk through what this looks like and stuff like that for setting up Tradovate and getting it used in the next section. But this is pretty much everything in terms of like, these are the 2 pathways you can go when it comes to trading futures. You can set up your own personal account, or you can go the prop firm route. But either way, if you start with the prop firm account, eventually like you gotta go to the personal account so you can trade your own money. That's my recommendation, at least for that, or what I would do. I don't recommend anything. I'm not a financial advisor. But personally, for ceoashon, that's what I'm doing. All right, now we're gonna get into the platform setup. So in this section, I'm gonna show you how to set up your platform for trading, and then also how to trade in the bare basis of what you need for that. I'm not gonna give you any extra fluff or anything you don't need. Like literally, I'm gonna show you for both of the platforms that I use for charting and trading, what that looks like. So let's get into it. So the first platform that I use for entering trades and stuff like that is Tradovate. So I'm gonna show you how to set up the platform. So I wanna make a disclaimer. I will never understand why this is so the hardest thing for people to do, right? Because most people, they don't know like how to do this, and they just have to go on YouTube and just a whole bunch of other stuff. So I'm just gonna make one guide, the only guide that you need to learn this one time. I'm gonna give you the platforms, like the buttons that actually matter, how to place a trade, a stop loss, a target, what not to touch or care about. Like I'm just gonna give you a complete Tradovate setup checklist. So I created this from an onboarding call from a student that was trying to learn how to use futures and stuff like that. And then this is kind of the checklist and stuff like that. So we're gonna go into that. But before I get into that, I'm gonna talk about Tradingview, right? So this is where I chart and stuff like that. And if you're a trader already, you know that Tradingview is basically the GOAT when it comes to charting and technical analysis. It is literally just chef's kiss, right? So I'm gonna show you how to set up the interface and stuff like that for charting and stuff like that. And I have a checklist and stuff like that here. And I also put like a link down here so that if you check the description for Miro, like this whole Miro board right here, you'll be able to go in here and click that and then literally just go to TradingView. But I'm gonna pause it real quick and I'm gonna take you to the TradingView tutorial before I get into the Tradovate tutorial. So we'll do that first and then obviously we'll come back. If you already have TradingView set up, you don't really need to go to that, but you could actually, I recommend you skimming through that to see the parts that you don't know or don't know how to use and then literally just study that. But if you're completely brand new to TradingView, watch this and then we'll get back to setting up Tradovate. We're going to start from the very beginning. So we're gonna start from Google. You're gonna come here to the top screen and type in tradingview.com. It's going to take you to a page like this. If you don't have an account, you will sign up, log into whatever email and stuff like that that you're gonna use, and then it's gonna take you to this page. You'll be logged in. The first thing you do is hover over this part where it says products, go to super charts, click that, right? It will take you to a chart that looks something like this, or it'll have like basically nothing on it. A quick thing that you can do, if you don't like the white, you can go up here to this and go click dark theme. This will make this darker so it's easier on the eyes to see, right? So far, we've signed up for TradingView and then we've also logged into TradingView. Now, I'm gonna show you there's 5 parts of this, mainly 4, but like I'll show you 5 parts of this that we care about. So the first part is going to be, that we're gonna talk about is this right panel, the top panel, then the left panel, and then the bottom panel. So these are all panels. We're gonna organize this based on that. So the shortest panel that we don't really care about is the right panel, so we're just gonna get that out the way now. So we covered all the panels. Now let's start with the first one, which is the right panel. So how to set up a watch list. So we're gonna first cover that. So right here, if you click this little ribbon icon right here, if you click that, it will pull up a watch list. So this is basically a list you can have for the different futures or things you want to trade, right? It'll pull up information and different things like that. To add things to this, you would click here on the add button and you would type in the future you want to add. So if you want to add MES, boom, you click it, it'll add it to the thing. If you want to remove anything, if you hover over it to the right side, you'll be able to delete it. And then boom, that's how you do the watch list. I don't really use this a lot, but when I'm trading options and stuff like that, I do use this. But if you're trading futures, you only need to really add like the 5 things that I pretty much need. And you know what those are because we're going to talk about those, you know, for the thing. Now, get out of this. That's pretty much everything. How to add and remove ticker symbols, we covered that. I showed you how to organize the watch list pretty much. You can just move stuff around and stuff like that. Let's say I add one more thing. Boom, you can just move stuff around. Cool. Now, the only other thing that matters on this side for you if you're starting out and stuff like that is maybe this alerts tab. I'll show you how to set alerts and stuff like that a little bit later in this specific video. But for now, this is just where the alerts and stuff like that will be. This will help you with automating and stuff like that you're trading. Automating when I say, oh, I only want to enter when price does this or breaks this price or goes to here or something like that. This is where your alerts and stuff like that can be, right? But for now, it doesn't really matter. We covered everything we need for the right panel. Now, let's move on to the top panel. So the top panel, the first thing we're gonna talk about is customizing this chart because I know y'all like, I wanna customize my chart and pimp this thing out. So let's go over here to settings. Click that, go to canvas. And then the background, you can have it as solid. You can have it as a solid one color, right? Or you can change it to gradient to change it to another color. So if you wanted to have it as like, for example, dark blue and black, you can do that. If you wanted to have it as dark blue and red, you can do that. That looks kind of hideous to me, but you know, that's basically what you can do. So we're gonna put this as black and let's just say like a darker gray or something like that. So it's a little faded. So it looks a little cool. If you want to get rid of the grid lines and stuff like that, you can turn the opacity down. So right here, the opacity is higher. The higher you have the opacity, the more visible they'll be. The lower you have it, it gets rid of them. So I like to have it basically non-existent and not on there at all, so I lower it all the way down. The crosshair is this little thing that's popping up on the screen, the dots and stuff like that. If I change this to the color, it'll change the crosshair color and stuff like that, as you can see. So I like to keep it as white, just as me personally. Now the text is right here. You can change this to white. That's usually what I have it as. If it's on a dark screen, just so it's more visible. The lines, you'll see this real quick right here. It just adjusts these and stuff like that on this side. So you can turn that to white and just keep it like that. This stuff right here, you don't really need that. Now, we just covered everything with kind of just like, setting up like, customizing the charts and stuff like that. Now I'm gonna show you how to customize the candle colors. So if you go over here to symbol, this will be the body, the borders, and the wicks. So if you see right here, I'm kind of zoomed into the candles a little bit. You can kind of see that on the side. If I want to change the body of the candle, I can go to here. Let's say I want to change the bullish candles or the green candles to a little like a lighter green. And then the red candles, I want to change that to like a darker red. You can click the add button and then you can change the color to something that you want. So if you want it to be like this, you can do that. To change the borders, you can change this to, let's say you want it to be white and you want the borders to be white and then the wick to be white and the wick to be white. That would change the colors of the candlesticks. I typically like to have it like this, or I'll change it to like the colors that I have on my thing right now. It's like purple and gray and stuff like that. That's basically how I have it, but let's just keep them as, just to keep it simple, we're gonna keep it as light green and like a bright red, right? So that's how you change the candle colors. Now, we'll go back to that. So we just talked about how to customize the candlesticks. I already told you how to modify the background, the chart grid, and now I'm gonna show you how to simplify the chart. So all this stuff up here, you don't really need that, and I'll show you all that. You go to status line, and then if you want the logo to appear, you can keep that. If not, you can turn it off, right? You want the title to be there, you can toggle that off. Or you can just have it as the ticker symbol that is up here, and I'll show you that in a second. But if you want the description, you'll put it like that. If you want the ticker and the description, it'll say the ticker symbol, which is basically the license plate, and then the name of the quote unquote vehicle that you're trading. If you want to get rid of it, you just toggle that off. Chart values, that gets rid of that. Bar change values, you don't really need that necessarily either. Now, to get rid of those buy and sell buttons, I'll go over here to trading. You can uncheck that as well. If you want to have them up, that's fine. That's another way you can enter and exit trades and stuff like that when I show you how to log into your account. I don't like to have them up, so I take them off, right? So that's pretty much everything, like to clean up your chart and stuff like that. One more thing you can do to get rid of those things down there is you can go to events, and then the latest news and stuff like that. You can uncheck that. Earnings, splits, dividends, you can uncheck all that, and that'll also take that off your screen. So it's a very blank chart, as you can see. So now, if you want to save this, like let's say you want to keep this design and you want to save this and pull this up later on, you would go back to your canvas and stuff like that, or actually it doesn't matter where you go at this point. You can just click template at the bottom corner, click save as, click this and type in like whatever you want it to be. So let's say gradient, black and gray, boom, save it, and then it'll come up right here. So let's just say I reset the chart to something like this. Let's say it's like I pull up a new chart and it looks like this, and I want to change it to my template. I'll go back to the settings up here. I'll go to template, I'll click that, and it'll pull it up for me. And this will work for any chart that you pretty much do. So now you know how to save the chart and then how to apply the shaved chart to your thing. I have two different examples already, so we just went through that. Now I'm going to show you how to add multiple charts, right, to your thing at once. Now, so the way you do that is go over here to this layout setup, click that, and then you'll click on however many charts you want to have up. On this specific account that I have, it's a tester account. I don't have it available to have 4 charts. If you're trading the strategy that I use, I recommend you have the option to have 4 charts. So you can upgrade, click upgrade, and then you'll put your non-professional because you're not a professional trader trading like a big bank or anything like that. So most likely you're a non-professional, so you would click that, click confirm, and then it'll ask you which plan you want to basically go with. The only plan I recommend you get is the plus plan, which is $33.95 a month. There is a time during around November and stuff like that where there's a Black Friday sale. This will be, instead of $33 a month, you can get it for $216 or something like that for the whole year. So that's significantly cheaper than if you were obviously paying this every single month for a whole year. obviously, right? But if you want to, you can obviously get the essential plan and stuff like that, but you will be limited to only 2 charts per tab, right? So I recommend you get the plus plan, and then that will allow you to have the multiple charts saved and stuff like that. Now, this part right here, when you have multiple charts, I'll show you an example of what that looks like, but you can sync these in layout. So I usually have it like this, the symbol synced, and then the crosshair synced. And then that's pretty much it for that in terms of like adding multiple charts and stuff like that, and then changing the orientation and stuff. But you would basically go in there and then you can change the orientation of the actual chart here and then sync those with there. Now, to save a chart layout, you'll go up here and then you'll go to, let's just say, for example, auto save. You can have it as auto save, so it'll auto save the layout for you. You can rename the layout. So let's just say this is the green red layout. You could add an emoji or something like that and then rename it. And then this will save it as that layout that you specifically have, right? So I'm actually gonna pause this real quick and then I'm actually gonna show you a layout that I currently have that you can actually save to your template to make your life easier when it comes to setting up your Tradingview. All right, this is the chart template that I have that I copied from my thing. And I'm gonna show you what that looks like to copy it to your dashboard. So if you literally just copy this link, and you'll see it at the top, it'll be chart Z, you can copy that, and I'll put the thing in there so you can see it. But it's basically gonna be lowercase z 7KRXZDY or something like that. And then this will allow you to basically just pull up the Tradingview chart that I specifically have for this. You'll click in the top right corner and make a copy. It's gonna ask you to upgrade now and stuff like that, blah, blah, blah. You don't need to do this necessarily because of how I have the chart layouts and stuff like that. So I'll actually simplify this real quick and then I'll come back and pause it. But if you have the thing, it'll allow you to just copy it straight to your thing. All right, I have a chart layout that you guys can use. I actually put the link inside of the document so you can use it. You basically click this and it'll pull up on here. This is what it'll look like. Click up here, make copy. It's gonna ask you to, oh yeah, I forgot, you can only have one save chart layout. So I'm actually gonna delete the other one. That way you guys can show what it looks like. All right, so when you make a copy, it'll basically take you to the chart and stuff like that. I had to log into my other account just to show like what this looks like. It'll add the 2 indicators that I pretty much use, the strat numbers, and then this like kind of thing right here where it's showing the time frame and the ticker symbol, which I'll get into in a second. The way to save this now, so you can pull it up the same way you have the charts and stuff like that, you'll go up here to this indicator tab and you'll click save indicator template, name it whatever, 1, 2, 3, trading, boom, add a thing to it or whatever that you want to do, and then click save, and then you'll be able to go to the thing and stuff like that and favorite it, and it'll actually put it up here. So if you were to, for example, delete these indicators or have a fresh chart up, you can click that. It'll add the indicators back to your thing so that you will be able to use it. So that's basically how to save a chart, how to name it, how to share a chart layout. I think I talked about that as well. You can basically go up here and then you'll go up here to sharing and stuff like that, turn that on and copy your link. You can actually share that to other people if you want to, and then kind of do it basically like that. And that's pretty much it for the chart layouts and stuff like that. And then I'll put the link to my chart and stuff like that already on the document, so you'll be able to just pull that up. And then if that doesn't work, I'll also put the link to each individual indicator and stuff like that. Right here, I have this one right here, and then the indicators one right there. And that'll also be linked as well to the thing. So I already showed you how to import the chart, how to save the layout to your own account, and then also how to save the indicators for your own. And then, but if you don't know how to basically use these links and stuff like that to bring the indicators in, I'll actually show you right now how to add the indicators manually, or just add indicators in general. You go up here to this top corner right here. So go up here pretty much. You'll click indicators. My bad, I was doing the wrong one. Indicators, and then you'll type in whatever you want it to be. So for example, for the strat numbers, you can say candle type the strat by Crinklebind. That one is pretty good. Shout out to my guy, Crinklebind. You'll click that. It'll add it to your chart, and then you can customize it. You can go in here and customize, like turning the ones on, twos, threes, coloring them and stuff like that. Just play around with it, but it'll allow you to just add the numbers and stuff like that to the thing. So basically that's how you add them and stuff like that to your chart. And then also I already showed you how to save the indicator template. You'll go up here to save indicator template, and then you'll save it as whatever you want it to be. So yeah, that's pretty much it. Now to change the candle types, you wouldn't do this, but I'm just showing you as an example of how to do it. There's so many different candles here. The only ones you really need to worry about is candles and then the line chart. The line chart, you can use that. This might help you and stuff like that when it comes to identifying like highs and lows and stuff like that a little bit easier. But candlesticks, you're basically just going to be on this, and that's it. I just wanted to show you that just to get it out the way, honestly. But I never really toggle that. I always keep it as, just candlesticks and stuff like that. So yeah, that's pretty much it. Now, when it comes to the time frames, these are the time frames up here at this top corner. This won't look like this for you. You'll probably have to hit this drop down arrow right here, and it will pull up all the time frames and stuff like that that you'll use. I have all the ones that I pretty much save and stuff like that right here. The way you would save these so that they can kind of appear right here is you hit this favorite button. As you can see, the 1 minute time frame is kind of appearing and disappearing. So when I have it as favorite, it'll put it up here. So if you want to save, so I can turn these off as an example, just to show you what that's like. If you don't have anything favorited, it won't have anything up. But when you add it as a favorite, let's say I add the 1 minute, 5 minute, 15 minute, 30 minute, and then the 1 hour and 4 hour, 12 hour, daily, weekly, whatever, like whatever time frames I want to save, just put them here, and then it'll add that as a favorite. So you can quickly kind of toggle between them and stuff to kind of see, kind of what a chart and stuff like that is doing. Now the next thing, so I already showed you how to do the time frames and stuff like that. Now I want to talk to you about how to search for a ticker symbol. So you'll go up here to this tab right here with the letters, click this for symbol search, and then you'll delete this. You'll type in whatever it is. I'll talk about the futures and stuff like that. A simple way to navigate to futures is clicking this icon up here where it says futures, and then it will literally pull up futures. So boom shakalaka. If you see right here, this is MES. And then you can kind of filter through all these and just see all the different types of futures that you can basically trade. And I'll get into this a little bit later, but this is an example of how you can select one and then add that to your chart. And this one I have right here is called M&Q. So that's how you search for a ticker symbol, and then basically how to add it to your chart. Now I'm going to show you, and I'm also going to show you real quick because I didn't show this already, but I'm logged into my other account, so I'll show you what it looks like to do your chart layout and stuff like that, to have it as multiple charts. So if I want to keep it as the same ticker symbol M&Q, I can change this time frame, change this. And the way I have this set up is the symbol. So when I have this unchecked, then what I'll do, if I type in MES, if I click this chart and I type on my keyboard what I want the ticker symbol to be and I click it, it'll pull this up, but these won't be changed. If you want these to all be the same thing, then what you'll do is you'll toggle the symbol icon on, and then it'll change them all to the one that you have selected. And then if you want to line up the interval, you click that, it'll change all the intervals to the 5 minute, 5 minute, 5 minute, 5 minute. When you have that untoggled, you'll be able to change the interval and stuff like that. And you can also, and this is a shortcut, you can start typing numbers to pull up the actual, to change the time frame really quickly. So if I want to say 240 minutes, for example, then it'll pull up the 4 hour time frame. That's a shortcut. To type a ticker symbol, you will just type letters. So M and Q, boom, and then it'll pull that up automatically. So that's the way that you will basically go about using that. But let me reduce the chart so it's a little bit easier for you to pretty much see. Now that I've talked about the right panel, I've already talked about pretty much everything on this top panel and stuff like that. I actually get into this part with the profile and stuff like that right now. And then I'll also get into that stuff with trade and stuff like that a little bit later. Actually, matter of fact, I might as well just do it now. So if you click this, it'll full screen your chart. To get out of that, you'll hit the ESK on your keyboard to get out of that, and then it'll bring it back to normal. If you want to save a chart, I'll actually come back to this one just because I want to show you what it looks like to save it and stuff like that when I add some more stuff to the chart. But if you want to trade, right, you'll click this trade button right here. If you already have a Tradovate account, which I'm going to show you next, right, how to set up the Tradovate account and stuff like that, you will click Tradovate, and then you'll click either your live account or your demo account. You'll click this, and then you'll click connect, and then it'll ask you to log in and stuff like that to your Tradovate credentials and stuff like that. Once you log in, it'll bring you back to Tradingview for you to log in. If you don't have your Tradovate account set up, or you just want to paper trade inside of Tradingview, you can click this icon right here where it says paper trading. So if we click that, click connect, boom, it's connecting me to Tradovate, the trading dashboard and stuff like that, and I can use this here to buy and sell. You can either use this, or you can right click on the chart, and then you'll also see the sell MNQ, buy MNQ, add an order. You'll see these trading options and stuff like that in the when you right click your chart as well, using the mouse tool, or your mouse if you're using the mouse. So to get into a trade, you would just click buy market or sell market. The market's closed right now, so it's not going to work. But I'll get into these orders and stuff like that a little bit later. But universally, when you're on TradingView or you're on Tradovate, these functions of buy market, sell market, buy limit, sell limit, buy stop, sell stop, all of those have the same function. That stuff doesn't change. So once you learn how to do it here or learn how to do it on Tradovate, you'll be able to use it literally anywhere. It's the same function, right? So let's get out of trading, this trading platform. I'll actually show you how to toggle down here. Click down here at the opening manager. You'll click paper trading to log out if you want to. If you want to reset your account, so this right here, I have it at 3,200. I can click settings, and then I can go to reset account, and I can take the account balance that I want to use. So let's say I want to use it, have it at $5,000. Boom, click that in, click reset. It'll reset the account balance to $5,000. Boom, right? So that's what it looks like to use that. Now, if you're not able to trade during the market hours and stuff like that, you actually can do something called back testing, which is basically testing your strategy or practicing and stuff like that by going back in time, right? I'll show you how to go back in time with TradingView right now. So I'm gonna log out of paper trading, right? So I'm completely logged out of that. Using this top panel, if you go to this icon right here, this will say bar replay. You click that, and then you'll say start new, and then boom, I'll be able to go back in time and basically simulate what it looks like to enter and exit trades. So let's say I wanted to enter a trade here, right? I'll be able to hit this trade icon at the bottom or hit this one at the top, and then, well, actually it's this one at the bottom. So click that, it'll pull up the same icon I talked about with trading and stuff like that. If I wanted to immediately get into this trade, I would just click, let's say sell market. It'll immediately get me into the trade. Now, if I wanted to get in at a specific price, then also to get rid of these execution tools, I'll show you how to do that too. Right click your chart, go to settings, go down here to trading, scroll down, go to execution marks, click that. If that was a little too fast, you can slow it down and go back. And then, cause I hate having those things on the chart, it gets annoying. If I want to set an order, let's say I want to set an order when price breaks below this candle. I can right click my chart and then click buy stop or sell stop because I want to sell this when price comes down here. And let's just say I want to get into just, I don't know, it doesn't matter. Let's say 5 MNQ, boom. I'll click sell stop. It won't enter me into the trade until price breaks below this, right? I can click confirm. And then the way you play this forward to kind of play it out, you can play this forward by each bar. So you can click forward right here with this candle. And then as you can see, it played the candle forward. It played one candle. To determine how many candles you want it to play forward, right here, this is on the 5-minute time frame. I have it set to 5 minutes. So each candle that is created, it's doing it in a 5-minute increment. If I wanted to lower that, I can go to 1 minute. And then when I press forward, it'll go forward by 1 minute. 1 minute, 1 minute, 1 minute, 1 minute. That's 5 minutes. So the next candle, it'll create a new 5-minute candle now on this new one. So you can change the intervals and stuff like that. To simulate real life, you can actually go to the seconds and then just hit this. There's a button that says play right next to this. This will play this at a normal speed. So you can say 1x speed, which is basically normal speed, click play. And then this will basically simulate what it will look like in real time. So if you have it on the 1 second time frame, right? So 1 second, 2 seconds, 3 seconds, 4 seconds. This is basically simulating what it would look like if you were trading a real, in the real market and stuff like that. And this is what your P&L and stuff like that would look like on that trade. To pause it, you will click this. To speed it up, you would just click this icon right here and then decide how fast you want it to go. When you speed it up, it'll obviously speed up how price is moving and stuff like that. If you change the interval, this will speed it up even further. So that's an example of how to basically toggle and stuff like that. To go back even some more, you can just re-click this bar and then select where you want to go. And if you want to exit a trade, you can just click that X button. If you wanted to set a stop loss, you can drag this here or drag a take profit, click confirm. It'll automatically do it for you, and then you play it forward, boom, it hits your take profit, you're up, and then it'll show you how much you're up on the trade and just more information about the trade you just took. So that's how you'll basically use the replay feature and stuff like that. Again, just play around with this. If you don't know how to use it, just play around with it. I just showed you, how to do it and stuff like that. So just play around with it. You can't lose any money doing the replay feature and stuff like that, so play around with it. But basically, I just showed you how to use the replay feature, how to use historical price action, and how to move the candle forward each candle. And I also showed you how to paper trade and log into your practice trading account. Now, we can get into this left side of the panel. So I'm gonna X out of this, X out of replay mode, leave. And now we're gonna get into the juicy stuff on this left part. So when it gets down here, down here, I'm gonna move my face and kind of turn the camera off and stuff like that. But for now, I'm gonna show you these tools. These are the mouses. You can have it set to cross, which will be like this. You can have it set to dot, which just kind of look like this. The arrow, which will look like a mouse tool. Demonstration, which is what I'm using right now. If I hit the options key on a MacBook, it'll allow me to draw and stuff like that. So you can kind of see this drawing and stuff that I'm doing here. I usually use this for teaching and stuff, so I can kind of show and kind of highlight and stuff like that, but at the same time still interact with the chart. You can just use this, keep this at cross, and you're fine. That way you can pinpoint exactly kind of like where certain price is and stuff like that. Now, these are all the lines and the drawing tools that I use. I use the trend line. I'll actually unsave these so you can kind of see it. I use the trend line. You can hit the favorite icon to kind of save it. I use the horizontal ray, and I use the vertical ray. And that's pretty much it. I might use the horizontal line and stuff like that as well. But that's pretty much all the ones that I use. And I'll show you what they kind of look like. So if I use a trend line tool, this is what it looks like. Another hack you can do is if you click shift, so it'll like make this kind of straighter. So that way you can draw straighter lines and stuff like that. I have the shift key activated. I don't have the shift key activated. Shift key activated, shift key not activated. So if you do the shift key, it'll keep it straighter, right? So this works for every single one of them. So this is the trend line. This is what the ray looks like. It'll create a point on the chart, and then you can kind of set it as like a diagonal line. I use these for like demonstrating the broad informations and stuff like that, which I will get into a little bit later. That's a part of my strategy, right? And then the horizontal line, this is just it's just a horizontal line, literally, and then a horizontal ray. Now, I'm gonna show you how to customize these. You'll just click on whatever it is, and then there's a few options right here you can change. So if you wanna change the line color, let's say you wanna change it to white, boom, you click it, you can change the color. So you can change it to light blue, something like that. If you wanna change the size of it, you'll just change it to one of these, and then it'll make the line thicker or smaller. So if you say you want to keep it bigger, that's fine. If you want to change the text color, you can change it right here. I don't have any text, so it's not changing anything. And if you want to change the type of line, you can hit this, change that to whatever type of line you want to do. If you want to set an alert, which I talked about over here, you'll click this, set it as an alert, and just click create. It'll have an icon here when the alert is set, And then that's an example of how you can, I'll show you an example of how you can use it. I don't know if that'll work for replay feature, but if let's say I had the line down here and price was all the way up here. When price comes down here and it crosses this line, it will basically give me an alert, and that alert will be right here. And you see I have this alert active right here now in this section, so you'll be able to see it. If you want to delete it, you just click delete, and then boom, it deletes it. And now as you can see, that clock icon is not there anymore. To customize this even further, you will just click, if you wanted to lock it, you can lock it so I can't click and drag it and move it and stuff like that. When it's unlocked, I can play around with it. If you want to sync this in layout, so if you have multiple charts, for example, right? As you can see, these are both on the same ticker symbol. Right now, I have it as no sync. When I change it to sync in layout, as you can see, it adds the line and stuff like that on both charts. If you wanted to sync it globally, you can also hit that too. It basically does the same thing. But yeah, that's how you would sync it in the chart. Now, the settings, right? Let's get into the settings. I can click this, and then I can play around with this even more. So if I wanted to add an arrow, I can add arrows. If I wanted to extend the line to the right or to the left, I can do that. You can just play around with this. But again, this is just where the settings are, so you can play around with this. If I wanted to add text and stuff like that, put that in the middle, center, I can also do that as well. You see it's kind of right there. Now, if I wanted to save this, right, I can click this square icon right here, click templates, save drawing as, help me, boom, click save. And now if I want to, let's say I change the line to something else, I can click the templates, click help me, and then it'll change the line to the way that I have it set up. And this is how you will basically do it for every single like line tool and stuff like that you have access to. So you just customize those lines. These are all the tools that I use, and I'll show you how to do that. So you can save them, like I said, hitting the favorites icon on the side. For this one, I also use, you can uncheck that or use the favorite tracement. I use that for something else. Long position, this just shows your entry, like your risk to reward and your take profit. You can use this to kind of simulate where you enter and exit trades and stuff like that. So let's just say I took a trade here or something like that. I have my stop loss there. My take profit is down here. I can also change the color of this as well and mess around with this if I wanted to. And I can also save that as a template as well. And then I can, kind of play around with that. But if I wanted to keep it like that, as an example, let's just say I keep it like there on the chart. Boom. And then that's how it will look. Let's say I delete these. I can also click these lines and then click delete or backspace on your keyboard, and that'll delete it. Or you can hit this icon up here to remove it off of your chart. Outside of that, I don't use anything else for the most part. I'll show you something else you can do. You can add text. Just type in help me trade 1, 2, 3, and then it'll kind of put that text up on the chart. You can do the same thing. Play around with the text color, the background color, the font size, the settings inside of that. You can change all that stuff in there. Now, if I wanted to do like a call out or something like that, you'll use this call out thing, and I also starred that as well. I'll show you what that looks like. Took a sell position here. Click enter or something like that. It'll go space, click off of it, and then you're basically good. Now, I'm gonna move my face now so I can show you this real quick. So I'm gonna turn off that. All right, now down here, that's pretty much it. Once you have everything favorited, so you see how I had everything basically starred and stuff like that. If you click down here, you'll see that little bubble that came up. Everything that I had starred, I'll be able to quickly access it and quickly pull it up here with that star icon. When it's off, it takes it off the screen entirely. So if you wanted to pull up, let's say for example, a line, I can click that and drag it, and then boom, it'll put it onto the thing. So that's just something you can do with that. Now I'm gonna show you these two tools down here, which is the magnet tool. I'll show you down here, this is the magnet tool, and then the drawing tool. I'll show you what both of those do. So let's just say I wanna have a horizontal line. Let's just use that real quick, just to show you on the chart, horizontal line. If I had this off, I can put this pretty much everywhere. You see it's not doing anything. Now, when I have the magnet selected, right, notice what it does. You see how it's kind of snapping to the highs and lows of candles and stuff like that. That makes it easier for you to put like lines and tools and stuff like that at very precise highs, lows, opens, and stuff like that. So it allows you to do that. Now, if you have it as a strong magnet, it'll kind of just, it literally will only do that. Versus if I have it on the weak magnet, I can kind of put it up here, but when it's near the candles and stuff like that, you'll see it starting to snap. So that's how you can basically like be very precise with moving it to certain highs and lows and stuff like that. Now, if I have this drawing tool selected, if I don't have it selected, I have to click here and then add them manually. When I have this selected though, I can click the horizontal array, click, 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 click. You notice how I didn't have to go back there. So it allowed me to just basically keep drawing. So that's what that keep drawing tool basically allows me to do. And these are what those two things are. You don't really need to worry about any of these. I just use these pretty much. And yep, that's pretty much it. Now, there's a couple more things I want to talk about. So we already just talked about all these things and stuff like that right here. There's a few more things I want to touch on, and then I'll basically be done with the tutorial on that. Let's say I have my thing set up like this, right? There's two things I want to show you. This camera icon up here, you can do two things. You can copy image, and if I go to like a thing, I can paste, I believe, or if you're on like a document or something like that, you can copy and paste it. If you wanted to copy the link to the image, you can copy the link, post the link here, and then it'll pull up a screenshot image of your chart that you have. Or if you wanted to save it, like download the image, you can click download. It'll download the image and stuff like that to your computer. Now, if you wanted to like tweet about this, you can also click tweet. It'll bring you to your Twitter account. You'll be able to tweet it. Cool. Now, if you wanted to publish this, right? Let's say you have an idea and stuff like that, and you want to post this kind of onto your page and stuff like that. You'll click publish idea, name it. So let's just say test 1, 2, 3, 2, 3, 4, sell position, blah, blah, blah. You'll put whatever you want to put here. Have it set to save all the charts, continue, and then you can make this public or private. You could just keep it private, just make it simple. You took a short position, like basically betting on price going down. It doesn't matter what you put for this, but this is how you would save an idea. This will publish this to your account, and then it'll kind of play price out a little bit if you want to by clicking the play button, and then it'll also have your description that you have for this. And I'll show you actually how to access this and stuff like that on your profile. You'll go over here to your profile, click the dark theme, and then everything you pretty much have, you'll basically have it like right here. So every idea that you post and stuff like that, you'll have all the things here, saved here. So as you can see, I've had some for a very long time. As you can see, I have like 25, like gosh, that was years ago. 2020 freaking 2, that's crazy. But yeah, so all my ideas and stuff like that, I'll usually just put them here and you can save them. That way, if you want to go back to your profile and stuff like that, you can see these trades and see your descriptions and stuff like that and save them to your profile and use TradingView as your own personal journal. So that's a way you can do that. Now, the last thing I'm going to show is how to add market data. So if you're trading futures, you will need market data. So I'm just going to show you this right now. You don't necessarily need to know what it is. But I'll show you how to add market data and stuff like that after I show you the bottom panel and then right clicking on the chart, because I forgot to get into that. So we'll go back to products, go to super charts, and then we'll go back to the chart. Now that we cover everything on the left side, top side, right side, now I'm gonna talk about the bottom side. So all this stuff over here where like my face is, that doesn't matter. If you want to change this from electronic hours to regular trading hours, you can do that here. If you don't know what electronic trading hours are, this basically shows like stuff during pre-market. If you want to see stuff during regular trading hours, then it will kind of just show you the regular trading hours and stuff like that. I usually just have it at ETH. If you're trading futures, I just keep it at that just to keep it simple, right? If you want to change your time zone as well, you can click this and then change your time zone. I'm on New York time, so I have it set to New York. And yep, that's it. Now, that's everything for the bottom panel pretty much. Now, this TradingView indicator, you can also get rid of that by subscribing and stuff like that to a certain plan that gets rid of it. But when you're on a paid plan and stuff like that, it kind of just puts it kind of shorter and stuff like that. But when you right click, so if you're on if you have a mouse, you can right click and it'll bring up this tab and stuff like that right here. You can reset your chart view by doing it like that, or you can kind of hover over the screen and hit reset chart view. And then you can actually, you see how it says the option, that's an option button and then R. If you click option R, it'll also do that as well. So that's like a hotkey that you can basically do to kind of do that as like faster and stuff like that. So if I hit option R, it'll reset the chart. So that's just something you can do. To make it bigger, you can hit this plus icon. To make it smaller, you can do this. To go left, you can click this. To go right, you can click this. Or you can play with your mouse tool to expand it and contract it. You can also drag this at the bottom to do that same thing around where the current time is. And then this is over here is the price axis. So this is the current price of it. And then this is the current time at the bottom of the actual thing that you're trading. And then when you right click, you have the option to do a couple things. Buy, sell if you have the trade thing active. And you can also go to settings and stuff like that we talked about here by clicking that cogwheel, and then it'll take you to the settings icon. And then this is pretty much everything you pretty much need, or like just basically like a complete overview of using Tradingview and stuff like that. Now, if you want to add market data and stuff like that, so you can basically be able to trade futures live, I'll actually show you real quick on the other account. So I'll show you what that looks like real quick. I'm gonna pause it and I'm gonna show you that. All right, so I log into my other account. So now I'm gonna show you what it looks like to get market data. So if people are interested about how to get market data, and I already showed you how to upgrade your plan and stuff like that, but I'll talk about that as well. So you can click here at the top right-hand corner. To view your profile, you can go to your profile, and this will be your profile. If you click this Tradingview icon right here, it'll take you back to the home page. On the home page, this is how you navigate to market data and the market data that you need for trading futures specifically. This is the one you can just get universally for the ones that I specifically trade. Go up here to hover over products, scroll down to market data, click it. It'll take you to this. If you just scroll, you don't even need a search. Literally just scroll down, you'll see something called CME group. When you have delayed data, meaning the free data, it'll be delayed by 10 minutes. This will also prohibit you from also taking trades and stuff like that. I have tested it out. You need real-time data, which is $7 per month if you're a non-professional. If you're a professional, then it's $5.48. Again, everybody here that's watching this video most likely is a non-professional. You don't work at like a big firm or something like that. It's gonna be $7 a month. You can click learn more, scroll down, and then it'll prompt you to subscribe to real-time market data. And then to subscribe to real-time market data, you do not need to get a plan and stuff like that. So I think the bare minimum you just need is the plus plan. So again, recommend getting the plus plan. Once you have the plus plan, it'll ask you for your information and stuff like that to pay for the market data. And then boom, that's how you will add it to your account. So yeah. But that's pretty much how that works for getting market data and stuff like that. How to do a complete top-down analysis. Not top-down analysis, but like a complete overview of using TradingView. Now I'm going to get back to the section where I'm talking about setting up Tradovate. All right, now that we covered everything for the TradingView setup, now we're going to talk about the checklist that I have for Tradovate. So we're going to go through this real quick, and I'm going to walk you through pretty much everything when it comes to setting up and using Tradovate. So we're going to do that right now, just so you'll know how to do it. All right, so if you've never used Tradovate before, you'll just go up here, type in Tradovate.com. Boom. It'll bring you to a dashboard that looks something like this. You'll go to the top, click open account. Boom. It'll ask you for your email and stuff like that. You type in your email and stuff like that, and then it'll take you to the next page, which I'll pause real quick and show you what that is. Once you do that, it'll take you to a page like this where you can say open an account. You'll click that, and then it'll ask you for the account type that you want to use. If you're just an individual person and you don't have like an LLC that you want to use, or a partnership, trust, corporate, whatever, or you're doing it with somebody else, it doesn't matter. You can just select individual. You can also change this like later and stuff like that, or create a new account. Like you just do this later. Right now, most likely everybody that's here is an individual. So click individual. It'll ask you for the name that you want to use. So let's just say, boom, I'll type in my thing, ceoashon, and then, or I'll say CEO, get rid of that, and then last name, Sean. Boom. Continue. It'll ask you for your street address and stuff like that. So I'll give you an example of what that looks like. So we'll do that and then we'll go back to it. All right, so once you fill this out, and I'm actually gonna turn my camera off or something like that just so you guys can see it. There you go, so you'll be able to see it. It'll have you log in and stuff like that. Click continue. It's gonna ask you for your information and stuff like that. So put your date of birth, citizenship, all that stuff, and then it'll ask you for that. So for those who wanna know, my birthday is January 10th, 2003. Citizenship is United States. Put your social security number. Obviously, I'm not gonna do that on the screen, so I'm gonna show you what it looks like. Then it'll ask you, are you employed? You'll select if you're employed, retired, or a student. Let's just say you're a student, boom. And then you'll say your annual income. So I'll say it for this. In terms of your annual income and stuff like that, what will allow you to get improved and stuff like that most likely will be, let's say your annual income, you could say like 7,090, net worth, let's just say you have 50 to 75, liquid net worth under 50,000, you could say, boom. Source of risk capital, you could say inheritance or something like that. What is your trading experience? Typically you can say, if you say 1 to 5 years, then you'll be kind of straight and stuff like that, or they'll approve you at least. So I'll just say it like that. Do you have any experience trading stocks or futures? This doesn't really matter. You can say no experience, less than a year, whatever. For me, it's more than 5 years, which is crazy. I'm old. Click continue, click you're a non-professional, say I've read this stuff. Will you have any other person or entity have a financial interest in this account? Most likely it's gonna be a no. Will any other person have control of the account? No, most likely. And then you review your information. So boom, account type, full name, 123 trading path, you put your address and stuff like that. I just made up a social security number, made up no, that's actually my birthday. Information and stuff like that about me, it'll ask you to review, accept, and continue, and then it's gonna save your application, and then once you click that, it'll save your application, accept, and continue, and then thank you for submitting your application, but you have exceeded the number of applications per customer. My bad, I was clicking it multiple times. But after you do this, they'll basically decide whether or not they want to approve you and stuff like that or not, and then you just wait till they approve you and stuff like that. It shouldn't take super long and stuff like that to approve you. They only take like maybe 24 to 48 hours to approve you and stuff like that. When they approve you, I'll show you what that looks like on the logging in and then actually navigating the platform and stuff like that part in this next part. All right, so now that you've most likely gotten your account like approved and stuff like that, and now you have your information and stuff like that, here's how to log in. You go up here to the account, click login, you'll type in your username and password. Once you have your username and password, you'll click log in, and then it'll take you to this page where you have live trading and then your simulation. So for live trading, right, this will log you into your live account. For your simulation, this will log you into your paper trading account. You can toggle between this. I'm just gonna log into the simulation part of the account just to show you like what that looks like to take in trades and stuff like that. So this is the demo account. You can see it right here at the top corner, demo account. Now I'm gonna show you how to navigate this bare bones. We're gonna do it the same way I did for Tradingview. This is the top right corner, the top corner right here, and then I'll show you how to play with these, what they're called modules and stuff like that. So let's get into it. All right, so the first thing we're going to do is I'm going to show you how to go to the settings area. So we'll click up here at the top right corner, click application settings, boom, it'll take you into the account. Down here will be the demo account. As you can see, this is the demo account. This is how much I have in it, the margin available. I've been playing around with this already, as you can see. So I'm just trying to show you what it looks like to do that. You will click how to modify the balance. I want you to modify it typically to whatever you're gonna start with, I guess. So let's say you're gonna start with like $10,000 or something like that. You're gonna start with $5,000, $3,000, boom, you start the account, you'll reset it to that balance. So in this case, let's say I wanna adjust this to $2,000. I'll say $2,000 and stuff like that, and then click submit. And then it'll then reset my account to $5,000. And then I'll be able to, obviously have the $5,000 to trade with. To add market data and stuff like that, you'll click over here to subscriptions, go to market data, and you'll see if you have anything active. If you don't, you can say update subscription. The one you would need, the only one you really need for is CME. You can scroll down to CME, click the product, $4 a month. and then you'll do CME and stuff like that. If you want the same thing we have on TradingView, you can do CME Group, which is $12 a month. This is more so recommended if you're trading something like gold, silver. You want to trade gold, silver. You want to trade the indices and stuff like that. I would recommend just getting CME Group, just to be able to trade all of those different things. But if you don't want to spend $12 a month on top of the TradingView and stuff like that, I get it. But yeah, so you can just get that, subscribe to it, update your subscriptions and stuff like that, and then just pay for it. Your profile, this basically talks about your profile and stuff like that. I'm blur out my name and email and stuff like that, and my address now that I have it on the thing. I gotta blur that out. Preferences, you can, this is the part where it says it won't auto roll contracts. When you have this disabled, all contracts will auto roll. So what this means is, so the same way you have for options and stuff like that, where they have contract expirations and stuff like that, futures is the same way. They expire on a quarterly basis. So you want to have it set to just auto roll it for you. Will just do it, where basically it'll put you into the new contract. So it's basically treated like if you have a car that's a 2025 or something like that, and then you know that January 2026 is coming up. What this does is it'll put you in a brand new car of the same asset you're trading. So if you have a freaking a Honda Civic or something like that, right? Or you got a Chevy Corvette, but it's a 2025. When the new year comes around, like, all right, bet, we're gonna upgrade you to the Corvette 2026. So it's gonna auto roll you to the new vehicle or auto roll you to the new contract, so you can just keep trading it and driving it as usual. But that's pretty much what that looks like and stuff like that. For security and privacy, you can kind of play around with this and stuff like that, but you don't really need anything for that. In terms of transferring and funding your account and stuff like that, you can hit fund account, or you can withdraw money out of your account using these buttons right here, and then connect your bank account. I'll make sure to blur, that stuff as well. And then you can add payment methods and stuff like that here. Now for the add-ons, there's a few things you can do here. TradingView, you can have this selected where it'll basically add you into TradingView and stuff like that. And then I think the connection is $10 a month, I believe, to connect TradingView, meaning to be able to log in to TradingView via Tradovate and stuff like that, or vice versa. I think it's like $10 a month. If it's free for you, I mean, it's free. Take advantage of that. Yeah. So that's pretty much it. Now in terms of everything else, you're pretty much good. You can add this and stuff like that when you're trading like prop firms and stuff like that, and we'll get into that, like group trading and stuff. But outside of that, this is pretty much every single thing that you need in the settings area. So we already talked about setting up the demo account, activating the market data, connecting it to TradingView, group trade multiple accounts. Now I'm going to show you how to confirm if the futures ticket is available. Up here, as you can see, there's no yellow here. If I don't have market data, this will be yellow, and it'll have like a little timer on it, like a yellow clock if it's like delayed. So if it's delayed, it'll have that. If it's not delayed, it'll be white when you have the chart and stuff like that up. But I'm gonna get rid of all of this stuff so you can kind of just, so I can just show you like how to basically just reset this whole entire thing. Let's keep this blank. This will have the timer at the top and stuff like that. I don't use any of these. I literally just use this module at the top, and I'll show you what that is. All these tabs are here. I don't use it. Tradovate help, you can use that if you want to. But this is what I do. I go to add modules, chart, I click it, you can drag it in here, and then it'll pull up the chart. If you want to trade a specific ticker symbol, let's just say you want to trade MES, it'll show you all the different contracts. The highest one on this thing is the most recent contract that you can trade, right? That's the most recent contract you can trade. Click it. You can say just remember my choice and just click yes previous settings, and then just kind of have it like this. Now your chart might not look like this. It might look a little bit different, so I'll keep that in mind. But I'll show you how to basically use every single thing on here. So let's get into it. Buy market, sell market just gets you into the trade immediately. Buy bid, sell bid, basically just, it's similar to these. I don't really use these. I usually just use buy market or sell market, or I'll just click on the chart, and then this will allow me to also place orders. The reason I'm able to do this is because I use this toggle feature at the top to toggle whether or not I'm using, well, not the toggle feature. I think it's right here, settings, trade mode. When trade mode is off, You can't click on the chart to add buttons and stuff like that. When trade mode is active, then I can click on my chart and I can put sell limits,
order rejected,
buy limits and stuff like that on the chart. It's rejected because the market's closed right now, but in the normal case, it'll actually put the order on the chart wherever you set the order and stuff like that at, right? That's pretty much it for this. You don't really need anything else. If you want to add the bar countdown tool, you can set that as enable, and then it will have this countdown timer and stuff like that at the top. The zoom in feature, you can click this right here, zoom in, zoom out. You can also put the time frame period and stuff like that. You can also customize, like create a custom time and stuff like that as well here for the timer. Candlesticks, I don't play around with this. I just keep it as candlestick. You can change it to that. Chart settings, you can have it where your current position will be active on the chart and it'll be displayed. Outside of that, these are the settings that I have: show order lines, price levels. I have nothing pretty much used here. Continuous auto fit, I have that off. And then for the grid and stuff like that, I have that toggled off as well because I don't want to see the grid. That's just me. Then you can go to configure chart elements and you can customize the candlesticks and stuff like that. So if you want to change this to blue, then you can kind of have it like that. Blue, let's say I keep it as this and then keep it as down. If you click apply, it'll change the colors and stuff like that on the screen. You can click save and then boom, it'll change the colors of the candlesticks and stuff like that. To add indicators and stuff, you'll go here. To remove indicators, I think you do basically the same thing. And you'll play around with that. Your template list, you can also save this as a template. So I can click that. You can click save template and then name it and stuff like that, just like you would on TradingView. You can click it. I have this set as Rob Smith. This is usually how he had his designs of his candles and stuff like that on his chart. So I have it set to that as well. I'm gonna show you something. I haven't done this before. I gotta see if I have it. I don't know if I have. I gotta see if the strat numbers are here on this thing. But if I find that, I'll make sure to link it in the thing. But I think somebody just recently added that you can add the strat numbers and stuff like that on Tradovate. Now, this is your crosshair feature. You can have show crosshair enabled to show the crosshair on the thing. You can also have snap enabled, so it'll snap to the high and low of each of the candles and stuff like that. I don't use any of these drawing tools or anything like that. I literally just use this to enter and exit trades. And that's pretty much it. When you click on the chart, you'll see that yellow line and you'll have the ability to click a sell order or a buy order. And if you click whatever order you click, it'll place that order right there on the chart for you automatically, right? And then price will not fill until it goes to that price that you set on the chart. So if you set it here, it'll put the order here. If you put it up here, it'll set the order there. Boom. Now, if you wanted to create a bracket order, right, where you put a stop loss and you put a take profit, right, on the market, you can go over here to here, click ATM, click this, and then you'll click the settings icon and you can have it as off or on, it doesn't really matter. Click the name, so let's just say risk $5, or let's say risk $5 for $10, I don't know, something like that. And then I can set this to ticks or I can set this to delta price. I've already talked about ticks and delta and price and points and stuff like that. Delta price is the equivalent to points. So if I have this set, for example, to 2 points and a stop loss of 1 point, right? And that's my TP and SL. That means TP means take profit, where I'm gonna take profit on the position. That's this right here. SL is stop loss, when I'm gonna exit the trade. You can set this as a take profit stop loss, or you can just set it as a stop loss, or you can just set it as a take profit, or you can set it as both. Just keep stop loss type at stop. All these stuff, you can play around with these and test these out for yourself. Again, it's a demo account. Like if you're logged into your demo account and stuff like that, you can literally just take these trades and just practice using these stop loss types and see what you want to use for yourself. But I'm just showing you this as a tutorial. So if I click save, now if I click over here to risk $5 for $10, it'll say I have the bracket order up. Whenever I click on the chart and I hover over the order that I want to place, it will preset, and you can visually see, it'll preset my stop loss up here and then my take profit down there, right? And then when I have a buy position, it'll set my stop loss and stuff like that. So if I were to click buy, for example, it'll put the order and stuff like that on the chart. And then it will not fill me. It will not create my stop loss order or my take profit order until my order has been filled. So if you want to set this before anything happens, you can do that, right? You can always just keep it as day. Don't put it as GTC. When you put it as GTC, that means it's good till cancel, meaning the order will still be active until you cancel it. I don't recommend doing that. Just click it as day. So that means that the order will be available or will be active until the day ends. If, let's just say you forget to get rid of the order or you forget to change something or something like that, it will basically cancel the order before the day is over if you have it set to day. So just keep it as day, make your life easier, right? But that's pretty much it in terms of time frames and stuff like that. That's pretty much literally everything. So in terms of taking trades and stuff like that, I use the buy market or the sell market, or I will click on the chart to set my own orders and stuff like that, usually with the bracket off or bracket on, depending on what I'm doing. But yeah, that's pretty much everything. That's literally everything you need. You will have market, I showed you how to use market data and stuff like that. So you'll have market data, you know how to use the chart and stuff like that. Yeah, that's literally pretty much everything that you need and stuff like that to take trades and stuff like that using Tradovate. And I think I pretty much covered everything. There's only a few more things I want to show you how to add the trade performance panel. So if you go over here to click new tab, or actually it's going to pull up a chart. So go over here to add module, go up here to trade performance, click drag it to the top right here. So you can have it as a tag that you can toggle kind of like a desktop. This will be your performance center. So this will show you all the trades you take, the profit of the trades, the losing trades. It'll show you all of that stuff and update that stuff for you. Yeah, this will basically show you everything pretty much that you are basically doing and stuff like that when it comes to trading and stuff like that. So this is a chart. This is the performance data part. And then, yeah, that's pretty much it. So then what you can also do, you can screenshot this. You can, on Mac, on whatever computer and stuff like that device, you can just screenshot this chart and then you can save that to your journal and stuff like that. But again, when you're logged into the demo account, you literally can just place orders, just practice trading and stuff like that. Like practice playing around with the contracts that you have at the top right here. Change how many contracts you're gonna trade. And just play around with that and get comfortable with using the platform and then changing the ticker symbol and different things like that. Just get comfortable with using it, right? So I just showed you everything that you pretty much need on this checklist. I showed you how to journal, like what that looks like, screenshotting it, writing notes and stuff like that, how to paper trade, how to view your open P&L and your daily P&L. You can do that at the top or do that in the performance center. It'll show you that. And then all these are pretty much, you can literally just play around with these and stuff like that when it comes to setting orders and stuff like that. So we just covered literally all those things. And I think that's pretty much it. So you know how to zoom in, you know how to do all these things. So this is the complete Tradovate setup. This is literally this simple. Like there's nothing else to this. This is literally how I use it particularly. So I don't have any indicators. I literally just use this to enter and exit trades. That is it, right? So with this tutorial, you now know how to use Tradovate and use Tradingview. Now I'm going to talk about the different order types and break that down for you so you can know, like, because I'm only using Tradovate for placing orders, I'm going to show you what that looks like for setting order types and stuff like that. So we're going to go back to the small screen and I'm going to make sure I toggle this. Now we're going to get into the order types. So let's close this gap between I understand it versus I can do it, right? There's three types of orders that you can place and take. There's a market order, a stop loss order, and a limit order, right? A market order, there's two different types, buy market, sell market. Buy market means buy right now. Sell market means sell right now. That's it. Use this when you want to get in immediately at the price, right? So this is, I'll show an example of what that looks like a little bit later. The stop order and the limit order, the core idea for both is this. I only want to buy or sell when price reaches this specific level or this specific price. The difference between the stop order and the limit order depends on whether or not you are buying or selling and whether you're placing an entry, a take profit, or a stop loss, which I will break down right now. So let's start with market order. market order. If I'm entering a trade, right, I can click for a buy entry, I can just set buy market. If I click the buy market button, it'll enter me into however many contracts I have selected, and it'll immediately enter me into a buy. When I say take profit, right? If I want to take, let's say I buy market at $5,000, right? Then it goes up to 5,010. So it goes up 10 points or $10. I'm in profit right now. If I click sell market, it'll immediately exit me out and I'm in profit. So it'll exit me out in profit. Now, if I have a stop loss, what that looks like, you can't manually set these on the chart, so you have to manually enter and exit. When I click buy market to enter the trade, I now have to click sell market to exit me the trade. So if I exit, let's say for example, I do a buy position. If price goes up and I sell market, I will exit the trade in profit. If I enter that 5,000 and price goes down and I click sell market, I am exiting for a loss. It's as simple as that, right? Now, for a sell trade, it's the opposite. So the way that looks, I kind of set this already. I'm gonna change this real quick. That's better. All right, so for the sell entry, I'll click sell market. This will enter me immediately into a sell position, right? This will immediately enter me into a sell position. Now, to take profit on this, or stop myself out of the trade, right? If I'm selling, right, and price goes down and I exit via buy market, what's the opposite of selling? Buying. What's the opposite of buying? Selling. So the way that you exit a position is doing the opposite of it. So when you buy market, to exit you sell market. If you sell market, the way you exit for a profit or a loss is to buy market. So if price is going in your favor and you click buy market, you'll immediately exit in profit. If price is going against you, meaning price, if you're in a sell position, price is going up, then you'll immediately exit for a loss. Like I said, go into a demo account, practice doing buy market and sell market, and just like visually show yourself what that looks like on the thing. Now, let's get into the stop orders and the limit orders. So if I'm in a buy position, right? As you can see right here, I have it set for a buy stop. This buy stop means it's gonna trigger me into the trade when price goes up to that price at 68, 65, 75, which is right there, right? My sell stop will be set right there. My sell limit will be set right there, right? So again, if I'm doing a buy entry, I'll usually do a buy stop. When we trade the strat and stuff like that, we want to enter when price hits a certain high or low. So I like to set stop orders to get those entries, right? So price must go up, right? In this case, to trigger my buy stop. For my take profit, price must go up to my target in order for me to sell it and limit how much I take profit. So a sell limit is I'll use that for taking profit. Stop loss, I'll put a sell stop. Because again, if I'm buying, the opposite of buying is selling. But the difference is for a take profit, I'll set a sell limit. For a stop loss, I set a sell stop. So price goes down against me and then it'll exit me out for a sell stop. The vice versa is the same for like a sell position. So if I'm entering a sell, I'll put a sell stop. I'll put a buy stop above that and then a buy limit. So if I'm trying to take a sell entry, then what I'll do is I'll put a sell stop. Price must go down to trigger the sell stop and get me into the trade for a sell. My take profit will be a buy limit order. My stop loss will be a buy stop order. Like I said before, do this for yourself in the paper trading just to show yourself that you can do this, because this is literally all that I do. Like I just set the order, and then when you set the orders, it will basically look something like this on your chart. Whether you're using Tradingview or you're using Tradovate, the same function applies. It doesn't change, right? Now, this now kills every excuse. Every excuse now. Now that you know how to enter, manage your trades, and exit your trades. By the way, if I didn't say this, when you set these orders, you also can click these and drag them as well. Just to be clear, you can drag them. Now that you know how to enter, manage, and exit trades, you're now ready to learn the strategy that will tell you when to enter, when to manage your position, and then when to exit the trades. So we're gonna be getting to that in the next section, but I just showed you everything that you need to set up your Tradingview, set up your Tradovate, how to use both of them to take entries and stuff like that in the market. So I hope this was helpful. I'll see you in the next section. Boom. All right, now we're going to be talking about understanding the charts. So I'm going to give you the foundation before we get into my strategy of understanding the charts. Literally, this is the fundamental understanding that you basically need when it comes to technical analysis from the very basic level. So let's start with a technical foundation. Before we get into the strategy, I want to quickly lay the foundation first. I want to basically show you like what the battlefield looks like, the chart. So the chart is a visual representation of price moving up and down, and the bars on the chart are called, I'll talk about that in a second, candlesticks, right? But this is what a chart basically looks like. These bars and these things with these wicks and lines and stuff going through them are called candlesticks, right? So a candlestick is just a visual representation of price during a specific period of time. So if you're on a 5-minute chart, for example, each candle represents 5 minutes of price movement. If you're on a daily chart, then each candle represents 1 full day of price movement, etc. Right? So stick around and I will basically cover what time frames I use to trade my strategy. But the anatomy of a candlestick, let's break this down. So what makes up a candlestick? So every candlestick or bar, whichever one you want to say, candlestick, bar, doesn't matter, right? Has 4 parts, right? The open, the high, the low, and the close, right? So the open is where price starts during that time period, right? And I'll show you with this visual chart representation on the side right here, right? So the open is where price starts during that time period. The high is the highest price reached during that time period. The low is the lowest price reached during that time period. The close is where the price ends during that time period. So you may hear people refer to this as the OHLC, or well, that's, yeah, OHLC. So it'll be written like that. People don't say that, well, typically, unless they're weird, but we'll just say open, high, low, close, right? As you can see right here, these are 2 different types of candlesticks. So on the chart, you saw we had green candlesticks and red candlesticks. So I'm going to show you there's only those 2 types of like candles, like green, red, but I'm talking about the terms and stuff like that of them later. But this green candle basically is the up candle, right? Price, let's just say price opened at $10, it went down to $8, it had a high of $15, and then it closed at $12, right? So it started at $10 and then it closed at $12. The open and the close determine like, did the candle go up, like, or did the candle finish like that candle during that time, whatever the time frame is, going up or going down. So for a candle like this, a green candle, the close will be higher than the open, right? So if I start with $10 and then it closes at $15, it increased in value by $5, right? That is a upwards candle, right? A bearish candle or a downward candle, which I'll talk about in a second, is if we open up at $15 and then we go down to $10, let's say, right? But that's the open, high, low, and close. So I'll talk about how we use the open, high, low, and close and stuff like that a little bit later, but this is literally the 4 parts of any single candlestick. So the open, high, low, and close, like I just talked about, creates 2 types of candles. Green candles, which we call bullish candles, red candles, which we call bearish candles. So if a candle closes higher than it opened, it is a green candle, right? And if it's bullish, that means that price moved up. And then obviously vice versa, if a candle closes lower than it opened, that is called a red candle, right? Or it's a bearish candle, which means that price moved down. And this is what I was talking about. This is the opening price, the closing price. It had a high, then it dropped down, and then it might have closed right here. So this is an example of what a bearish candlestick looked like. So we call them bullish and bearish because bulls like to strike upwards, bears like to strike downwards. So that it came from that analogy. So if you ever see a bull, right? If you look up a video of a bull or something like that, right? Typically bulls will literally have their horns, they'll start down and then they'll push their horns up to strike and attack whatever they're like trying to attack, right? So that is a bullish move. That is a bullish strike per se. And then bears, they typically like to get on their hind legs and they like to slash down, keyword down. So bullish is price going up and then bearish is price going down. That's where the whole thing came from, so to speak. But up means bullish, down means bearish, and vice versa, right? So why this matters. The charts visually show you what price did during a certain period of time. Candlesticks visually show you what price did during a period of time. So let me actually escape real quick, and I'm going to show you what that looks like on an actual chart. So as you can see, this chart has green and red candlesticks, right? If you'll notice right here, for let's just say this candlestick right here, right? You see that we opened up here. We opened up at this open right here, right? We went slightly higher, and then we started to go bearish. We started to go down, and then we made a small little low, and then we ended up closing right there. This is a 15-minute chart. So this time, these candles last for 15 minutes. So you see this is, if you see down here, right, that says, you know, this is 1:30, and then the new candle opens up at 1:45, then 2 o'clock, 2:15, 2:30. So notice these are moving in 15-minute increments. So this is how time and stuff like that works when it comes to candlesticks. I'm actually going to go into replay mode just to show you what this looks like. So I'm going to play this forward on the seconds time frame, or I'll just do it on a minutes time frame just to show you what it looks like. But I'm going to play it slowly and just show you what's happening. We open up here, then we go down slightly, then we go up. You see we're kind of bullish slightly. Now we're going bearish. Now we're pushing down, pushing down, pushing down. We have the low. The close is right there, but it didn't create a new candle yet, so it's still open, right? Now we just created a new candle. So that's how price develops. That's how these candlesticks and stuff like that develop on a chart. So the chart visually shows you overall what happened over a certain period of time, depending on what time frame you're using. And then each candle, depending on the time frame, represents that time price movement. So if I go on the daily time frame, for example, right, this shows 1 day's worth of price movement. So at the beginning of the day, we opened up at 68.82.25. You can notice my crosshair, it lines up with that. We had a high of 68.86.25. We went and created a low at 67.18.75. Look at my crosshair, 67.18.75. And then we closed the day at 68.24.75. So that is literally the bare basics of like candlesticks and charts. So again, charts visually show you what price did, right? Candlesticks visually show you what price did during a specific period of time. So once you understand what a chart is, what a candle is, and what bullish and bearish means, then you'll be ready to transition into using my strategy, which we will talk about in the next section. But for now, this talks about the candlesticks from a very basic level. Before we get into the strat, I want to quickly cover something for you to be cautious about when trading futures or just trading anything in general, right? There's news events that take place, you know, at certain times that have the ability to affect the chart. So you don't need to necessarily trade them to make money, but you should know about it. So watch this quick lesson about that before I get into the strat. So without further ado, let's get into it. All right, so you're most likely back because you set up either your futures trading account, your options trading account for Thinkorswim, or both. And you set up your Tradingview, Discord, Forex Factory, just set up all the tools that you need to start getting jiggy in this market, right? Now that you are back, we're going to talk about fundamental analysis. So again, before I get into futures or options or anything, I want to talk about fundamental analysis first. Just get this out the way, right? Just get out the way, right? So let's get into it. So fundamental analysis, right? Fundamentals is basically just information about a stock, an industry, or an economy that can affect the value or the price of an asset, i.e. stocks, for example. If you don't know what stocks are, you know what Apple is, you know what Amazon is, and Costco, right? These are all stocks, right? These are companies that you can have ownership in. So fundamentals is just information about Amazon, information about Costco, or information about an industry, economy, etc., right? This information can show up in the form of news, right? So the basics of fundamentals looks like this. There's other forms of fundamental analysis that I will get into a little bit later based on your trading archetype, right? But because some levels of fundamental analysis you don't really need. If you're scalping, for example, like you're in and out of trades really quickly, you don't really necessarily need fundamentals as much. But if you're more of a long-term trader, then you will really need like fundamentals for real, right? So there's two basic forms of fundamentals I want you guys to watch out for when you are specifically day trading or even short-term swing trading, right? There is high impact news, and then there is earnings, right? So for high impact news, whenever high impact news releases, that could move the market aggressively. I'm not saying it will, but it could move the market aggressively, which could be bad if you're in a position, right? When I say position, you entered a trade already and you have the ability to make or lose money. So for example, there was news that dropped this day, Wednesday, March 19th at 2 p.m., right? And at the same exact time at 2 p.m., as you can see down here, 2 p.m., we had a huge giant candle. So let's say you were trying to sell this thing right here and you were already in a sell position, but you didn't know about the news. You probably were dead in the water in this trade and you probably lost a lot of money if you didn't have a stop loss, right? So that's why I say you guys need to pay attention to high impact news and when they release, right? Watch this. So whenever these are supposed to happen, let's say it's 2 o'clock, for example, just make sure you're sitting out. Make sure you either take profit or set your stop loss and just protect yourself before you actually get into this trade, right? That's why after the news drops and like it drops and stuff like that, let's say at 2 p.m. happens, right? 2 p.m. happens, boom, the news drops. Now you can start looking for setups again. Now you can start looking to get back into the market, but don't do that right before, because if you do it right before, you have the ability to potentially lose a lot of money if it aggressively moves against you, right? And then the next thing would be earnings, right? So same thing with earnings. I don't recommend holding a position through earnings if you just got it like the day before earnings releases, right? So here's the reason why. Let's say, for example, this is Tesla right here, as you can see at the top. This is Tesla, right? After earnings dropped, it gapped up over $30 after hours, meaning like after the market closed and opened back up, it gapped up $30. If you were swinging puts, meaning you were betting on Tesla going down, right, over a day, right? If you're betting on Tesla go down just before earnings, you will be down a lot of money on this position. You bet down either thousands of dollars, hundreds of dollars, or more, right, on this position, simply because you just weren't aware that there was earnings or you didn't know that there was news coming up, right? You have to be aware if there's high impact news or if there are earnings that are happening in the market, right? So if you are a mid to long-term trading archetype, then you will most likely be using fundamental analysis more than scalpers and day traders will. So now, after we covered all the fundamentals, now we can get into futures and options trading. So let's get into the juicy stuff. Let's get it. All right, so in this section, I'm going to be talking about my trading strategy. It is called TheStrat, so we're going to be learning that right now. This first part is more so for if you've already been trading stuff like that, you'll know what I'm talking about. But for everybody that's new, just stick around and stuff like that if you have seen some of these things and stuff like that if you started out in your trading journey. So what do we know to be true about trading, right? There's two things. Almost everyone fails, for one. And number two, almost everyone starts out excited, motivated, and eager to learn. So what goes wrong, right? So a new trader consumes information on strategies, indicators, etc., but then they realize that every single one comes with an asterisk. What I mean by that is this works in these conditions and that works under those conditions, right? So like with head and shoulders, right? The chart patterns, like all my chart pattern people, I'm sorry, but like head and shoulder, and then the reverse head and shoulder and stuff like that. It's like there's failed scenarios and stuff like that. Like once you figure out what condition you're in, the condition has already changed and then you're losing money, right? So that's a big problem in the trading space, right? So number two, they then ask themselves the next question. Okay, where's the indicator that tells me what market condition I'm in? Newsflash, there isn't one. There's no indicator. I've literally counted. I've traded 17 strategies. 17, using 17 different indicators and different things like that, trying to culminate and put together a strategy. I have not, up until this point, I have not found an indicator that can tell me what market condition I am in a consistent way. There isn't one that can do it, right? Number three, when traders keep losing, many assume that the problem is personal, right? So maybe I'm just not cut out for trading, or trading is too complicated, right? The real issue is that most traders ultimately collapse into subjective decision making, right? So number four, like at what point traders, like basically at that point, traders resort to what's known as screen time, right? They put in, so for all my traders that are already active and stuff like that, you've probably learned a strategy of some kind, and then you'll hop on the charts and you're like, if I just spend as much time in front of the screen as possible, right? Then I will just master this thing. And we try to apply that with life, because the more we do something in real life, that translates into us getting better, right? And to some degree, this is not completely wrong, right? But the problem is repetition with the wrong solution doesn't equal clarity, right? It literally just leads to confusion, right? This is the process. You literally start from new traders consumer information. They ask the question, where's the indicator that tells me what condition that I'm in, right? And then they start getting like, scared and stuff like that and say, maybe I'm not cutting out for trading, or trading is too complicated. And then they think they need to put in a whole bunch of time and stuff like that on a specific strategy. Then they restart, they try a new strategy, they try to do the same thing, and then the process repeats itself over and over and over again, right? Subjectivity is the enemy of consistency in trading. And I have a definition of it right here. I'm actually going to pull that up. The quality of being based on or influenced by personal feelings, taste, or opinions. So keyword, personal feelings, personal opinions, right? Subjectivity is the enemy of consistency in trading. Personal feelings, personal opinions are the enemy to consistency, because you can, for example, if I'm happy, I'll make certain decisions. When I'm sad, I'll make certain decisions. When I'm angry, I'll make certain decisions. When I'm fearful, I'll make certain decisions. So there's so many emotions to the human, just human nature, that those emotions, if you're basing your strategy based on that, as a beginner, you literally subject yourself to not being consistent. You want to make consistent money in the market, but you're basing your trading strategy off something that is not consistent. It doesn't make any sense, right? That's why most traders fail. Like, not from lack of effort, they fail because they are forced to make decisions based on what they think, not what they know to be true, right? So how can we trade based on completely what we know to be true as opposed to what we think? We simply ask ourselves, what do we know to be true? And that's where we get into the strat. There's 3 universal truths that make up the strat. I'm going to be covering those universal truths right now and breaking those down for you and showing you what that looks like. So the first universal truth is going to be called the actionable signals, but I'm going to start out with the scenarios. So here's what we know. From one bar to the next, there's only 3 possible outcomes or scenarios. The first one is this. In the first scenario, the second bar is too weak to make a new high and too strong to make a new low. So the first scenario is called scenario 1, or an inside bar, right? This is called an inside bar, and by definition, it is consolidating. So consolidating means it's just all in one place. It's not doing anything. So whenever if for example, if you hear somebody getting fired on like a movie or something like that, or just in real life, they'll say consolidate your things. What does that mean? Put all your things in that little brown box and then leave. So you have to put all your things in one box. They have to put it within the box. So consolidating, in this case, the inside bar, or this candle right here, is consolidating inside of this, right? The second scenario, right? In the second scenario, this is where the second bar takes out one side of the previous range. So right here, this previous candle took out no high or no low, right? This second scenario takes out only one side. So we have a candle that takes out just the low, and then we have a candle that just takes out the high. This, by definition, can be considered directional trending, as it basically has basically occurred in one direction, right? We broke. If this is a previous high, we talked about this with the candlestick anatomy, right? I'll try to make this a little bit bigger for now, right? You see right here, we have a high and then we have a low. When we just break that high, we know for a fact that price has broken higher, like price is going up because we've taken out a high. If I'm on an elevator, right, and I'm on floor number 1, if I tell you that I went to floor number 2, did I go up or did I go down? You'll know that, okay, I went to the second floor, so I had to have gone up, right, based on an elevator. So the same principle applies right here for trading. And then the last scenario is called the third scenario. This is where the second bar takes out both sides of the previous range. Thus, it's reversing to attempt to trend in the other direction, and then whoever was trying to push it in that direction, they get stopped out, right? So a scenario 3, right, starts out as a scenario 2, and this is what we call an outside bar. So just to kind of break down everything again, right? We have an inside bar, which doesn't take out a previous high or a previous low. We have a 2, which basically takes out only one side. So you see this candle right here, we only take out this previous high. This 2, we only take out this previous high. This 2, we only take out this previous high. And then we have a 3, a candle that takes out the high of a previous candle and the low of a previous candle. So we go higher than this candle's high and lower than this candle's low. So we have an inside bar, a 2 or a directional bar, and then an outside bar. There are only 3 scenarios that can possibly play out from one bar to the next. It is impossible for price to do anything else. There is not a 0, there's not a 4, 5, 6, or 7. There's just these 3, right? And we know that range expansion indeed occurs because of outside bars. So when I say range expansion for all my current traders, you might have the thought process that the market typically trends. Like we only trend upwards, or we like overall, right? But we actually tend to expand. When I say expand, means we take out highs and lows. And I'll explain a little further of that, but I just wanted to make that known as a statement. So just to summarize, we have 3 scenarios: an inside bar, which doesn't take out a high or a low; a scenario 2, which only takes out a high or only takes out a low; and then the scenario 3, or an outside bar, which takes out the low and the previous high, right? So the mindset towards trading that I want you to basically reframe is this. There's always a debate when the market is selling off saying, is this the bottom, right? Is this the bottom? That question alone reveals the problem, because most traders are really saying is, I think price is just about to reverse. Not because anything like really happened, but because price feels too low, too extended, or too overdone. So I don't want you trading based on feelings. I think the problem in the trading space is there's a lot of strategies and people and stuff like that talking about trust your intuition and trust your gut and all this stuff. And it's like, for a beginning trader, you don't have instincts. You don't have a gut necessarily when it comes to trading and stuff like that, because you haven't developed that. A lion, an adult lion, for example, has instincts and the ability to know, like, sense prey and stuff like that. But a baby lion doesn't know how to do that stuff. It has to watch, right? It has to watch the parent. It has to watch the adult do that because they are new, right? So as a new trader, a beginning trader, you shouldn't be trading based on your feelings. You should be trading based on something that is, watch this, systematic. It is repeatable, right? It is consistent. It is simple. That's what you need to be trading, right? Or at least that's just my 2 cents on it. What do I know? This is where subjectivity quietly takes over. You'll hear sayings like, it can't go much lower, it's too oversold, it feels like exhaustion, right? None of these things are truth. They are just interpretations. They are opinions. Because the same thing happens at highs. We're too high, this has gone too far, it has to pull back, blah, blah, blah. Again, that's not information. That's an opinion, right? When traders try to call bottoms or tops based on feelings, intuition, or narrative, they're not trading price. They are trading their belief for price, right? And belief has no rules because belief changes, right? That's why 2 traders can look at the same chart and come to 2 different conclusions, right? So if you see people, for example, you have to do an analysis and stuff like that. There's one trader on YouTube saying one analysis, and then there's another trader on YouTube doing another analysis. And then everybody just has all these differing opinions about what price is doing, right? I'm not gonna call anybody out in particular, but some people take literally like so long to break down the market, like so long just to break down a stock, an hour just to break down a stock. And it's like, it doesn't take that long to break it down. When you understand that there's only 3 candles, inside bars, 2s, 3s, that's it. And then that makes it so much simpler to define what is actually happening on a chart. So again, both think that they're right, but neither can prove it. This is exactly why subjectivity is the enemy to trading, right? So what is the truth about price going lower or higher, right? There's 2 parts that I want to address. So the reason that price goes up and down is the first thing I want to talk about. And then number 2 is the only 3 ways that price can reverse up or down. There's only 3 ways that price can reverse. So if you're a current trader, right, and you think that the market can only reverse, like there's so many ways the market can reverse, and there's so many different, like, no, there's only 3 ways that price can reverse on a candlestick chart. There's only 3 ways, and I'm going to show you what those 3 ways are, right? So the first thing I want to talk about, the reason for price going up and down, is the bid and the ask, right? The market does not reverse because price is quote unquote high or low. It reverses because of the bid and the ask. But I'll cover this a little bit more in the third universal truth. Right now, we'll stay on the first universal truth, right? Right now you're wondering though, how do those reversals show up on the chart? So we're gonna cover that right now. So the truth is there's only three ways that price can reverse, right? There's the inside bar reversal, right? Which is where we have a scenario 2 or a scenario 3 in one direction, right? Followed by a 1 and then a scenario 2 back in the other direction. So this is what it looks like on a chart, right? So you see we have a 2 or a 3, we have and it's bullish, right? We're either breaking a high or we're a bullish candle, right? Then we have an inside bar, and then from there we go the other direction. We take out the low of the inside bar after previously breaking a high on the previous candle, and vice versa for a bullish reversal, because this is a bearish reversal because we're reversing. What direction are we reversing? Down. So down is bearish. We're reversing bearish. This is a 2-1-2, or like this is an inside bar bearish reversal. This is an inside bar bullish reversal because we were previously going down. We had an inside bar and then we broke the high of this inside bar right here. So we're reversing in the other direction, right? This is what it looks like on a chart. If you can see it, right? You see right here, we have a 2 down, this D stands for down. So 2 down, we have a 1, which is an inside bar. How do I know this is a 2 down? We take out the low of this previous candle, only the low. Then we have an inside bar, and then the next candle goes 2 up. How is this a 2 up? The 2U means up, right? 2 up. This candle, this 2 only takes out the previous high of this inside bar. So that is a 2 down, inside bar, 2 up reversal. That is a 2-1-2 rev or a 2-1-2 reversal, right? A bullish reversal. We go down, pause, then we start reversing to the upside. So that's the first way that price can pretty much reverse. And if you want to, I can actually show you that on a chart. I can literally pull up any chart and I'll show you what that looks like. I don't even need the strat numbers and stuff like that on the thing. I'm just going to show you what that looks like right now. So let me just pull up an example of that. I can literally just find it. Let me see if I can find one on the chart. I think this might be it. Yep, this is it right here. Cool. This works. You see right here, if we mark out, and again, this is based on the previous candle. This is the previous candle's high, right? This is the previous candle's low. If we zoom in, you see that we didn't go higher than this. We only took out the low of this previous candle. Therefore, this is a 2 down, right? This is a 2 down. Then we have an inside bar. How do I know this is an inside bar? Because this candle right here doesn't take out the high or the low of the previous candle. Therefore, this is an inside bar. This next candle is a 2 up. How do I know? Because we only took out the previous candle's high and we didn't take out the previous candle's low. Therefore, this is a 2 up, right? So we have a 2 down, inside bar, 2 up. And I'll actually uncover the strat numbers just so you can see it. I didn't need the numbers up. This is a 2 down, inside bar, 2 up. This is a 2 down, inside bar, 2 up reversal. A bullish inside bar reversal, right? That is what that looks like on a chart. So again, with the strat, we don't need the number. The numbers are just an aesthetic, right? That's like if I put a label on a salad. If I say salad and I put that on a bowl of lettuce and a whole bunch of other stuff, right? It doesn't like change the fact that it's a salad. It just labels it as a salad, right? So this is still like, these are without the numbers on the chart. I still know this is a 2 down, inside bar, 2 up, right? Without any of that. Now, the next reversal is called a 2-2 reversal, right? So the first reversal we'll only see is an inside bar reversal, where we either have a 2 or a 3 followed by an inside bar, and then we do a scenario 2 in the other direction. Now, a 2-2 reversal is when we have a scenario 2 in one direction, and then it's followed by a 2 in the other direction. So this is what it looks like. This green and red, the reason it's like that is because it doesn't matter if this is a green candle or a red candle. We take out the previous high, therefore that is a 2 up. This candle takes out the previous low. As you can see, that is a 2 up, 2 down, bearish reversal. Why is it a bearish reversal? Because we are reversing down. This is a 2 down, 2 up bullish reversal because we are reversing higher. We were previously going down because we took out this previous candle's low. Then we started to reverse higher after we took out this previous candle's high, right? So this is what it looks like on a chart. You see right here, we have a 2 down, 2D, 2 up, bullish reversal. We have a 2 down, 2 up, bullish reversal. This candle right here takes out the previous candle's low, and then this candle takes out the previous candle's high, right? This candle only takes out the previous candle's low. This candle only takes out the previous candle's high. This is what a bullish 2-2 reversal looks like. This is what a bearish 2-2 reversal looks like. We take out the previous candle's high, right? And it doesn't, and by the way, I'll say this as well. So for all traders that might be like, well, Sean, it just wicked above it, or it just had a high and it just went slightly above it, but it didn't close above it. That doesn't matter. Did we take out the high or not? Did we take out the low or not? It doesn't matter what part of the candlestick did it. We still did it at some point. So therefore we took it out, right? It's like kind of saying like, oh, I didn't break into your place because when you came back home, I wasn't there. But if I broke into your house and then left, right, and you came back in and I wasn't there, did that mean I didn't break into your house? No, I still broke in and then I didn't close there. So if you go back to the chart, you'll see like the body. So you see like this candle right here. We take out the previous candle's low, but we close below it, right? Look at my mouse. We close below it. However, this candle, it's just the wick. This is the lower part of that candle that creates the low. We go down, but we don't finish there. We still took that low out. We still went down. We still took out that low, and that is still a 2 down. This is still a 2 up. That is a bullish reversal. This took out the high. This 2 took out the low. That is a 2 up, 2 down reversal. And I'll show you on the chart what that looks like as well. This happens so much often. It's like, actually, literally, it's right here. You see right here, this candle right here, right? We took out the previous candle's high only, right? So therefore, this is a 2 up. This candle took out the previous candle's low, right? And therefore, this is a 2 down. So if I pull up the numbers again, right? This is a 2 up, 2 down, right? As you see, it's a 2 up, 2 down, right? And this happens, the 2-2 reversals happen so often, it's not even funny, right? So right here, you'll see we take out this previous high. This is a 2 up. Then we have a 2 down right there, right? We have a 2 up, 2 down. It happens so often, like literally I can find it literally everywhere. So right here we have a 2 down because we take out the previous candle's low, right? And I'll show you, this is the mark out the high, mark out the low. We take out the previous candle's low, right? And then the next candle takes out only the high of this previous candle. So therefore this is a 2 down, 2 up reversal to the upside, right? So that's what a 2-2 reversal pretty much looks like. Now, we already covered inside bar reversals and we just covered 2-2 reversals. Now the last one is called an outside bar reversal. This is when we have a scenario 2 that fails, right? Or it takes out one side. We say it fails is because if, let's say for example, right? If I take out a high, right? Or let's say it like this. If I work a job, right? If I'm working at a job, let's say they hire me to run the register, right? They hire me to run the register at a restaurant or something like that. And then instead of like when I'm hired to run the register, I decide I'm gonna go back there and be a cook, right? So they hired me to do one thing and I'm over here doing a completely different thing, right? I failed at my quote unquote job. So whenever we have a scenario 2, we either have a 2 up or a 2 down. That means that we either, watch this, took out, so I'll go back to it real quick. That means we either took out the previous candle's low or we took out the previous candle's high, right? So that's it. So if I take out the previous candle's high and then I start coming down and I take out the previous candle's low, I failed to do my job. When I took out a high, I should stay there. I should stay bullish. I should stay going higher. But if I don't do that, right, then I'm not doing my job, right? So if I'm a buyer, if I take out a high, price should stay higher. If it doesn't stay higher, I'm not doing my job. So that's where the failing comes in, right? So a scenario 2, it starts off as a scenario 2, and then it goes scenario 3. So what that looks like on a chart, and this is what it visually looks like, we took out a previous high, and then we came back through that and took out a low. I'm gonna visually show you with the replay feature what a 3 actually looks like. So I'll use this 3 right here as an example. So right now we're on the daily time frame. So I'm gonna play this forward just to show you what this looks like, or actually use this 3 right here, right? I'll play this forward. So we have a new candle. Notice we're an inside bar, right? The reason we're inside bar, how do I know? And why is that a 1? We didn't take out the previous lower high, right? Let's play this forward a little bit more. Now, look at what we did. We took out the previous candle's low, and now this is a 2 down. We need to, well, since we took out the low, we need to stay bearish. We need to stay, so where price currently is, we're right there below the open. We need to stay there. If we start to come back through that, or we change color, then that means that we're probably gonna go to the other side and take out that high. So if I play this forward a little bit more, you see it starting to come back through, starting to come back through. Place a little forward. Now we're going green. So this is where, so the colors of these candles, where it goes from a 2 white to a 2 green, this is where buyers are pushing price back to the upside. So if you see this, then we became a 3. So when it says we start out as a scenario 2, then we become a 3, that is what I meant by that. And that's what it visually looks like when it comes to trading a scenario 3 and stuff like that. And then that's an example of how to take the entry. But these are the only 3 reversals that will take place. And these show up in various different ways and stuff like that, but there's only, these are the only 3 categories of how reversals happen, right? So the truth about entering on reversals, I'm gonna talk about that right now. Another problem that a lot of traders run into is how they define a pullback, right? So and this is for experienced traders. If you haven't traded before, then, just thug it out, right? Stay with me. But you'll hear traders say stuff like, I'll buy it on a pullback. And the obvious question is, well, okay, what does that mean? Like when it says pullback, right? Or I need price to come back down first, right? Is that 2 cents, 50 cents, $2, $20? Like what is that, right? Most traders cannot answer this clearly, right? So you'll have vague explanations and stuff like that. People use different strategies and stuff like that to define it, but these are just not definitions, they're determinations. I mean, not determinations, they're interpretations, opinions about the market. Opinions don't make money. You need to actually have something to back it up. So a real pullback is simple. It's corrective price action that eventually continues higher. Specifically the market likes to go higher on good markets and good stocks and companies and stuff like that. So that is what I mean. But just to summarize, right? There are no exceptions. So when you stop guessing what a pullback looks like and start identifying what a reversal actually is, you remove the subjectivity in decision making entirely. So what I mean by that is, don't focus on what you think the market can do. These are the only things the market can do in terms of reversals, right? These are the only things. And feel free to look at, any chart and quickly notice that any reversal that has occurred per one of these 3 setups that I just showed you, it'll only be those 3, right? It is impossible for price to reverse any other way. I actually have a cheat sheet right here that kind of shows, the strat numbers and stuff like that, and then the reversals. There are going to be examples of what continuations look like and reversals. When we're trading the strat, I only want to enter on reversals and then I'll add on continuations. But I'll talk about that a little bit later. The summary is there's only 3 types of reversals that can take place in the market. All right, now let's move on to universal truth number 2. So this is, in my opinion, this is the most, and also Rob's opinion, who created the strat, right? And I'll talk about him a little bit later, right? This is the most important universal truth, right? The phenomenon that ranges get taken out on both sides is the only way to properly see where we can expect price to potentially move. I actually have a checklist for broadening formations and stuff like that that I can get into a little bit later. And I actually have something that I'm actually drop after this that kind of breaks that down. So I'm excited for y'all guys to see that, right? So what do we know to be true? The first thing, there's only 3 scenarios that can possibly happen. There's the 1s, which is the inside bars, 2s, which are directional bars, and 3s, which are outside bars. That's it. That we know that to be true. Number 2, because outside bars exist, we know that price expands by taking out highs and lows. So with outside bars, it shows us that price likes to take out lows and highs or highs and lows, right? So that's very important. So how do I identify broadening formations? Because that's the universal truth number 2, broadening formations. So that is what we're talking about right now. So broadening formations is when we take out previous highs and previous lows, right? So the way we do that is we identify them by saying, all right, bet, let's identify a previous high and a previous low, right? Then we wait for price to take out a high, a low or a high, and then we take out the other side, right? So in this little example I have right here, you see I have the definitions for the HLs and all the stuff. So the H equals high, so that's the high, right? The L is a low, so that's the low, right? The HH means higher high, and then the HL means higher low. So we have a higher low, then we have a higher high, then we have a higher low, then we have a higher high. The LL stands for lower low, right? So in here we have a lower low. So that means that we took out one side. We took out the low, right? And now we can anticipate price can go and take out the high. And then that's what a broadening formation starts out as. Price taking out a high, then taking out a low, and then taking out a high. It doesn't matter the order, as long as we have a higher high and a lower low, that means that we have a broadening formation. This is literally so everybody that says like, I don't know how to do the broadening formation and stuff like that, I don't know how to do it. It's literally this on repeat. Higher high, lower low, higher high, lower low. That is, whenever we have a lower low, meaning a low that is lower than the previous low and a high that is higher than a previous high, it doesn't matter which high, a previous high, then we have a broadening formation, right? So again, I'll show you actually on a chart real quick what a broadening formation pretty much looks like. And if you see, and I'll show you this real quick, it literally doesn't matter where I pull it up from, but I'll show you visually what it looks like. I actually show you with what happened during COVID, right? So if we go back to during the pandemic and stuff like that, right? But if I pull back to this chart, I'm on a weekly time frame. Notice how, remember the definition of a broadening formation is what? Higher high, and then number 2 is a lower low. So when you connect a high to a higher high and a low to a lower low, that is a broadening formation. So let's do it. It doesn't have to be perfect. We'll use this ray tool over here. This is a high. I'll connect it to this high right here. This is a low. I'm gonna connect this to this low right here. And typically we wanna look for the most recent highs and the most recent lows. This is the most recent low that we took out, besides some of these right here, but this was, you see how we kind of created like that little pivot motion right here. So we kind of did like this, we created like a high, right? Then we created like an obvious low, then we have an obvious high, and then we have an obvious low again. And then after that, you see what type of reversal did we do? This is so beautiful. We had a 2 down, 2 up reversal. How do I know that was a 2 up? You see right here, we took out the high. Even it's so small to see, but you see, if we zoom in, I'm literally zooming so you can see it, we slightly took out the high, right? It only by like $1.50, but guess what? By definition, that is still a 2-2 reversal. That is a bullish reversal. So if you traded this, right, for example, you could have just like literally took this trade and then held it to these highs as an example, if you were holding it, futures and stuff like that, right? But it did a 2-2 reversal, and then we started to reverse and go to the upside. And then eventually, what did we do? We eventually created a higher high. So you can redraw it if you want to. And then at that point, you saw we kind of just took off, right? But that's an example of like broadening formations and how you draw them out, right? So again, what do we know to be true as a summary? There's 3 universal scenarios, and there's 3 types of reversals. 1, 2s, and 3s. Then we have the inside bar reversals, 2-2 reversals, and then outside bar reversals. Number 2, what do we know to be true about buyers and sellers? Buyers, watch this, and this is so good, write this down. Buyers want to buy at a low. They want price to go up, and then they want to sell at a high, period. A buyer that's trying to make money. If you're trying to lose money, then we're not talking to you. But most people here, if you're here watching this video right now, you're somebody that wants to make money. So Most people that trade want to trade to what? Make money. So how do you make money trading? You buy something for $1 and you sell it for $2 and you make the dollar difference. Or you buy it for $1, you sell it for $10. You buy it for $1, you buy it for $100, sell it for $100, right? So you're buying something lower and selling it higher, or vice versa. Sellers want to sell at the high, sell something at $100. They want price to go down. They want the value of that thing to go from $100. They want it to go down, and they want it to go down to whatever, like a lower number than $100. And then they want to buy it back at a lower price. So if they sold it, so if somebody sold you, for example, they sold you a MacBook for $5,000 and you bought it. And then they went and bought the same exact MacBook that they sold you for $5,000 and they bought it for $2,000. Guess what they did? They just made $3,000 in profit because you paid them $5,000. They took $2,000 of that to go buy the same thing back for $2,000, and they keep the $3,000 difference. That's what sellers want to do, and that's what buyers want to do. That is the psychology of all buyers and sellers that are trying to make money trading in any marketplace. Literally, if I want to sell Skittles at school, if I want to sell candy at school, guess what? I got to buy the Skittles for $1 and sell the Skittles for $2. Or somebody say, hey, do you have candy today? Yeah, I got candy. How much you got? I got $3, something like that. Oh yeah, I'm selling Skittles for $3. Bet. They send me the $3 Cash App. Guess what? I'll go to the store, buy the Skittles for $1, and then I keep the $2 difference. It doesn't matter what place in life. It doesn't matter, outside trading or not. That is the fundamental thought process of buyers and sellers, right? So the next question is, how do we tie all of this together? So let's get into how to tie it together with this last universal truth, which is called time frame continuity. So you may have noticed that these examples show up on multiple time frames, right? One of the biggest mistakes that traders make is only looking at one chart, right? So to truly understand what's happening, you need multiple time frames, at least 4. I recommend at least 3, like bare minimum 3, but you need at least 4 time frames, right? That's because charts aren't reality. They're just visualizations of data. So I'll explain what I mean. If a daily chart, and this, you slow this down if you need to, but if a daily chart updated at noon instead of like at the open, like at the beginning of the day. So instead of, watch this, instead of opening up at, let's just say, for example, it doesn't do this, but I'm just giving you an example. If it opens up at 12 in the morning, midnight, the daily candle starts at 12 in the morning, ends at 12 in the morning, right? If it updated at noon, right, it will be a completely different chart. I'll actually show you a perfect example of that right now. I'm gonna go to a 15-minute chart. I'm gonna go to an hour chart. I'm gonna get off replay mode, leave that. I'm gonna reset my chart. Let me show you something real quick. This for futures is electronic trading hours, right? So based on this chart, price opened up. So you see how we go from 16 over here to 18? For futures, it trades 23 hours a day. So there's an hour gap between 5 p.m. EST and 6 p.m. EST, Eastern Standard Time, right? So this day started here. So I'll drag this over that, and I'll change the opacity and stuff like that so you can visually see what's going on and stuff like that. But this is what's pretty much happening. So notice this. I have this set on electronic trading hours. If I change this to regular trading hours, watch what happens. You see how it's showing me less data now. So the beginning of the day now starts at 9:30. You see how price is completely different? We have a 2 down here. Why? Because we took out only the previous candle's low, right? And we didn't take out the high. Therefore, this is still a 2 down. This is a 2 up right here because we only took out the previous candle's high. Here's the problem. You see how this is updating right here? So this is a 9:30 candle. This is a 10:30 candle. When I change this back to electronic hours, these all update at I think this is the top of the hour, where you see how it says 8 o'clock, 9 o'clock, 10 o'clock, etc., right? Versus if I have it in regular, 9:30, 10:30, 11:30, 12:30. So literally just changing the type of chart, or the way you display the chart, affects how you visualize the data. So this is very important. This is why you need at least multiple charts. Because again, like I said, if a daily chart updated at noon instead of at midnight, quote unquote, right? Or if a 30-minute chart updated at different time intervals, they would look different. And I just visually showed you, they would literally look different. So what you think you're seeing on a single chart isn't the full picture. How many of y'all, this is for the active traders, if you trade on a 1 minute time frame or like a lower time frame, how many of you have traded? You've used a lower time frame. You were stuck on one time frame, probably the 1 minute, probably like a smaller time frame or something like that. And you started trading, you were taking losses and you didn't understand why. Then when you went to a bigger time frame, you discovered the reason that you were taking those losses and stuff like that in the market, because you didn't see something on a bigger picture, right? That's the issue. You were only looking at one time frame and you boxed yourself into viewing the market from this lens instead of looking at it from a bigger picture, right? That's a problem that a lot of traders have and that people get faced with. So what you think you're seeing on a single chart isn't the full picture. So for our experienced traders, I already talked about this right here. Have you ever took a trade on a small time frame, you take a loss, then you check the higher time frame and realize, oh, I didn't see this. Yeah, that's why. This is exactly why multiple time frame analysis matters. By looking at price across different time frames, we get a clearer view of what actually is going on. This principle is known as time frame continuity. Continuity. Price is continuing in the same direction on multiple time frames. That's what we're looking for. We're looking for continuity on multiple time frames, right? And it's one of the most important truths about price action. So let's go up here real quick to show you what this looks like. So this is a chart of NQ, which is the NASDAQ futures and stuff like that. This is something you can trade, right? Across 4 major time frames, right? So right here we have the 5-minute, 15-minute, 30-minute, 60-minute time frame. These are all showing different time intervals, but you see what's happening on each one. You'll notice that all 4 charts are pretty much green, right? This candle specifically for the 5-minute candle is, kind of red a little bit right now, but previously it was green. And the next candle is probably gonna open up green as well, right? Meaning that price is trading higher from each time frame's open. So at the open of this 30-minute candle, it's above that. From the open of this 1-hour candle, it's above that. From the open of this 15-minute candle, it's above that. From the open of this 5-minute candle, in this example, it wasn't just act like this red candle wasn't there. At this point, it opened up here and it was above that. So what we know to be true is this. When all time frames are green and those opens happen at different times, the most aggressive participants by time and price are on the buy side. That means that they are buying aggressively, right? They are, and I'll talk about this real quick, translation. If everyone at school is saying good things about Ashon, right? Just as an example. And let's say everybody at school is saying good things about Ashon, right? And they're saying good things about him at different times, right? The most important people that would make his parents reward him or, potentially whoop him when he gets home, if it's a good thing or a bad thing, right? From the staff, teachers, principal, right? They would be on Ashon's side, right? So that's the translation for this. Like, this is just an analogy to kind of put this together. When all time frames are green, so when the janitor, when the staff, when the teachers, when the principal are all saying good things about Ashon as an example, and those opens happen at different times, meaning that Monday, the principal says something good about Ashon. Tuesday, this teacher says something good about Ashon. Thursday, like blah, 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 you get the point, right? It's showing that everybody is already on Ashon's side. Or in this case, for trading, it would be the buy side, quote unquote, right? The terminology for this is they are actively taking the offer. And I'll explain what this is in literally a second. Now, when I say taking the offer, what does this actually mean? This is where we need to talk about something that most traders never learn. So I'm glad that I get to teach you this right now. Most people never learn this, and I can't wait to talk about it. The bid and the ask. So if you've never heard of this before, I'm about to explain this right now. And all of this stuff is all going to be very important. So if you need to watch this over and over again, this is fine. And just replay the specific section so you can understand it. But the thing that I want to talk about is the bid and the ask. All right, let's get into it. So for the bid and the ask, right, there's 2 parts, the bid and then the ask. I'll start with the bid first. The bid is the price that buyers are willing to buy at. Keyword. The bid is the price that buyers are willing to buy at, right? So there's 2 types of buyers. There's a passive buyer, then there's an aggressive buyer. If a buyer places the order on the bid, right? There's the bid and the ask, right? So I'll visually show you what this looks like. But if a buyer places an order on the bid, they're saying, I'll buy this, but only if someone comes down to my price, right? The terminology for this is they're sitting on the bid. They're being stubborn and the buyer's passive. So for example, if let's just say let's say I'm trying to buy, let's say I'm going to a pawn shop or something like that, right? And I say, I only want to buy that watch for $50, right? Let's say the average value of the watch is $75. I say I'm only willing to pay $50 for the watch, right? The bid, let's say the bid in this example is $50. That's the lowest that I can buy it for. Let's say the ask in this example is $100. The average between that, the spread, quote unquote, between the $50 and $100 is $75. I'm only willing to buy it at the bid, what people are willing to buy it for, around $50, right? If I say, hey, I'll buy this, but only if the pawn shop owner sells it to me at $50, because I only want to buy it at $50, no higher, right? I'm a passive buyer. So I'm just passive. I'm only willing to buy it at $50. That's it. I'm passive, right? Now, an aggressive buyer is a buyer that places an order on the ask. They're saying, I'll take it right now at the seller's price. That's called taking the offer. They're getting this aggressively. So as you can see from the image that I just described, that's basically saying, hey, the pawn shop owner says, I'm selling this watch for $100. Give it to me. I want it at $100, right? So that's an aggressive buyer. Keynote, and I'm side note, aggressive buyers are the only reason that price goes higher. Because watch this. If let's just say the pawn shop owner has, let's say he has 5 watches and they're all the same watch. If a buyer comes in, if he says, I will sell you this watch for $100, he knows that the average price of it is currently $75. He said the current market value of the watch is $75. And he says, I'm gonna sell it to you for $100. And then the buyer says, bet, give it to me. I want it for $100. The next watch, watch this. Guess what the bare minimum price of the watch now is? It's $100. Why? Because the previous value of it was $75 until somebody was willing to buy it for $100, and now the current value of it is $100 because someone was willing to pay that for it. So now the middle, the spread is $100. The low, the bid, is $75. The ask is $125. This is an example, by the way. The bid is $75. The ask is $125. The average current value of it right now is $100, as an example. If he sells the same watch to another buyer comes in. He says, I'm gonna sell this to you for $125. And the buyer says, give it to me. I want it. Boom, $125. Guess what? The new value of it is $125. And now the bid is $100. The average current price is $125 because that's the last price that someone was willing to pay for it. And the ask is currently $150, right? So the bid is $125. Let's say the bid is $100. The ask is $150. The current value is $125. If somebody comes in again, I'll sell this to you for $150. The guy says, you know what? I'll buy it for $150. Guess what? That keeps driving the price of it higher, because they are being aggressive. That is the only reason price goes higher in the stock market, futures market, forex market, crypto market. That is it. The only reason price goes up is because there's an aggressive buyer, right? So now that I've got that out the way, now let's talk about the ask, right? So there's the ask. This is the price that sellers are willing to sell at. So the bid and the ask are both just prices. They just represent prices. In terms of the prices of willingness of buyers and sellers and stuff like that, right? That's it. So a passive seller is a seller that places an order on the ask, saying, I'll sell this, but only if someone comes up to my price, right? I'll only sell this for $100, like let's say a MacBook. I only sell this for $3,000, but only if someone comes up to my price. I'm not negotiating. I'm not going to sell it for $2,000. I'm not selling for $1,500. I'm only selling this thing at $3,000. That is a passive seller. That's called sitting, not sitting on the bid, my bad. Because sitting on the bid is this. That's called sitting on the ask, right? That's the terminology for like I'm sitting at the ask, right? I'm not gonna, I'm sitting on the ask. Another word for ask is offer. So that's why I said they're taking the offer, the ask. What is the asking price? What is the offer price? That's the terminology and stuff like that for that, just so you know. Write that down in your notes, right? So I only sell this if someone comes up to my price. That is a passive seller. I meant to say seller, I have it as buyer, right? But that is a passive seller, right? Now, in this case, for example, if a seller places a sell order on the bid, they're saying, I'll sell this right now at the buyer's price. So that means that if I have a MacBook, for example, at $3,000, but I'm a buyer and I say, you know what, I'm only willing to pay $1,500 for it, and they say, you know what, I'll get rid of it. I'll sell it right now for $1,500, right? They're aggressively, watch this, They're aggressively, the word is called hitting the bid. So the bid price is $1,500, they're hitting it. Give it to me for $1,500. That's the terminology, like the stock trading terminology for it. They're hitting the bid, right? That means that the seller is aggressive. They're trying to just sell it immediately, right? And I hope you like these images that I created. But this is what it looks like from a bid and the ask perspective, right? So the bid and the ask on the buy side, right? Let's say the current price of a futures is 5,001, right? That's the current price. That's the current price right now, right? Aggressive buyer says, you know what, I'll pay 5,002 for the same thing that's worth 5,001. When they pay 5,002, that moves the price higher. That is an aggressive buyer. If they say, I'm only willing to buy this thing at 5,000, right? That is at the bid. That is a passive buyer. So I hope that makes sense, right? I'm gonna show you another example with this. For a passive seller, if the current price is $5,000, they say, I'm only willing to sell this at a higher price. That's it. Passive seller, they're selling it higher than the current price. An aggressive seller says, you know what, I'll just sell this like right now down here at $5,000 just to get out of this trade. I just want to sell it. Just boom, just give it to me, right? Sell it at 5,000. Current price 5,001, I'll sell it at 5,000, right? So that's what this pretty much represents, right? And I said this earlier, the ask is what we also call the offer. And I'll be breaking this down a little bit more as we go throughout this, but this is what this pretty much represents. Now, you might be asking yourself, why the heck, Sean, why does this matter? What the heck is the bid and the ask going to do? How is it going to help me make money, right? So what's false is price is going up because there are more buyers than sellers. If you've had the notion in your head that the reason that price is going up is because there is more buyers than sellers or more sellers than buyers, if price is going down, that is false. That's not possible. And I'll show you why that's not possible, right? If I have 5 things of Skittles and I have 10 people willing to buy it, right? I only have 10 buyers. I cannot, like, prices, the value of, like, for example, if I say there's more buyers than sellers, right? That doesn't mean that they can, if I have 5 things to sell and there's 10 buyers, those other 5 of those buyers ain't gonna get in the trade. They're not gonna be able to get anything. So that doesn't move the value of it. Because remember I said the only way price can move is if I aggressively buy or aggressively sell. That means that somebody, so if I'm buying something, that means somebody is selling something at a higher price, right? Which is a passive seller. And then an aggressive buyer, let me visually show you this real quick. This is so good. I hope this is good, right? There's a passive seller at 5,002. That means they're selling, let's just say this is ES, because ES is around $5,000, $6,000 and stuff like that, right? So let's say ES is at $5,001. There's a passive seller that is selling ES at 5,002. If an aggressive buyer says, you know what, I'll buy it at 5,002, they have moved price up from 5,001 to 5,002 because they have aggressively bought. So watch this. There's an equal exchange between an aggressive buyer and an aggressive seller. But there has to be two participants. There has to be one of each. There has to be one buyer, one seller. Right? If there's two sellers and there's one buyer, guess what happens? Watch this. If one buyer buys it at that price of the passive seller, right, and they buy it for 5,002, cool. But guess what? In order for the price to move higher, both of those people that are selling it at that price of 5,002 need to have their thing sold. If not, it can't be quote unquote sold out, right? You can't say you can't manufacture that. You can't say it's sold out. You can't do that, right? There has to be one buyer, one seller, one buyer. So there can't be this whole thing, prices moving higher because there's more buyers and sellers. It doesn't make any sense. I can't buy something that's not being sold. I can't sell something that's not being bought, right? Now that that's explained, so that's false. What's true is that every single trade, there is always one buyer and one seller. A trade cannot happen without both. Price moving up and down does not happen without at least one buyer or for one seller on a trade, period. A buyer can sit, watch this, a buyer can sit on the bid all day and price won't move. A seller can sit on the offer or sit on the ask all day and price won't move. Watch this, if I'm at a pawn shop and watch this, I'm only willing to buy it for $50 and I'm just sitting here arms crossed, just like this. And then the seller at the pawn shop is like, I'm only willing to sell it at $100. And he sits there like this. Guess what? I don't buy the watch. He don't sell the watch. Period. The value of the watch didn't change. But it's the only way it changes is if one of us gives in. If he sells it to me for $50, guess what the value of the watch is now? $50. If I buy it for $100, guess what the watch is valued at? $100. But if we both sit on the bid and sit on the offer, if I'm the buyer and I sit on the bid and he's a seller and he's selling the offer, guess what? Price don't move. It sits there. It literally just sits there and does nothing. That's the importance of the bid and the ask and the psychology of understanding how trading actually works and how we can use this to trade the strategy that I have right now. So again, here's the analogy. If I'm only willing to pay you $10 and someone's only willing to sell it to me for $20, if neither of us budge, I don't buy it. They don't sell it. The only way price moves is if someone goes from passive to aggressive. Watch this. If they sell it to me for $10, the seller, they hit the bid. Now the price of the futures contract that I'm trading, quote unquote, went down to $10. If I buy it for $20, I'm the buyer and I took the offer, right? I took the offer, right? I took what they were offering it to me. That's the word. Now the price of the futures went, the future went up to $20. Now, again, like I said before, price only moves when buyers aggressively take the offer and when sellers aggressively hit the bid. Remember, write this down. Price only moves when buyers aggressively take the offer or when sellers aggressively hit the bid. That is it, period. So during periods of full time frame continuity to the upside, buyers across multiple time frames are all doing the same thing. Watch this. They're all doing the same thing at the same time. They are aggressively taking the offer. This is how it ties in now. And that has to be happening because there is no other explanation for price moving higher across multiple time frames at once. The only way price can move higher, period, is by aggressively taking the offer. So across multiple time frames, that has to be the truth. This is a universal truth about how price actually moves. That alignment of aggression across time frames is what we call time frame continuity, right? So I hope this makes sense, but that's what time frame continuity is, and that's that the third universal truth, right? So all of these charts that are bullish, you see they're all going up. That's showing that the buyer is aggressively taking the offer on the 1 hour, 30 minute, 15 minute, and the 5 minute. Right now in the 5 minute, currently the sellers are hitting the bid slightly, but on the previous candle to that, and I think after this right here, you know, it kind of goes higher and stuff like that. But that's what that looks like from a time frame continuity perspective. I'll literally show you that right now with multiple charts. I'll pull up 4 charts. I'm gonna pull up, keep it on ES. I'm gonna put this on the 5 minute, 15 minute, 30 minute, 60 minute. Boom. And then I'm gonna reset each chart just so you can see it. And then I'm gonna pull up just a specific day. I'm just trying to see if I can find a good day. Let's try this day right here. Boom. Hit the replay mode. Start new. Boom. I'll change this to electronic hours and stuff like that and change that because I know y'all probably like, what the heck is going on? Why does it look like that? Electronic hours. My bad. All right. Now, let's do it like this. I'm just gonna find. I'll use this day right here. I'll use this day right here. So that's over here. All right. Now, and you see it also by the color right here. They also show, like, you see this is a bearish candle and the price over here is bearish. You'll be able to see currently we are full time frame continuity to the downside across every time frame. So I'm going to play this forward very slowly just so you can see this, like what's happening. Right now, you see how it's moving. We're currently, everything is pretty much going bearish. Bearish, 5 minutes bearish, 30 minutes bearish, 15 minutes bearish, 60 minutes bearish. This is full time frame continuity. The lower time frames are going to shift a little bit more than the higher ones, as you can see, because they're going back and forth more. But as you can see, time frame continuity was bearish at one point. And then now they're back bearish at the same time. And I think they keep even reversing to the downside a little bit more. So you see, watch what happened right here. And this is so beautiful. You literally saw we were still bearish, right? Then we had a new candle. We had a 2-2 reversal to the downside right here, right? So let's say I put my order in. I just talked to y'all about that, entering trades. What do? I'll put a sell stop so that price can come down and enter me into a sell position. I'll put my stop loss right here. What's the opposite of selling? Buying. So I'll put a buy stop, and then I can set like a take profit down here as an example. Let's say I'll do a buy limit. Boom. I enter this trade. Boom. It triggers me into the trade. I'm already up $225. Notice across every time frame, the 5 minute, over here on the 15 minute, over here on the 30 minute, over here on the 60 minute. I'll move out the way so you can see that on the 15 minute. Guess what we are doing? We are full time frame continuity to the downside. Full time frame continuity means that there's at least 4 time frames going in the same direction. So we're full time frame continuity. So time frame continuity, these time frames are all continuing down. Full time frame continuity downside. What does that look? What does that do? You see it keeps going. We're all bearish, 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 bearish still. Next candle opens up. Bearish still, bearish, bearish, bearish still. Let's see. Bearish, boom. On that trade, what was that? That was one contract. You made $1,000 on ES. Mind you, the margin to get into one ES contract is only $500, so you basically double the money that you used to enter that trade, literally just off of, watch this. There's only 3 types of reversals that can take place on any given chart, and one of them just occurred just then. We had a 2-2 reversal. There's inside bar reversals, 2-2 reversals, and then we have outside bar reversals. Watch this. Notice on the 15-minute chart, guess what we had? An inside bar reversal. We had a bullish 3, an inside bar followed by a 2 down. And we reversed to the downside. We were pushing up a little bit, then we reversed back to the downside. And then notice we also have a few outside bar examples right here. In this case, we had a bullish outside bar, so we reversed to the upside. And that's what started price going higher, right? We had one right here, bullish outside bar, that started to reverse price to the upside. Then we reverse price to the downside. I hope y'all are getting this. Anyway, that's what full time frame continuity pretty much looks like. So here's a summary of what we know to be true. There's 3 scenarios. There's inside bar, there's the directional bar where we have a 2 up or we have a 2 down, where a 2 up takes out the previous high and that's it. Where a 2 down takes out just the low, the previous candle's low, and that's it. An outside bar takes out the high and low of a previous candle, and then we have a bullish outside bar or a bearish outside bar, right? And then we have only 3 reversals. We have an inside bar reversal where we have a previous 2 up or a bullish 3 followed by an inside bar and a reversal in the other direction and vice versa. We have the 2-2 reversals, and then we have the outside bar reversals. right? And then we have time frame continuity. So in this example, I'm using the month, week, day, 60 minute. These are 4 time frames. You see we're bullish, 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 bullish across all those time frames. You saw in the example that I just gave you, we were bearish across every single time frame. And then literally in a matter of, how long did that take? 5 minutes, 15 minutes. Wait, let me see. 1, 2, 3, 4, 5. So 25 minutes, that's $1,000. Just with that one reversal. We reversed right here on the 5-minute time frame with full time frame continuity because we were bearish on the 15, 30, and 60 minute, and we made $1,000. As an example, that's what that looks like to trade with the strat. And also, you probably didn't notice this as well. Guess what happened? Guess what we also did? We also did a broadening formation. Because remember I said threes are broadening formations. Why are threes broadening formations? Because they take out a previous high and they take out a previous low. So guess what? Guess what we did? This is so beautiful. We went higher high, lower low, continue to go a little bit lower on this next candle so I can redraw it to that. We went lower low. Then, so what's the current high and the current low right now? Previously, it was this inside bar. It was this high and this low. Right now, this is so beautiful. And I'm going to visually draw this out for you guys just so you can see it. I'm going to use the drawing tool so you can see it. We go higher high, lower low. We kind of play in this range. We're reversing and stuff like that. We're going back and forth. But guess what? This is the low that we need to continue to break. And this is the current high that put in that new low that we need to take out. So a higher high, lower low, higher high. After we got that higher high, we entered on the 2-2 reversal. Guess what we're targeting? That lower low. So if I draw that out, if I get rid of these lines real quick and I draw that out, this is what that looks like. Anytime we have a higher high and a lower low, that is a broadening formation. And here's the beautiful part. Remember I said buyers like to buy at a low, push price higher, and then sell at the high. And then sellers like to sell at the high, make price go lower, and then buy back at a low. Guess what happened? Buyers, and this is so beautiful. Buyers bought right here. Sellers sold right. Buyers pushed price higher, then they exited their position. Sellers stepped into the market and they pushed price down to take out that low. That's why this is a bearish candle. Sellers kept pushing it down a little bit more for a little bit. Then guess what? Sellers sold at the high, pushed it down, bought it back at the low. Buyers stepped in, bought it at the low, pushed it higher, and then they played around here. And then eventually buyers stepped back in, pushed it back up higher. And guess what we did? Buyers bought at this low, price went higher, they sold it at the high. Then as you can see from these, you're seeing sellers are trying to step into the market. After the seller, watch this, after buyers buy at the low, and then they push price higher, and then they sell at the high, guess what happens? Sellers step in and do what? They want to sell at the high. That's why. And how do I know that we sold at the high? Because we got a bearish reversal. We took out a previous candle's low. So based on what we talked about earlier with the bid, the only way price can go down is if there's an aggressive seller. An aggressive seller stepped in right there on that 2 down because we took out that previous candle's low. They were aggressive enough to take it from 69.78 all the way down here to 69.60, 74.25 and push it down past that. And they kept being aggressive, aggressive, aggressive. And you might be like, well, why the heck would they sell it lower? If you got $1 million position right here, let's just say you got $1 million position right here, meaning you make $1 million per point, because that's what the big institutions are doing. That's what banks and all that stuff. That's literally what they do. They get a really big position, and then price comes all the way down here. You remember, you make $50 per point trading ES. If you had $1 million position and you caught, you make $1 million. Let's say you make $1 million per point. If you catch 20 points, that's 20 million. As an example. But that's what that looks like to enter and exit these trades. I just showed you an example of what it looks like to trade one of the 3 reversals with continuity, time frame continuity, full time frame continuity at that to the downside, and then an example of what the broadening formations look like in this example. A broadening formation is just a higher high, and a lower low. It doesn't necessarily matter where, it doesn't have to be perfect. Wherever you see a higher high and a lower low, that is a broadening formation, right? So again, just a summary. There's only three scenarios, there's only three reversals, there's time frame continuity, and we also know that price likes to expand and take out lows and take out highs because the psychology of buyers and sellers is buyers like to buy at the low, push price higher, sell at the high. Sellers like to sell at the high, push price down, buy at the low, right? When you combine all these three, we greatly increase our probability of being right. When you put the concepts together that I've just presented to you, we already know what winning trades look like and losing trades look like. So I highly suggest that you use at least 4 time frames and keep this checklist on your desk. If like that I have below, feel free to review any trade you've taken. So all the trades that you have traded before and saved and stuff like that, review every single trade that you have taken and compare it to what I'm showing you right now, and it will line up. A winning trade looks like this. A scenario 2 in your favor. We just took that trade to the downside. We took a, watch this, we took a sell position on a 2 down. The 2 down is in our favor and it kept going 2 down, 2 down, 2 down, 2 down. So that scenario 2 was in our favor. A scenario 3 in our favor. So if we took a buy position right here and price went up, that scenario 3 is in our favor, right? And then time frame continuity is in your favor. Time frame continuity was in our favor on this trade. That's why we made $1,000 on that trade, right? Losing trades look like this. Choppy trading inside a scenario 1, meaning you're getting like chopped up and stuff like that inside of a scenario 1. You're trading, you're just losing, just taking these all in this range because price isn't going anywhere, right? A scenario 2 is moving against you, right? And then scenario 3 is moving against you, or time frame continuity is going against you. So if you were trying to take buys right here, or right here, or right here, or right here, or right here, you got cooked because you were trading against time frame continuity as an example. So these are what winning trades look like. These are what losing trades look like. I know this was very in-depth, but I wanted to make sure this was in-depth as possible because I want this to live on for a very, very long time. And I want to show you like the thought process and how to think about trading and stuff like that. This isn't just about the strategy. This is about really putting this together. And when you put these things together and you trade based on what's true, it allows you to be confident. It allows you to be systematic. It allows you to be repeatable with your trading. And then you being repeatable with your strategy allows you to consistently make money from the markets. So I hope this was helpful for you guys. I'm also gonna make sure that I drop other videos inside of this that kind of complement this to go deeper into each of these things so that you fully understand how to use each of these universal truths. So again, this was in depth, but again, rewatch this if you need to, the specific section. But yeah, this is the strategy that I trade. This is how I trade it, and this is why I trade it. So I hope this is valuable for you. Let's move on to the next section. When I set out to make this video, my goal was to over deliver as much as I possibly could. So I'm gonna literally be pulling a video from one of my mentorship group classes, right? I teach on how to enter, exit, and manage trades using actionable signals, time frame continuity, and broad informations all together. And I demonstrate how to practice them as well. This will basically be like a mastermind of me teaching and answering my mentees' questions and stuff like that they have for literally 2 hours straight. So this will be dense. I'm letting you know this will be dense, but this will give you deep insight on how to use the strat when it comes to trading futures. So without further ado, let's get into it. Today, specifically for this class, I know last class we talked about my strategy with the strat, right? I covered actionable signals, right? I had the strat sheet. Let me show you, share my screen real quick. Last week we covered the strat sheet, right, on Wednesday, like just the actionable signals and stuff like that, how to enter and exit trades. And now this class specifically, I kind of want to talk about basically using everything and putting everything together. So I just wanted to ask like quick questions, stuff like that too. Like, did anybody have any questions from last class about actionable signals, right? In terms of like actionable signals specifically, right?
I do, because sometimes it's this sheet and then it's the other one. I know you never talked about enforce, but I mean, just actionable, when you say that, that means those are the ones that you take the trade. That's how you take the trade, by calling them actionable signals.
Yeah, so like think of enforce as it's already going in that direction, and actually
Mm-hmm.
means it's about to go in that direction, right? It's set to
Okay.
go that way. So
Okay.
if I go to the thing and pull up I know I have a lot of strat sheets, but like they're all the same. Like it's like
Yeah, yeah.
reversal, yeah. So the actionable means like if this is a 2-1-2 reversal right here, right? Or
Mm-hmm. Mm-hmm.
continuation, right? We have a 2 up inside candle. In order for this to be a 2-1-2 continuation, it needs to break that high. But it's going to start out usually as an inside candle, right? It actually has to start as an inside candle. Then take out the high and then go up, right? But like, so what we'll do is, all right, bet when prices like that, we'll mark out that high and say, all right, when we take out this high, we're going to go to the upside and target this, right? That's how we basically do it. Enforce just means it already broke that level and it's already going in that direction.
Oh, this one. Okay, I see it now.
Yeah.
Oh, okay.
So enforce just means it's already going, it's already en route. So it's like traffic, like it's like not traffic, driving. It's like if I say I'm en route, like think of enforce as en route. It's already going in that direction. So if you already
Okay.
leave the house, most likely 9 times out of 10, you ain't gonna come back, or you shouldn't come back to the house unless you forgot something, right? So once you
Okay.
leave, you just gone. So think of
Okay.
yeah, yeah.
Nice. I got that.
Yeah, so that's basically how that works pretty much in terms of the actionable signals, right? So that's how the actionable signals work. Now, the one thing I wanted to kind of cover and come back to was the broadening formations, but I did want to cover the success protocol with you guys. To eventually, I just want to make sure you guys understand this first, right? So this is the strat sheet, and let me show you what that looks like on a chart, like in terms of how you would trade it, right? So I'll pull up, I'll go to anywhere. So right here, for example, you see right here, we have a 2 down, and then right here we have a 2 up, right? So right here we have a 2 down, and then it goes green, right? It's potentially going to go up and take out this high, right? So our entry will be right here. So this will be the trigger. We just call this the trigger or entry, right? So once price breaks above this high. So remember, it opens up right here, right? It doesn't take out the high yet, so therefore it starts out as an inside candle. Then it goes up, takes out that high. Then we're going to at least take out this and then eventually go up and take out those previous highs. And if you're
Are
wondering, like,
you?
how do I say that again?
No, go ahead. If you're wondering what?
So yeah, most people are wondering, like, how do I set multiple targets? Like all you do is just literally look to the left and just say, all right, where are the subsequent highs? Like if you just go, that's a high, and then you just scroll over and see if you see other highs. If you don't see any, then for now, those are just the targets, right? And you would just do it like that. Your entry will be here. First target will be right here. If it gets to this target, does an actionable signal against you right here, as you can see, we have a 2 up. Then we have a kind of like a 2 up right here, followed by a 2 down. You could take some profit off the table, right? On this trade. And then if you want, you can re-add on this 2 to reversal back up. So this is a 2 down right here, and then this is a 2 up. We can enter on that based on the sheet. So if I show y'all what that looks like side by side, the 2 to reversal, we have a 2 down followed by a 2 up. So anytime you see a 2 down, 2 up, you can take that to the upside. So right here, you can enter there. First target would be right here. It gets to that target. Then we'll just mark out those subsequent targets, and then we'll just keep going in that direction, right? Or look for it to go in that direction, right? Does that make sense?
It does, but I was wondering, are you able to like slow down a bar replay from that part
Yeah, of
on?
course.
Like
Yeah.
cover it so we don't see it so we can actually kind of like see it happening and then you could say, okay, this is where to get
Boom.
it.
I'll do it. I'll start it from here, just so I can show y'all the 2-1-2s too. So right
That
here,
probably
next candle opens up right here. So actually, I'll go before that, just to show y'all that actually. So right here, we have a 2-1-2 continuation. Right. So if I show
Mhm.
up the chat sheet, I want to kind of pull them up back and forth, like side by side.
Okay.
I'll probably do that. Let me do that. I'm gonna stop sharing real quick. How do I stop sharing? Boom, stop sharing. All right, I'll put them side by side, that way you can see it. And then Boom, put the sheet right here. Oh, there we go. All right, let me share my desktop now. Let me know when y'all can see it. Can I see it?
I can, yeah.
Okay, so this is a sheet right here. Is
Mhm.
right next to this, and then this will be the chart. So let me move this over a little bit just so y'all can see it. Make it a little bit bigger. There we go. That's a little better. All right. So right here, this is a 2-1-2 continuation. We have a 2 up, followed by an inside candle, right? Followed by a
Mhm.
2 up continuation right here. Boom. We have a 2 up, 2 up,
Mhm.
inside candle, 2 up. Cool. What actionable signal can set up from these last two candles right here? We have an inside candle, and then we have this 2 up, but it's looking like a shooter, right? So we have price went up here, seller stepped in, pushed price all the way back down, and now it's very close to taking out this low, right? If this takes out that low, what type of actionable signal is that called? So if we look at the sheet, we'll say, all right, where's the inside bar ones? Okay. We see we have an inside candle right here, followed by a 2 down, followed by 2 up. Then we have an inside candle followed by a 2 up. Whoa, we just did that. 2 up, 2 up, inside candle, 2 up right here, but it's closer to taking out the low. Next candle, if it takes out that low, we're targeting this right here. So that will be the entry. And then the target will be right there. Does that make sense so far?
Not really, but
Oh,
okay. We
but I
keep
got
just yeah. I can
no.
just
Okay, what doesn't make sense? So I can break it down.
I guess just that candle is going up, two up, but you were saying like it could possibly go down. But I'm looking
No,
at it.
yeah, this candle it went up, right? But I'm talking about the next candle. Because the next candle open up, it can do anything completely different. It can keep going up, but it can also go down. I'm saying we're asking the question, if it takes out the low, what does that set up for? And it
Oh,
sets
it
up for this. So if we take out this low, so that next candle opens up, what does it do? It takes out the previous low. So that's a 1-2-2 rev strat right here. We have an inside candle, followed by a 2 up, followed by a 2 down reversal. Boom. We would take the entry right here, and then our stop loss will go. If we had a wider stop, the widest it would be is right here. A tighter stop would just be the high of this candle. And then we just let it play out. Next candle opens up, goes down some more, comes back. This is all in 1 minute, by the way, so it's kind of fluctuating based on that. Boom. Next candle opens up. Inside, we could potentially go 2 down to keep going. This is a target still. Boom. It goes down. We hit the target. Now we're just looking for, we could probably take some profit if we have multiple contracts, and we'll just look for another potential setup. All right, so right here, it's still going down. Next candle opens up. It's inside and bearish, so we potentially could go and take out that previous low, which we're most likely going to do. All right, so just wanted to show y'all real quick. So I know y'all don't, I told y'all with I want y'all to primarily just take the 2-2 reversals, right? Where we have the 2 up, 2 downs, or the 2 down, 2 ups. But this is all actual signal right here, right? So we have an inside, whenever we have an inside candle, we could potentially either continue in that direction, right? The 2-1-2 continuations you see right here, we're going in that direction. So this is a 2 down because we took out the previous low, right? So that'll be a 2 down inside candle. If we take out this low, right? That'll be a 2-1-2 continuation to the downside. Meaning if you're already in sales, you can either add on this to keep going down, right? So you can add to your winners because, right, if price keeps going down, you're winning. So you can add to
okay.
based on this actionable signal, right? We have a 2 down, inside candle, inside candle. The next candle opens up. If it takes out that low, then we're going to the downside. So let's see. Next candle opens up, takes out the high. So instead of it being a 2-1-2 continuation to the downside, it ends up being a 2-1-2 reversal. So we're 2 down. So we are going down, inside candle, then buyer step in and take out the previous high. Now we're reversing. So we were going down previously because it's a 2 down. Now we're reversing to the upside. So your entry will be right there, right? Price takes out a previous high. Your target, first target was already reached. We already hit it right here. The next targets would just be these previous highs. Just like this. Boom, previous highs. Then we'll just wait. We just wait, right? Our stop loss, if we have a tighter stop, it'll be right there. So if price takes out that low, we don't want to be in that trade. We laid it out. We hit this target. Cool. We're still going up and we hit that target right there. Cool. So you can take profit at these targets, but I want you to exit the trade based on the actionable signal. So if we don't get an actionable signal here, I mean, against this position, because we're going up right now. If we don't get any bearish actionable signals, that you don't really have a reason to exit this trade. Right? Does that make sense? If you don't have a bearish, yeah. So if we don't have a bearish actionable signal yet, we don't have no reason to exit the trade. So we already took profit already. So we already secured profit. So we can't like lose anywhere, because if we have our stop loss right here and we took profit here and here, if it comes back and stops us out, we're good. So let's wait until the next candle. What do? We go open up, take out the previous high, right? Let's see what we do. We're still going up. We're still going up. We're still green. We did no reversal yet. So now we can just start trailing our stop loss. So when the next candle opens up, boom, next candle opens up, all we got to do is just trail our stop loss to the low of the previous candle. Because the reason the low is because if we take out this high, come down and take out this low, that's a 1 bar rep strat right there. That's a 1 bar rep strat. So that's what we're looking for pretty much. So if we take out that low, that's a bearish actionable signal against. We don't want to be a part of that trade, right? Oh, I see you. My bad. I didn't even see you. LaShawn, I saw you had your hand raised. What's good? My bad.
Yeah, I didn't want to jump in while you were explaining.
Oh yeah, you can do that. Yeah, just jump in whenever someone's confused, just jump in immediately.
So each line is a different contract. Each one of your target points is a different contract, or is this one?
It's
one
so
contract?
this is where we're looking for it to go. So for example, like with Trap, for example, you're familiar with how he enters trades, right? Like he'll wait for a price to get to 100%, right?
Right.
And then he'll take profit. He won't usually cut the whole position. He might take profit. Let's say he had multiple contracts. He'll take profit on half once it hits 100%. And then he'll leave the rest to run.
Okay.
And then he'll leave the rest to run. And then once it gets to a certain point or it starts to like stall out and not do anything, then he'll cut the rest of the position. Right. So this is the same thing here. Just all we're doing is like, we're just, instead of the 100% being a target, price action on this chart is going to be the target. So if we have, let's say we have 2 contracts, right? If it gets to one of these targets, all right, cool. I can take profit on one of these contracts at one of these targets. And then I already captured. So let's say my stop loss, let's just say the target I was trying to target was right here. Let's just say that was at it. Or I just had 3 contracts. Let's say I had 3, right? I would take profit here. Take profit on one contract once it hits that high. Then I'll take profit on one contract once it gets this high. Take profit. So now I have 1 contract left. So my stop loss, this is called a runner. So if I just leave this contract, so when trap does 2, right? Whatever contract I have left, these are called my runners. So right here, I took profit on 1, took profit on 2. I have 1 more left. I'm just going to trail this to the lows of these next candles that go up. And I want price to keep going higher. If I don't get an actionable signal against me, which is one of these right here, because the only way price can reverse is if we do one of these, period. That's the only way. So right here, we're going down, we're bearish right now, and I think it's 125. Let's see when the next candle opens up. Next candle opens up, and this next candle, boom, we go and take out the high. So now I just trailed it right here. Why? Because at this point, it took out the high, so that's a 2 up. If we go 2 up and then come back down and fail and become a 3, because that's what is a 3? When price takes out a high and a previous low. That is a 3. So that if that's a bearish 3, hold up. I don't want to be a part of that because that's a bearish actionable signal and I'm in a bullish trade. Exit. And you just do it like that. So then that way you don't have to exit based on your emotions. You're taking profit at your targets. but then you're exiting the trade based on the strat, which is this, that actual signal. If you don't get actual signal against, you have no reason to cut it. Right here, it's still going. You have no reason to cut it. Next candle opens up, boom, stop loss right here. If we take out that low, we'll cut the position. Price didn't stop us out yet. We're bearish inside. Let's see what we do. We're still inside, Poke up slightly. Next candle opens up, boom, trail it. That's basically like a 2. It's kind of hard to see it because we took out the previous high. But if we take out this low, that's a reversal against. Boom, still inside and bearish. Still inside and bearish. Boom, we go up. Our stop loss drag it right here. Why? Because if we took out this high, if we take out that low now, see it's a 1 bar ref strat, we took out the high. If we come back down and we take out the previous low, that is a 3. We don't want to be a part of that. So we just let it play out. Let it play out. Let it play out. Boom, it's still going up. So we have no reason to cut the position. Next hand opens up. All right, let's trail it again. No reason to cut it yet. Boom, now we became a 3. You see how it's bright red right here? It's bearish. We took out this previous low. That is a bearish actionable signal against. We're going to put our stop loss right here, and we're going to cut the last trade here. So we took profit here. We mitigated our risk already because we already took profit, and then we just trailed our stop loss, and then we exited the trade based on the actual signal, based on this sheet right here. This is just an example of like how to use those when you're trading. And you can do this on any time frame. Like this is on a 5-minute, but you can do this on any time frame. Because like, for example, if you're an investor, for example, right? I've done this with swing trades when I was trading options and stuff like that. Let me show you what that looks like. So if I go back, I'll just use the recent price action just to show that. Let me go back, select bar. Actually, I'll use this as a better example. We'll do this one right here. It's gonna go back. All right, cool. So I want y'all to answer this. Right now on the daily time frame, right? We were 2 like right here from Friday, Monday, and Tuesday. We had a 2 up, inside candle, 2 down, and then we had a 2 up, right? So that's a 1-2-2 reversal. Right here, we have an inside candle, 2 down, 2 down, 2 up, 2 up, right? That's a 1-2-2 ref strat. I don't care about the color. This candle took out the previous low. This candle took out the previous high. This is an inside candle. Therefore, that is a 2-bar ref strat. Now, when the next candle opens up, we got to ask ourselves, what can it do? It literally only has 3. It has 3 options, right? It'll become a 1. So I'll just put it in the chat. Hold up. It'll either be a 1, a 2, or a 3. Now, based on that, like the fact that it can only be one of those, right? What is it most likely about to do? This based on the color of this candle, right? It's a bearish candle, right? Is this thing closer to taking out the high or closer to taking out the low on this next candle? Put it in the chat or unmute. Which is this closer to doing on the next candle? When the next candle opens up right here.
Taking out the low.
Taking out the low. Okay, cool. Because it's a bearish candle, we're closer to taking out the low than the high because it's closer to taking out the low. So ask yourself, all right, if it takes out the low, what type of actual signal is that? So now tell me in the chat or unmute, what type of actual signal is that if we come out, open up, and take out this previous low?
To reversal.
Boom, easy. It's just a reversal.
So this is right here is taking out the low. I mean, you could possibly take out the low. Is it because the next candle can possibly open down here and keep going down?
Correct.
Is that what we saying?
Okay. That's exactly why. Because if it like because the likelihood, because if it opens up here, you just gotta ask like, all right, which is closer, this or this? And this is closer. Mm-hmm. I'm not saying it will, because it can easily do the opposite thing, but we're looking at probability. Right? So like that. What's the likelihood of one thing happening over another? Right? If we go, so now if we take out that low, where we'll be targeting, right? So let's say we're getting this, let's say we're trading options, right? Because with options, it's similar to futures, right? In the sense of I'm gonna buy this thing and then I'm gonna hold it for a certain period of time, right? Let's just say we get it out for whatever period of time, like let's say 2 weeks, right? That means we got 14 days for this thing to go and hit our target, right? So let me ask you this real quick. Let's say this is a target. Let's say I get an options trade and this thing is 2 weeks out. Do you think in 2 weeks we can hit this low at least?
Yes.
All right. So I can take that trade to the downside. I'm entering based on an actionable signal, right? To the downside, targeting that, right? And I'm just going to enter and exit a trade the same way based on the strat. So let's say I get 2 contracts of whatever this, let's say I was getting 2 contracts, right? Boom. I enter 2 contracts, lay it out. We go down, we take out that previous low. I enter this trade. Boom. I have 2 contracts. They already entered the trade. Boom. I'm letting it play out for the day, letting it play out. I probably got to speed this up a little bit. Let me change the time frame that this thing is moving because that's moving super slowly. I'm sorry, it's moving slowly. Hold up. It's going to cook up. Yep. A little bit faster, a little bit faster. What is it moving based on? That's what I'm trying to figure out. Oh, it's probably moving based on the 1 minute. Dang, that sucks. Hold on, let me change this to... Boom, there we go. That made it better. All right. So right here, we go 2 reverse to the downside. We already hit this target, right? In 1 day, actually. We'll take profit on that trade, right? And then what are we going to do with the last contract?
Leave a runner.
Say it again.
Leave a runner.
Leave a runner. So we take profit on 1 contract, we take our profit, and then we'll just leave a runner. So our stop loss right now would be at the high of that candle, or you just, if it's all the way down here, put your stop loss at break even at that point. And then on the next candle, just trail. That way, because it's no reason to just put it here. Just put it at break even. So now we're just looking for new targets for price to hit out. So we took out this. Now, potentially price is going to take out that right there, and then potentially take out that right there, right? So that's what we're looking for price to continue and take out. So since we only got 2 contracts, we can just wait for an actual signal against us, right? We already took profit right there. Again, it's up to you. You can take profit right there. That's fine if you only got 2 contracts, but we're waiting for an actual signal. Next candle opens up. Oh, what did it just? Oh, my bad. Sorry, the replay is just kind of weird. Let me try to do this real quick. Let me change this to the... There we go. And then I'll change this to the hourly just to make it faster. All right, that should help. Where was I at? Oh, I just go right here. Yep, there we go. I think that's where we were. Boom. Why is it still taking forever? Is it me or this thing taking forever? Boom, there we go. Much faster. All right, so now we're inside candle. Potentially, we're going to either take out this low or we're going to come back inside this and just stay inside, right? Likelihood it's going to take out that low because it's like right there, but we also could come back inside. So let's wait and see what it do. We take out the low, we come back inside, close bullish. All right, now we're coming back up. If the next day opens up, let me see when it's the next day open up. Next day opens up, we're inside candle right here, right? We're close. Are we closer to taking out the low or taking out the high? Put in the chat. Are we closer to taking out the low or are we closer to taking out the high based on where price is right here?
The low.
The low. Cool. So now we're looking for price to take out that low, potentially get to this target, right? We'll trail our stop loss and then we'll just let it play out. Just see what we do. All right. We're deciding to buy up. We go up. We don't want to take out that low. We close bullish again. All right. We take out this low. Now, what can happen on this next candle? It can either stay inside, take out the high and reverse, take out the low, right, and do a 2 and then continue down, or take out the low and then come and stop us out, right? So we're going to trail our stop loss one more time, and then we're going to see what it does. Let's let price play out and then see what it do. Boom. Price plays out, reverse. That's a 2-2 reversal against us. We're going to take profit on that trade. And then we're done. We took profit here, exited when price reversed against us, and then boom, we're done. Does that make sense? Like how that kind of plays out? Like that's like when you're trading and stuff, that's just like what you're thinking. You're just looking for price to do a 1, 2, or a 3. That's it. Because that's the only thing that can happen.
Okay, I appreciate you for doing that,
Yeah.
Barbie.
And now that's how actionable signals work, right? So now the next thing would just be time frame continuity, because you might be thinking, okay, bet, like, all right, that's all I really need. But you still need to do these at the right time, right? Remember I told y'all with time frame continuity, we need to pay attention to what are the other time frames doing when this is happening, right? So let me zoom in real quick. I'll just put this back here and then take this here. I like to have at least 3 time frames, going in my direction. But I'm just going to show you what this looks like. I'm still going to use the bar replay, but I'm going to show you what this looks like with multiple time frames. So let's just say I'll pull it to, we'll do it like this. We'll do the week. We'll do the daily. We'll do the hourly. And then we'll do like the 15-minute, right? 4 different time frames. I'm looking for to take an actionable signal that goes in the direction of at least 3 time frames. Meaning, if I take let's say, for example, let's say I was taking this bullish actual signal right here. If I take that, will there be 3 time frames on my side, or will there be 3 more time frames against me? So if I ask that,
On your
like,
side.
it'll be on my side, right? So let's go back to it though. Let's go back in time, right? Because I don't want to just like, pre to do that, right? Let's go back in time. So let's just say replay select bar. So we have to ask these questions. So boom, price came down. We took out this low right here. Boom. And then after sellers took out that low, right? Remember I told you sellers like to sell at the high, buy at the low, right? Buyers like to buy at the low, sell at the high. And then we started to buy up. So where are we looking to potentially go on this next candle? Where are we looking to potentially go? After we took out this low. Yep.
Right, to the next. All right.
To the high. Boom. So that's where we're targeting. So if we take out that previous high right here on this candle right here, then we're going to go and take out this previous high, and then this one, and then this one, if we keep going. So that's what we're looking for. So on this chart, we're just paying attention and saying, all right, bet, based on where we are, right? So look at where my entry is. I know it's kind of like, it's not showing it. I want the bar replay to be on all the charts. Hold on. Because I want it to show on all the charts. Let me go back. Bar replay. Boom. Okay, it's still kind of being weird. Let me, that's fine. Because you can see my entry. Y'all can see this white line across all the charts, right?
Yes.
Okay, cool. Okay, cool. So now we'll just see this is the line right here. So if we do a 2-2 reversal on this next candle, because that's the actual signal we're looking for, right? That's the actual signal we're looking for. If it hits this target, just ask yourself this question. If it goes if it goes 2-2 reversal, if we hit that target, right? That's the target that we're looking for. If it hits that target, will the hourly, at least the hourly and the daily, at least, because that's 3 time frames, 15-minute, hourly, daily. Will the hourly and the 15-minute and the daily all be green, or be going to the upside? Based on this white line. Because if you see, once we take out the high, above that, we're bullish on the 15, right? Right now, this is the open on the hour. So above this level right here, we're bullish on the hour. So if we do a 2-2 reversal right here on the 15-minute, will this be bullish on the hour? Yes or no?
Yes.
Yes. Okay.
On the
Mhm.
daily, this is the open right here. This is the open on the daily. If we're above, if we do two to reversal right here, above that, will the daily be bullish?
Yes.
So if the daily will be bullish and the hourly will be bullish and the 15 will be, oh my gosh, and the 15 minute will be bullish. And we can check the week too, right? This is the open of the week, right? You see, kind of see where our crosshair is. Like this is where open on the week, right? Are we bullish above the week currently
Yes.
at that level? Where because this is the actual signal. We're taking the actual signal right here. This is the open on the week. So are we bullish on all 4 time frames if we take out that previous high?
If we take it out, yes.
All right. So if we play that out, boom, we're looking for price to take out the high. Let's say we buy, I don't know, what do you want? ES? Let's say we buy 2 contracts, something like that. That's not what I'm trying to do. Let's say we just buy 2 contracts. Cool. Right above that high, we're going to buy 2 contracts. Our stop loss is going to be at the bottom of this low. And then I'm not even going to say a take profit because I'm just going to trail my stop loss pretty much just to exit. Cool. Let's play it out. Cool. We take out the high, right? We come back down, right? That's fine. Next candle opens up, right? And then we go to the upside. We don't take out this low, right? So I like, and that's why I love having my stop loss right below the tick, right below it. Because right here we didn't take it out, right? Because the only way we took this out is if we had a 2 to reversal against. But we didn't do that. We took out the previous high. Now we're going to the upside, up $1,500 on that trade. Let's say the first target was hit. All right, cool. I want to sell and take profit on 1 contract. Boom. Take profit. I'm going to sell 1. Now I have 1 contract left, right? I'm putting my stop loss at break even so I can't lose. And now I'm just letting the trade play out. Or I'm just going to trail a little bit higher, right? Now I'm just going to let the trade play out. Because we have a 2 to reversal on the 15-minute. We are bullish on all time frames. Daily is bullish. Weekly is bullish. Hourly is bullish. All time frames are bullish right now. So as long as they stay that way and we don't get no actual signal against, then I'm good. So let's play it out. Next candle opens up. We're 2 up in green. Did we take out a previous low? Yes or no?
No.
No.
Nope. So do we need to exit?
No.
Boom. Next candle. Did we take out a previous low?
No.
Could we take out this previous low on this next candle potentially?
Oh, yeah, we could.
It's a little indecisive, right? That's a doji
Yeah.
candle. Right? We're a little indecisive, so we could. So cool. Let's say we trailed it, right? Let's say we trailed it to our stop loss right here, right? Now, I recommend eventually once you get to a point where you can have multiple contracts, like 2, like 3, 4, 5 contracts and stuff like that, then you can start taking profit and then like taking profit, but then like for example, I'll show you. Let's say we do a 2 to reversal on this next candle. Okay, we didn't do it. So we do right here. Let's trail it to the next candle. Boom. Next candle opens up. We still don't take out that low. Next candle opens up. Oh, 2 go 3. Boom. We took profit right there, right? $2,300 on that trade, right? And we only risked, I think in the beginning, it was roughly about 500, right? $500 to make
That's what I was
$2,400.
going to ask you like that. I guess it depends on your account, right?
Yeah, it depends on your account, right? But again, this is ES, so you can just drop that down to micro ES,
Right.
right?
Okay.
Which is 10 times less. So would you be okay with losing
$50.
$50 to
Yeah.
make $230, $235? Like, sure, that's good. On my account, shoot, let's say you on like you have $500 in your account. You up, how much are you up? 50%, 40, 50% on your account in one trade?
Yeah.
Just follow the track.
Yeah.
To reversal, wait for the reversal against. Now, what you're gonna notice is you can take profit. I recommend take profit on this time frame, the entry time frame. Just take some profit and leave a runner based on this hour, because you'll know, and I'll show you why. Boom. We didn't get a reversal against on the hour yet. No reversal against on the hour. Now we get a reversal left on the hour right here, right? So we can take profit at a higher point than we did, because we took profit here. We could have took profit there based on the hourly. So that's why our time frame continuity is important. Right here, the hourly is still bullish, right? So even when we took profit right here, we had a 3 against, right? We didn't take out the low of this previous hour. Because this is the stop loss. If we had our stop loss right here on the hour, that's where it would be. Did we take that out on the hour?
No.
No.
So technically speaking, we could have held this a little bit longer and caught more profit based on time frame continuity, because the hourly was still bearish and we didn't have a bearish reversal against on the hour. And the daily is still what color?
Green.
Green.
What color is the weekly?
Green.
Mhm.
So we don't get a reversal against on the hour, and the daily and weekly is green. Should we fully exit the position? No, because time frame continuity. So we got an actual signal against right here. Take profit, right? If you need to, like, that's what I'm saying. If you have two contracts, all right, cool. Take profit, right? In the beginning, take profit, build up your account. Then eventually, and this is what I'm talking about. That's why I want to get into my success protocol, scale into big positions, and then you focus on these medium time frame, like the hourly, and you focus on those and you hold it. Because this is why we have a 3, we have a 2 down right here. It doesn't take out the previous low to trigger this actionable signal, right? And then we go bullish, right? I didn't even got to ask you, like, if we, like, what are we closer to taking out, the low or the high? When this next candle opens up, we're closer to taking out the high. So that's why I say you can either keep holding this thing, or you can even add on this position. Why would you add on this position? All right, bet. If I add on this position, and let's say my target, for example, is like right here. If this thing goes 3-2 reversal to the upside, right? Will I have continuity on my side? If this goes 3-2 reversal, so above this white line right here. So look at all the time frames. Look at all the time frames.
Lord, I'm gonna have to get used to looking at all these time frames.
I know it's a lot.
At one time, oh my God.
You just
I
get
used
used to
to
it. Like,
flip back and forth, but like to look at it like this, because you got a Mac?
yeah, I got a Mac. Yeah,
Like the boxes be so small.
they do be small. Yeah, it be throwing me off too. That's why, so what I'll do is and that's why sometimes I have indicators. So like I'll show you this indicator I have right here. This one shows the color of the time frames. So it doesn't show the actionable signal. Like, so for example, I can't see this as it's a 2-2, it's setting up for a 2-2 reversal potentially on an hour with this, but I can see the color during those like specific times. So like if I go back, for example, right here, if I go back, I see the color of all the time frames. The weekly is, at that point, well, hold up. It's probably showing it right now. Let me see if it's going to update. Yeah, right here. So it's showing in real time. Okay, cool. So you see how the weekly is bullish, daily is bullish, 4 hours bullish, hourly is bullish. Hourly right here, what color is it?
Green.
Green. So it's bullish. It's showing this. So without that here, you can still see what color is the hourly for time frame continuity, because you need at least 3 time frames going in your direction. So we had a 3-2 reversal right here. If this thing, like, you can ask yourself, if we go 3-2 reversal, is the 30-minute, hour, or 4, like all these time frames, is at least 3 of them up? And if the answer is yes, right? If the answer is yes, boom, I can take this 3-2 reversal to the upside. Because now, what are we? We're 15-minute. We're bullish on the 15-minute time frame. We're still bullish on the other time frames. Look, bullish on the 15, still bullish on the 30, still bullish on the hour. We were bearish right there. We were bearish just then, but then we went back into continuity. 15-minute, 30-minute, hourly, 4-hour, daily. Everything is still bullish, so we can keep holding this thing. All right, now 15-minute is bearish. All right, cool. Now we just ask another question. If we take out this low, and you can just pay, this will update in real time too. So our stop loss will be here. If we take out that low, will continuity shift on the 15-minute, 30-minute, or hourly time frame? And just answer that question. So right now, we're still bullish. We didn't take out that low. We took out the high. All right, cool. Still continuity to the upside. All right, if we take out this low, and this is why I love time frame continuity. What time is this next candle going to open up?
In 15 minutes.
Yeah.
In 15 minutes, at what time specifically at the bottom?
1:15.
Oh yeah.
Well, 1 o'clock. Well, yeah. Well,
Oh,
yeah. 12:45, 1
you-
o'clock.
I got you. Yeah. Okay. Yeah.
So what time? What candles open? What new candles open up at 1 o'clock?
The hourly.
Yeah, the hourly.
The hourly. So so you gotta ask the question. If this opens up and we go 2-2 reversal on the one at 1 o'clock, will these time frames, if it takes out that low, will it be bearish?
Yes.
Well, the 15-minute, or are you
Yeah.
talking about those
Yeah.
two?
Yeah, so the 15-minute, 30, like the 15-minute, let's just say the 15, like the ones on the screen. Let's just say we're focused on the 15
Oh,
minute
because
hour.
they all open at the same time at
Correct.
once. So if the 15-minute go bearish, then the
Then
hourly. Okay. Okay.
yep. So the 15 minutes. So literally every time frame from the hour down will be the exact same color at 1 o'clock.
Got it.
So if we take out that low, that's a bearish 2 to reversal. So that's one principle of the strat. Then and we got continuity to the downside now.
Mm.
Because all the time frames are going to be bearish at the same time. At least 3 or more time frames are going to be bearish continuity to the downside. And I'll show you what that does. And that's how you do it. You see how aggressively that candle moved down?
Got it.
15,
Yeah,
30-minute hour. So now you couple what? Actionable signals and time frame continuity together. And now you get a way to exit positions and enter positions, right? Because you entered a position here, we entered a position down here. What? With continuity and actionable signals. We entered on this 2 to reversal. We checked if we entered here, would the time frames be bullish? We all said in agreement, yes. So we took the trade, it went up. We had a 3 to reversal right here. That's an actionable signal. If this thing goes in force, meaning if this thing goes above this white line, will 3 or more time frames be going up? And the answer is yes, because the hourly will be bullish, the daily and the weekly will be bullish. All right, cool. We're going to enter that trade. Now, next candle opens up. That's an actionable signal against. So we get stopped out here. That's fine. Actionable signal, that's fine. Cool. But if we reverse at 1 o'clock, right? 15-minute, 30-minute, and the hourly time frames are going to be opened up at the same time. So if we all take out that low, that's bearish. Is that going against or toward time frame continuity?
Against.
It's going against it. So now what happens after we go against it? Boom. Subsequent bearish candles. And then we could try to push back up again, right? Potentially, right? If we continuity back on our side, but you'll see it kind of chops around a little bit because they're like buyers and sellers are fighting now. Now you can start to take profit and exit positions because I think we still go up a little bit after this toward because we start. Yeah, this is around the end of the day. So usually, and you'll see this too. It's called power hour. So at 9:30, New York Stock Exchange opens, right? So there's going to be a lot of aggressive movement around like 9:25, 9:30, and then towards the end of the day, it closes at 4 o'clock. You'll see a little bit more aggressive movement towards the end. So you see 3:45, 4 o'clock, it starts to move a little bit more aggressively. But at that point, you could just be done, right? Because you already took profit. So you can take profit. So instead of taking profit here at 2,300 and just being done, right? You could have taken profit here and made at least, I think, probably like $4,000 on that trade by following actionable signals and time for continuity. If you just exited with actionable signals, you would have missed out on money. So that just goes to show if you just use one part of the strat, you limit how much you make. And you also you limit how much you make. Does that make sense?
Yes.
And this will take like practice and stuff like that just to, it's not even practicing doing it because it's really easy to do, right? You're just like, boom, once it takes out the high, you buy. Like that's a 3-0 reversal against. I mean, in force going to the upside, there's time frame continuity. You'll take it to the upside. You just buy. And then you just wait for it to go against you with time frame continuity, and then you exit. Right? It's simple to do, but it's like you still have to practice seeing it, right?
Yeah.
Now, once you start seeing it, then you'll just start taking it, and then it's just going to be like clockwork. Now, the last principle that I want to talk about too is called the broad information.
Talk about it. Yes.
Yes, because that broad information, I know it's probably like, how many of y'all like unmute? How many of y'all the broad information is a little bit kind of tricky? It feels hard. It's like, ugh.
Yes.
For me, and I'm good with trend lines and stuff like that, but that board information throw me off. I see where you could like go from like a 3 on a time frame, and I don't know. Show us.
All right, I got y'all. So I'm gonna show y'all with 2 time frame. Haven't started that yet. That's fine. I'll cover it like now just so y'all can see it. So I'm gonna use the hourly here, and then I'll probably use like the 15-minute. That should work. That should be fine. Trying to see if I can look for a 3. Okay, yeah, boom, boom. That's a beautiful 3. So right here, this is a 3. This is a broadening formation on a lower time frame, right? All a broadening formation is subsequent highs and subsequent lows. And I'll show you what that looks like. We have price, we started out a high, created a low. We come up and take out that high, boom. That's the high of the broad information. If we take out that low, that's the low of the broad information. And then it just expands, right? That's what we're looking for. Now, it's not always going to be picture perfect like that, but but it's not about that. It's about what we're looking for. We're looking for price to take out lows, and we're looking for price to take out highs. Why are we looking, like, tell me why are we looking for price to take out lows and to take out highs? Why are we looking for that? Anybody? We talked about it last class.
Nope.
All right, bet. I got
Important resistance.
Well, no,
No.
that's for resistance. So like it's funny. Okay, so I'll explain that. I'll explain that too, right? So where do buyers like to buy?
At the high.
Buyers like to buy at the high? All right, bet.
Oh, buyers at the low. Sorry.
I'm gonna go to the MacBook store and get my MacBook at $4,000.
Oh, that was us.
Yeah.
I'm gonna buy this thing for $5,000. You know what? Because that's exactly all buyers like.
2021. That was me.
People don't ask like, yo, what's the cheapest thing you got? Nope. What's the most expensive thing you got? I'm trying to spend money because I'm a buyer. And then I want to sell something for cheap. I want to buy it for $1,000 and then I want to sell it for $1. Boom. That's the dream. So most people want to buy at the low and then sellers want to sell at the high. So what happens, watch this. What happens when buyers buy at the low and then it gets to a high? How much do they make money or lose money?
Oh, they make money if they buy at the low and selling at the high.
Now, how do they, watch this. How do they realize the money they made? What do they have to do?
Get out the trade.
Yeah.
They have to sell.
They have to sell. All right, so it got to a high. So that means buyers like to buy the low. Once it gets to a high, they like to take profit.
Mm-hmm.
And in order to take profit, you have to sell. So that means that they're selling at the high.
Okay.
Right? So buyers like to sell that, like buyers like to, watch this. Buyers like to buy at the low, and buyers also like to sell at the high. Guess who else like to sell at the high?
Sellers.
Sellers. So now you got buyers selling at the high and sellers selling at the high. So what happens when we get to the high? Boom. We starting to get wicks, showing a little weakness. We ain't moving as strong. Then we get a actionable signal, a bearish actionable signal against, because sellers start to sell. Right here, we have a failed 2 up that becomes a 3, right? So we go up, take out the high right here. Then we become bearish right below this low. Once we take out the high, go bearish, boom. We're now a failed 2 candle. Where are we looking for price to go to take out that low? That's what we're looking for, right? Next candle opens up and then boom, we go down and we're to the downside. Now, where are we looking for price to go? To take out the low. That's what we're looking for. We're looking for price to take out this ultimate low. That's what we want. We want price to take out an ultimate low, right? So right here, if you see this is a low that's kind of sticking out, we want price to take that out. Boom, we took that out, went to the upside. Now, sometimes it won't always take that out. It might take out a previous low than that. So I'll show you what that looks like. Right here, and this is why I love this. Look at this the 60-minute candle. The 15-minute candle at 9 o'clock, look what happens. We open up, we come down, we take out this previous low, and then we come back in the range. Right? Do you see that? This is the low.
Yeah.
We took that out, right? So we had this was before this candle, like what's it called, became a 3. This was a what's it called? This is a 2-on-2 continuation. We had a 2 down, inside candle. Then we came down, took out the low, and this is so beautiful. We took out the low. So this is the entry for a 2-on-2 continuation. This is the entry. This is the target. Boom. Did the target get hit?
Oh, yeah.
Did sellers get what they want? Remember, they like to sell at a higher price and they buy at a lower price. Buy it back at a lower price. Did they get what they want?
Yes.
So if they got what they want, what are they going to start doing to exit their position?
Buy.
Where do buyers like to buy?
At the low.
So it gets to a low, you should see evidence of that. So on this candle right here at 9 o'clock, do we see evidence that sellers sold this off, they took profit, and then buyers bought this thing up aggressively at the low?
Mm-hmm.
And then, so if that's evident, now what do we know about buyers? They buy the low. Where do they want price to go?
To the high, at least.
To the high. Let's mark out those highs. Boom, right here, right here. Now, how are we going to enter this trade? Actionable signal. Now, so you see how we did? We used the broad information phenomenon, because it's a phenomenon that happens because buyers like to buy at the low, sellers like to sell at the high, right? All we got to do is just wait for price to check out a low and then give, like, look at this. You see, we have a shooter. This is a hammer. We took out the low. Then we came up and buyers aggressively bought this thing back up after it's hitting that low. What does that mean? Sellers took profit. Buyers aggressively bought. Period. That's the only thing that happened right here. That's the only thing. The only reason price went up that much in a span of 15 minutes right there is because buyers and sellers were both buying. Sellers were buying to take profit because they were selling here and they have to buy it back at the bottom because they take profit. Same way we set targets, they're doing that too. Once it gets to the low, boom. All right, got my product, I'm done. Then buyers stepped into the market and they started aggressively buying this thing up. Now, what are we looking for to enter this trade? A 2 to reversal, because right now this is a 2 down. Next candle potentially could go 2 up. So we're looking for a 2 to reversal to the upside. To target what? To take out the high. Notice what's happening also on the, pay attention to what's happening on the hour. This candle, look at right here. Do you see kind of like where our cursor is? When I move it over, you see what how it kind of moves over on the hourly time frame? Do you see that?
Yes.
Okay, so right here, when it gets to the hour at 8 o'clock, right? The 15-minute candle opens up. We have 8 o'clock, 8:15, 8:30, 8:45. Boom, that's 4 candles. Next candle opens up, 9 o'clock. So this is a new 15-minute candle, and the hourly open up at the exact same time. This new candle opens up, it takes out the low, and then it becomes a failed 2 on the hour and a failed 2 on the 15-minute time frame. And we just started the hour. Since we did this in the first 15 minutes of the hour, we got 45 minutes left. If we keep buying, do we have enough time to take out that high? Yes or no? On the hourly time frame.
Yes.
Yes.
Boom. We got 45 minutes left. We got 3/4 of the time just to go. All we gotta do is go up here and take out a high. That's what we're looking for. So on the hour, I literally have a thing for it. Outside hour. That's the target I'm looking for. Outside hour, right there. So if I go back to the strat sheet real quick, what is this on the hourly? What actionable signal is that? That's an inside candle, failed 2 to become a 3, and then we're targeting that. We go to the sheet. What do we see? Inside candle, 2 down. We come back in there. Boom. Where are we targeting? Right there, because we become a 3 right there, and then we're targeting that. Do you see that?
Yes.
Boom. That's what we're looking for. We're looking for price take out a low, take out a high. That's all the broad information is. So this right here, draw right to left. Boom. That was the broad information. So we started. So if you look at right here, the broad information started like that because it happens so much times. I'll show you all the broad information right here. So right here.
That was going to be my next question. Like, where do you start it? You
started like literally anywhere. Like, so this is what I'll show you how to look at it. So right here, you see how we take out this high. We don't take out this low right here, and then we come back in this previous range and we kind of get stuck. After price gets stuck, and we want to look for price to restart, and do the broad informations again. So right here, the easiest way to look at it, you just look for a 3. This is a 3 right here. This is a broad information, period. How do I know? Because it took out a high and took out a low. That's what a broad information is. Took out a high, took out a low. That's a broad information. We took out a low, took out a high. That has to be a broad information. Otherwise, it's not 2, it's not an inside candle, it's a 3. It's a broad information. Then we're looking for price to expand. And then once it expands enough and it's done, once it does an actual signal against, we want it to come back through the previous range. So right here, the broad information starts here. The next candle opens up. What does it do? Expands. Then it expands again. Now we redraw the broad information. This took out the previous high. So we'll just draw it right here. Why? Because we took out this previous high right there. Now we took out this previous high. What are we looking for price to do? Come back through the previous range. We have an actionable signal against. We have a 2 go 3.
Why do
Right.
it have to come back?
We don't have to come back. We're looking for, like, it did. It came. So
Okay.
because it came back, remember I told y'all buyers like to what? Take profit at the high. Sellers like to sell at the high, and they want price to go down. So they make money because that's the only way they make money. So if they're gonna sell aggressively at this high, the only way they make money is if price goes down. Period. I've never met a seller that sold something for $1,000 and then bought it back at 2,000 and made money. I've never seen that. Never seen that before in my life. Maybe I gotta keep living a little bit more until I see that, but I don't know. I haven't seen that before. They have to sell at this high aggressively. That's the only, like, this is a 3. They sold, the candle opened up here, it went up higher. They said and then they aggressively sold this thing off. Where do they want price to go? To at least take out this high right here, because that's where the broad information started. We took out the low, came up, took out the high, expanded, then we came back. Where are we looking for price to take out? That. And what did we do? We took that out. Redraw the broad information. We took out that low. We took out the high, expanded. We took out this low, boom, expanded. We didn't take out this low yet, so we only took out this low. So we just redraw it like that. Then we go 2 to reversal back inside. We should go and take out this high right here. But then what do? We kind of go up a little bit, and then we come back in the previous range. So this restarts. So there's broad informations everywhere. So like I'll say it like this. The easy way to look for broad informations, just for now, just so you can practice getting the hang of looking for broad information, just look for obvious pivots and high, like wherever you see like a reversal pattern, there's a high or low, like right here. This is a 3-2 reversal, boom. 2-1-2 reversal, boom. This is a 1-3 ref shot, boom. This is a 2-2 reversal right here, boom. So those are highs you can look for price to go and take out. So if we took out a high, boom, where are we looking for price to go back down to? Take out. We 2-2 reversal right there. All right, cool. That means we're going to try to take that out again. We're just trying to expand to the upside again. That's fine. Because I already told y'all what to do. If we have an actionable signal, boom, take profit at your first targets, stop loss at break even so you can't lose. And if we keep going, that's just more money. But if it reverses against you, so what? You already took profit. Then we reverse
So what
it.
is it telling me?
Huh?
So what is it telling me? Or what's the reason?
The broad information?
Yeah. What's the reason for it?
To get the best entry in the market, because that's like the only way you can win in the market. Like the only reason you ever want to trade ever is because you traded based on your broad information, some way, shape, or form. So because remember, what is a broad information? You like buyers like lower at lows and higher highs. So the reason to say like it's lower lows,
Just catching the highs and the lows. Right?
So we're just saying it could possibly go to this area once it's already drawn out. After we take out the okay, yeah. We're trying to say this is how high it could possibly go next or whatever.
Correct.
Okay.
That's all we're looking for. So like I'll show you another example. Like that's a beautiful example because you see right here, it's beautiful because we take out the low and we already hit the target. We hit the low. Now we're looking for price to come back to the previous range. We come back through it and then we just rip to the upside. Because buyers bought at the low. So like literally buyers like to buy at the low and then they like to take profit and sell at the high. So everyone who bought here won because of the broad information, because they took profit, like they bought at the low. Price took out a previous low. They bought aggressively. That's the only reason why price went up, because they bought aggressively. And then because they bought aggressively down here, they wanted price to keep going higher. Because remember, we don't move the market, institutions do. So now you gotta ask the question, all right, bet. If they put, let's say, because the only way they can make this move up is if they put like millions and millions of dollars behind this trade. If they put millions of dollars behind this trade right here, they probably gonna if anything, they're gonna make this thing go to the high so they can make money. Wouldn't you?
Mm-hmm.
I mean, if you had 5 million, let's say I'll put in this perspective. Let's say you bought 5 million, let's say you bought $5 million worth of ES contracts down here, right? If this thing go against you, you're gonna lose a couple million on that trade. I don't know if y'all, I want to lose a couple million. I got 10, 20, 30, let's say I got 10, 20, 30 million or something like that sitting off to the side to add into this if I need to. Boom, price reverses up, but then somebody tries to sell against me and take that thing down. This next candle, look at what happens. 9:30 opens up. You know what? I'm gonna buy off that open. Boom. I'm about to put 10 million in that. Buy it. Aggressive order hits the market. They start buying it. Everyone else starts buying it. Now it's just a trickle effect of buying, and then FOMO. Like, how many of y'all have fear of missing out? And then y'all chase the trade and y'all entered it when y'all weren't supposed to?
I have,
Yeah,
yes,
been there,
but
done
not
that.
So if you've been there and done that, you think you're the only one that's been there and done that?
absolutely
Nope.
not.
So you're not the only person. So you doing that,
Right.
Chris is doing that, everybody else doing it. Everybody start buying. Everybody, because they FOMO, fear of missing out, and then everybody just starts buying aggressively. Now this guy won because all he had to do was just knock over the domino. But why did he knock over the domino? Because that's the only way he can win. Buying at the low, selling at the high, that's the only way you win. Selling at the high, buying at the low, that's the only way you win. So because people because the market prints so much money and so many people are making money in this market, they have to be doing that. Like, matter of fact, if I go back to the chart, I think Josh posted.
His chart, yeah, he had it drawn out.
He had it. Where did he take? Let me see if I can.
He put in a general chat.
Yeah, he put it in a general chat. I think, yeah, right here. So right here, he took out, like, he entered this, like, right. So down here, we took out a previous low, and he always, it's so beautiful because he be doing it really well. He waited. This is the open that we had. It came down, took out that low, came back up. I gotta talk to him about redrawing it, like, because the way he's drawing the broad faces is crazy. But we did come down here. We took out this previous low, right? After we took out that low right there, we reversed back up. He bought on that, and he's targeted this high because if I go back to that, matter of fact, this was, what day was this? This was yesterday, right? Friday. Yeah, Friday. This was at 9. So let's go back to that chart on ES. Just like I just show y'all. Turn off replay mode. That was at what was that? 9 o'clock? Around 9 o'clock, 10 o'clock that he took that trade. Boom, right here, 9 a.m. And look at what it did right there. 15. Look at that. 1-3. Took out the low, took out the high. Boom. And he did that on the 5-minute. Let's go. Let's pull it up, see where he entered at. It was right here. Boom. So let's look and see what happened. So right here, we tried to take out this high, right? So we created this low. We tried to take out the high. We didn't take it out, right? We expanded to the downside. And he knew, all right, bet. We took out this low right here. And now we're reversing back up. And we're also the market about to open, so we probably could buy back up right there, right? So I'm looking for price to take out the high on a bigger time frame. Because we took out this low. We already did it right here. We took out this low. Because broad information, they just restart. It's so beautiful. Because right here, comes up, takes out the low, sweeps that, buyers buy, price goes up. And then that just restarts over and over. So right here, when it's even when it's chopping right here, you notice what it's doing right here. We take out that low, buyers buy. What did it do? Take out the high. Then after we took that high, we came down. We were too weak to make this new low. So we ended up taking out the high again, expanding, came down, took out that low, came up, took out the high, came down, took out this low right here. Now what are we looking for price to do? Come back up, take out that high. He already knew that because I taught that last class, like, with the broad information, stuff like that. He already was looking for that, and he just looked for the broad information because he was looking for price to go up here. So he was looking for every single signal to go to the upside. And then what did it do? We started to buy back up a little bit, kind of gradually. And then what do we do? The broad information restarts. Remember I told you, if there's a 3, there's a broad information. So right here, that's a 3. You draw it out like that. What do? We came up slightly, ever so slightly, and then we came back to the previous range. Redraw the broad information. We took out that low, right? Expanded. Then we came back up, took out that high. So let's draw it out. We took out this high, took out this low, took out this high, took out this low. 1, 2, 3. Where are we looking for price to go now? After we took out this low, where are we looking for price to go?
To take out the high.
Take out the high. What did he look? What did he enter on? He entered the reversal up. That was on the 5 minute. He was probably entering on the. Let me see. Yep, boom. Yep, 15. Enter on the reversal. He entered late though. He entered late. He entered late as him up, but he be holding that jump. I'm proud of him. He gotta start holding them. He gotta start entering lower. He be missing out on profit on that. But yeah, so right here, he entered on the 2-2 reversal to the upside. A little bit late, but he entered on the 2-2 reversal to the upside. What was he targeting? This high. And then what did he do? Price got to the high. I told him you can take profit at the high if you want, but let it expand because it's going to expand. Like, right? What did we do? We didn't just take out the low and not do anything. That's why support and resistance is kind of like support and resistance is like it's visually able to it's visually appealing and stuff like that, but it's not encapsulating what we're looking for, like what price actually does, which is expand. We don't just like stay in linear. We take out lows and take out highs and then we expand. That's what we do.
That's why we kept getting swept and clapped with that support and resistance. Because
it's just flat lines and stuff like that. But like prices never like literally the only time you'll ever get like flat lines and stuff like that maybe is like in the like futures because like sometimes it's like that. Sometimes. But even still on a like some way, shape, or form, it's still taking out lows and highs. Period. And then we just like the process restarts all over again. So even when it's consolidating like this, it then restarts. Like this is a broad information. Even this is a broad information right here. Anytime where price takes out a high and takes out a low, that's a broad information. Boom, we took out this high, came back through the previous range. Where are we looking for price to go? Take out this low. What do? We took out that low and then we expanded. Even the pullbacks are like reversals. I mean, are broad information. Because if I draw out let me draw out a box real quick. If I draw out a box, right? If let's say price is playing in here. We take out the high of the box, and then we come back in. Where are we going? Take out the low. So we took out the high, took out the low. You can draw the box on this. Just draw the box on all these. We took out the high, and we came back in the range of that box. Where are we going? Take out the other side. So even right here, I bet y'all didn't see the broad information right here, did you? Y'all just thought this was a 2-0 order. But anytime price takes out a high, and it comes back in the range of after taking out the high, it's probably going to go and take out that low. Right here, actually, I think right here slightly did. We took out the high slightly, came back in the range, took out the low. It happens so much, but you got to like train your eyes to see it. That's all. So right here, we go, it's beautiful. We take out the high, come down, next candle takes out the low, then takes out the high. Inside candle, now we're back inside. We got to wait to see what it's going to do. So what does it do first? What does it do first right after this? After this inside candle, what does it do first?
Take out the low.
It took out the low. Now right, left. What are we looking for price to potentially do?
What, after it took out this low? Take out the high?
Yeah, we took out this low right here. What are we looking for price to do?
Go up, two up.
Take out the high.
Take out the high. Cool.
And it's a hammer.
And it's a hammer. 1-2 ref strat. So now we have the broad information because why? We know we just hit the low and we just did a hammer. So that means that sellers took profit and buyers started to buy aggressively to hit this thing up. If we take out that high, that's an actionable signal. 1-2 ref strat. Inside candle, 2 down, 2 up. 1-2 ref strat to the upside. And what did it do? It took out the high. Let's see what we do from there. All right, we take out the high, expand a little bit higher. Inside candle, slightly inside candle right here. Kind of not showing it, but a slightly inside candle. Boom, take out the low. All right, cool. Where are we looking for price to go? Take out the previous low. If we keep going, right? Right here, we take out the low. Then we reverse back up. We expand. We keep expanding. Then we expand.
So every time it expands, you got to move your line.
You don't have to, but like that. This is like, you don't really need this line. Like, only reason I'm having this line up just to visually show you that, all right, this high took out this high. Like, the reason he drew it was to show you, like, all right, bet this high, right? The reason it's going up like this is to show that this high went higher. Because if it's doing this, right? Let's say, for example, like price was doing it, like, for example, a broad information is so this is, okay, boom. The only way this forms is if price went higher previously than when it was. Otherwise, if it's just doing it in a box and it's kind of just staying like inside like this and it's not doing anything, that's an inside candle. This is a, let me show you. Why is this an inside candle? Why is it an inside candle? It's called an inside candle because of what?
It didn't break the high or the low.
Correct. So if it didn't take out the high or low, it's not going anywhere. Therefore, it's consolidating, right? And it's not expanding. It's consolidating. It's contracting. So we're looking for a price. That's why. So whenever you see an inside candle, the broadening formation process will restart because it has to take out the low of the inside candle to either keep going in that direction or potentially come back in that range. Right here in this case, it took out the low, hit the target, and then came back in the range immediately. We're looking for price to come back out. That's why I love RevStrat so much because, like, what is this? This is a broad information. This is an inside candle, 2 down. We took out the low, 2 up reversal. Boom, we're taking out this high. We took out the low, took out the high. That's a broad information. And then Josh took that trade to the upside because he knew where price was going. This is a 1-3 RevStrat on the 15-minute time frame. We took out the low. Now we're looking for price. Once we took out the low, came back in the range like this, and we had a couple minutes left, like on that candle to keep doing that. Boom. I'm drawing this to the high, and I'm looking for price to expand. So now what does that look like on the 15-minute time frame? Get rid of this, get rid of this. What does that look like on the 15-minute time frame? Right here, this candle at 9 o'clock opened up at 9 o'clock. So let's go to 9 o'clock. Boom. Before this, we were inside. We were consolidating. Then what did price do? We opened up. This was the low of the hour. I mean, not the hour, the 15-minute. Right there. The low was right there. Yep, right there. We came down, took out this previous low, and we took out that low. So we redraw the broad information, right? We took out the low. Now we're looking for price to do. Go back up through the previous range and take out the previous high. So that's the target. And that's the high of this previous candle. Once it does that, that's a 2-2 reversal to the upside. Boom, target this. We're either going to come back in the previous. That's why I have the stop losses like that at the low. Why? Because if we reverse back through, where are we going? Right there. If we don't reverse back in, like if we don't if we don't go down and we're not going sideways, we're going up. That's it. That's the only options you got. That's the only options you got. If we don't take out this low right here, we didn't take out the low. We didn't take out the low. So that means we're either inside and consolidating or we're going up. In this case, we were consolidating. Next thing I opened up, took out the high, we went up again.
Yeah.
And then why was he so confident in holding this trade? Because he knew where it was going. We took out the low, but we didn't take out the high yet. Right here, we took out the low, we didn't take out the high. He entered there when it took out the high on the reversal back up. I think that's probably where he entered. Now I'm looking at it now, I think, let me see. Yeah, that's where he entered. He entered on the 1-3, not the 2-2 reversal. So he entered on the 15-minute. So he entered literally with this. So if I show you how the strat sheet, he entered on the 1-3 reversal, just a little bit higher once it became a 3. Once it became a 3, he just entered that, and then that's where he held it. And then boom, it just went to the upside to target the 4-hour. Once it was there, he took profit, I think, at that level, and then he just left the runner. And every single trade, matter of fact, let me go to, like, because he was posting trades in the thing. Let me go to it. Every single one of the trades that we all take is based on that. Let me go to, I'm gonna search it up.
Maybe the profit tab. Oh.
Oh, is it? Trying to look for his specific name. There we go. I don't know why it's not letting me search it up. That's fine. I'm gonna see if I find it in the thing. This one brought information. We took out the high, interest rate to the downside, took out the low. Right here, same thing. I took this trade, wrestle against, going to the high. Every single trade I take is based on the same thing. I think, let me see market analysis. Because he specifically, boom, right here. It took out price that took out the previous high, reversed. He entered a trade to the downside, targeting that. Because we came up, what do? We took out the previous high, came down, came back up, took out the high, came down, took out the low. He entered the trade to the downside, boom. And then yeah, like every single one of the trades we take is based on that, right? Every single one. You just have to practice looking for it. Even if you go like, you can even go back in time and just like watch the stuff. So you can look for a particular part in the chart, and then you can look for that basically. Oh, my bad, Stanley. Did you have a question? Oh, my bad. I didn't know. My bad. Oh, yeah. So that's fine. So yeah, next candle opens up. What do? We take out the low. After we take out the low, we kind of come back in. We're still bearish a little bit, but we're a little weak. Then we buy up, right? Boom. Now that we buy up and we're bullish now above that level, that's a 2 to reverse to the upside. We're potentially going to go, let's take out that high. Play it out and let it play out. Boom. We took out the high, came up, let's go. Now we're just looking for price to expand and keep going up. We took out the high, came down, bearish, so we could potentially go and take out that low, but let's wait and see. Next candle was up, inside. If we 2-1-2, that's a 2-1-2 continuation because it's a 2 up, inside candle, 2 up. If we take out that previous high, what do? We take out the previous high, 3-2 expansion, 3-2 expansion to the upside, reverse to the upside. And then we just go. And at that point, you don't have any reason to really exit the trade until maybe on this next candle, maybe. Yep, boom, probably next candle. And then we still, actually no, because we still didn't take out that low. We're still going up. Boom, take out the high. Still taking out the high. 2 to reversal right there, boom. 2 to reversal against you right there. And now you go exit the trade. And even right here, I think that becomes a 3 right there. Yep, see, look, it took out the low, stop out, boom, came back through the range, took out the previous high. These 3s are everywhere. So right here, what do? Came down, took out the low, back in the previous range, 2 to reversal to the upside. Where are we going? Take out that high. We take out the low, take out the high. That's a 3. If we draw it out like this, then we become a 3. We take out the low, take out the high. We start out inside though. And then we come back up and then we go back through the range. Buyers like to buy at the low. Just like you just repeat that in your head. That's your mantra. Everybody mantra right now is buyers like to buy at the low, sellers like to sell at the high. Once it gets to a high, be careful. Take profit and then leave runners. If we reverse against, then we'll get stopped out, but we already took profit. We don't care. But buyers like to buy at the low, sellers like to sell at the high, period. And then we also know what buyers are going to keep buying. If price is going to keep going up, then buyers are just going to keep buying. So we just pay attention to time frame continuity. If you look at right here, everything here is green. Daily is green, weekly is green, monthly is green, quarter is green, 4 hours green, hourly, 30, 15. All these are green, bright green. So if we enter the trade, I think, matter of fact, let's check it down here. Down here, only thing we had green was the daily and the quarterly. Let's see what happens in this next candle once we open up. Boom, right there. Once we're above that level, we're green. 1-3 ref shot to the upside. That's an actionable signal, right? A 1-3. Boom, take out the low, take out the high. That is an actionable signal. That's what Josh entered on. Boom. Once it was above here, that's an actionable signal. Like, matter of fact, tell me in the chat, is that an actionable signal right here? On the sheet, is that an actionable signal?
I'm not sure. I mean, you said it was, but I don't know them.
Well, yeah, it's right here. You just look at the sheet. I know you probably just got to pull up, like, you can just pull up the sheet. Oh, say it again?
I said, I can't see them as fast as you.
Oh, my bad. Yeah. So yeah, you can just watch the chart. But like it's an actual signal. You can just look at the chart and have it up side by side if you want.
Okay. Which one was it?
The one bar ref strat. This is a 1-3.
Okay. I think I just been trying to look for 2-2 reversals because that's what you said.
And that's fine. Yeah. My bad. I apologize. I only wanted to show the 1-3 just to show the broad information.
Okay.
That's it. Like right here, like even still, this is like the 1-3
Mhm.
that's what it looks like on the 15-minute, but that's still a 2 reversal on the 5-minute.
Okay.
2 down, 2 up. So your entry would be right here.
Mm-hmm.
That'd be your trigger, and then your first target will be right there, and just to see like what price does, boom. Let's say you got 2 contracts, boom, you take profit, entry will be right there. Ask yourself this question: if it goes 2 up, will the other time frames be bullish? And as you can see, you're side by side right here. When you go to reversal right there, the 15-minute, 30-minute, hourly, 4-hour is bullish, and the weekly and the monthly and the quarterly. So you have several time frames that's bullish when you take the trade to the upside. So the likelihood of you winning the trade, higher. So boom, enter the trade right there. You take profit right there. Leave runners. The price doesn't stop you out. Cool. We have a 2 down. We don't have a 2 reversal against. We're still inside. Now we're inside. Boom. If price takes out this low, so our stop loss, if price takes out this low, what are we going to do? We're going to cut the position. We don't want to be in that trade anymore. Next candle opens up. We don't take out the low. We take out the high. Bet. I can now breathe because we didn't take out the low. So we're expanding to the upside still. Now, if you, let's say, depending on how many contracts you had, if you had 2 contracts, you take profit right there and just leave a runner and then just exit when we reverse against. Let's say you had 3. Take profit here, take profit there. For the, the 1-3, boom, take profit around there. And then now just leave a runner and just let the trade play. Still bullish. 2 into reversal against. Again, you get exit based on that or exit based on the 15-minute. On the 15-minute, we still have a 2 up. We didn't get any reversal against on the 15-minute. They're still bleeding right there on the 15-minute, but we still didn't take out the low. Still didn't take out the low yet. Still didn't take out the low yet. Still didn't take out the low. Now we took out the low. Now we get exit. We entered here. Perspective. I'll give y'all perspective too. We entered here at the 2 reversal. And let's say we exited on the reversal against on the 15-minute. That is 18 points. So on ES, if you have 1 contract of ES, that means you made 50 times. You made $900 on that trade. On 1 contract. If you had more than 1, if you had 2 contracts, that's $1,800. If you had 3 contracts, it's $2,700. Yeah. If you just took profit right there though, it's like that. If you took profit, let's say you had 2 contracts. If you took profit here, you'd have made $65 on that trade. Stop loss at break even so you don't lose anything. And then you let price play out and just give it time. And then you would have made about $900 something, close to $1,000 on that trade. Well, and then eventually you can have more in your account. Now you'll be able to get more contracts and stuff like that. Does that make sense? Bet that up. Yeah, so now like I'll give y'all, so here's what I'll do. I'll give y'all some homework and stuff like that to practice. Go on, this is all I want you to do. Go on TradingView. And y'all have, does everybody have TradingView and does everybody have the backtest feature?
Yes, I do.
Do y'all have the 4 charts or just the 1 chart? Like what do y'all have?
Premium.
Premium, so y'all can, so you can have like 50-minute charts up. Okay, cool. So have at least, let's say, try to have at least 2 at least. And then use the bar replay tool.
Okay.
I recommend having 4, but have at least the bar replay tool. Literally, all I want you to do is go back, like you can set it to wherever. Go back and just look for the strat. Just look for it. So right here, let's say you go back here. Boom. Just repeat the same things in your head. Price took out a previous low. Cool. Now I'm looking for price to take out a previous high. So if we go back to the chart, refresh it. We took out the low right there. All right. We could potentially go 2 to reversal if we take out that high. If we don't take out that high and we just stay inside, then we're just going to stay inside. If we take out the low, that's just a continuation to the downside. Don't really care. So you just put your entry right there. Boom. We didn't take out the low. We didn't take out the high. We took out the low. Boop. We took out the low. Closes a hammer and a bullish candle. If we take that out, that's a 2 to reversal to the upside. Boom. Into the trade right there. All right. If I enter that, Is continuity on the other time frames bullish or bearish? If the answer is bullish, all right, bet. Keep holding. All right, we're inside. All right. And still inside and bullish. My stop loss is right below that low of that candle. Boom. We take out the high. All right. We're still bullish on the 15-minute. All right. We hit this target. All right, that's a 2-on-2 reversal to the upside. When the next candle flips, and we're still going to the upside on that candle. All right, bet. I can take profit right there because that's a 2-on-2 reversal. You see the 2-on-2 reversal. Where's the target? The take profit right there. Just reference the sheet. Boom, take profit right there. And then I'm just leaving runners at this point until we get a reversal against. Boom, we're still bullish on the 15-minute, still bullish on the 5-minute. Inside right now, ooh, and we're bearish on the 15-minute. So if we take that out, there's bearish continuity because the 15-minute and 30-minute is bearish. Let's watch out. Up, 2-on-2 reversal to the downside. All right, bet. I'm going to cut my last contract right there. 2-on-2 reversal against. Why?
So
Say it again.
So quick question. So, because that's literally what I was about to ask you. So when you're holding the trade, right, and you have a runner on, so you're waiting to see a bearish reversal on the 15-minute time frame or higher.
If you do, that's what I'm saying. If you have multiple contracts, so depending on I'll say it like this, and here's the reason I'm kind of differentiating between it. You're still exiting based on an actionable signal against you, no matter what time frame you're on. So if you're on the 5-minute, exit on the actionable signal on the 5-minute, right? But
Okay.
The goal is for you to eventually get to a point where you have so many contracts or you have enough leeway. Because for example, I already know how your emotions are going to play out. You want to exit on the 5-minute. You don't care about the 15-minute. You don't want to wait this long. As soon as you get an actionable signal against on the 5-minute, you're going to cut that thing immediately. Because you want to
that's what I did on Friday, but I ended up leaving like 1,400 on the table because I cut I cut my runner. So I'm trying to establish a better way of leaving the runners, but like following the time frame continuity. So I just kind of wanted to know like exactly like how you're saying it. So because I'm looking at it on the 5-minute, like you said. I'm not gonna lie. I saw 2 down, and I said, "Yep, nope, I'm out." But then when I watched the rest of the trade, it was a 2 down, but the next one was like, I think it was like a 3 up or something, and it was a 2 up, and it just went crazy. So how do I guess my real question is how do I avoid doing that? Like, which time frame would you suggest? Because I was looking at the 5-minute. So would you say just keep in mind the 15 and the 30 as well, or like the hour maybe?
So so I recommend using, hold on, let me let this play out real quick just so it refreshes on the hour. Oh, right, it is right. It did refresh, my bad. So right here, right, what you would do is I want you to pay attention to, okay, so the hourly is telling you what's happening right now. The 15-minute is like, so any time frame, 5-minute and lower is like the lower time frames. I like to consider the 15-minute and 30-minute like the medium time frames, hour kind of the medium time frame, but the hour is telling you what's happening right now. So I recommend that you focus on what's happening on the hour. Because for example, right here, this day, Wednesday, you had no reason to cut this thing or like take profit on this thing. You only had 2 times to take profit if you were focused on the hour. If you entered here, because I did, I did this. I entered here around like it was 8 or 9 that I took this trade to the upside and I held this thing, right? I cut the position, I think, a little bit too early because I wasn't watching the hourly. Or no, correction. I was watching the hourly. I didn't care. I wasn't focused on it, right? Right here, if I exited based on the hourly, that's a 2-on-2 reversal against. Boom, I take profit right there. But then we had a 1-2-2 rev strat right here.
Yeah.
Track sheet, boom, it did it again. All right, bet. I'm going to enter on the hourly. Or I'm going to enter on a lower time frame based on the hourly, and then I set my targets. So if I go on a lower time frame, I'll be able to, like, the entry would be like right here, but that target would be much bigger, so I'll be taking it on the lower time frame. And then I'm holding it. Why? 2 up, 2 up, 2 up, inside, 2 up, failed. We didn't get a reversal against yet until 5 a.m. So yeah, we didn't get a reversal yet against until 6 a.m. So if you enter this thing at 1 a.m., 1 a.m. in the morning, like that's what I'm saying. If y'all are up, y'all can still trade. Like there's money to be made in the market no matter what time you're trading because actionable signals are like happening. Broad informations are happening. Time frame continuity is happening. Like that never changes. And then boom, we reverse against. But this happens all the time. So right here, I'm paying attention to continuity. So if you're trying to figure out how long to hold the trade for, I got you. Let's go it. Right here, 2 to reversal. Let's say you enter on the 5 minute. All right, stop loss, just keep right for now, keep it right. Let's say you had a wider stop, keep it right there. Cool. We had an inside candle, we stood in reverse against, we didn't take out that low. Cool. Now we can trail it. Because if we reverse below that, that's a 2 into reversal against. I don't want to be in that trade. That risk is now $1. So we're only gonna risk, like, if we had, let's say we had 2 contracts, right? We're only risking $100 on that trade. That's easy, like that's nothing basically. And continuity is still to the upside. 5 minute is bullish. All the time frames right here are green. 15 minutes green. Hourly is still green. We're good. Hold the trade. 2 and 2 continuous to the upside. Keep holding it. Why? We didn't get a reversal against on the 5 minute. Inside is like 15 minutes inside, but it's still bullish. Hourly is inside, but still bullish. Boom. We get to the target on the 15 minute. Boom. 2 into reversal. Now, you can set targets and stuff on the lower time frame, like 5 minute and lower. Medium time frame, you can set targets to take profit at. So if you have more than one contract, so let's say you had 2 contracts, you can take profit at that target based on the 15 minute. Boom, take profit. Now your stop loss is either here or at break even for now. And now you're setting, now all you're doing is paying attention. So like you can just take honestly speaking, once you're in a position you already take profit, put your stop loss at break even, and then get rid of the lower time frame and just focus on the 15 minute and higher.
Got it. Okay.
And because right here, takes out the high. We're still bullish. We're still bullish. We're still going up. Up, we go bear. We're still bullish. All right, cool. Inside, bearish inside. Hold up. What time is that? 10:30. All right, cool. At 10:30, what time frames flip? The 5 minute, 15 minute, and 30 minute. So new 30 minute candle opened up, 5 minute and a 15 minute candle. So that means that, but anything below this on all those time frames is bearish.
Got it.
So that means that if this thing does a reversal against, now below that, that means that you have 3 time frames going against you, and that's a bearish actionable signal. Cut the trade or take profit on your last contract. That still gets you a better trade. And then to make it better, then you would just focus now, because what happens is when you give it room like that, like that's what I'm saying. It has to be based on your mindset and stuff like that, and what you're able to risk and do on trades. Because right here, if you're entering a trade, you can re-enter again right there. Boom. 1 to 2 rep shots to the upside. Why? Because right here, if this triggers, if this goes to the upside on the 5 minute time frame, 1 to 2 rep strat, that's an actionable signal. 1, 2, 2 rep strat, target in there. If we go up, well, what time frames will be bullish? The 5, okay, what? The 15 minute will be bullish right here. We took out the low, came back through that. 15 minute is now bullish, 5 minute is bullish, and the hourly is still bullish. All right, I have full time frame continuity to the upside, and I just took a bullish actionable signal. Boom, that's a green light trade. Now I'm trailing this thing and looking for take profits and stuff like that, like on the 5 minute for now. Let's say I have 3 contracts, right? I took profit right around here because we took out a previous high. I took profit, boom, on a reversal against. Now I took profit, stop loss at break even. I don't care anymore now. Stop loss at break even. Now get rid of the 5 minute time frame. Focus on the 15 minute and the hourly. Right here, we're 3-2 to the upside. No, 2-2 to the upside right here on the 15 minute. And we didn't reverse against it. We're still bullish. Still bullish. Inside. All right, cool. Let's pay attention to that. I want price to take out that high on the hourly time frame. So let's see if we do that. We're still inside. We're still reverse right there. We're close to taking out the high, but we didn't do it yet. Boom. We just took out the high on the hourly time frame. Cool. Continuity still to the upside. It's still bullish. Continuity right here. You see it right here? Still bullish. Let it play out. All right. We just went inside on the 15 minute time frame. We could potentially set up for a bearish reversal, right? This is the open of the hourly. The hourly is telling you what's happening right now. So if you get a bearish actionable signal and the hourly is bearish below that blue line, that means you need to exit that trade. If we get a 3 reversal right here, we're going to exit a trade. So let's move our stop loss up. Right there. Did we get a bearish reversal against? Let's see. Still inside, still inside. Nope, we didn't get it. So we keep holding it. You see? We didn't get it. We're combining everything. No bearish actionable signal. We had continuity for a little bit. It was bearish, but we got no bearish actionable signal. We have no reason to get out the trade. Now we're still holding.
That's what I was about to ask you, because you see how like on that one candle, on that one, it was showing that the 15 and the hourly was bearish.
But
So
we didn't
would
break the low.
right. So you would say, even if it's showing that, because we didn't break the low, the trade is still valid, even though the time frame continuity is kind of telling us otherwise. At least
Because
for the
that's
time
one
being.
part. Yeah, because that's one part. Like, so that's why I say if you're ever trading the strat and you're trading one part of the strat and you're not trading all three, right? You're either minimizing how much you can make or you're maximizing how much you can lose. Period.
Yeah.
You have to use everything. So like right here in this case, you were like, well, what about the time frame continuity is bad, right? And we have we have the broader information because we got this high, but we had no actionable signal against. That's why you have to use everything together. Because watch this. The actionable signal says we took out a low and created a bearish actionable signal based on this sheet against the position that we're currently in. If we don't take out, so if we're on the elevator, if I'm on floor 5 and we never go down to floor 4, is it safe to say that we're either still on floor 5 or going up to a higher floor?
Right. I see what you're saying.
So I have no reason to exit trade if we don't, until we go down to floor 4, quote unquote. I have no reason to exit trade. So right here, we're still bullish. So now this is the open of the hourly for now. If we get a bearish actionable signal against on this time frame, and then we go below this level, now I need to exit this trade. So right here, this rev strat, if we go inside 2 up and then 2 down, now I exit the trade. We didn't do it. We're still going to the upside. Cool. I'll still hold it. Continuity is on the hour. So this is the open of the hourly. We're still bullish above that level, right? Now I'm just looking for a bearish actionable signal. So if we get a bearish actionable signal below this level, let me move this. If we get it, because that's a 2-2 reversal right there, right? If we take out this low, if this next candle opens up and it takes out that low, that's a bearish actionable signal. Will we be bullish or bearish on the hourly below that level?
Bearish.
Will we bearish? So if we're bearish time frame continuity, and we're an actionable signal to the downside, and we took out a high because we saw the high right there, and now we're looking to take out the low. Hold up, that's the 3 parts of the strat combining to tell you exit the trade. And let's see what we do. Next candle, it opens up, it's still bullish. We can keep holding the trade. No reason to exit yet. Now, if we go to 2-2 reversal right here, hold up, we're bearish still. Hold up, let's see. We still didn't take out the low yet. We still have no reason to exit the trade. Hourly still bullish. We have no reason to exit trade yet. All right, we're 1-3 against. That's fine. We're still bullish on the hour. Let's pace it. Next candle opens up at 2 o'clock. Now you draw it. So now, all right, watch this. The new hour is going to open up on this candle. It opened up right here. That's the open of the hour. So anything below that level is bearish on the hour. If we take out this low, that's a bearish actionable signal. Bearish actionable signal plus bearish time frame continuity means I don't need to be in this trade anymore.
Trade. Okay.
Now
I
we
got
take
it.
it out.
Yeah. Okay. I got you.
And now we entered where? We entered here and here. We
Right.
bought at the low, sell at the high. And what did we do? We actually took out this high right here, and then we did a bearish actionable signal against. That's the broad information. Boom. We took out that low. We just took out that high right there. I think we took out that high too. Yep, we slightly took out that high too. Broad information. Took out the low, go and take out the high. All 3 combined. That's how you trade. That's how you manage the trade.
Got you. All right. Nah, that makes so much more sense. Yeah, that makes so much. I was mad at myself on Friday. I was so mad at myself because I don't know if you saw the chart that I set in the chat. But like I said, I saw that 2 down. I saw that 1-2 down on the 5-minute, and I was like, nope, that's it. But
Right here?
Yeah, you see
Oh,
that
yeah.
first 2 down.
Yeah, right.
That like when I was already in profit, when the trade was already in profit, that black candle. No, not that one. Yeah, that one. I saw that and I cut it. I cut.
Okay.
Granted,
Yeah.
granted, you know, looking back at it, I was like a few things. First of all, we didn't even break my initial target. We didn't even break that high. So I had no reason to cut it. And then looking at it, it was just another 212. So if anything, I should have just, you know, held it, or I could have even re-entered right there. So yeah, literally, Carla, I
Leave it here
was
with
like,
something. Yep.
literally, Carla, that was my mindset. But like with the strat, I feel like that's gonna help me to maximize, because it was the thing. It went through my computer screen. The candle, look at that too. Like it literally, and it
Yeah.
just was going up all day. And there was really never the whole day. There was never really any, when I looking at it, there was never really any bearish actionable signal for me to get out of the trade. So
That's
yeah,
what I'm
but
saying. Like, even for myself, like with exiting, that's one of the biggest things for me. Like, because I have the, like, literally what you're going through is like the same. I literally trade the strat, but I still be in my own way with like because the mindset behind it is I just want to take profit. Like, or it's
yeah,
going, it's like, so
yeah,
I feel that it's gonna do this. So I'll ignore. So like literally every time, it's so funny. Every time I've ignored the strat, I'll either, I don't really use like that. My problem isn't losing any more money now because I'm good with my risk management. I trail my stop losses. I keep my risk management tight. Like that's not an issue anymore, especially with the strat. But taking profit now, that is a problem because now I have to the same principle I follow with the strat with my risk management. I have to follow that too with taking profit too. Because if it doesn't take out, so like the reason I have my stop loss at these lows and I drag it up is because if it reverses against me and it takes out a low, I don't want to be in that trade. If I'm taking profit, if it doesn't reverse and take out a low, that means it's still either consolidating, which it did right here, like you just said. It's either, if it's not taking out the low, it has to be doing two other things: consolidating or taking out the high. That's it.
right,
If it doesn't take out the low, so like what you can do is here, if it goes bearish, I'm not saying don't cut. I'm not saying like take profit. I'll say that if you want to, if you get the urge, take profit, but don't cut it.
yeah. Nah,
Cut it based on like, yeah. So that's what it is. So that's the rule that I have for myself because I still have these urges where I want to. So like to satisfy those urges, I always get in with more than one contract, and then I'll take profit based on how I like. So I'll base like so literally how I quote unquote feel, like how you felt was based on the strat too. Like this is a bear, like that's a bearish two up, that's a failed two up. Right. So you were anticipating a potential reversal against right there. That's why you exited trade. So you didn't exit based on like, oh, I think it's gonna like you exited based on the strat, but you anticipated it. So now what I'm telling you is I'm not like, because obviously I could just tell you, right, just don't do that anymore. But I know you're gonna do it because I do it sometimes. So now what I'm telling you is take profit instead of cutting the position, and always enter with more than one contract, and then take profit when you feel like it, and then exit based on the strat. Because like watch.
But if,
Oh,
go
say it
ahead.
again.
I was about to say, but if it went below that, then cut it.
Yeah, then cut it. You're trust me,
Okay.
if it goes below that, you're gonna cut it anyway. You're gonna be like, oh, it's going down now. It's definitely going down now. Now you're gonna, I don't gotta tell you to do that. But I have to tell you to do that with taking profit because you'll cut the whole position because it's like, oh, I feel like it's gonna do this. So you just want to secure all your profit and not suffer any quote unquote losses. But if you take profit and you move your stop loss to break even, how much can you lose? The answer is nothing. So because it's nothing, now you're out of your mental, you're at peace now mentally. So you don't care about how you feel. Now you're going to care about the strat. Now you're going to care about the technicals. And now you're going to follow the strat. So that's why I was answering.
Right.
Always answer with more than one contract. So in this case, what you did, the only thing that I'll tell you to do differently, take profit at that when it does that. When you feel like it. Like when you feel like it's going to go against you, take profit. And then your last contract, you just trail the lows. And you just wait.
I think I'm gonna switch to micros next week so I can practice, you know, taking profit.
Yeah,
Because
that's what I was doing. Like I was micros last week. Like I can do, like I have like my personal account right now. I got it to 6K. So now I'm starting to be like trade, because the first I was just micro strictly, but I was trading the mini. I can trade the minis now. But what I'm focused on is, all right, bet I'm just gonna trade the micros because I know how I like to take profit.
yeah,
Like now when I have multiple time frames up, I'm watching the 1 minute, 3 minute, 5 minute, 15, and the hourly, like usually just to like check those time frames. I will introduce the lowest time frames. I'll take profit with lower time frame targets, and then I'll leave runners based on the high. So this is what I'll do. Let's say, because for example, last week I had 10 contracts. I took profit And y'all saw me on the live trading. I took profit, I think, based on the 5-minute, then the 15-minute. No, I took profit based on the 3-minute, then the 5-minute, and then I was completely done based on the 15. So once the 15 went against me, then I was done with the position. But what I needed to do next time was focus on the hour, because that hourly will you gotta stomach sometimes it'll go against you, and you'll just have to stomach that. But after you take profit, you don't really have. It's not that bad.
Right.
You missed out on something, but like the opportunity you miss out on. Like the goal, like your goal is to here's the goal. The goal is to make money. No, the goal, correction. The goal is to negate losing money. That's the first goal. Once you mitigate your risk, now let me go back to the chart real quick. Once you mitigate risk, like look at this chart. We entered here and here. Those are beautiful entries. So if you're on ES, how much did you make on that trade? If you entered down here, that's 45 points. 45 points times 50. Tell me what's 45 points times 50? And then tell me how much.
2250.
Yeah, that's 2250 right there.
And then 37. What's 37 times 50? I think that's like 1,500. That should be like 1,500. No, 850.
Yeah, 1850.
So you made like what, $3,000, $4,000, $5,000 on this trade by entering on the lower time frame and then exiting based on like the higher time frame.
Yeah, that's a 4K
and
trade.
based on the strat. Because like right here, you enter like this is beautiful. Look at this. You entered down here when the candle was right around being a 1. So if you had your stop loss below this level, you're only gonna lose. How much are you gonna lose on that trade if this went against you on the hourly? That's how big is that stop loss? That's a $65 stop loss. Maybe like give it a little bit more room, like 150 or something like that. That's a 60. No, that's about a $75 stop loss. Why? Because if our stop loss is there, why is it right there? Because on the hourly, if we go 2-on-2 continuation to the downside, that's a bearish actionable signal. But we didn't get a bearish actionable signal. We just stayed inside. So we have no reason to cut it yet. Then we got an inside, 2 up, inside. We still didn't get a bearish actionable signal yet on the hourly, actually. So let's play this out and see what happens. Because we kept going higher on the hour. But again, take profit, exit, because we had continuity against and we had an actionable signal against on the 15-minute, and continuity was bearish on the hour. But again, if you have more contracts the more contracts you can leave running. So you could have exited right here, like majority of your position, and left 1 or 2 more contracts. If you have more, so if you had 10 micros, right, it's beautiful. Like, so for example, let's say you had 10 micros. If you entered, let's say you have 10 right here or something like that, right? Boom. Once it gets to like one of these highs and it does a reversal against right here, all right, bet. Take profit on 2 or 3 or 4, like majority of it, right? And then, all right, cool. It does a 1 to 2 reverse shot again. You already took profit on majority of your position. Then it does a reverse shot back up. Add some more to that. Because you already took profit already. So now if it stops you, watch this. If it stops you at a break even after you took profit right here, then you get stopped out at break even on the rest of your contracts, but you took profit on the other half of your contract. So you still made the bulk of your position and you didn't lose. And you're still following the rules of the strat. Because it didn't tell you when to exit. If you just took profit, if you just enter with enough size to take profit, and then you base the last of your contracts based on the other time frames, the median, the 15-minute, and mainly the hourly, because the hourly is telling you what's happening right now. So if you're telling me right now we're consolidating, right now at 11 o'clock we're consolidating, we're still bullish, but we're consolidating. At 12 o'clock we're going up. At 1 o'clock we're going up. At 2 o'clock we're going up. At 3 o'clock we're going up. At 4 o'clock we're inside. Boom, 4 o'clock, we're close to closing the market. All right, now you can take profit. Because now you're not holding it until like 5 o'clock, which is when the market closes, and then reopen back up. You're just gonna take profit. And you just trade it based on that. But I don't even think we got it. Yeah, we still didn't get, next candle open up, we still didn't even get anything against. So eventually you can get to a point where you can swing trade this stuff if you want, but you gotta like make sure the margin and stuff like that is different when you're swing trading. But if you're just day trading, yeah. All day. We had all day since 10 a.m. That trade was at 10 a.m. You had no reason to what's it called? To cut the position, to fully cut the position. Like if you have multiple contracts, you have no reason to fully cut the position because cutting means I'm done completely. Taking profit means I'm securing some profit, but exiting is like I'm done. You don't have to, you're not done until the hourly tells you it's done. The 15-minute tells you it's done. If they don't tell you it's done and we still got targets to hit, you better hold it. And that takes some discipline. And it also takes time because you got to like, because you don't have to sit in front of this all day necessarily, but you do got to like, all right, bet. Each hourly, you move your stop loss. So like, all right, bet at 10 o'clock, my stop loss is here. 11 o'clock opens up. All right, I'm going to keep my stop loss right here. Because if it goes down, that's a 2-on-2 continuation. You can walk away with your computer. 12 o'clock, check back. All right, bet, we're 2 up. All right, trail my stop loss right here. I'll come back in an hour. Next hand opens up. Boom, 2 up. All right, I'm trailing my stop loss right there. Because if we go 2-3, boom, I don't want to be in that trade. Come back the next hour. All right, cool. 2 up. All right, trail my stop loss right there. Next hand, all right, cool. 2 up. You see how easy that is?
Yeah, nah, it was the same thing on NQ too that Wednesday. I did the same thing. Didn't
Oh, I bet.
necessarily, yeah, didn't necessarily do it like this, but nah, I'm definitely gonna be paying attention this week to the higher time frames once I'm in the trade, like you said. That makes so much sense because it's like I'm literally getting in on the lower time frames, but it's like once you're in, especially if you're in profit, just monitor it from the higher time frames because you'll actually get once you see that bearish or that opposite actionable signal, then just cut it. Yeah, I'm about to do that.
That's it.
All right. Yeah, it's lit. Yeah, it's lit. All right, cool. Thank you, bro.
Yeah, no problem.
Yeah.
And
Yeah,
definitely be on
so
this back test. Like you saw, like watch this, y'all can watch the replay. Or even if you don't watch the replay, 'cause I know it's a long class. I get it. But like,
I'm gonna be watching this over and over again. This was an
yep,
excellent class.
Oh, this was a good one, for real.
appreciate it. Yeah, just go through this, watch the replay, and then just the replay tool. Just use the replay tool. Go back in time and just watch this play out over and over. Like if you got to replay it over and over again, just replay it over and over. Like what did Sean say? All right, actionable signal. So all right, on the hourly, did we go down? Nope, 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 nope. Wait, hold up. Still nope. Still nope. Still no. Yep, there we go. Finally got it too. If you ever see there's no number here, that means that these are equal. This isn't lower, these are equal. So like these are both at like that like 595, 75 level.
so would that could be considered a 1? That's also a 1?
It's technically it's a 1. It's considered a 1 until it becomes a 2. Because the only way it's a 2, like, because what is a 2? A 2 is when price takes out a high or it takes out a low.
High or low.
If it doesn't take out the high or fully take like it takes out the low, like when it takes out the low, that means it went 1 tick lower. That's the only reason it's a 2. So until it's a 2 is a 1.
Right, okay.
Until price takes out a high or a low, it's still a 1. So yeah. And then that'll happen like because futures is like it's kind of a little weird because it goes by like those ticks like 25, 50, 75, then the whole number and stuff, like it gives room for that. It happens sometimes. But yeah, just use just use the replay tool. Do this. Like once you do this, send y'all charts and stuff like that, like in the thing, like in the group, post those, and then I'm gonna critique them and stuff like that. And then Wednesday, I'm gonna go over the success protocol. Because the success protocol is based on your ability to follow the strat. If you can follow the strat and create these positions, like you thought 5,000, like on that trade right there, you thought 5,000 was good. The success protocol will show you how to turn that 5,000 into, how should I say this? Depending on how much you have, like in what you scale your account up to, like you can make like 5 figures on that trade. On just one trade. Or either 5 figures a month or 5 figures in one trade. Either one. But you have to get this first. So I'll show you how to make 5 figures in a trade or 5 figures in a month. Next class.
No, let me use your words. Let's go.
Let's go.
That's what I was thinking. Let's go, baby. For real.
For real.
That's it. All y'all gotta do this first. Like, and it's the tedious stuff. It's tedious, I know. But once you get this, that's when you can go into the juicy stuff of doing this. Because this requires you, because now we're gonna start talking about like, all right, how to replace your job. Then we're gonna start talking about like how to create bigger positions and win. And like I'm gonna break down how to create like like for like create example, creating bigger positions and stuff like that you can take. And it's still the same process, like the same thing. Like for example, if you have, for example, you can do 10 micros, right? On ES, that requires $500 in margin, right? You make $50 per point doing that. If you get to a point where you can have over 5,000, like 5,000 or something like that in your account, instead of doing 10 micros, you can do 10 minis. And you might be thinking, well, what? But that's more risk. That's more risk. Let me show you. Like, that's why I showed y'all how to create winning positions. You enter, you take profit, you reduce your risk, which allows you to hold the trade. So this is actually gonna be a segue into that. So yeah, your homework, replay tool, back test what I learned, what you learned this class. Back test, go back in time, practice.
And post charts.
And post your charts. That's your homework.
No, this was good. I'm glad I was.
This was good. Yeah, no, this was great.
Yeah, I figured I wanted to cover this again because I was like, I know. That was a lot. But yeah. So, all right. But that's it
You
for
were talking to yourself too, though, right? At the
Say that
end.
again.
I said you was talking to yourself too, though.
I was most definitely talking to myself. I was most definitely. You see me on a live trade, I'm like, man, because it happens to me sometimes. Like, you know what I'm saying? Like,
right.
I get those emotions.
Them emotions.
I'll say it again.
Is because you're confident in what you're doing. It's just the emotions. That's just it.
That's it.
Mhm.
You can't let the emotions
I love the transparency though.
Of course, yeah. I'm not gonna lie to y'all. Like, I got everything figured out.
Yeah, we got this, y'all. We got this.
Nah, facts. We got this. All right, y'all, take it easy.
Yeah, I was gonna say, yeah, it's 8
Yeah.
o'clock. Yeah. All right, y'all.
Really appreciate this. So Wednesday, we doing a success protocol?
Yes, Wednesday success protocol.
Okay, nice. Thank you so much for this.
Yeah.
No problem.
Good night, y'all.
Good night. All right, y'all. All right, in this next section, I will be talking about the broadening formations deeper. So for a lot of traders, this is one of the most difficult universal truths to master, right? My guy Dantes, he's been investing for years and he started trading TheStrat within the past year. He had hit me up, asked me about it and stuff like that. And he was mastering that for option side of things. But he asked me to basically come to his community to basically teach about broadening formations and how to trade them. I got a lot of great feedback and responses on how I taught the broadening formations during that session. So I thought it would be fitting to, kind of include that in this course as well, kind of just deep diving on futures. So if you're still not fully understanding broadening formations, I hope this helps you.
All right, yo, shout out to everybody in TSA. I want to give a huge shout out to my boy ceoashon, man. I've known him for quite some time now. Crazy story. We met a few years ago. And like when I tell y'all he's young and disciplined, it's like another version of me, to be completely honest with y'all. Like a very disciplined individual, someone who's been at it, and just focus on the craft. I mean, I got to give him his flowers. I've constantly been watching him for a few years now. And, one thing I could say is he's really been
This meeting is being recorded.
letting other things sidetrack him, especially in Atlanta when there's so many different opportunities, so many different things going on. To stay focused in a space like this is difficult. I definitely agree that he is one of the heavy hitters. And I know some of y'all have watched his videos. Just to let y'all know, I binge watched hella of his videos yesterday. Me, I'm constantly studying. And so I just want to give my boy on his flowers. Today we're gonna be talking about some broad informations, and further in depth on the strat as well. If you guys have questions, you guys know what to do. Drop them in the chat. If you want to unmute yourself, you can raise your hand in the Zoom, but no interruptions for this time being. We'll leave a little slot open for questions at the end. But without further ado, I want to welcome my guy ceoashon on. What's up, bro? How's everything going, man? If you could give us a quick introduction to who you are, how long you've been in this space, and you can take it from there.
What's going on, bro? Appreciate you, having me on. Glad I get to be here, to, help impact, just a little, I guess, quick introduction of myself. I don't really do this, really. So I guess I'm just gonna give, my name is ceoashon, known Tez for a minute, I think we met, how did we meet? I think we either met through Justin first or something like that.
Justin or at InvestFest, one of those.
InvestFest, yeah. Oh yeah, it was InvestFest. Yeah, dang, that was years ago.
Yeah.
So I knew Tez for a minute. But yeah, so I trade, you know what I'm saying? I've been trading since I was 17 years old, 22 years now. So it's been about 5 years. I've been trading, I traded options, then I went to Forex and stuff like that. Then I trade futures and options right now. So I traded multiple different markets and stuff like that. And I've been trading the strat actually since 2021 as well. So it's been about 4 years now. Um, you know what I'm saying? I'm not gonna, I did decent for myself. You know what I'm saying? The market, I don't like to, you know what I'm saying, go into that. But like, I think, you know what I'm saying? My main goal is just to impact people, to impact people. So including teaching, trading, and stuff like that too. I mean, this is a beautiful skill that I believe everybody should have. You know, some people be like, everybody shouldn't trade. Um, I think when people say that, they just haven't been taught by the right person, or you know what I'm saying, they haven't been taught the right way how to trade, because there's so many different ways you can trade. So yeah, that's a little bit about me though.
Yes, sir. Well, look, man, I greatly appreciate you again coming in. I know everyone's excited to hear a little bit more about broadening formations. I kind of hinted at it a little bit. I took a trade on it on Friday, and it worked out very nicely off of broadening formation. We had some off today as well. I mean, pretty much everybody. If you were green today, comment green or me down below. Everyone pretty much smoked the market today. Clean price action, but it's not always going to be like that. Which is why understanding market structure is very important. And that's what broadening formations is for. So with that being said, I'm gonna go ahead and mute up. I'm gonna go ahead and make sure you have the opportunity to share screen as well. So we'll do that and then share multiple participants. Bam. All right, you should be good to go. I'm gonna go ahead and mute up. And yeah, y'all, I want y'all to pay attention. Please grab your notebooks. I'm saying this is recorded. So please make sure you guys go ahead and take notes on this. All right, you good to go, bro.
Got that up. Let's get it. I like to start out with because I know everybody's in the chat and I love that everybody's active. You know what I'm saying? I love that. I wanted to start out by asking this question first. Who here has like experience and stuff like that with like, let me ask y'all, I want to ask y'all this two questions. How many of y'all love when the market is like going to the upside? Y'all could just drop like a one in the chat. Like y'all love when the market just going in one direction, right? It's going up straight up or it's just going straight down. You just love when it's going there because all you got to do is press buy, it goes up, boom, you make your money. Press sell, it goes down, you make your money, right? So it sees a lot of ones in the chat. All right, cool. Now my question for y'all is, how many of y'all struggle? Drop a two in the chat, right? Drop a two in the chat. How many of y'all struggle when the market is like ranging or it's like kind of staying in one place or it's not really going anywhere specifically, and that's where you lose the bulk of your money, right? Okay, there's a lot of twos in the chat. Okay, cool. So this seems to be like an issue with like when the market is ranging and stuff like that, or potentially broadening, and you're having struggles with that. So my goal for this specific class is you have the ability to make money when the market is ranging, but one of my mentors told me this recently. He said 80% of your output comes from 20% of your input. So it's like 20% of the things that you do make up for a majority of all the profits, everything that you make in life, right? So it literally comes down to the little decisions. Even when you make money in the market going up, when you lose money in those markets when it's ranging and going back and forth and stuff like that, you losing that money is taking away from the gains that you actually have in the market. So my goal for this specific class is to show you guys a little bit how I trade the broad information and stuff like that, and I trade them. When the market is broadening and trading back and forth and stuff like that, I love it. Me personally, you know what I'm saying? I can make money. It's easy money is, I'll say this. If you're a trader, easy money is when the market is trending. But real traders are made when they're back, like the market is back and forth. It's taking out highs, taking out lows, and going back and forth. If you can trade through that, you know what I'm saying, that actually calluses you and it prepares you to be like really, really, really good at this thing. So I actually really can't wait to show you guys this real quick. So I'm going to share my screen real quick, and I'm going to let y'all, see my chart and how I have it set up. First thing I'm going to do before I even get into everything is I want to do like a visual model for you guys. I love doing visual models of the market, so I'm just going to do that for you guys real quick. If y'all don't know what broad information stuff like that are, Tez told me that y'all are already familiar with the strat. You already know like actionable signals. Y'all can drop a yes in the chat if y'all do, right? Actionable signals, time frame continuity, like broad information is just a little thing that you're just trying to like, all right, let me hone into this. All right, cool. So I see yes in the chat. Okay, y'all know actionable signals and stuff like that. We're just going to specifically cover broad informations. So the basic definition of a broad information is higher highs and lower lows. So whenever we get a higher high in the market or a lower low in the market, that is where we have the broad information pattern where you see it looks like a cone and it's expanding to the upside, right? So typically we see this happen. Like if I pull up, for example, I'm going to use Tesla, for example. Well, not Tesla, I'm going to use SPY. If I go to the SPY chart and I go to the weekly time frame, I love mapping this out. It's the most beautiful thing ever. This was back in 2020. We had the most beautiful broad information literally of all time. If you see, we had this higher high, and then we had this lower low right here. This was the most beautiful broad information. So if you were during the pandemic and you understood the strat, then you could literally have a freaking ball. You can literally go absolutely crazy. We created a higher high, then we took out this previous low, we reclaimed it, and then we started going back to the upside, and then that thing just kept expanding to the upside, right? But how many of y'all have traded in the market and price action doesn't always look this clean, right? Just drop a one in the chat. It doesn't always look like higher high, lower low, higher high, and then it just keeps going, right? Price action isn't always clean, right? If you see that, if you're saying yes, and drop a ones in the chat, all right, bet that up. So you've been in those markets where you're saying, oh, the market's kind of choppy. Most of you are probably looking at the market saying it's choppy when in reality it's broadening, but just on the smaller end of it. So I'll show you this real quick. So if I draw this out, right? This is a broad information. It's not that what you're trading is not a broad information or it's just choppy. You're just in the smaller end of it. So if you're on this end, for example, we have a higher high, then we have a lower low, then we have a higher high, then we have a lower low. The only thing that's different from over here to over here is the range that you're trading back through is bigger over here than over here. So my goal is to show you guys, all right, bet, even when you're in these small ranges and stuff like that, you can still take out those higher highs. And the key to that is what I'm drawing right here, these horizontal lines. So with that being said, now I want to get into like how that actually looks like trading it in the market. I'm literally just going to use futures. How many of y'all actually trade futures? Just drop a futures in the chat if y'all trade futures. If y'all mainly
We all do options for the most part. So
okay,
like
options. Okay, cool. I can use an options example. That's easy. So I'm trying to think of a stock. Let me think of something.
right now we're doing a one ticker challenge with QQQ.
Oh, stay less. All right. Oh, bet that's probably going to pull up already. So I'm just going to use QQQ. And what I'm going to do is I'm going to show you guys how you guys can basically look for the broad information in the market. So what you guys want to do is the first thing that you want to do is look for threes. Every single three that you see in the market is a broad information. Every single one. So the definition of a broad information, remember I told y'all before, is higher highs and lower lows. So if I connect the highs to the high and the low to the low, you see it literally creates a broad information pattern. So on a lower time frame, if you go to a lower time frame, right, you can be able to go back and see, okay, bet this is basically a broad information on a lower time frame. So what I want to show you guys how to do is do that on a lower time frame though. So I'll use today's price action for example, right? This is the new 4-hour candle that opened up on QQQ, right? So right here, if I draw from the low, what I want to do is mark out the range real quick. So first thing I'll do is mark out this and then mark this out. So we're going to use this price action for today, right? Let me pull up price action from today. All right, cool. This was the market open. I'm going to go back in time so I can show you what this looks like. So before the market opened today, this is what price looked like. This is on a 5-minute time frame. I marked out the level, the high and the low of the previous time frame, right? This was the previous high and the previous low on the 12-hour time frame. I mean the 4-hour time frame specifically. So for the broad informations, you want to mark out the highs and lows and you want to look for reclaims. So we had that already from past price action. As you can see right here, we took out this previous low and we reclaimed that. But what I want to show you guys is what that looks like trading back through a big range. If you're having trouble with trading the broad information, stuff like that, you're probably trading a small range. So the bigger the range, so for me, this is what I always do. I always go on like the 1 hour, 4 hour, 12-hour daily time frame, the bigger time frames to identify what range am I trading back through on a higher time frame. If I'm not trading back through anything on a higher time frame, I don't trade. Write that down, please. Because the problem is you might drop to a 5-minute time frame or like a 15-minute, and you might be trading a range literally kind of like this. You see the price action right here. Price is going back and forth, is not doing anything, and you will probably get chopped up in this. But in reality, you didn't see that this was actually a broad information, but you just didn't know how to trade it. So what I'm going to do, I'm going to show you exactly what I mean by that. So right here, you see right here, what is the definition? Drop it in the chat. What is the definition of a broadening formation? Higher highs and lower lows, right? Drop that in the chat real quick before I move forward, because I want y'all to literally drop it in the chat. Higher high, lower low. Drop that in the chat. Higher high, lower low, higher high, lower low. If you get that ingrained in your head, that's gonna make this whole process easier. So y'all already know about inside bars and twos and stuff like that, right? So if you already know that this is an inside bar, you know that price has to break in one direction. So what you can literally do is draw. So whenever price goes inside or it starts ranging, literally mark out the high and low of that previous candle. Mark it out. Once you mark it out, this is what you're gonna do. And this is, I promise you, it's literally this simple. Right here, we had the 2 and 2 reversal to the upside, right? However, as soon as I'm looking at this, I'm already seeing this is a huge range to trade back through. Whenever you see a huge range to trade back through, it's probably going to be harder for a price to basically trade back through it. The reason is because there was aggressive sellers pushing this thing down. That means that we need to take out sellers in order to make price go higher. So I'll show you an example of what I mean by that. I'll actually use a perfect example of this right here. Right here, we had this 2 reversal on QQQ. The reason this, does anybody know, somebody put in the chat real quick, why was this candle so big going to the downside? Somebody put it in the chat. I want to hear somebody's answer. Why was this candle specifically so big going to the downside? Or somebody can unmute too. I don't mind, I don't know how y'all feel about that too. Institutional sellers, they're selling, sellers are in control. All right, cool. What about the buyers? Y'all see sellers are stepping into the market, but do y'all also see that buyers were also the reason that this also went to the downside too? If y'all don't know what I mean, I'm going to show y'all this real quick. If you're ever in calls, right? Right there, boom, see, you already, come on now. I like side right there, I like it. So everybody, let's say y'all are trading QQQ, right? And let's say you get in around 532, right? And let's say you get 534 calls, right? You get into the market, let's say right here, you get into some 534 calls, right? Betting on the market to go to 534. Price does a 2-2 reversal against you, and it starts reversing against your position. When price is below where you entered at, right? Are you going to be up or down on that trade? Put it in the chat. You're in calls, betting on the market going up. If price is below your entry, are you going to be up or down on your trade? Down. Okay. When you're down on a trade, when you're down on a buy position or you're down on a call option, what do? Somebody put it in the chat. When you buy calls to exit the trade, what do? What is the opposite of buying a call option? Closing the position, put, sell. Okay, cool. So everybody's saying sell, 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 sell. So cool. When you have to buy the position, you have to sell the position. Watch this. If buyers are, watch this, right here, when price is going down, you're selling, right? Buyers are selling. But sellers are entering the market up here. The reason that price goes up and the reason that price goes down is because there are more aggressive buyers or aggressive sellers in the market. So if price goes up, the reason this went up on QQQ, there were more aggressive buyers in the market willing to buy QQQ at a higher price, right, than sellers were. So for example, so how many of y'all understand what the bid and the ask is real quick? I'm trying to see. I'm about to go deep on the thing. How many of y'all know what the bid and the ask is? Y'all know what the bid and the ask is? Drop a 1 in the chat. All right, so y'all know what the bid and the ask is. Let's say y'all trading QQQ calls, right? Let's say the premium is, I'll use text. Let's say the premium is 80, the bid is 80 cents. Or let's just say the bid is 0.80. That means you're paying about $80 for the trade because that you're paying $80 for that options contract. Let's say the ask is like $1.20, meaning you'd pay, if you bought it at the ask, you're paying $120 for the trade. If I'm a buyer, if I buy it at the ask is what sellers are willing to sell it for. The bid is what buyers are willing to buy it for. If I'm willing to pay more for something, that increases the value of it. Is that correct? Drop it in the chat. If I'm willing to pay a higher price for something, that increases the value of that thing. So if I go into Louis Vuitton and say, you know what? These shoes only cost $50 to make, but I'm willing to pay $100 more because of the Louis Vuitton brand. Boom, I just increased the value of Louis Vuitton. Now, if no one buys Louis Vuitton anymore, guess what they have to do? They now have to decrease the price of it to meet what? Supply. That's called supply and demand. That's true supply and demand. So in this case, everybody, the reason that price is going up is because buyers are constantly taking the offer, which is taking the ask. Whatever the ask price is, they're willing to buy that. They're willing to buy it at that price. You know what? It's at $80. I want to buy it at $120. It's at $120. I want to buy it at $150. It's at $150. I want to buy it at $170. So guess what? Everybody up until the very high of this candle right here has been buying this thing up. So guess what? If everybody has been buying this thing to the upside, in order for them to make money, it has to keep going higher. If it doesn't keep going higher, they don't make money. So everybody that bought on this candle right here, once price starts coming down, they might start, fighting it. You see this lower wick right here. This lower wick indicates that buyers tried to buy it back up again. They tried to push it back up again. But sellers were more aggressive than buyers were. So because they were more aggressive, price started to go down. So guess what happens when sellers start entering the market, pushing it down, betting on the market going down, and then buyers have to exit their position? What does that do to the market? That literally creates, I'll literally measure it out for you just to even show you what it looks like. I'll measure it out for you. If buyers are selling and sellers are selling, that creates an aggressive move to the downside. So literally everybody that was buying on this candle and this candle, they literally had to exit their position right there. And then as you can see, that thing just kept melting for the rest of the day. Everybody that bought here had to cover their position. That's how you trade the actionable signal. But I don't know if y'all watched it, but I just showed y'all also how to trade broad formations. Because if y'all didn't see that, what did we do? We took out the previous high and closed back in the range of this previous candle. Every broadening formations are not just, I'm going to break y'all mindset real quick. Broadening formations are not just created by pivot highs and pivot lows. The definition of a broadening formation is what? Put it in the chat. What is the definition of a broadening formation?
Higher highs and lower lows.
Higher highs and lower lows. Did it say pivot highs and pivot lows? Did it say, the low of this on this specific time frame and the high of this time? No, it said higher highs and lower lows. Therefore, in order to identify higher highs and lower lows, all I have to do is identify a high and a low. That's it. If I identify a high or a low and price reclaims that high or reclaims that low, that is a broadening formation. That is the setup for a broadening formation. So this right here, this 2-2 reversal is a broadening formation. If I draw, this is a higher high and a lower low. That is a broadening formation. And then the broadening formation, it expands to the downside. If y'all understand, drop a 1 in the chat. This is a broadening formation. All a broadening formation is a higher high and lower low. Every single, I'm going to say this real quick too. This is also another gem for y'all. Write this down. Every single actionable signal is a broadening formation. Every single actionable signal. So 2-2 reversal is a actionable, and every single actionable signal that works and goes in force, it is a broadening formation, or it is a start to a broadening formation. Every single time. This is a 2-2 reversal. We take out a previous high, we reclaim it, take out the previous low. We have a higher high and lower low in the span of 15 minutes. And then the next candle, what does it do? It reconfirms to the downside, reconfirms to the downside, reconfirms to the downside, reconfirms to the downside. And then what do? We take out a previous high, reclaim it, go bearish. Where are we going to take out the previous low? Guess what? That is also a broadening formation. But all I needed to do was identify what? The high and the low. So the key to unlocking broadening formations and seeing where broadening formations are in the market, you have to tell yourself, all right, bet. Every single time price takes out a previous high, if it starts to reclaim it, that is a broadening formation. You have to train your eye to see it. So even though I'm teaching this right now, y'all can go back and watch this replay and stuff like that. But I need y'all to make sure y'all are practicing seeing this. Only reason that I've been able to, he's saying broadening formation. I'll type it in the chat for y'all. Broadening formation. I dropped it in the chat, right? Once you unlock this by identifying it and seeing it in the market, but you have to make it simple. So highs and lows, that's it. highs and lows in this horizontal line is going to be your best friend. The reason it's going to be your best friend is because all you literally got to do is mark out the high and the previous low, and that's it. Even if we mark out from this candle right here, high and low, we have a higher high, and then we start, what are we doing? We reverse back into this range with the 2-2 reversal. Where am I targeting? Right here. And then guess what? If it doesn't, watch this. If it does not reverse and come back in this range, guess what we're doing? We're just expanding. That's all we're doing. If we're not reclaiming, we're expanding. And if we're not expanding, we're reclaiming. Expansion, let me show y'all this real quick. Whenever we do this, we're coming back through really strong and stuff like that. Coming back through a range is reclaiming. Whenever we leave the range and we keep going, that is expansion. We reclaim, we're coming back inside. If we keep going, that is expansion. That is what you're looking for in the market. So that's what that looks like for QQQ with that example with the 2-2 reversal. Now I'm going to show you guys what this looks like in markets where it's choppy, like this, where it's back and forth, right? You see, we marked out the high and the previous low. We took out a previous high, right? What is the order that we're looking for? High, then we're looking for a low. And then from a low, we're looking for a high. That is the order that we're looking for. So I want y'all to call it out with me in the chat. The inside bar, we took out a previous high. Now, what are we looking for price to then take out? What are we looking for price to take out? Drop it in the chat. A previous low. All right, cool. Miguel, I like Miguel right here. Cool. We play the price out. We have a failed 2 up to the upside. Boom. What are we looking for? Price to take out that previous low. Let's play it out and see what happens. Boom. We take out the previous low. That is a broad information. Now, what you might be thinking is, all right, bet, well, Sean, I'll take these trades and stuff like that, but then I'll take this reversal to the downside. But the problem is I'll take it, and then let's say it goes down here and stuff like that, and you want it to keep going down here. Drop this in the chat if y'all know this is true. Y'all enter this trade to the downside. You think it's going to go all the way down here, but then it'll go down a little bit, come back up, and then it'll do like a 2-2 reversal against you, and then you'll get stopped out of your position. And then you get stopped out, and you're, dang it, I should have took profit. Or why didn't that work? Why didn't the trade work? Right? The reason it didn't work is not because it wasn't a broad information. It was just a small one. So you need to identify, all right, bet. I'll say this, dang, that's crazy. So one of my students, like some of my students and stuff like that in my mentorship, I had one person that came and she struggled with this thing. Like she got the actual signals, but she struggled with figuring out the broad information and stuff like that. And when I was looking at some of her trades and stuff like that, she was literally trading inside of this, right? She was trading inside of that. I told her, I said, do not take any more actionable signals. Do not take anything else until the range is big enough for you. If this does not pay you enough, do not take the trade. She was like, what do you mean? I said, this range, so from the higher high to the previous pivot low, it's right here, right? How many points is that? That's 0 point. That's for right here for QQQ. That's only 29 cents. That's 29 cents. That range is not big enough for you. I don't know. Put in chat. Is that big enough for y'all to make money in the market? Or do y'all want it to be $1, $2, $3, $4, $5 on QQQ? Okay, cool. So if that range is not, so watch this. If the range is not big enough, why are you taking the trade? You're probably taking this trade based on the actual signal, but you're forgetting the fact that what range are you trading back through? Because I want to tell y'all something. The only reason your trade is going in a certain direction is because you're stopping somebody out. Period. You're like, somebody is aggressively taking it in that direction and somebody's getting stopped out in the process. If that's not happening, then you could potentially get reversed in your position. Because watch this. I want y'all to know something real quick. All of these lows right here, everybody got stopped out. Everybody got stopped out. Once everybody got stopped out, notice where this wick happened. You see this big body candle right here, this giant candle where they were aggressively buying this thing up. Guess what? Aggressive buyers are still there. So guess what needs to happen in order for that low to be taken out? You need more people to stop out. So guess what? If I play this out a little bit more, guess what we do? We expand the broad information higher. But guess what we also do? We create more pivots to stop them out. Boom, 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 boom. Now I have 1, 2, we already stopped them out. Now I have 1, 2, 3, 4, 5 people to stop out, 6 people to stop out. So if this comes back through that previous range, where are we targeting? This low. Because we're stopping out more people, where is it most likely going to keep going? More aggressively to the downside. Let's play it out and see what happens. We go a little bit higher, we expand higher, we reclaim it, right? We reclaim it. Whoever was buying on this previous candle, they bought it up. 3-2-2 reversal back to the upside. We went higher. We still couldn't get above this candle. So everybody, whoever was aggressively selling on this candle, they did not want to exit their position. They just kept getting it. This is why whenever you're trying to trade back through these big candles, you need more people to stop out. Because obviously, you see, the only person we have to stop out is this guy right here. We just stopped them out. And now that we just stopped them out, guess what? Everybody that was selling, like that was trying to buy this thing back up, pushing that thing to the upside, guess what they got to do? Cover their position. So now, let's see what happens. Literally right after that, where do we go? That's how the broad informations work. Don't trade this because the range, watch this, the range that you were trading is 29 cents. When you should have been trading the range, if you enter the 2-2 reversal right here, the range is $2. Why is the range $2 now? If I come back, watch this. Everybody that was buying, watch this. Everybody that was buying from this low to this high has to now cover their position because they were the reason that it got up to that high. So watch this. If I drag it all the way down, everybody from that point where I stopped them out to that low, dragging it from here to your entry on this 2-2 reversal, 5-minute time frame to the downside, what did we literally do? We stopped out all these guys right here, and we took that thing to the downside. Notice how aggressively this thing moved after we took out this big pink candle right here, this aggressive candle right here. Everybody that was aggressively buying on this candle, they now could not aggressively buy against everybody that was aggressively selling. Why? Because there was aggressive sellers in the market right here, but now we have everybody that was buying on this market with their stop losses right here, they now have to exit their position. So sellers are entering the market and buyers are exiting the market. Buyers exiting the market creates selling pressure. Sellers stepping into the market creates selling pressure. Both of those combined, that takes out this person right here. So now guess what? You now have another person you stopped out, and another person you stopped out, and another person you stopped out. And then once the aggression is over and sellers start taking profit on that, guess what's going to happen next? They're going to reclaim that because buyers are going to step back into the market. And the process repeats itself over and over again. So like I said to y'all before, what you're looking for with the broad information is not that you haven't identified the broad information before. You were just trading this instead of trading this. Does that make sense? I just want to make sure that makes sense for everybody. I want to see like a lot of yeses before. If not, I'll re-explain it. I promise. I don't mind. But I want to make sure that makes sense. You need to trade back through a bigger range. Because the bigger the range you're trading back through, the more people you have to stop out, the bigger move you're going to get in the market. Does broadening assist with entry and exit points? I don't want to, so watch this. Sam and Blake just had a great question. Does broad information assist with entry and exit points? It doesn't assist with entry and exit points. It's the reason, it's the vital thing that you should be looking for when you're entering and exiting. Because if you don't look for broad information, so here's the thing. If you don't look for broad information or you don't identify the broad information, you don't identify who you're trading back through. If you don't understand who you're trading back through, you don't understand who's going to pay, who's paying you on this trade. Because the reason that markets go up, like, here's the reason. The markets go up most of the time is because most people are just optimistic. But the markets pull back because we still are fearful individuals. So overall, that fear and greed mixed together, we are more greedy than we are fearful. So even though we're going to have fearful pullbacks in the market, overall on good companies, we're going to be more greedy and more bullish than bearish. So, but guess what? Sellers still have to, watch this. Buyers still have to take profit. So bearish pressure or sellers stepping into the market has to be the case because we want to bet on the market going down too. So overall, you're still going to find both of those. You cannot take another example, please. I get it, but I'm trying to get it. LOL. I got you. Bet that up. I'll give another example. I'll play it forward a little bit more. So right here, boom. You see it's consolidating right this. We have a big range to trade back through. We have a 2 down, 2 to reversal. We're kind of just playing around in this right here. Remember I told you, mark out the, whenever we have an inside bar, mark out the high and mark out the low. We took out this previous low. Where are we looking for price to go? Take out the previous high. We did not take out a previous high yet. We're still going down. Like that's not, for me, if there's no candle here, it didn't take out the previous high. So when I do entries, if it doesn't go 1 tick or like 1 cent above the previous high of the candle, it's still an inside bar for me, right? Because it didn't go higher. Like the definition of a 2 is a higher, like it literally takes out a previous high or previous low. If it didn't take out the previous high, it's not a 2, right? So these are still inside, this is still inside bar. Takes out the previous low, takes out the previous low, inside bar, boom. We're still going to the downside. So you might be thinking to yourself, well, Sean, what am I supposed to do here? Nothing. You wait. There's nothing to do right now. Why? Because we only took out the previous low and that's it. So the current broadening formation is this. This low took out this previous low right here. And we are still kind of inside of that range. So until we, watch this, until we trade back through this range and take out that high, or until we expand and take out that low, then we're just sitting here and not doing anything. So right here, the next candle opens up. Let's see what we do. Boom. Next candle opens up. This is at 3:50 p.m. So this is towards the end of the day. That's why this candle was so aggressive. But literally, look what we did. We created a 3. We took out the previous low. Buyer stepped into the market, reclaimed. So guess what? Everybody that was selling right here has to get stopped out of their position. Boom. And I believe the next candle, it did go up, maybe. Yep. So everybody that was previously here, they got stopped out of the position. Boom. What time frames do you trade? I trade all of the time frames that I trade is right here: 15 second, 30 second, 1 minute, 3 minute, 5 minute, 15, 30, 1 hour, 4 hour, 12 hour, daily, weekly, monthly, quarterly. And I'll use like varying time frames and stuff like that. It just depends. So, like the reason I have multiple time frames up and stuff like that, mainly because like with some people that I've taught, basically they have different strategies. So some people, like for example, some people like to do leap options. Like for example, one of my mentors is TheStrat, and a lot of like I've taught some people in like that rock with his strategy because he's more long term, right? He likes to swing trade and leap options and stuff like that. So some people, there might be only wanting to be on the monthly and week quarterly time frame. So I'll have that up and I'll mark out setups and stuff like that on the monthly and week, quarterly time frames and weekly time frames and stuff like that for them. And then for myself, I might take some trades and stuff like that, but predominantly I just day trade. So I do day trading and swing trading. I don't really do leaps. I have these time frames up and stuff like that, mainly for like other people, honestly. But I mainly use for entries, I use the 1 minute, 3 minute, 5 minute. I'm getting up to that 15 minute, it's just bulky. I'll use that for options, but mainly for futures, I use the 1 minute, 3 minute, 5 minute. And then for like if I'm swinging, then I'll use the 15, 30, 60 minute, 4 hour, 12 hour daily. I hope that answered your question. Because I know I use a lot of time frames, but that's just I've been doing it a little bit longer. So you don't have to necessarily have every single time frame necessarily up. You don't need every single time frame. I'm telling you, you don't need every single one. Customize the strat to yourself. But that's how this broad information was right here. You see, we took out the previous low, we consolidated, we took out the previous low, we kept taking out the previous low, reclaimed it, then we had a 3-2 actionable signal back to the upside. We stopped everybody out here. Boom. That's the broad information. Who wants me to give one more example? Just drop it one in the chat. Just drop it one more in chat or like one more example, and I'll show y'all that real quick. All right, cool. I'll show y'all something instead of like a smaller scalp and stuff like that. I'll show y'all like a bigger trade. I'm gonna go back to a random day. I'm gonna go back to a random day just to show y'all what this looks like. I want to show y'all how to combine this with the. Did that go back up on the? I think it went back on that too. It did. Okay, cool. So I want to show y'all also how to do this as well on the. Hold up. Yep. Okay, that works. I want to show y'all how to use the higher time frames and stuff like that with the broad informations on the lower time frame. So you can take an actionable signal on a lower time frame coupled with a higher time frame signal. So right here we have a 3, we have an inside bar, and then we have a 2 up, 2 up, right? So what do we do? That's the broad information. If you every time you see a 3, I'll tell y'all this too. Every time y'all see a 3, literally just drag higher high, lower low, because it is a broad information to a time frame, right? So this is the current broad information. We went inside, took out this previous high right here. So this is the current broad information on the 4 hour time frame, right? Market opens up on this next candle, boom. This is Wednesday, April 30th at 9:30 in the morning, right? So right here, we gap down crazy. I'm telling y'all this right now, I love when the market gaps down and then reclaims. It is the funnest thing for me to trade. I love it because when it gaps down like this and then it sets up for like a reversal, I love taking it to the upside. It's my favorite thing to do. So right here, as you can see, based on the 4 hour, this is why I have multiple time frames up. You see, what did we create? Drop it in the chat real quick. What did it gapping down and taking out that low? What did that do? What did that create?
Lower low.
Lower low, boom. So it created a lower low. Now, what is the next thing that we're looking for? We have a higher high, we have a lower low. What is the next thing we're looking for? Drop it in the chat. Miguel, I like Miguel. Like, higher high, boom. So we're looking for the higher high. So now that we're looking for the higher high, the broad information also helps you with targets. Like, where are you targeting in the market? So if you're feeling, okay, where are all my super bold traders at? Like, y'all wake up and y'all like, you know what? I'm trading zero DTE contracts at 3:59 p.m. EST. And y'all, and y'all, where are my people at like that? Okay. So y'all like to live on the wild side a little bit. All right, cool. If y'all wild side traders and stuff like that, that's fine. You know what I'm saying? I got something for y'all too. Right here, it's at 467. Look for an actual signal. Let's say we do 2-2 reversal or something like that, right? Boom, we had no actual signal yet. We're still 2 down. Cool. I'm personally looking for a bullish actual signal. That's just me personally. I'm looking for a bullish actual signal to trade back through the range. So I'm sitting here, boom, 2 down, no reversal yet. Cool. It does a reversal right here. I wish I can go into it. I don't have the time to go into it. Like, I wouldn't take this one particularly. I want to use this multiple time frames. So I'm watching the 5, 15, 60 minute, and 4 hour time frames. So I might take this actual signal, but I'm asking myself the question: if it takes out this previous high, what does that do to the other time frames? So if the other time frames are up, I'll take it, right? But let's just use this as an example. Let's say you were taking this as it's 464 right now. And let's say you were taking, like you say, you know what, I think it can reach that new high, right? Around 476. Boom. If you're super duper bold, you can just get again 476 calls at 464. If you get, I'm telling y'all right now, if y'all get 476 calls and it's 464 and the market gap down and it's also bearish previously and we just did a 2 reversal, those options contracts are going to be super cheap. So that allows you to you don't have to get a whole bunch of them, but you can get a few if you want to. And then if those things go and hit your target, that's how you create like a 500, 600, 700, 800%, 1,000% return trade in a day or in a week, depending on how far out you want to get these things. And you can just do that. And why would you put it at this high? Because you know what it's trading back to. We have the three. We have the higher high, lower low, higher high, lower low, higher high. You can get next day. So depending on how bold you want to be, if you believe that, okay, bet, I think you can reclaim this in one day, you can get 0 day. I don't recommend that. I would recommend getting it at least like maybe like a day or 2 out, maybe. It just depends on how far you think this can go. Because guess what? I'll spoil it a little bit, but we have a 3-2 expansion back to the upside. We literally set up for the reversal right here, back to the upside, and we reclaim all of that. So we have a 2-2 bullish reversal right to the upside. If you got 0 day contracts, you're still up on that trade. Even if it's 476, like I wouldn't get 476 if it was 0 day DTE. I would get like maybe like 474, 469, 470 calls. And then that way, if I got it at 464 around that area, I'm up like at least like 100% on that trade. But if you want to go farther out, you also can too, because you also know, all right, if we reclaim that and we don't come back down to this low, you have no reason to exit your trade. If you're down here, I don't even know, y'all can literally go back. If y'all use Thinkorswim, y'all can go back to, like, y'all can use historical data and literally go back and say, you know what, I entered this, like, if you go back to, what was this? Go back to April 30th. If you took that 2-2 reversal around 9:45 or around 10 o'clock, and then just play around with options contracts and stuff like that and see what your percentage would have been. If you just took it based on that, based on the broad information. But this is how I trade. Higher high, lower low, higher high. Because as soon as we reclaim that, everybody that was, watch this, everybody that was buying on this candle is now exiting their position right there. They're unraveling their position. We have aggressive sells to the downside. They're unraveling their position. And then buyers are stepping back into the market to bet on that thing going to the upside. Now guess what we're stopping out? Everybody right here and everybody also right here. We're stopping all of them out going back to the upside. And then we get the aggressive move to the upside. And then that's how, so if you wanted to day trade broad informations, I showed y'all how to do that. Y'all can get this 2-2 reversal or the lower time frame entry and then just get it for like $3, $4, $5 out the money, wherever you think it can reach. And then if you want to swing trade it, boom, you can get that same exact entry, target one of these highs or a little bit higher if you're feeling really froggy and bold, you know what I'm saying? And then at that point, that's how you create like a 500,000% return trade in the market. You get it. The key isn't necessarily always getting into like these, like right here at the 2-2 reversal. The key is getting it when the market is going down, because when the market's going down, premiums get really, really, really cheap. So when they get really cheap and you're loading up right there and you're getting it far out the money, as soon as that thing goes in the money, you bought that thing at 80 cents, but now it's at $8. You hit your 1,000% trade right there. Especially when it gaps up like this, premiums spike up crazy. Because I'm pretty sure y'all experienced this. When y'all are down on the trade, or the market's pulling back, or it's like choppy and stuff like that, y'all losing money. Y'all like, man, what this trade doing? Like, man, stop playing with me. Like, go up a little bit more, right? Y'all mad. But then when the market's going in your direction, well, you up crazy. So when you combine, like when you trade with broad information, you're literally buying it at a cheaper price, letting it play out, and then if it gets to that high and you become in the money, you're up you're at least up hundreds of percents on your trades. And that's how you trade the broad information. So just to confirm, we're taking out higher low. We're taking out the high and low off the 3 candle, then waiting for a higher high and lower low, then mark the broad information. Yep, that is exactly what you're doing. You mark out the 3, because the 3, every single 3 you see in the market is a broad information. And then you just wait for price to create a higher high, and then keep either going. If it reclaims it, look for it to take out the low. If it reclaims it, look for price to take out the high. Same thing for inside bars as well. Look for price to take out a high, low, higher high, lower low. Look for that pattern in the market. Even when it's choppy, there's still a broad information. I'll just do this one more time, and then I do, you know what I'm saying, unfortunately have to depart you guys. But I'll show y'all another example right here. Boom. High, low, we take out the previous low, 2-2 reversal back to the upside, we take out a previous high. Then we try to reclaim it. We fail, but guess what we also create? A broad information right here. We have a higher high and a lower low. Then we go lower, we start to reclaim it, 3-2 reversal back to the upside. Where are we going? Right here. We take out the previous high. After we take out that previous high, what else did we take out? We also took out this guy right here. 2-2 reversal back to the downside. Where are we going? To take out this previous low. And then we failed to create a higher high. We failed to take out that previous high. Sellers are just really aggressive. And then boom, we keep expanding more and more to the downside until we eventually reclaim and create a higher high, and then a lower low, and then a higher high. So the last thing I'll leave y'all with is the broad informations are always going to start out small, and then they're always going to get bigger and bigger and bigger. Your goal is to identify when they get bigger and trade that. That's it.
My guy, thank you so much, bro, for taking the time out to break that down. Hope everybody was able to understand it. Like I said, after he is done, guys, I'm gonna go ahead. Well, I know he's done now. I'm gonna go ahead and explain it a little further as well. And then for my newer members, obviously this is gonna be way more advanced, way more advanced. Go through all of the beginner stuff first before you even look at this, because it's gonna make everything confusing. It's gonna make you like, oh my God, I don't know if I should even do this. I'll make it, I'll make sure that you guys know where to access all the curriculum. But other than that, man, I appreciate you, bro, for breaking it down like that. Definitely learned a lot from you as well. Yeah, we greatly appreciate you, bro. Look forward to having you in the future again.
Set that up, bro.
Yes, sir.
Help.
Absolutely, bro. Well, look, man, I know you got to go. I appreciate you again, bro. And if you need anything, let me know.
Set that up. All
All
right,
right,
y'all.
All right. Cool. All right. How'd you guys like that, guys? How'd everybody like that? Good info. Good. Cool.
Now we're going to be talking about trading archetypes. So this one specifically, I was hesitant, not gonna lie. I didn't know if I wanted to kind of bring this and talk about this, in this video, but I was like, you know what? This is important. I'm gonna lay out the entire process of what it truly looks like to trade futures and stuff like that, and just trading in general. So I would be doing y'all a disservice if I didn't put this in there. So again, this is an interesting perspective, but this is something that's going to be very vital for you in creating a strategy with the strat that fits you as a trader, right? So let's get into it. So here's the problem in the trading space right now, right? I've joined mentorships, like I've taken courses and stuff like that, just from different trading educators and stuff like that over the last 5 years of me being in the space. One of the things that, and I also had the honor of also teaching and stuff like that in some of these spaces and stuff like that. So I've literally seen the back end of how communities and different things like that are run, right? One of the things that I've learned, right, from my mentorship and other communities and stuff like that, is that every trader is different. Right, every trader that has joined and stuff like that is different in some way, whether that's life circumstances, personality, emotions, you name it, right? So because traders are different, right? Because they are different and they have these, there's gurus, quote unquote, say trade like me, right? The problem is that because, again, they're different, when gurus tell people oh, you got to trade my way or it's the highway. If you don't trade like me, you're not going to be successful, right? That starts to hurt them as a trader. And I actually made a whole analogy what's happening in the industry right now. So right now, what's happening is a shark is paying a bear $10,000 to learn how to successfully hunt and catch fish consistently in the market. As you can see, Mr. Shark is handing over $10,000 to Mr. Bear right here. The shark joins the bear's community, and the bear shows the shark how to sit in a river and wait for the fish to fly in the air and then catch the fish in the shark's mouth, right? The shark tries to do this, but it can't because one, it can't swim in a freshwater river because it's a saltwater creature, for one, and two, that style doesn't work for the shark. The shark feels like something is wrong because it can't do what it needs to do in order to eat, right? So it's just struggling and stuff like that to eat fish and stuff like that because it's trying to do this thing that it just paid 10 grand to learn from a bear on how to catch fish and how to eat fish and stuff like that. And now it's struggling because it's what am I doing wrong? And in this example, the shark isn't stupid, right? It's just doing something that it wasn't designed to do. But if the shark were to hunt for fish in a way that fit his profile, he would never starve again. So again, if he's in the open ocean and there's fish and stuff like that, he has to swim and then attack the fish, and then that's how he eats, right? He doesn't have to go on a lake and try to fish like a bear because those are two different creatures. It doesn't mean one of them is more successful than the other, but again, what works for you as for example, in the shark, a hunter versus for traders, what works for you as a trader, right? The reason copying signals and copy and paste trading strategies doesn't work is because every trader has a natural way of being, right? So if they can't trade from that is if you can trade from that, that's what unlocks your success. If you can't trade from that, then you'll be limited and you'll be in the same cycle in the same place. And that's most likely where you've been if you are watching this video and stuff like that and you haven't reached that level of success yet, right? So the solution. Right, this is the creator of TheStrat. His name is Rob Smith. God rest his soul. He passed away a few years ago and stuff like that. And he'd been developing the strategy up until the point, I think, for roughly 7 years. He'd been trading for 20 years, and he was trading on the Chicago Board of Exchange, if I'm not mistaken. It was one of the exchanges, but he was trading on that. and he created TheStrat, right? So here's one thing. His focus was this: teach people TheStrat and then show people how to customize it to their style. So if I teach you to trade in a way that fits you, you learn faster, execute faster, and grow faster, right? That was his model. That was his thing. That was his mission that he was trying to carry out, and that's the mission that I want to carry out for him as well when it comes to TheStrat. So I created something to accomplish that legacy called Trading Archetype. So I created an archetype trading system, otherwise known as ATS, right? So I'll talk about that a little bit later. But again, trading archetypes. Your personality style, like attributed to the trader, there's 5 base archetypes that every trader falls under, right? So there's an investor, there's a leap trader, there's a swing trader, day trader, and scalper. And you probably heard of all these terms and stuff like that before, but these are the 5 ways of trading. So all trading is, and I'm gonna kind of simplify this for you. Trading is simply buying and selling. That's it. You're exchanging. I'm exchanging something that I bought for something that I sell. Like I'm buying something for $1, selling it for $2, whatever. That's trading. The distance between when you do that and like when you buy and when you sell determines your overall trading style. So if I buy something for $1 and I sell it for $2 and I do that in a few seconds, I'm a scalper. If I buy something for $1 and I sell it for $2 in an hour or in 30 minutes or something like that, then I'm a day trader. If I buy something for $1 and I sell it for $2 in one day, or in like 2 days or 3 days or 4 days or 5 days or a week or something, or 2 weeks or a month, I'm a swing trader, right? If I'm buying something for $1 and I'm selling it for, let's just say $10 or something like that over the course of 10 months, 11 months, 12 months, then guess what? I'm a leap trader. But if I buy something and I sell it later down the line, or I never sell it at all, down the line 20 years, 30 years from now, then I am an investor. So the distance between when I buy something and when I sell it determines the type of trader from a base archetype perspective that you are, right? And then from these 5 main archetypes and stuff like that, there's hybrid archetypes that I have came up with, right? So of the 5, because traders are unique, and I recognize this, I discovered that there are 10 hybrid archetypes to every type of trader, right? And these are the names of them that I had created I created the names of these and stuff like that. And they have different combinations and stuff like that for the type of archetype that you are, but these are the hybrid archetypes. So the archetype trading assessment is what I created. So up until this point, I've only ever given this to my mentees, you know, whenever they join my cohort and stuff like that. That's why I was kind of like hesitant to kind of put this in this video and like kind of share this and stuff like that with people that are, you know, in the public and stuff like that. But what it does is it assesses your trading personality, the trading archetype you are, the best suited trading style, and then use that to create a strategy that fits you. So I'm not in the business of you got to trade like me, and if you don't, then you're going to be unsuccessful and stuff like that when it comes to trading. That's not my thing. Like, you are unique. Every single, you watching this video right now, right? You're not necessarily like me. You don't have the same experiences, different things like that. You have your own unique experiences and your own way of trading. Like, I can scalp, for example. I love scalping, like in and out and stuff like that. I like doing that, right? But you might not like doing that. But if you do it like me and you don't like doing that, then you're gonna be stressed out. You're like, bro, I don't want to do this. Like, trading sucks. Trading is not for me. That's the language that we use, right? But you won't have to use that language anymore after you take this assessment, because I've given this assessment and stuff like that for free. So literally, if you click this link and stuff like that, it'll take you to the archetype assessment and stuff like that. So what you can do, if you haven't, you can literally just, the Miro board, I'm gonna link this whole like board and stuff like that in the description. You can click the Miro board, and then when you access it and go to this specific part for the trading archetypes, the link will be right here. You can click that link and then it will take you to this page where you can basically take your assessment to discover what your trading archetype is. And then from there, once you take that archetype assessment, at the end, it'll give you an example of what your archetype specifically is. And I'll actually walk you through it a little bit just so you can show you what it looks like. So right here, you would just type in, your name, your first name, last name, phone number, email, and then your Instagram handle if you want to, just so I can see, like, hey, reach out to me and stuff like that. I'll reach out to you and see like what your archetype is and stuff like that at the end. So I'm actually gonna pause this real quick, fill this out, and then I'm gonna start going through some of the questions and stuff like that. And then I'm gonna skip to the end to show you what my archetype specifically is, just to show you what it looks like after you fill it out pretty much to the T. So the first question is going to ask you, what is your primary trading goal, right? So then you would just answer this and stuff like that as best you can. So let's just say, I like to get in and out fast. Boom. Answer that, fill it out. How would you describe your risk tolerance? Out of these, I think I take fast risk, every day, and I'm comfortable reacting quickly. So I'll click that. So you just answer these questions. They're really simple questions. You just ask the questions. They'll take you through the whole thing and stuff like that. And at the end, which I'm actually about to skip to right now, it'll show you what your archetype is. All right, so I'm about to answer this last question. If you were mentoring someone with the same personality, what would you teach them? And I think I would answer how to create structure and flow and master, 1 to 2 patterns and rinse and repeat. I'm gonna click submit. And now it gave me my archetype. So the archetype that I was given was active opportunist, and this is the description. This is a rare hybrid trading archetype. You are a blend of a swing trader and a day trader, right? You thrive in movement and flexibility. You capture intraday setups while keeping your eyes on the bigger swings. You balance patience with action. So you take the market, what the market gives, and then you let winners stretch, right? And then I also have a link to a breakdown of basically like what an active opportunist and stuff like that is. So you can kind of go through this and stuff like that. Like, so for example, if you're an active opportunist, right? You combine the precision of day trading with the patience of swing trading. This versatility is your superpower. You enjoy consistent market activity. You're comfortable making daily adjustments to your positions. Flexibility, you adapt easily between quick plays and multi-day holds, or if you're trading futures and you're just day trading, holding trades for a few hours and stuff like that. That's a form of swing trading. You're holding something for a very decent amount of time, right? This flexibility gives you more opportunities in the market. You excel at identifying momentum that can carry you through beyond a single session, right? So this is like the trading DNA and stuff like that. And then these are the examples of what the main time frames would look like, right, for you. If you're trading options or stocks and stuff like that, then mainly you would be, the time frames here will be the daily, weekly, monthly. But I created an updated version of this, what this looks like for trading. Like if you're doing if you're more of a swing trader, day trader, then the time frame you would use instead of like the daily and the weekly would be the 4-hour and the 12-hour time frame. And there's a reason that I selected those, because I've tested them out myself. The 4-hour and the 12-hour just go crazy, and when you play with them and stuff like that, you'll see why. But these are the time frames. So like 5 and a 15 minute for day trading entries and exits. These time frames help you with time precise moves. The 30 and 60 minute, you use that for the trend. So like the continuity, like what color is the 60 minute? Is it bullish? Is it bearish? Is it going up? Is it going down? You want to see these things. These confirm the strength of the moves beyond all the noise and stuff like that on the lower time frames. And then for the 4-hour and the 12-hour, this will basically replace that with the daily. This will show you how to have multi-hour holds if you're trading intraday, but you're holding them for hours long, right? This will allow you to basically be able to do that. But this is just a little bit of kind of everything and stuff like that. Just kind of breaking down these different things and stuff like that for this specific archetype. But this is what it will look like on your end. And I have inside of like my mentorship and stuff like that, I have courses on every single archetype. So all 15 archetypes, there's literally these courses and stuff like that. So I put a little time into it. But that's basically what that would look like. So what I want you to do, literally go to, if you're on this part right now, then you just go to the description. You should see this Miro board and stuff like that. Go to the Miro board and pull up the trading archetype section, and you'll find this link. You'll click the link, and then you'll basically be able to take the assessment. You'll basically be able to take the assessment and stuff like that, see what type of trader that you are. Once you see what type of trader that you are, then you'll be ready for the next part. All right, so now that we've done the archetype portion where we've created our archetype in the market, now what we're going to do is construct a strategy based on that. So again, you're now at a point where you say, all right, bet I understand it, but how do I apply that to myself? So once you take the archetype trading assessment, it will give you the full breakdown of you as a trader, and then we're going to use that to create an archetype playbook. So as you can see right here, we already went through this section already. If you don't know what your trading archetype is and you haven't taken the assessment yet, you can just click this link on the Miro board and stuff like that, and it'll take you there. And then you identify what your archetype is. So that's the first part of this. So I already identified from me taking the assessment, just to show you guys what that looks like. Mine is an active opportunist, and I already was linked to the course board that I created, the slide deck, specifically for the active opportunist trader, right? So I have this, and now we're gonna use this and what I had talked about already to basically create the strategy. So once I've identified my archetype, which is the active opportunist, right? And identify the time frames. I talked about it on the last one. Based on this, it would be the 5 minute, 15 minute, 30, 60 minute. So the 5 minute, 15 for entries, 30 or the 60 minute for like the medium term trend and stuff like that. And then instead of the daily and weekly and monthly, since I'm not like trading options or something like that, then the bigger time frames for that will be the 4-hour time frame and the 12-hour time frame. So now we're going to use that to now, like once we have these, we're going to start filling out this trading playbook template that I created for you guys. I can't lie. This was created for my mentorship and stuff like that, but I'm basically giving it to you guys to show you how to create it and stuff like that. So I won't necessarily be like, oh, like I'm gonna build this out with you, but I'm gonna do this like on this video to demonstrate what that looks like, just based on what I have already gotten right here. So I'll walk you through an example, filling it out and creating a strategy. So I'm about to pull this up now, and we're about to do this in real time. So this is the template. So what I'm gonna do is I'm gonna show you how to do it. This is the example playbook. I'm gonna make a file. I'm gonna go over here to file, and I'm gonna make a copy of this. And then I'm gonna just rename this ceoashon's test archetype playbook. Boom, it's gonna make a copy of this. Now that the copy of this is made, now let's start playing around with this. So what is our archetype? Our archetype is set it in the thing. It is an active opportunist, which is and I'll say this a little bit later, but the trading style is a mix between a day trader plus swing trader, right? I'll take this off of bold, now for primary market, it's gonna be futures. In terms of that, I'm going to be trading this with, like for my strategy and stuff like that. Starting capital, you can put whatever this is going to be. So let's just say you're going to start trading with, let's just say $10,000 as an example, right? Start trading with $10,000. Your daily time commitment example is going to be 1 to 3 hours per day. Let's just say for me, it's going to be literally 1 to 3 hours per day. Let's just say 1 to 3 hours per day. Because if I'm trading and stuff like that, it might be 1 to 3 hours per day. Anyway, so that's just an example. And then the sessions that I might trade, there's different sessions based on times. So there's New York session, London session, different things like that. But the times that I would trade would just be in the morning time. So for me, I'm on the East Coast, so it would be, for me, it would be like, let's just call it 9 a.m. EST to like 12 p.m. EST. So that's not a 3-hour window. So I'll be trading from that time pretty much. And then sometimes that might go over that. And I've seen that happen as well. If I have a really good trade, I'll let it kind of go over that a little bit. But that's what that looks like for the trader identity portion. Now for the strategy framework, right? So I always recommend this for my students in the thing. I tell them to only trade one signal, right? One type of signal, right? So we talked about that in the strat portion, like learning the strat. There's 3 types of signals, like reversal signals you can trade. Inside bar reversals, 2-2 reversals, outside bar reversals. I tell them to pick one category. So not like one setup, like a 2-1-2 or like that's it, but like an actual category. So an inside bar reversal is a category. A 2-2 reversal is a category. An outside bar is a category. Which category do you want to trade? The inside bar reversals, that category, the 2-2 reversals, that category, or the outside bar reversals. But I tell them to pick one so they can develop mastery over that one, right? There's no right or wrong answer when it comes to which setups you should take and stuff like that, and which category you should like pick. One of my students, for example, she I think did like she's taken trades where she's made $10,000 in a trade, $5,000, $4,000 in a trade. She's gotten multiple payouts and stuff like that just from trading. I think it was Top Step and a few other brokers and stuff like that, so a few other prop firms. But she trades inside bar reversals. She loves the inside bar reversals, like just loves them. But that's the category she likes to trade. So the signals traded, you can just say, in this case, as an example, you could say the inside bar reversal, right? Like reversals, like those are going to be the ones that I trade. So that could be the 2-1-2 or the 3-1-2 reversals. So those will be the ones that I would trade in this example. And then the ticker symbol. I also recommend that you only trade one futures. Because again, like the simpler you make this, it just makes your life easier. There's no reason for us to just, I don't want you just getting overwhelmed by trading so many different things and stuff like that and just overwhelming yourself. Pick one. You can literally make a lot of money just trading one thing. Literally just one thing. Like if you want to add two or something like trade two, that's fine. But like try to keep it to one, right? Just one specific thing that you trade, right? So let's say that one future that I want to trade is, let's just say ES, S&P 500, and MES. Like let's say that's the one I want to trade. Boom. So MES is the smaller one. ES is the bigger one. Cool. We got that situated. Now, your core time frames. My higher time frames, the one that I use like to establish a bias, right? We talked about that already. Like there's the lower time frames that I use for an entry. Then there's the medium-ish ones, and then there's the higher ones, which were the 4-hour and the 12-hour. If I wanted to narrow this down, I say make sure that you have at least 2 higher time frames, and then, or 2 higher time frames, and then like a medium and an entry time frame. So I'll show you what that looks like. So in this case, based on like what we have for my style specifically that I got, my higher time frame, I could choose, let's just say in this example, I use because I'm more of a swing trader, day trader, I like to hold, my goal is to hold the trades. So I would use, let's just say the 12-hour, right? Or the 12H, like, that's just, how we write it out. And then the 4-hour as my, higher time frames that I'm looking at. And then my execution time frames and stuff like that would be like that 15-minute and then the 5-minute potentially that I use to execute. If I were to narrow this down more, I would just say you can use the 4-hour just to narrow this down. Keep this at the 4-hour and then make this the 1-hour. That way, these will be the higher time frames that you're using, right? And then these would be the lower time frames and the medium, like the 15 minutes kind of like a medium lower time frame that you can use. But that gives you, remember I said with time frame continuity, I want you to be trading at least 4 time frames. So if I have the 4-hour, 1-hour, those are my bigger time frames. Then I have the 15-minute, 5-minute, those are my lower time frames that I'm using for entries. So that's still 4 time frames. I have the bigger picture, like the medium, and then the smaller picture, right? So I hope that makes sense. But those are the time frames that I would pretty much use. Now, execution rules, simple, like we talked about this already. We should be trading in the direction of time frame continuity. So that's already there. Shouldn't be trading against the trend. Have one clear thesis for the trade, meaning I'm trading an inside bar reversal in the direction of continuity, and we took out a previous high, we're going down. We took out a previous low, we're going up, right? Max number of trades per day. You can put this for yourself, right? I recommend, I'll say this. This is something that I've learned from teaching. This is something I learned from trading. This is something I've learned from mentors and stuff like that. Typically, decision fatigue for traders happens at 2 decisions, right? 2 to 3 decisions. So once you take 2 to 3 trades, you start to have decision fatigue when you're taking trades, meaning you start to get tired, and then you start to get like, you don't start making the best decisions after 2 to 3 trades, typically, right? Like statistically, it's 2 to 3 trades. You can look it up. Like the fewer trades you take, the better. The more trades you take, obviously, it's going to be more overwhelming. If you had 2 to 3 chores to do, it's not as overwhelming as 20 to 30 chores to do, as an example, right? So the goal is to keep this as low as possible. So I usually recommend, maybe like 1 to 2. Maybe if you have like a little bit more development and stuff like that, it might be 3 to 4 or something like that. But let's just say 2. Like you should be looking for 2 good setups per day and just keep it like that, right? And again, our directional rule is this. If the higher time frames are bullish, we should be taking bullish inside bar reversals. If the higher time frame is bearish, we should be taking bearish actual signals, period. The risk management, we can also define what our risk is and stuff like that. And this will be different depending on the trader, because some traders, you might be watching this, for example, and you might be looking to trade with, like $10,000 or maybe like $20,000 or something like that, maybe even like $100,000. But you might be also watching this, you're trading with a smaller account, so maybe like $1,000 or $500 or something like that. You're trying to start with that, right? That risk will be based on your account size, right? So you can do it based on a fixed amount, or you can do it based on a percentage of the account. But again, risk must be defined before entering the trade. So you need to have what this looks like. So if you say, for example, so let's just say in this example, my account, let's say I'll keep using that. Let's say my account is at $10,000, right? And I only want to risk maximum 5% per trade that I take, right? Something like that. Let's say it's like let's say, I'm trying to keep the math as simple as possible, but let's just say I only want to risk 5% of my account per day. So I'll put it like this. So I'll delete that, risk percent. I'll say 5% per day. That equals $500. So maximum I can risk per day is $500, right? Let's just say I'm only taking 2 trades per day, right? My fixed like percentage risk of each trade, right, equals 2.5% per day, I'll say per trade, which is I'm only risking $250 per trade. So if I take a trade that I'm risking $250, and then when I take 2 losses in a day, I'm done for the day, right? That's what that looks like. So again, 5% per day is $500 based on a $10,000 account balance. So if the account balance is $10,000, then that is what that looks like for 5% and 2.5%. So I hope that makes sense. That's just the math, and that's how you would do it and stuff like that. You don't have to do that actively while trading. You can just do this beforehand. So you know exactly, like based on my account, I only want to risk a certain percentage, so per day, and a certain percentage per trade. Boom. Do that math beforehand. When you trade, you will already know what that looks like. Now, trade permission checklist. This is just something that I put in here as well. Is the higher time frame bullish or bearish? This is like a checklist that you can do for your trades and stuff like that. So I actually turn this into, matter of fact, I actually turn these into checklists. So you can literally just check that off and check that off, check that off, check that off, right? So is this higher time frame bullish or bearish? Is the execution time frame aligned in the same direction? Meaning, is the time frame you're going to enter or execute on aligned with the higher one? So if the higher time frame is bullish, if you're taking a bullish actual signal, is it also bullish, right? Is it also a bullish actual signal? If not, you shouldn't be taking it, right? Does the entry match your archetype and trading style? So for example, if I'm a day trader, swing trader, technically speaking, I shouldn't be trying to scalp, because my style is more so to take trades and then hold them. So if I catch myself on the 15-second freaking time frame, and my archetype is day trading, swing trading, and my time frames are the 5-minute and higher, why the heck am I on the 15-second, 30-second time frame, right? It doesn't make any sense. So am I trading based on my style? And is my risk defined before the entry? Meaning, do I know how much I can lose on this trade when I enter it? If the answer is no to any of these, you don't take a trade, right? That's an example of using this checklist. And then I'll show you like how to use this area like as an example. You can drop images based on your trading strategy and stuff like that and do that. So I'm actually going to pull up a chart right now just to give you an example of what that looks like to kind of basically execute this strategy in real time. So just to summarize, the ticker symbol that I'm going to trade is MES or ES depending on my account size. I'm only going to be trading the inside bar reversals, and the time frames I'm going to use are the 4-hour, 1 hour, 15-minute, 5-minute time frame. And then these are the execution rules that I have, and I'm only looking to take 2 trades per day. So we're gonna go to this, and then I'm gonna use the replay feature just to kind of show what this looks like. And this is what I'm gonna do. I'm actually gonna I'm gonna enhance the chart, right? I'm gonna remove all drawings and stuff like that. And then I'm also gonna go in here real quick because I gotta change that. It's gonna get on my nerves. Apply to all, boom. All right, now I'm gonna go select a random time. So I'm gonna just scrunch this up. This is what I'm gonna do. I'm gonna scrunch this up, drop this down. I'm gonna scroll to a random time that I can't see. I'm gonna click select bar, and I'm gonna see if it'll take me there. I don't know if it's gonna take me there on all the time frames. I think it did. Oh, nice, it did, cool. Now I'm gonna reset all the charts, and then I'm gonna basically bring it forward to where I'm only where I'm willing to trade and stuff like that. So I only want to trade. Remember, the window that I had for myself was between 9:30 a.m. right? I think I said it right here, 9 a.m. EST to 12 p.m. EST. That's when I'm looking to take trades. So I'm gonna skip this forward, but I gotta skip this forward by a lot, just to skip it forward to that. 8 o'clock, 9 o'clock, boom. We're on the 9 o'clock candle for the 1 hour time frame, as you can see. Now, this is my analysis. I'll start on let me get all the time frames. So let's say 5 minute, 15 minute. I'll have this on the 1 hour, and then I'll have this one on the 4 hour, right? Boom. So I have all the time frames laid out. Everything is pretty much lined up and organized. Boom. So these are the time frames that I have. My goal is I want to take reversals, right? I want to take only inside bar reversals, right, in the direction of the time frame continuity on the higher time frames. So first I need to get an inside bar reversal of some kind, right? So let's do that. Let's play this forward until I see some type of inside bar. Because if I don't see inside bar, I'm not going to be taking anything. So let's reduce this. We still haven't gotten an inside bar, so I'm just going to play it forward. And we might not get an inside bar. So we're just going to see what happens. I got an inside bar right there. So this is a bearish inside bar. So in order for me to take this, right, I need price to take out the high of that previous candle. So I need them to take out, hold on, let me draw it real quick. I need price to take out this high in order for me to get an entry, because that is a bearish inside bar. Bearish outside bar. Then we go inside bar. If we take out the high, that is a bullish reversal. So what this would look like is I would place and then I got to ask myself, on every other time frame, so what color will the 15-minute be if I do that? If I take that entry, will the 15-minute be bullish? Will the 60-minute be bullish? Will the 4 hour time frame be bullish? So notice where I'm taking my entry. I synced it in all the layouts. So if price opened up right here on the 4 hour, that means that anything above that, we're bullish. And then same thing on the 4 hour. Anything above that, we're bullish at that white line that I'm looking to enter at. So if I enter this trade there, I'm good. So we're gonna place this, and I literally don't know if this is gonna work or not, but literally I'm just gonna take it based on the strat. 3, 1, 2. Set up. If we take out the high, we'll go to the upside. If not, we'll see. And then the target, let's just say I'll put it. Let's see. It'll be based on that high, but my goal is to try to take it a little bit higher than that. So let's just say I'm trying to take it. We'll just play it out and just see what happens. Boom. Play it forward. Let's see what it does. So it does a 3, 1, 2 continuation instead. So I'll get rid of the order because it doesn't do a reversal. And then just as simple as that. I just wouldn't take it. Simple as that. I just wouldn't take it. In this case, it's kind of playing around a little bit, so it's not really doing anything. Still doesn't have an inside bar yet, so I just wouldn't take any trades. And then we just play this forward more. Still got an inside bar reversal. Still got an inside bar reversal. We got an inside bar reversal right there. Hold on. Let's pay attention. So we have a 2 up. How do I know this is a 2 up? We took out the previous candle's high, this one. We took out this previous candle's high. We have an inside bar. So if we take out this low, that will be a 2, 1, 2 reversal to the downside. I didn't mean to enter that right there. I was trying to put it a little lower, but that works. If this breaks to the downside, right? Are we bearish on the 60-minute? Yes. Are we bearish on the 4 hour? Yes. So the probability of this working in our favor is higher. So let's see if it works. Because again, I don't know if it's going to work. It's 50-50. Let's see what it does. All right, it goes 2 into a reversal to the downside, and I forgot to put like more than one contract so I can take profit. But as you can see, I took a 2-1-2 reversal to the downside, and the trade worked. In this case, I would have taken profit, put my stop loss at break even on the rest of the trade, and then you kind of just let the rest of the trade play out, right? We're playing an inside bar. It might reverse here, but yeah, I don't really care. So reverse there, I would have taken profit there and then reduced it, because obviously, as you can see, we also did a 2-1-2 reversal to the upside right there. And when that happened, guess what happened? The 60-minute changed green, the 4-hour changed green, along with the 15-minute. So that's the beauty of basically trading it and stuff like that. But that's basically what that would look like to trade it on a day-to-day basis. I would have the 4-hour, 1-hour, 15-minute, 5-minute up. And the goal is to look for a trade to basically do that. As you can see in that trade, we keep going. I think this is probably going to keep going most likely. We're basically going to go back and forth. So let's see. So in this case, as you can see, that 2-1-2 reversal right there kept pushing it, and we were still bullish. We were still bullish on that trade. So that's an example of what that looks like to trade the inside bar reversal. I'm saying maybe there's probably going to be another example, but that's pretty much it. I mean, that's basically what it looks like to trade the strategy and stuff like that based on what we just created. And then based on that trade, I can go back. So let me just go back and show you what that would look like. If I went back, I might have to go back a little bit more, but in this example, I'm going to show you what that would look like. I will put where I had my stop loss, where I had my take profit at in this example. Let's say I had it like this as an example. Boom. And then boom. And let's just say I had like a call out or something like that. So I took the 2-1-2 reversal down. Boom. And then I'll play this out. Let's say I play it. Boom. Sell. This time I'll do it with 2 like I'm supposed to. Do at least 2. Play it forward. Boom. I'm up on that trade. And then I'll take profit on that. I'll take profit on 1. So I'm in a sell position. So I'll buy 1 contract, buy market. And then my stop loss, I always put it at break even. Confirm. Boom. Play this forward. It's going to probably stop me at a break even right there. I'll close the position once it does that. And then I can literally say, I took a 2-1-2 reversal down, took profit on 1 contract, put the other contract at break even. Boom. And I can do it like this. And then what I can do now is I can actually copy this image or download the image, download it to your computer. And then what you can do is go back to your playbook, and then you can use this as a journal if you want to, and then you can paste the image on the screen. So that way you can save the image and you can go back and say, all right, I took a trade. This is what the trade looked like, so you can visually see what you did, right? And then this is all you need to basically put your playbook and stuff like that together. And then I'll also go into another section where I'll show basically how to test it out and stuff like that more, and just give more examples. But this is just a fundamental way to go from taking your archetype, creating the actual playbook that you're going to use to trade, and then actually putting it together and trading it based on the strat. So in this section, I was just covering that portion. We'll talk about using it a little bit more in later sections and how you can actually use that to scale. All right, y'all, now we're going to be talking about validating the strategy. So we've already gotten to a point where we've created the strategy. We know what our archetype is. We have our strategy created. We already created our playbook and stuff like that that we're going to use to trade, but now we need to validate that in the market. So the way that we're going to validate this is with paper trading, right? So you might be thinking, well, okay, Pat, I'm not paper trading. You know what I'm saying? Like, so if you're already a trader and stuff like that, you already know the reputation that paper trading has. You know, like some people might say paper trading doesn't work. It's not the same as trading real money. There's no emotions, so it's pointless. Like, and to be clear, you know, that part is true, right? Paper trading was never meant to simulate emotions though. The real purpose of paper trading is to collect data on your strategy and to prove to yourself that you can execute the strategy profitably over time. This process is called validation, right? So again, if you collect data showing that your strategy works and prove to yourself that you can execute your strategy profitably over time, right? Then you will position yourself to transition to live trading, right? Trading with actual money and stuff like that, and then growing that instead of crashing and burning, right? So there's 6 steps that I want to cover. The first one is going to be the platform, right? Step number 1 is the platform. So you can back test, or like you can practice trading and stuff like that on just a numerous number of platforms, right? You can use Tradingview, for example, right? If you go into Tradingview on the chart section, you can see this is like the chart and stuff like that. The top right corner, you'll see the trade button, or you'll see somewhere down here, something like that, maybe where you'll be able to hit the trade button. When you hit that, it'll prompt you to log in. You can use Tradovate, or you can use paper trading, or you can use one of these other brokers if you have created an account with one of these brokers outside of Tradovate, right? So you can use the built-in paper trading feature. It allows both forward testing and back testing, which I will get into in a second, right? And it's useful for testing outside of live market hours. Another one you can use is Tradovate. This is the broker that I use right now. You can log into a simulated account and trade during the live market hours. So live meaning like it's, for example, if you're watching a live show, it's happening right now. It's happening in real time, right? So the market being open and stuff like that is the live market, so to speak, right? So when the market is open, you can trade during those times on your paper trading account. This is best for forward testing, or this is what's called forward testing, right? You're testing what's happening right now and going forward, right? So you can do that with Tradovate, or you can use a platform called TradeZilla or FX Replay, right? So you can use a software designed for journaling and back testing. I currently use TradeZilla. I actually have their yearly subscription and stuff like that. I renew TradeZilla and I renew Tradingview every single year for their yearly subscription. The lowest tier plan offers you back testing, but it is paid, right? I think it's like $20 to $30 a month or something like that if you're just getting it on a monthly plan. I think I pay like $200 a year, something like that, just to get it, cause stuff like that, because I'm gonna use all of them. I'm gonna use Tradingview, I'm gonna use TradeZilla for back testing. Now, once you have the platform that you've chosen, right, the next step is going to be to reset your balance, right? So reset your account balance to whatever amount you plan to trade with your live, like your real money account with, right? I see this so many times, like so many traders, they'll hop into a paper trading account and they'll put like 30, let's say they'll put like 100 grand in there or something like that, or 200 grand, and they'll trade with that, and then they'll simulate it as if they actually have that in their account. But then when they switch over to a live account, it just doesn't work, and they're like, well, what's going on? Well, first off, psychologically, if you trade at like a account that has $200,000 in it and you don't, for example, have $200,000 yet, right? Then you're going to mentally think, oh, I have $200,000. So I just made this much. You don't understand like the psychology of you taking these trades and stuff like that is completely different, right? Because if I asked you, for example, if you had, for example, let's say you had $100,000, right? Would you go get this thing for $100? Oh, okay, that's fine. But if you have only $500, right? Would you do that? Would you buy that same thing for $100 and all you have is 500, right? The psychology is different. So the more you perceive to have, the better you trade, because you perceive, like, how do I say this? It's kind of like you perceive yourself as like, oh, like I'm straight, I'm good. So you ever see them people that's confident and stuff like that in movies and stuff where they feel like they can't have nothing to lose, so they carry themselves in a way where they just don't, right? So trading will be the same thing. You need to set the expectation right there. So if you're gonna paper trade, for example, with only $10,000, then put $10,000 in there. If you're only gonna use $1,000, then put $1,000 into your account, right, to trade with. Now, for example, if you're starting, like I said, if you're starting with $1,000, paper trade with $1,000. If you're starting an eval account, for example, like if you're starting an evaluation account with a prop firm, and let's just say you get the $50,000 account, the max drawdown on the evaluation stage is $2,000, right? Start your paper trading account with $2,000, and then your goal is to try to basically make whatever so if you have to, in order to pass, let's say you have to make $3,000 on the account, right? So if you have to make $3,000 on the account in order to pass, then you could say, all right, bet. When I turn $2,000 account balance into a $5,000, meaning I made $3,000 in profit, then I would have passed an evaluation stage. And you can treat it like that to help you with your psychology, right? The goal is to simulate position sizing, risk per trade, and account growth realistically. So again, if you have $100,000, you can trade, like, I think you could literally trade like 50 in Q, right? But if you only got $2,000 in your account, you can't do 50 in Q. So you have to like structure your account balance and stuff like that so that your position sizing can be right, so your risk per trade can be right, and then also so you can actually realistically grow your account the right way. Right? So make sure you reset that balance for sure to whatever you're going to actually trade with. Step number 3, there's 2 types of paper trading, right? I talked about already forward testing and back testing. So forward testing is trading your strategy while the market is live and while it is open. So this is where you log into your paper trading account and you just trade during the market hours, right? You're executing trades in real time. Now there's back testing, which is going back in time to test your strategy on price, like past price action. This is usually done on the weekends when the market is closed and stuff like that. And you're still taking valid trades and stuff like that to match your strategy, but you're not doing it obviously in a real time environment. So I'll show you an example of what that looks like. So if I go over here to Tradingview, I'm gonna remove these drawings and I'm gonna just go to one chart just so you can do that. I'm gonna hit this replay feature right here. I'm gonna click start new, and then after I reset my chart, I can go back in time and I can play this forward and I can say, you know what, I want to take a trade, boom. I want to take a trade here, something like that, boom. Sell, stop, or sell limit or whatever, boom. And then I can place that trade and then I can trade that as if the market is actually open and stuff like that and play this forward. I can even set this to the 1 second time frame to simulate like actually price action moving as fast as it would be during that time. And then you can also like slow it down and stuff like that. But that's what you can do. That's back testing. I'm going back in time to test my strategy. Going back in time to test my strategy. And then forward testing is trading when the market is actually currently open. Right? So now you might be asking yourself, what should you do? Right? I recommend you doing both. Right? And here's how you should do it. Forward test Monday through Friday. So Monday, like during the weekdays when the market is actually open, forward test, like trade when the market is actually open, and then back test Saturday and Sunday. So right now, the market is currently closed and stuff like that because right now that I'm recording this specific part, it's Sunday, right? So I can back test on the weekend and then forward test during the weekdays and stuff like that while the market is actually open. That way you're practicing and stuff like that during the week, but you're also practicing during the weekend, and you're just maximizing both of them. Now, step number 1, get the platform. Step number 2, reset the balance. Step number 3, the 2 types of paper trading, and then you obviously doing both. Step number 4 is now journaling, right? So every single trade ends up either as a win, loss, or a break-even trade. When I say break-even, that means if you buy something for $1, sell it for $1. Buy something for $2, sell it for $2. You bought it for the same price that you exited at, so therefore you didn't win anything, but you didn't lose anything. That's a break-even trade, right? Every single trade either ends up as one of those 3. Mark up your chart with your entry, your stop loss, your take profit, and then any notes or reasoning that you had for taking that trade, right? So here's an example of what that looks like. So if you go over here, you see on this chart, I have the call out section right here where I'm describing what I did. So I entered this 2 up inside bar, 2 up continuation as an example. I put my entry price right here. So you see my entry price was right here, 24,903.75 from this white line right here. I wrote that right there. Stop loss, I wrote it right there. And then I set it at the low, the inside bar. It was a 50-point stop. So I was risking 50 points on this trade when I took this on, let's say, for example, MNQ. I took profit on the trade when we did a 2-2 reversal at 10:35 in the morning. So I'm describing what's happening, and I'm basically giving a description to myself so that way when I look back at this trade, I can put myself in the position of where I was so I can look at this trade from that perspective, right? And I can screenshot this, as you can see, like I just did, and then I'm uploading it here. And then obviously once you save the screenshot or save the image, you can upload it to a journal, right? So you can use the archetype playbook Google Doc, which we had talked about earlier, where I give you that example in the previous one, where you can journal it just in there. You can use Notion, you can use a Discord trading journal. I give like a Discord journal template and stuff like that to my students that they can use. And in any system that lets you store the images and notes, right? The tool doesn't matter, consistency does. Like, just make sure you're consistently journaling and documenting your trades. That is the only thing that matters. Not where you do it, but the fact that you're doing it, right? Now, number 5 is the mindset. So your mindset should not be, how do I make money? That should not be the mindset that you have towards trading and paper trading. Your focus should be, how do I prove this strategy works when executed correctly, right? You are proving, right? You are proving, if I execute this plan correctly, it produces this result. That is the only thing that you are testing for, right? If I execute this plan correctly, it produces this result. Because once you've proven that to yourself, right? After that, then you can then move on to trading live, right? So again, you've collected enough trades, right? So I'll say this right here. You're not done paper trading until you've done these 2 things. Collected enough trades to validate your strategy, and then at least, and you might be like, well, why? At least double your paper trading account. So if you're gonna start with $10,000, make $20,000. If you're gonna start with 1,000, make 2,000, right? I mean, we'll make $1,000 and then take the account to 2,000, right? You might be asking, well, why do I have to double my account first, right? The reason is because, well, one, if you did that in a real market, then the point is, if I started with $1,000, for example, and then I go and I make $1,000 more and my account's at $2,000, then what I can do is I can actually withdraw that $1,000 that I invested into this, and I can, recoup this is what's called principal. Like, I put this up in order to be able to trade with and stuff like that. I am now taking that back. So that $1,000 in my account now isn't my money. I'm trading. So now what happens is I'm trading $1,000 in my account for free. Because if I put $1,000 in, right? So what's a break-even trade? I spent $1,000. Like, let's say I pay it. Like, I bought something for $1,000, sell it for $1,000, right? I spent $1,000 to put it in the account, and then I withdrew $1,000. I am now at 0. That's break even, right? So I am now trading. I have a free $1,000 in my trading account for free, right? That's the psychology. If you can at least double your account, then that's the mindset that I want you to be. And also, it's going to be a little bit more work. It's easier. Watch this. It's harder to double your account from, let's say, for example, $1,000 to $2,000 than it is to take the account from $1,000 to $1,100. You only got to make $100. That's only 10% versus making 100%, right? And watch this. When you've doubled because it's harder, the fact that you've done it proves to yourself that you have to execute this thing over a certain amount of time, right? Execute your playbook over a certain amount of time in order to get that result. Once you've proven to yourself that you can do that, right? Now you have a confidence and you have proof and multiple trades of proof that I can take an account from this and double it by following the strategy. And then you should be able to then go and apply that to a real account. And if you can't do that, then it's a psychology thing, and we'll get into that a little bit. But again, the whole point is to collect enough trades to validate your strategy and that you can do it, right? An example, if I start with $1,000 and I grow to $2,000, that's the goal. Once you've done that with discipline and data, now you're ready to move into the next phase. But this phase, your goal is to validate the strategy you already created. So the playbook that you already crafted up, that you already created, the time frames you're using, the actionable signals you're going to take, the time window you're going to trade and stuff like that. Your goal is to paper trade using that strategy, prove to yourself that you can do it and that you can execute these things, to basically prove to yourself that you can do it. Once you have proven to yourself that you can do it with a paper account, then we can transition over into a live account. And then I'll show you what that looks like navigating that in the next section. All right, now we're about to talk about going live and getting your first win. All right, so that's gonna be the first thing we talk about right now. So in the previous section, we just talked about validating your actual strategy and stuff like that with paper trading. Now, once you're ready, like, we're gonna talk about going live, right? You're ready to go live and move to live trading as soon as your strategy is validated. You've proven execution with paper trading and your uncertainty is removed, right? Not necessarily months later after overthinking and trying to be perfect, right? Paper trading's job is done, right? Live trading introduces the real risk and the real emotions in a controlled way. So the goal of the stage, right, is introducing real risk gradually, right? feeling like, you know, the real emotions and stuff like that in small doses, building that confidence through repetition, and then learning to execute under pressure. This phase is not necessarily about making money. And this is so funny because paradoxically, or, you know, ironically, right, trading isn't, you know, about that either, right? That's not the goal of trading, right? So like, for example, if I'm paper trading, right, and then I transition into a big account, right? My palms are sweaty. I'm about to vomit. And like, I want to sweat already. If you don't ever know, you already know what I'm talking about, right? Or versus my paper trading on a small account, right? I'm chilling, right? So the disconnect that needs to be, the paradigm shift that needs to happen is that trading isn't about, like, when we're trading live or we're starting to transition into trading with real money and stuff like that, the goal still isn't making money. The goal still isn't that, right? The goal is transitioning the skill set that you had in paper trading and bringing that into a environment that now introduces emotion and risk, right? Like real risk and real emotions and stuff like that. That's what you're trying to do, right? Because if you focus on making money, if your goal is like, oh, I'm trying to make this, I'm trying to build this up and stuff like that, like you will not win, right? Whatever you focus on, you neglect everything else. So if you focus on the money, you will neglect the strategy, you'll neglect risk management, you'll neglect all of it. Right? So the focus should be the strategy. The focus should be bringing that paper trading, like experience, the validation and stuff like that over into live trading in small doses, right? And the problem is, like, if you're trying to make money, then what is the step in order to do that? Oh, if I'm paper trading, let me transition and put as much money in my trading account as I possibly can. But the problem with that is, and why are you trying to do that? Because you're trying to make us more money. Like if I got, let's say for example, I'm trying to trade, I should be trading with like 2,000, you know what I'm saying? But you know, like I got $28,000 in my account right now or something like that. Let me just take this whole $28,000 and put that in my trading account, and I could turn that into $56,000. I could double that and make it $56,000 with that. I could pay down my student loans. I could pay and we start thinking about all these ideologies and things that we want to do with the money, and then we neglect the thing that actually got us there in the first place, right? So I don't want that for you guys. I want you guys to have the right focus when it comes to this in order to still achieve the goal that you have. So again, our goal is not to have sweaty palms and vomited on our sweater because we're putting too much money in the account that is tied to our emotions, right? Our goal is to be like, bro, you should be chilling. You should be vibing. You should be just like coasting. You should just be just like with the wave, you know what I'm saying? Like, so again, there's two ways to trade live capital, right? There's two options. You have a small personal account, which is basically your capital and stuff like that, your rules, you're full control of the risk, versus, or a fund account or a combine, which is they have rules and stuff like that for their evaluation stages. You risk whatever you pay. So if I paid $102 for a 50K take profit trader account, right? That the risk for that is literally just the $100. That's it, right? So I still have skin in the game. However, it's not like, because for example, I can risk $100 on one trade on my personal account versus I'm risking that on a funded account. So the risk is different, but there's two different like options. There's no right or wrong answer. Either way, it's still gonna lead all back to a personal account eventually, right? Whichever option you choose, fund it with money you're comfortable with losing, right? So again, enough to feel pressure. So like, read this slowly, please. Enough to feel pressure. Not so much that outcomes feel mandatory, like you need to make money, you need this to happen, right? But also prevents emotional decision making. You should not be making emotional decisions when you're trading, period. You should be in a position where you feel the pressure, you stay there, you still keep trading the strategy and stuff like that, but you don't have an emotional pull to do something else, outside of your strategy and stuff like that, just for the sake of trying to make some money, right? If you need the money, you won't trade it correctly, most likely, right? So again, your core goal is small, controlled growth. Small, controlled growth. You are building consistency, not trying to flip accounts. I know you see on YouTube and all these people, they're like, oh, I flipped this account and I did. Your goal, if you're new, your goal is to develop consistency, not trying to just flip accounts and stuff like that. Again, your goal is to consistently trade your strategy, right? The way you do this with position sizing and consistency over size, right? So again, Position size is the contracts that you trade, like the contracts traded and the margin used. So how many contracts am I using to enter a trade? How much of my account am I using to get those contracts? So if I have $2,000 in my account, right? If I'm trading M&Q, the margin per contract is $100. So, okay, how many contracts am I trading? Oh, I'm trading 2 contracts, right? How much of my account am I using? I'm only using 10% of my account, right? If I'm getting 2 M&Q contracts. So that's position sizing. So your goal should be to avoid over leveraging. I should not be trying to, if I have 2,000 on my account, I'm not trying to get 2 NQ. It's $1,000 per contract. I'm getting 2 contracts. What am I doing? What are we doing? Right? So size example comes later in the DCP lesson. Where the DCP is Drawdown Control Protocol. It's a lesson that I basically created, basically like talking about risk management and stuff like that. But again, if you just focus on the contracts that you trade, how many contracts are you using? And then how much of your account you're using to get those contracts, that's how you control your position sizing. Now, consistency over size is important. Size low enough so that you can focus on what's important. Like how much of your account are you using? And then from there, can you allow yourself to focus on the strategy, the signals, the time frames, your rules, just focusing on that instead of focusing on how much you can make, right? When you focus on that, like that, the only thing that will change is the number of contracts. When you focus on the strategy, the only thing you got to do is just increase the contracts from 2 to 4, 4 to 6, and 6 to 8, like, and that's all you have to do, right? But again, that comes with actually building confidence first, right? So confidence is not, I got one big win and now all of a sudden I'm just the best at trading and stuff like that, right? Consistency is trust built over repetition, right? So consistency, it like is familiar outcomes and stuff like that, and then repeated execution, right? So I actually looked at the definition of confidence, right? And I want to break it down for you. The word confidence literally translates to complete trust based on a Latin etymology. So the breakdown is this: con, right? The prefix is derived from the Latin word com, which is acting as an intensive prefix meaning completely or with, right? And then the fidens, right? The root word comes from the Latin word fidere, meaning to trust, right? So the full origin, it stems from the Latin like confidentia, which describes the state of being of firmly trusting or bold, right? So again, literally trust means, like confidence literally means complete trust. So if it's like, oh, I'm confident in the strategy, I have complete trust in the strategy. I'm confident in for example, I'm confident in my best friend, right? I'm confident in my best friend. I completely trust my best friend. I'm confident in my friend's basketball shot, right? That means I completely trust him, right? Or I completely trust her, right? That's what that means. So you need that. You trusted your strategy on paper. Now you're proving it again, right? With real money at small size. So that you could say, hey, I've done this before. I can execute this under pressure. I know what this feels like, right? The evidence is what allows you to scale up your account and stuff like that later on, right? So again, getting your first win looks like either a prop firm payout or is doubling your account. Obviously, if you make money in your account and you don't necessarily double it yet, still a win, but like I say, that first win is doubling it, because at that point you can withdraw everything that you invested into the account and keep everything else in there. I'm not saying you have to, but I'm just saying that's the psychology behind it, right? At this point, you've already done something important. You started small, you focused on the inputs, not the outputs, and you executed the right trades, right? Instead of chasing results. So over time, one of two things likely happen. You passed your combine and now you're on a funded account, or you're trading a personal account and have built a small profit cushion, right? So in either case, that's like, those are the two options you pretty much have, right? So for example, if you started with $5,000, you built a cushion of, $2,000 to $2,500 cushion or something like that. You're at 40 to 50%. This means you cleared the first hurdle. You've made a decent amount on your account to now where you have a profit cushion that will allow you to increase your risk and different things like that as you start to become more confident and build your account further, right? So now comes the next stage, right? So again, like I said, if you're trading a personal account or trading a funded account, the first goal is to double or triple your personal account or get your first payout. So why this first payout matters so much? If and watch this, if you've never received a payout before, getting one changes everything psychologically. And I tell my students this all the time when you're getting started. Get a payout even if it's small, right? Just get it sent to your bank account. Go pull the money out of the bank account, like get the money out, put it in your hands and like, yo, I just made this from pressing buttons and trading, right? You got to see that money hit your account and like for it to be actually a real win. Now I'm not telling them to actually, you don't have to actually withdraw the money and put it in their hands. But if you need to do that, then so be it. Like you need to prove to yourself and show yourself like, yo, this is real. You got to make this real for yourself in order for you to really take this seriously, right? Because until you do this, you don't really take it that seriously, right? So again, doubling and tripling your account, getting your first payout. But here's the gap that most traders get stuck in, unfortunately, right? You've passed your account or you built a profit cushion, but you haven't yet gotten a payout or you haven't doubled your account, right? So here's the common problems at this stage, right? Problem number one is you're passing accounts but never get paid. So some traders, they can pass combines repeatedly, but they can't watch this, they can't hold trades, they can't reach payout thresholds, and they always give the money back once they built the accounts up, right? I've had literally, I don't know what the statistic is, but I've had like probably, if I were to put a word on it, and this is maybe like, I think 50% of the people that have, like probably 40 to 50% of the people that have came like into my mentorship, for example, if they were trying to specifically pass prop firms, like let's say we got on a call or something like that, and I'm like, all right, like where are you at with trading and stuff like that? Most of the time, if they're trying to pass accounts specifically or they're trying to go the prop firm route, one of the things they'll say is they'll get super close, but then they won't like get the payout, or they'll be right there, but then they just do something stupid or just over leverage and stuff like that, and then they sabotage themselves once they get to that point, right? So if that's you, like this is perfect because literally I've encountered this so many times, and I'm like, this is crazy. So I wanted to study this and say like, okay, what are all the problems? And one of them is like, passing the accounts but never getting paid. Like you can just consistently knock out evaluation stages, but for some reason you just can't just seem to pass the account. Problem number two is fumbling the bag near the finish line. So you get close to a payout, but you only need like a few $100 more, 1 or 2 clean trades, and then you over leverage, you stop following your rules, you abandon the strategy, and the result, you blow the account or you fall deep into a deficit, and then you basically just have the account just sitting there, you ain't doing anything with it, right? So if that sounds familiar, you can drop an amen. You know what I'm saying? Like problem number 3 is forcing big trades on a personal account. So if you're on personal accounts, this shows up as, let me just make a quick $500 real quick. Let's say you have $1,000 or $800 in your account or something like that. Something like a smaller amount. Let me just make $500 real quick. Let me just go for this one big trade and try to just knock this out and get this out the way, right? Instead of continuing to compound your account slowly, this usually eats away at your profit cushion instead of growing it. So let's say you turned $1,000 to $500, like, all right, and you did that over the course of like 5 days or something like that, right? And then it's like, all right, I need $500 more until I double my account. Let me try to just double the account right now, all in one trade, just to just get it over that hump, right? So you're trying to skip ahead and just do a big trade and force the process and rush it. So these are like some of the 3 problems that I've seen a lot and that are common problems at this stage. So what's really causing this problem is you're comparing yourself to other traders, for one. So you see the big screenshots, right? And this is on Twitter, Instagram, YouTube, whatever. You see the big screenshots, you see the huge wins, you feel like traders never lose. You start using this as motivation to size up, break rules, and get creative, right? Social media becomes the trigger for bad decision making, right? Or you fall into this category of anticipation, anxiety, and euphoria, right? So this is like when you get close to a payout or a milestone, your emotions spike. So you might feel like antsy, anxious, euphoric as in like it's almost like a negative form of optimism. You just get super I don't know the word for it, but just not greedy, but basically just greedy, like in like a state of just perpetual greed. I don't know like a way to define it, but you're just overly emotional, right? You feel pressured to just get it over with, right? This pressure leads to you sizing up and stuff like that, taking unnecessary risks, and then trying to force the outcome. Keyword, force the outcome, instead of just letting the outcome come to you, right? So these are some of the things that most likely happen at that stage. Like this is like what's really causing the problem. So what's the solution to that? There's 2. The counterintuitive solution is to size down. You might not want to hear that. But again, this sounds backwards because this makes it slower, quote unquote, to reach the profitability goals, but it works. When you're close to your goal, you should maintain the size or size down. So if you, let's say for example, you're about to pass an account, right? And let's say you're trading a prop firm and the profit target is $3,000 and you're at $2,500. You should not be trying to size higher just so you can pass it quickly and get it out the way. You're $500 away. If you don't keep the same size that you had before or size down, because watch this, when you size down, you now have to take way more trades to get rid of that buffer that you've now created or that cushion that you've now created, right? And also watch this, when you size down, you're less emotionally attached to the trade. You can just think clearly. When you're trying, because watch this, when you size up, the only thought in your mind is to get this over with. When you size down, you're thinking to yourself, oh, this doesn't really matter. And you almost just, you kind of disconnect from it. And the only thing you're connected to, watch this, is the strategy, is doing what you're supposed to do. So the counterintuitive thing is to size down, right? So maintain the same size or size down. Here's an example. You built the $1,000 account to $1,800 or $1,900 using 2 contracts. You're right there near the $2,000 milestone. If you have a history of getting emotional here, drop from 2 contracts to 1 and keep trading the same strategy. Because either way, you're still gonna make it. If you built it from $1,000 to $1,800 or $1,900 with 2 contracts, then you can make freaking $100 with 1 contract just to get it to that milestone, right? Keep trading the same strategy, but drop the size if you need to. Here's why this works. You don't need a big win. You're already close. You're already right there. You just need the consistency to just push yourself over that last hurdle, over that last edge, just to make it, right? So that's it. So the first thing is counterintuitive, but it's sizing down. And then the second thing is keep doing the thing that got you here. I see so many people do this. This is so bad. Because in the trading space, what happens is you'll try something, it'll work, and then as soon as it stops working, we switch strategies, or we switch approaches, or we try a different model, or we try a different system. It's like, stop switching. The system is not the problem. If it got you there, why all of a sudden it's like, oh, I can't use a strategy anymore and stuff like that, blah, blah. Like, what are we talking about? Literally, if it got you there, then you need to evaluate yourself first. Because if that was the thing that was working for you, what's changed? You need to keep doing the same thing that got you here. Don't change so again, like I said in the thing, don't change your strategy. There's nothing to reinvent. Don't reinvent anything. Don't get creative. If your strategy got you 90% this far, it can get you another 10%. Even if it don't quote unquote work anymore, which again, if your strategy, watch this, I'll say this, and this might hurt somebody's feelings. If your strategy up until this point, and if it's not the strat, if your strategy is not up until this point has worked all the time, but now it just completely doesn't in whatever market conditions this is right now, right? Then first off, for one, your strategy doesn't adapt, or you need to have another strategy like that, like is good for that market. But you should be trading something anyway that should be versatile no matter the market conditions. You should just trade that system no matter what happens. Like either way, I don't care if it's sun outside or not, or it's dark. I don't care if it's morning or night. I'm breathing, right? You might be thinking, well, what the heck are you talking about? My behavior doesn't necessarily change depending on the condition, right? Either way, if the system works, the system works. I just keep showing up. Most of the time, people are switching strategies, not because the strategy is the problem, but because they hit an emotional hurdle. They haven't gotten over it. And they don't want to blame themselves or look inward. So they look outward at everything else around them. The first thing that's in front of them is the strategy. They switch the strategy. Ask me how I know. I've learned so many different strategies up until this point, and the best one from me that I've seen that's based on the truth, that's based on what's actually working and stuff like that, and it's also like really, really simple, in my opinion, is the strat. I traded moving averages, ICT, SMC, market structure, order blocks, supply and demand, using the 8 and 20 EMAs, the 9 and 21 SMAs, moving average crossover, the golden cross. I've used the market, like the chart patterns, like the head and shoulders, inverted head and shoulders, cup and handle, candlestick patterns and different things like that, and just trying to combine that with the MACD and the RSI. And so if you've used all these, you know what I'm talking about. Bro, at that point when I was in the beginning stage, I was switching strategies because I didn't want to address this. But once I addressed this, that's when I finally started to move forward as a trader. And I think the same thing will work for you. Stop trying to hop from strategy to strategy, right? Keep doing the thing that got you here. So these two things right here, size down and then keep doing the thing that got you here. This does two things. Your risk and emotions are directly linked together, right? So again, the more risk that you have, the more emotion that you have. The less risk that you have, the less emotion that you have. So again, when your emotions rise, the solution is simple. Reduce your exposure. Sizing down, literally, watch this. Sizing down, write this down. Sizing down literally reduces emotional pressure. This makes it easier to follow rules, execute cleanly, and then finish what you started. So again, just size down to like literally reduce the emotional pressure that trading already puts on you so that you can be able to cross that first threshold, that first finish line, right? So size down enough so that you can actually keep doing the thing that got you here. Write that down. Size down enough so that you can keep doing the thing that got you here in the first place, right? When you do this properly, what happens? You get your first win and then you take that next step. Right, so the first win for a personal account, when you double your account, example, turn $1,000 into $2,000. Option that I recommend: pay yourself $1,000 because now your capital is back. The money you're trading came from the market. Psychologically, this makes compounding it easier because technically speaking, it's not your money. Technically, it's like the market's money and you're just compounding it and growing it over time. You can keep all the money in your account if you want, but many traders benefit from taking that first win and then just compounding the rest of it. That's just what I've seen from being a mentor and stuff like that. That's what I've seen, right? Now, funded account, when you get a prop firm payout, pay yourself, reinvest a portion into, more combines and opportunities to obviously get more payouts and stuff like that in the future, and then just keep building, right? But again, your goal is to get that first win and take that next step. This positions you now to scale beyond this and then take that exponential leap into your trading journey. So again, like with this stage of going live to getting your first win and getting that first like payout or something like that, or growing your first account, again, the goal isn't making money. The goal is following the strategy and then just doing what you need to do. It's like sizing down in order to keep doing what got you there in the first place. Your goal is in this stage is honestly just doing enough repetition, and this takes different times for different people. Like one of my students, and I interviewed him on my page and stuff like that, Josh, he started his account with $1,000. In the 8 days into the mentorship, he had made $1,500 in one trade, right? One trade. And he was risking, I think, $200 on that trade to do it, right? That's based on where he was and stuff like that, and that stuff is different. But again, he also was putting in the work practicing. Like as soon as he learned the thing, he was immediately back testing. He was immediately practicing during the weekend. Market came back around, boom, he was ready, right? So again, that same thing, I know that same thing is true for you. That timeline might be different. It might not be 8 days. It might be sooner. It might be later, right? But I know for a fact, inevitably, you build that confidence with repetition. You get enough trades in, you do these right. Once you scaled up, again, don't start sizing up and getting emotional and stuff like that. Size down. Keep doing the thing that got you there. You'll get your first win. And then once you get your first win, that's when I'll be ready to go into this next part that I'm about to talk about, because that's where the fun part starts coming in. Because doubling your account, making it like, doubling your account, getting the first payout, that's cool. But this next stage, right, that's the thing that's actually gonna take the cake. So I can't wait to talk about that in this next part, because you went from you don't know nothing about futures to now you've gotten your first win from futures. Now I'm going to show you how to compound that and build that into something that's really meaningful and that you'll really like. So I can't wait to get into that section. Let's get it. All right, we about to talk about the good stuff. How to hit your first $100,000 trading futures. This is the next section we're going to go through. We already completed this top section of like what hitting your first 10K and stuff like that looks like. You just did everything here. Getting your first win and just building that up, just doing literally everything we talk about here. You could definitely hit your first 10K with futures. Now, when it comes to hitting that 100K, I got a couple things for that. So the first thing we're going to talk about is how to scale the funded accounts up. So again, I'll preference this as well, right? So you've either received your first payout or you've doubled your personal account if you're at this stage, right? So the question now changes from can I trade to how do I turn this momentum into real leverage without blowing it all up, right? So this lesson answers that, right? I'm going to talk about how to scale with funded accounts. So there's two options. There's the personal account path and stuff like that. There's the personal account path, right? If you don't plan on using prop firms, you can move directly into the personal account compounding later in like the custom growth planning part. I'll have that in the timestamp and stuff like that, so you can just go to that. But if you're number 2 and you have a funded account and you want to take this path with prop firms, if your goal is to leverage, funded capital and stuff like that and reinvest your first payout, that's very critical. Then everything that I taught you in the past section and stuff like that, tying that into this section will be really powerful. Everything that follows applies specifically to the funded account path. So reinvesting your first payout. So this is called horizontal scaling, right? So that means using the same strategy, same execution, like literally just same rules. You're just using more accounts. So not more risk per trade, literally just more accounts. So you're not trying to trade bigger, right? You're trying to trade the same thing across more capital. And I'll explain what I mean by that in a second. But we're gonna reinvest our first payout to be able to do that. Now, here's an example of what that looks like. If you pay, let's just say $70 to $80 for a funded account, you traded it correctly, and let's just say you earned a $2,000 payout. So instead of treating that payout as spending money, use like, let's say $320 to $400 of that to fund 4 additional accounts, right? So now you can have 5 funded accounts in total once you pass those, evaluation stages and stuff like that for them, right? So I recommend doing that so you can get more additional accounts. So using multiple funded accounts, this is called group trading, right? So you can place one trade and then it's automatically copied and linked to another account. So this is called either group trading or copy trading, depending on like, what you're using and stuff like that and what that looks like. But prop firms that I've used and recommend for group trading are My Funded Futures, Alpha Futures, and Lucid Trading. There are a few other prop firms that I would recommend, but I've gotten a payout with another prop firm that's not on this list, but they've been having some, how do I say, they've been not necessarily, there's not an issue of payouts, they pay out. But in terms of the platform that they have integrated into it, they don't allow you to trade, Tradovate and other brokers and stuff like that. You have to use their platform. So I'm not going to throw anybody under the bus, but if you know, you know. But basically, I don't use them and stuff like that anymore. A few of my students literally still use them, still get payouts with them. But I don't particularly like them. Actually, matter of fact, I'm not even going to gatekeep and stuff like that and make it seem like anything is not, because they can eventually change and stuff like that. They were literally the OG in the prop firm space. It's called Top Step. Like, I've gotten a payout. First payout actually was with Top Step and stuff like that. But they had, just some issues and stuff like that. They cut out, you couldn't use Tradovate and stuff like that anymore. You had to use the Trader X platform X or something like that platform. So that was the only thing. But My Funded Futures, Alpha Futures, and Lucid Trading, currently right now, based on the state of futures trading and stuff like that, and with the prop firms, these are the ones that I like the best. So My Funded Futures, you can have up to 5 accounts. Alpha Futures, you can have up to 3, but there's a high payout potential, so you can withdraw up to $15,000 per account, which is pretty high and stuff like that if you have 3 accounts. And in Lucid Trading, you have up to 5 accounts. So how this works math-wise. So let's just say we're using Lucid Trading, right? So how this works math-wise is this. If I have one 50K flex account, right? That's the account type, right? My max payout for Lucid Trading, if you're on the flex account, is $2,000 as of right now. It might be higher or lower in the future, I don't know, but currently it's $2,000, right? If I get 5, 50K flex accounts, my max payout now goes from $2,000 on one account to $2,000 across 5 accounts, which now is obviously, 2,000 times 5 is now $10,000. So I can now get a bigger payout, but I'm group trading or copy trading multiple accounts at one time. So more accounts doesn't necessarily mean more risk if it's done correctly. This is where traders, misunderstand leverage. So in group trading or copy trading, you're still trading one account, right? The trade is simply just duplicated. So you're not necessarily making separate decisions and stuff like that. And when you look at it that way, it makes it kind of better and stuff like that for how you trade it. But the gains are just amplified, but so are your losses, right? So that's why execution discipline matters more here than anywhere else. The goal is not to trade bigger. Again, the goal is not to trade bigger. The goal is to trade the same across more capital. Right, so I have a trick that will help you with, kind of navigating that a little bit easier. So More accounts don't equal more risk. So this is what this looks like. If it costs, let's say $100 for a 50K flex account, right? Your max payout is $2,000. Let's just say you get it, right? You get the payout, boom, $2,000. Now, just get one, instead of getting 4 more flex accounts and stuff like that to start out, just get one more. Get one more, like pay $100 more to get like literally plus one more. So get another 50K flex account. So now you can copy trade 2 accounts. Now, don't even try to get, and this is so funny because most people, they try to like, okay, bet. Now that I got 2, let me try to go for a bigger thing. You know, you can still go smaller and make your job easier, right? So watch this. If the work that you do to make $2,000, right, is more work than if you were trying to get 1,000. So if I group trade 2 accounts, right, I can literally just build those accounts back up, and I only got to make $1,000 across both of the accounts to make the same thing I would have made trading 1 account. So on 1 account, if I had to make $2,000, if I had, for example, 5, I only got to make 400. 400 is 5 times easier to make than 2,000. So, and all I got to do is do that, and I'm just group trading that or copy trading that across 5 accounts. So you can, technically speaking, just do less work in the beginning just to give yourself that win, literally duplicate the win with less effort and less work, right? And then once you take that payout again, so you got $2,000, let's say you spend $100 again, boom. Now you spent $200, but you've gotten at this point $4,000 in payout. So now you're $3,800 in profit in the green. If you just got the account, went straight for the max payout and stuff like that, and then you went for a smaller payout across all 2. Right? So now that you've made a pretty decent amount, now I bet let me get like 3 more, right? And take it like I'll get 3 more now, and then I'll copy trade the 5 accounts, and now I'll go for, you know, the $2,000 and stuff like that. The reason being is because I've already, if each account costs $100, right? I've now made $3,000, roughly $4,000 in payouts already just from the accounts that I've already done. So I've already did the muscle, right? Because again, this is all psychological, and I keep bringing this up, but this is really important for trading, right? Trading, all we're doing is pressing buttons. We're not lifting anything. We're not doing physical labor. So it shouldn't be, it's not physically demanding. However, it is demanding in another way. That way it's demanding is up here and in here, right? Our heart and our mind. So our emotions is what makes it difficult. You need to unlock something. And I'll actually put this like this. For everybody that has traded before, my experienced traders, if you traded like, for example, prop firms, for example, in the beginning, let's just say, if you couldn't pass a prop firm before, you couldn't get a payout, you couldn't pass a prop firm to save your life. As soon as you pass that account, did it become easier now to pass those accounts? Now you can't get a payout, but you're passing them accounts like this. And it's like now the hard part is getting the payout. But the thing that used to be, watch this, the thing that used to be difficult is now easy now that you're at a new level. So watch this, level 2 was harder at level 1, but now level 2 is easy now that you're trying to go for level 3. So all these levels are separated by evidence for yourself mentally that you can do it. So if I can if I can trade 1 account and get the payout, that unlocks something in my mind. If I can trade just at least 1 account, and I can copy trade multiple accounts, even if it's just 2, and I can get a payout with both of those things, copy trading it, guess what's unlocked in my mind? I can copy trade accounts and get a payout. That now is like downloaded into, so now you feel that, you resonate with that, you understand that, and then you start trading that way. Now, when you get 3 more accounts, it's not like you're doing a new obstacle because you've already done this before. You've already copy trading accounts and gotten a payout. So now you're just copy trading with a few more accounts to get another payout again. But that evidence was already stacked slowly. You traded 1 account, then you copy traded 2, and now you're copy trading 3 more, right? And now you have a total of 5, and now you're getting the max payout. So that's a way that you can do it. So you don't have to do it like super fast and stuff like that. You don't have to do all that. Take it slow if you need to, just to prove to yourself that you can do it. Because again, once you get to a point where you have multiple accounts and stuff like that, right? Then you can start doing what I recommend you do next is how to group trade multiple accounts using softwares. So if you're using Tradovate, you can group trade for free and stuff like that, or it's, it's built in. You can just go to your settings, go to add-on, and then go to the group trading section. I showed that in the beginning for the Tradovate tutorial. Just go back to that. I have it in there. But when accounts are, on the same firm, you can do that. Now, if you want to group trade multiple different accounts, you can use something like Tradecopia or TradeSyncer. I've seen a lot of people use TradeSyncer. I've only been using like Tradovate and stuff like that because I usually just group trade all my accounts and stuff like that specifically for that prop firm. So I'll group trade for example, the My Fund Futures accounts like at once, then I'll group trade the Lucid, then I'll group trade, for example, not the Alpha, but I'll do it with TPT, for example, right? Take Profit Trader. But that's what I do it for group trading on Tradovate, and I'll just log into those accounts and I'll do it separately. I haven't really gotten to the point where I'm using Tradecopia or TradeSyncer, but again, I've seen TradeSyncer, for example, this is best for multiple platforms. So if I wanted to group trade my Lucid accounts, the My Fund Futures account, and my Take Profit Trader account, for example, I can group trade all of them together at once using this, right? And it is paid. I'm letting y'all know it is paid, but that allows you to increase your leverage even further, right? If you wanted to trade all of them. So how I would go about it, if you're trading the same firm, just use the Tradovate group trade feature. It's free. If you're using multiple firms, then you can use the TradeSyncer to trade multiple firms at one time. But once you do this, if you're trading, for example, all of them at the same time, after a certain amount of payouts, you can just make the freaking six figure, the $100,000 just off of that. Just group trading just those, right? But I'm just showing you that as an example of what that looks like and stuff like that. Again, the goal is just to build slowly and prove to yourself that you can do it. And then once you get to that point, you have already gotten those payouts and stuff like that. And now it's just compounding effect of just stacking those up one payout at a time. So again, this section specifically was talking about group trading, the funded accounts and stuff like that if you're doing the prop firms. And now we're going to transition into the next part once you've fully gotten this part down. Now we're going to talk about compounding your personal capital, right? So we're going to get into that right now with personal accounts. So I already just talked about, the funded accounts and stuff like that and group trading those together. Now we're going to talk about compounding your personal account and scaling that up. So this is what the transition looks like from funded capital to personal capital. If you were previously doing the prop firm capital and you're trying to take that into a personal account, here's how capital is used in practice, right? So there's the funded accounts and then the personal accounts. So funded accounts, they're used for payouts and income, right? Withdrawals, withdrawals are expected and stuff like that. You reinvest it to increase, your leverage, how much you can actually make, and then you operate within the rules and the limits. So again, I recommend that you use prop firms to pay yourself an income and put some money in your pocket for spending and to give yourself a financial and mental cushion. So, these are some of the prop firms you can pretty much use. But yeah, I recommend using the prop firms to pay yourself an income if you're using the funded accounts. Now for a personal account though, used only for compounding, right? I know this is like contrary to this is contrary to popular belief, but again, I recommend you only use your personal account for compounding. So no regular withdrawals initially, and then left uninterrupted to grow over time. I want y'all to get in the habit of focusing on uninterrupted growth when it comes to trading your personal capital, right? When you're trading your personal account, your focus should be building it up, right? So if your account, for example, is not yet at, let's say, for example, a 5-figure amount, in my opinion, unless you need it, right? You shouldn't be withdrawing anything from it because you're taking away the power to compound it and make more with it, which I'll show you in a second what that compounding effect looks like when you have a certain amount of capital in your personal trading account. And I witnessed it firsthand. The smaller you have, the harder it is to actually scale and compound. The more you do have, the easier it is to actually do that. So again, I believe that's what your personal account is for, right? Use this to uninterrupted, basically create uninterrupted compound growth for your money and exponentially grow it over time so that you can reach 6 and 7 figures inside your account if you haven't already trading futures. So again, this is the purposes of the funded accounts and the personal accounts. So what this looks like is you continue to trade, funded accounts for payouts and stuff like that. And from those payouts, you set aside a portion to fund your personal account. So when to fund your personal account? Fund it only when the money is not needed for bills and you can leave it untouched, right? And also when you're willing to let it compound. So the simple rule is this: only fund a personal account with money you can leave alone for at least 3 months. That's the mindset I recommend you at least have. So if you don't need that money, right, for at least 3 months or something like that, and you can kind of just set it aside, almost treat it like you're saving the money, right? Then put it, then wait, just wait until you can do that. Once you're able to do that, cool. Because again, behavior matters more than the size that you're actually using to trade, right? So the capital structure is this. Funded accounts generate income. A personal account compounds that capital. They run in parallel to each other. So if you want to just use the personal account, you can compound it and just pay yourself some income and stuff like that. My guy Josh did that. But I was also telling him, once he paid himself a certain amount, I was like, bro, use your personal account and just compound that thing. He was withdrawing, I think, $4,000 to $6,000 or something like that, like from like his personal account and stuff. And I'm like, bro, just compound it. Like, let that thing build. You know what I'm saying? But again, like the funded accounts, I recommend use those to generate income. Personal account, compound it. Use them in parallel with each other if you can. If you just want to use the personal account, fine. But I don't recommend just using the funded accounts. Like, you need to have your own personal account, period. Action steps. There's 5 of these. Number 1, continue trading personal accounts for payouts, right? Number 2, take a portion of that, right, of payouts, even like a small amount, fund a personal account with it. And then this is the key. Commit to not touching it for at least 3 months to a year. When I say not touching it, I mean not withdrawing like a decent amount from that like account and stuff like that for 3 months to a year. Focus only on compounding that account. So you might be thinking this, I know this might be contrary to a lot of the gurus that you might be hearing and stuff where they say like, all right, bet, here's how to make $10,000 a month from trading. And I might even do titles and stuff like that too, because you can make $10,000 a month from trading. But most of the time those videos are going to be centered around the funded accounts. When you're your personal account, there's no rules. It's yours. You can literally you can compound that thing uninterrupted, trading your strategy and let that thing just go crazy. Like literally, if your goal is, and again, this is only if you're trying to hit that 6-figure mark. If you're trying to hit that 6-figure mark, then like I highly like, I can't give it financial advice. This is what ceoashon would do. This is what ceoashon would do. You know what I'm saying? So again, these are what those action steps pretty much look like. So now that we've covered that, I'll break down exactly how to compound your personal capital and why this approach changes everything. So the first thing we need to do is create a growth plan. So how we build a plan, I recommend using, ChatGPT or another AI software or something like that to do what I'm about to show you next. Here's the data that you do need though. So remember when I told you guys to practice and stuff like that, you should be documenting, right? If you were doing what I told you to do, right? You should have your win rate. Win rate meaning how many wins over, like if you took 10 trades, right? And I won 5, I have a 50% win rate. If I take 2 trades and I win 1, I have a 50% win rate as an example. So out of all the trades you've taken from practicing, from trading your actual account and stuff like that, what is your win rate? I want you to write that down, right? So let's just say your win rate, for example, let's just say it's 50%, right? Cool, 50%. And then, what's your current account size? You'll put your current account size. You'll put like, okay, bet, how much are you risking? If your account is 10,000, how much are you risking per trade? And then what's your position sizing? Like you need to just write this stuff down and just go through these things to figure out what this data looks like. And I'll show you why this is important later, right? Your actual execution behavior, this is what you need to be identifying. This isn't like needed per se, but this is why journaling is so important. When the data is honest, the plan becomes realistic for you, right? So the goal is not necessarily for, how do I say this? The goal is not necessarily for like you to necessarily like, oh, I need these things or else this won't work, right? This needs to be as customized to you as possible because again, this goes back to the confidence thing, right? If your win rate, for example, right? If your win rate is 50%, if your current risk per trade is a certain amount, if your current position sizing is a certain amount, if your current account size is a certain amount, then guess what? This plan is customized to you, not anybody else, not another trader, not me, not nobody else. This is customized to you. So that means that this plan is the surefire, like laid out way that it works for you. Like, because if I say, for example, it's kind of like if you're, let's say, for example, you wear a size large, right? A small ain't gonna fit you. An extra, extra large ain't gonna fit you. A large will. So when you have the right measurements of your arms and like the width of your sides and your shoulders and stuff like that, then the shirt can be tailored to you. The strategy, the compounding can be tailored to you. So if you can find this, see what your win rate is. If you take 10 trades and you win, for example, 5, you have a 50% win rate, right? So identify what your win rate is, what your risk per trade is, what your position size, account size, like identify all these things are, and then document those things. So again, going back to what I said, this isn't needed, but it will help it become more realistic for you when you're trading, right? Now, here's the few steps. You can copy, it doesn't matter what AI you're using, right? I'll show you what this looks like. Copy trade, my bad, I said copy trade. Copy the ChatGPT prompt provided above. I put it right here. Paste it into the ChatGPT and press enter. Answer the questions it asks. So it's gonna ask you questions about the win rate, risk per trade, account size, etc. And then ChatGPT will output a time-based compounding roadmap. I already created a roadmap, which I'll show you in a second, of what it looks like to compound starting from $2,000 and what you can do with that. And then I'll show you what that looks like. So I'll walk through a live example of this process, and I'll show you the compounding plans I've already built for myself, and also, my mentorship students as well. And I'll show you how I've used the same process for students, inside of it for themselves specifically, right? This gives you the clearer examples and stuff like that on how to apply this framework in your real life. So let's get into it. So we're gonna go over here. If you don't have this document, by the way, I'm gonna put the description, I'll put it in the description. You'll just click that, and then it'll take you to this whole board, and then you'll just zoom in on this specific section for compounding your personal account. You'll go like right here, and then you'll click this little icon. I literally said click here. Look at me, I'm just crazy. Click here, and then literally all you gotta do, hit Command A or something like that to copy and paste this whole thing. And then you'll go over to ChatGPT or whatever AI software you wanna use, and then literally just copy and paste that in here, right? Copy and paste it, press enter. And then from there, it's gonna give you a response. It's thinking right now. Okay, it says understood. I can do exactly that in this format. Paste them in like this. What is your starting account balance? What's your target account balance? Your average weekly, win rate and stuff like that. And let's go through these real quick. So, for example, and I'll also make sure to put in this information as well. You don't need to fill out all this specifically for the ones that you trade. So if for example, you only trade, let's walk through this real quick, actually. I don't even know why I'm explaining it. I'll just show you what it looks like. So let's say, as an example, starting account balance, let's just say the starting account balance is, let's just say $5,000 as an example, right? The target account balance, let's say I wanna grow the account balance to, let's say $100,000, right? So we try and get to that 6-figure mark, boom. The average weekly win rate, let's just say my weekly win rate is something, let's call it even. Let's just say it's like 50%, right? So my average weekly win rate is 50%, boom. Now the average number of trades that I take per week. So let's just say, remember I tell y'all to take max 2 trades per day. So let's just call it, let's just say 10 trades per week. Let's say average number of trades per week. And I'll say it's 5 to 10 trades per week. As an example, let's just say in this example, right? Now, account utilization or exposure. So like what percent of my account and I'm trying to use. So let's say I only want to use account utilization. I only want to use 10% of my account. So if I have $5,000, I only want to use 10% of my account, which is equal to like $500 if I'm just like, as an example, right? That's the max I want to risk per day. I'll say 10% per day, and then I'll say 5 to 10% per trade if I'm taking, 1 to 2 trades, per day. And then, my risk per trade, I'll already put that. See, I'm over here skipping ahead. Look at me. I'll copy and paste that right here. Boom, just risk per trade. Boom. And then what is it? Trading days available. Let's just say I got time. Let's say I'm trading 5 days a week. So let's just say I can work, let's say, because I'm factoring in some people might work and stuff like that. So let's just say there's 1 day of the week you can't trade. So let's just say you can customize it like this. Let's just say Wednesday you don't work. So let's just say trading days available. You can literally just tell it like, hey, I trade 4 days a week, but work Wednesday. So only 4 days per week. And just put it like, just as an example, like literally you can get this specific with AI. It's so freaking cool. And then from there, the market's traded, you'll just say whatever you trade. So let's just say I'm only trading ES, right? Which is the S&P 500. So I'll say markets traded. I'll just say ES and that's it. I'm just gonna keep it at ES, or like I'll put MES/ES. And then the margin per contract for both of them is $50 for MES and then $500 for ES. And then I'll also put like the profit per point. I'll say the value per point for both of them, like how much do I make or lose per point. So it's $5 for MES and then $50 for ES, just to let it know. And then that's pretty much it. So that's pretty much it. Primary market used for the model. Do you want sizing based on the market only or rotate across markets? That's pretty much, you don't really got to worry about that. Just keep this as it is. Press enter. And then from here, this is it. So I'm going to be very direct with you and showing you the model with the rules you gave. This is what it looks like. So it's basically going to give me now a whole like futures compounding projection. Right? So week one, if I started with $5,000, 10% of my accounts used. As an example, I think that's 10 MES. That's $5 per point. Oh, I forgot. Oh, it's probably not gonna calculate this right. And sometimes I'll mess this up. So right here, 10 MES, this should be $50 per point. So if I catch, for example, 18 points, that should be, wait a minute, $50 per point. Yeah, that's right. Okay, look at ChatGPT getting this right. Nice. Okay, that's $900. Cool. And then this trade, let's say I lose 6 points. So I'm losing, it's $50 a point, minus 6, I'm losing $300. Wednesday, I take no trade. Thursday, let's say I get my win, I make 14 points with 10 contracts at $700. Friday, I lost 8 points with 10 contracts and I'm losing $400. My weekly net is $900. So I end the week with, $5,900. Now, as you can see, going into week two, it's gonna show like watch how this compounds, right? So 10% of my account, if 590, it means I can use 11 MES. So now for the week, I'm using 11 MES. So I actually give it one more instruction to do, hopefully. I'll say this, show along with for example, 11 MES, $5 per point. Show how much you make per point with the contracts. So for that would be like 11. So if it's 11 MES, that means I'm making equals, I think that's $55. That's $55 a point. Just to make it clearer. Do this for all of them. And when you switch from MES to ES. And I also put that right here. I'll switch to like from trading MES to ES when I get to roughly, I usually say this, I tell them, my students usually around 20 to 30 contracts. If you're trading 20 to 30 contracts of MES or like 20 to 30 contracts of like a micro, you can switch to a mini at that point, technically. So, but let's just keep it at 30, let's just say 30 micros, convert to 3 minis, for example. And I'll say, don't change anything else. Don't change anything else. Just add that in. And then I'll just have it updated and stuff like that. Well, while it's doing that, I'm still gonna show what that looks like. So we're gonna skip back to this. Week 2, 11 MES, I'm making $55 per point. I catch 16 points, I make $880. let's say Tuesday I break even, so I don't make anything. Wednesday I don't take any trades. Thursday I lose 7 points, so I lose $385. And say Friday I make 20 points, so now I make $1,100 on that day. So my weekly net is $1,500. Now I'm at $7,500 roughly. So you might be thinking to yourself, well, okay, Ashon, how the heck am I going to catch 16 points or 20 points on ES or stuff like that? I'm literally going to show you right here on the chart. If I literally, it's crazy. I literally just pull back up to this. If you took this 2-on-2 reversal right here, right? This, before it reversed, because literally it went, because watch this. It went 2 down, 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 then it went 3, so it took out that high. So that moved 33 points from 355 to 440. Now, you might be like, well, I don't trade during that time. Bet. Let's go back to a random time and show an example of what that looks like. And I'm going to go to a time where it says like 5:30 or something like that. So let me go to, boom, let's go right here, 9:25, right here. Boom, I reset the screen. Boom. And I still need, obviously, more time frame and stuff like that, but I'm just trying to visually show you what it would look like. So if I play this forward a little bit, we had a 2-on-2 reversal right there. As an example, if you just took this 2-on-2 reversal right here, stop loss at the bottom and inside candle, and then you exit when price reverses against you. Boom. That's 5 points on ES as an example, right? But obviously with higher time frame continuity and stuff like that, we were still bullish at that point, so you can still keep holding this trade, right? I think if I play this out a little bit further, we kind of play around a little bit, but either way, you catch 5 points. If you caught that reversal up, you could have caught something and stuff like that. There's different days that like different things happen, but these moves take place. So like if I go to, I'm trying to see another example, this day, for example, we had a 2-2 reversal. If you caught this trade right here, your stop loss is at the bottom, or you put at the bottom of the entry candle right there, you targeted that high, that's 21 points. That's 21 points. If you exited on the reversal, that's 26 points. Right? This is crazy. Like that's just like, you can do that on like, if you're trading MBS or ES, you can do that. If you caught this 2-2 reversal down right here at 7 a.m. before the market even opened up, boom. And you caught that before reverse, that's 15 points right there. And that's just off one trade. That's one trade. You can still take another trade later on, so you can stack those points. That's the point that I'm trying to make. So 16 points, 20 points, 14 points, 18 points, like you can hit those if you're trading MES and ES, right? And then you can adjust this if you want to, like say if you're only hitting trades that are 5 points to 10 points, you can adjust this to say that. But again, that's just an example of what this looks like, right? So now if I'm on week 3, I'm at $7,500 in my account. 10% of my account is $749. That equals 14 MES contracts. So I'm making $70 per point now, right? Still, same thing, minus 6 points, 18 points, 14 points as an example. Now I'm starting to make a little bit more per week. So now I'm at $9,300. Week 4, I'm at $9,300, 10% of my account, $931. That's 18 MES contracts. Same thing, 15 points minus 7 plus 20, maybe a break-even day or something like that. Guess what? Now I'm making $1,500, $1,800, close to $2,000 per account, per trade. Now I'm at almost $12,000 in my account. So I started with $5,000. In a month, I slightly more than doubled my account in 1 month, right? So let's go through this a little further. I'm at 11,000, 10% of my account is 1,100. That's 23 MES contracts, $5 a point. That's roughly, it's like $120, $115 a point. Minus 6 points now is $690. Plus 18 points is $2,000. Plus 16 points is $1,840. So if I took this trade right here, right, with that many contracts, 26 points, well, if I caught that trade, 26 points, right, times, what is that, 23 contracts, so that's like 115. 26 times 115 is what, Google? Let me see, 26, oh my bad, 2650 times, was that $115 a contract? Boom, that's $3,000. That's $3,000. And that was only $1,800. That was only $1,800 being conservative. That's only $2,000 being conservative. So now I turned $11,000 into $15,000. Week 6, $15,000, 10% of my account, $1,500, 30 MES now. Watch this. 15 points, 18 points, still the same. Now making $2,000 per trade, $2,000 per trade. I'll lose 1,000 maybe, but I made $3,000 for the week. That's 18,000. Week 7, 18,000, 10% of my account, 37. You get the idea. 20 points minus 6, 15. 18 points, 20 points minus 7. 20 points minus 8, 16 points. Notice how none of these are going over 20 freaking points. None of them are going over 20 points. Minus 7, 18 points, right? 20 points, 18 points, 8 points, 0. 18 points, 7 points, 20 points. Like literally, but watch this. Watch where we're at now. Week 12, we're at $68,000 in our account. 10% of our account is 67. That's 137 MES, meaning that's basically like 13 to 14 ES contracts. So now 18 points makes me 12 grand. Minus 7 points loses me $4,700. So now weekly net, I make $21,000, and then boom, week 13, 10% of my account used, 179, still going for the same thing. I now make way more per trade, and now final result in 13 weeks. In 13 weeks. 13 weeks, approximately 3 months, from $5,000 turns into $116,000. And it's not taking any astronomical trades. That's not even considering that you caught a trade on ES and made like 15, 20 points, and then caught another trade and made 15, 20 points again. That's not even factoring that in, right? That's the power of compounding. But when you watch this, notice how it was slower in the beginning. But then as you have more capital in your account, the more you made. So when you take that away, you take away the power that it takes to actually compound it. So it takes longer for you to compound your account. It takes you longer to build. Because again, you see how much, and this only gets faster. Like this is only an upward slope. It starts to literally, the more you have, the more you, like literally the more you make, right? When it comes to compounding. I'm actually going to show another example of, let me go back to my screen. Just using that prompt, using the information I showed you, I'm gonna show you an account with, if you use $2,000. This is an example. If you had $2,000, this is a one I created, I think for one of my students. The student had like, I think a 40 to 50% win rate. They were getting like maybe 2 wins, 2 losses a week, and then one trade where they would either take no trades or they might break even pretty much for the week. They would trade Monday through Friday. They mainly traded M&Q, risking 10% per trade roughly. And then their losses were kind of bigger because they were using like the 5 and the 15 minute for entries. So their stop loss was like 25 points to 50 points trading M&Q, my bad. And then these are the rules. I put that into the thing, same prompt that I gave you guys here. This is what it looks like. Week 1, $2,000 on M&Q, 50 points, minus 25 points, 100 points, minus 50 points. If that seems far-fetched, let me get out of replay mode real quick, leave. Let me switch this over to M&Q as an example. And then look at that, that's crazy. Right now, the market just opened up. We dropped here, we dropped 284 points. We dropped 284 points at the open of the market. This is Sunday. It's Sunday at 6 p.m. EST. The market dropped 284 points. Anyway, let's go look for an example. Let me show you real quick. So let me use an example where the market's actually open and stuff like that. So go to 8:30. Okay, we have some examples. I'm gonna use one like this, like, okay, so 12:15, something like this, right? This is a perfect example. This was in the morning time, this was 10:15. If you took this reversal to the downside, boom, stop loss, high of that candle. If you were targeting that, just on the 15-minute time frame, targeting that that's 90 points on the 15-minute time frame. If you were targeting this low, right, that's 140 points. If you're targeting this low, that's 163 points. By the way, price never came back to your break even. So even if you took profit, guess what? You could hold this for even longer because there was a higher time frame that probably didn't reverse yet. And you could have kept holding this for an even bigger trade. To this bottom right here was 273 points. But if we just factored in, we were just going for this 2-2 reversal right here, 90 points, cool. Now, let's get back to this chart. 50 freaking points. So like if you were just taking this trade, that's 90 points, that's double that. You're just going for 50. 50 points, risking 25 points, going for 100 points, you lost 50 points one day. Like even on that trade, you're risking about 54 points, 50 points or something like that, cool. Take your loss, call it a day. So you either win or you lose. That's cool. You make $200, you're making $200 minus $100 plus $400 minus $200. You make $300 in a week. Nothing crazy, right? Week 2, same thing. 50 points minus 25, 150 points minus 50 points. You make 500. Still basically nothing. 50 points minus 25, 250 points minus 50. You catch a day like this where you hold that thing. 200 points, 250 points. 250 points is this. That trade right there is 250 points. That is a 250 point trade right there on M&Q. That's what that looks like, right? So you catch a day like that, catch your 50 points. Now you're making some money. Now you got $4,000. But it took, you see how long it took? Week 4, it took you 4 weeks to go from $2,000 to $5,000. I just showed you in the thing, it took 4 weeks to go from $5,000 and turn that into, what's it called? $11,000. It took a month to double it. Well, once you double it, watch what happened now. This don't change. These numbers, look at these, pay attention to these numbers. 50 points, minus 25 points, 300 points. You might catch a day where you catch like there's days on MQ where you catch that 300 points. I don't know if there's a day like recently, let me see. This 1-2 reversal right here, 182 points. Maybe. On the lower time frame for the 5-minute right here, you definitely could have caught it right there, for sure. If you caught it right here, something like that, price went outside bar, right there, you caught it, right? Let's say you caught it like right there. Boom, 260 points right there before it reversed to the downside. Price ain't coming back there to your stop loss. Put it at break even. 300 points would be right there. 300 points. And again, this is not every single week. Notice like that those trades are not every single week. You only got a 300 point trade in a month, like every month or so. Like you just catch it and you just hold the trade. And sometimes you might get more than that. Sometimes you might get less. But I optimized this thing to show it for getting less of those trades. Again, same thing. Minus 25, 100 points, 200 points, minus 50. 250 points, 50 points, minus 25, minus 50. Minus 25, minus 50, 150, 100 points. 50 points, 300 points. You might catch another one like 4 weeks later. Minus 25, minus 50. Minus 25, 100 points, 200 points, minus 50. 50 points, minus 25, 250 points, minus 50. Minus 25, minus 50 points, 300 points, 100. Notice, you see how the account's growing? I'm still going for the same thing. So when I tell y'all in the beginning, and I was telling y'all, and I was preaching it, and I was like, look, don't focus on the profit. Just focus on the strategy. Just focus on just the objective of just following the strat and using it to catch these moves in the market, and you just focus on that, you will be straight. Because again, the numbers didn't change. Minus 25, 50 points. The amount that you can make, 50 points, 100 points, 150 points, 200 points. Maximum 300 points every month or so. And that's it. The amount that you were going for didn't change. The strategy didn't change. None of that switched. That stayed the same. That stayed consistent the entire time. The only thing that increased was the amount of contracts you were putting behind each trade you were taking. That is the only thing that changed. So again, keep going. So again, right here, you see 10% of the account now, 50 points. It still didn't change. Minus 25, 300 points, minus 50. You're losing 12 grand in a day. You're making 12 grand. You're losing $6,200. But you catch a trade where you can make 74,000. You just got to hold the trade. And you can't look at the P&L. You can't look at the dollar amount. You can't look at how much you're up. You're focused on the points. You're focused on trading futures. Futures is ticks and points, not dollars. It's ticks, points, and then the strategy. And you're focused on that. And that's the only thing you're focused on. So again, I wrote this message inside the thing. I wrote this in the thing. Matter of fact, I'll read it out for y'all. I want to make an adjustment to this compounding sheet to make it more realistic and feasible, quote unquote, right? So you can clearly see that this could look like over a 90-day period if you took this seriously. This model assumes a 50% win rate, technically speaking, a 40% win rate, because you're winning 2 days, you're losing 2 days per week, and then you're either breaking even or not trading 1 day per week. There will be weeks where you do better than that. There will also be weeks where you do worse than that. But even with just this, if you're starting with $2,000 and you follow these rules for 12 weeks, which is 3 months, you can realistically build your account to nearly $200,000 simply by trading the strat, managing your risk correctly, and letting your trades compound. Inside this document, I'll be copying and pasting real examples. So I literally put, down here, I put examples and stuff like that. But I also put the one thing that'll stop you. If you're already, watch this, if you already understand futures, you already understand points, you already understand how contracts work, you understand the strat, you have a clear strategy to execute day in and day out, you know what you're looking for, you know how to place entries and stop losses and take profits, then you already have everything you need to accomplish this. You have everything you need to accomplish this. I'm gonna just keep reading it and go back to the screen. The only thing that will stand in your way is your mind. And your mind will try to stop you in 2 different ways: greed and fear. Greed will cause you to over leverage, oversize, take positions that don't follow your rules, undersize, normal size, undersize or normal size, but you take too many trades, take bigger losses than you were supposed to. Your maximum risk per day should be 10% of your account period. It should never be more than that. 10% is still kind of a little steep, a little bit too. Greed is what causes traders to violate that rule. Fear. Fear shows up differently. Fear will cause you to hesitate on trades that were a part of your plan, skip trades that should have been wins. So there's wins on this chart that you might not take because of this bad boy right here. And then you end the week with only 1 win instead of 2. So now instead of a solid week, you're stuck with a 20% week, not because the setup didn't work, but because you didn't execute. Then what usually happens is you finally step back in and the trade ends up being a loss. This is how fear steals your momentum. So this is my message to you. I wrote this, I literally wrote this, like I'm telling y'all, I'm trying to be so personal. All right, this is my message to you. And I wrote this more so for my students and stuff like that, but I'll let you guys hear this too. Don't let fear or greed stop you from doing this. As your account grows, journal this, copy this framework, make it your own. Use it as a weekly guide based on your current account balance. The rules stay the same regardless of your account size. And remember, you do not have to risk 10% of your account. You can risk less than that. For example, you can risk 5% per trade and take 2 50-point stop losses. That still equals a max 10% daily loss. Lower your risk, same discipline. Over time, your win rate will improve, your execution will improve, your confidence will grow. But even without that, this document shows you the power of compounding, even with a small account and average win rate, simple rules, and a consistent execution. If you have rules, follow them, and if you let your trades compound, you can build something real in this market. I wrote that for my students to hear because I think a lot of them, because I've had a lot of students that have grown their account, and then some people they're stuck, and it's usually a mental stuck. They need to see it visually for them to be able to do that. Because some of the entrepreneurs that I work with, right, it come a little bit easier for them because they're used to risk. They're used to risking money and stuff like that. So when it comes to trading, it's this is a walk in the park. But if you work naturally, right, you're naturally more risk averse. Right? So when it comes to compounding and different things like that, there are mental things that you have to navigate through in order to actually compound your account. But this is what it looks like. Because those are the only 2 things: fear, greed. That's it. Those are the only things you're going to do. And there's subcategories to those things, but those are the only things that will actually prohibit you from actually growing. And I actually talk about that in the next section, what do those specific things look like that will actually prevent you from doing what I just told you right here. I'll show you what those things look like and how those affect you at different levels and stuff like that, and then what it takes to overcome those things in order to actually do that. But during this specific section, I wanted to talk about what that growth plan creation looked like, how to actually do that for yourself, what that looks like on the chart and trading and stuff like that, and then how to make it personal for you. So I hope this was helpful, and I hope it kind of showed you, kind of what that looked like. But this is how you compound your personal account. This is how you create a growth plan. All right, y'all, so this one is going to be a little bit deeper, it's going to be a little heavier, but this is something that I didn't need to talk about because I've been teaching not as long as I've been, trading and stuff like that. I've been trading for half a decade now, but I've been teaching for roughly 3.5, maybe 4 years, maybe, like just helping people and stuff like that. But like really taking it seriously, like the past year-ish, 2-ish. But I think I've seen a lot of mentorships. I've seen a lot of people mentoring and stuff like that. And I see that this is not talked about enough, and people don't have the right framing and thought process when it comes to this particular subject, when it comes to trading, right? So I kind of want to dive deeper into this. And I broke this down, and this will be for anybody. So if you're trading and you have $1,000, or you're trading, you have $10,000, you're trading, you have $100,000, right? You're trading where you have $1 million, right? The things that you think separate you from somebody that has 1,000 doesn't actually separate you, and I'll explain why in this particular section. This particular section, we're going to be talking about growing pains. In my opinion, out of every single thing that we've talked about so far, in my opinion, this is the most important one. Not the strategy, not even like just practicing and getting a win and stuff like that. This is the most important part, because when it comes to trading and stuff like that, I talked about this before, because we're not physically lifting anything, right? Some people think that trading is not difficult, but trading is really difficult, and the difficulty does come in from the mental aspect. So the mental aspect is the barrier or the boundary that's keeping you from that goal or that new plateau you're trying to reach in your account. So that's the thing that's separating you, right? Because again, it's not that if you're watching this video right now, you want, especially if you watched up until this point, bro, you want to be successful as a trader. You want to be successful, especially with futures. You want to be a successful trader. But it's not that you don't desire to build wealth. It's not that you don't desire to grow your account. It's not that you don't desire to hit that next level. You desire that, but there's something limiting you. There's something stopping you from getting to that other side. You have this desire, but then you don't do the right actions, or you keep messing up, or you keep like hesitating and fear of missing out. You're over leveraging or undersizing, but then taking too many trades, right? You keep having these issues come up. I'm going to explain why those happen, and then explain how to navigate around those things to help you go to that next level. So without further ado, let's get into it. So here's the capital milestones that typically people will see, right? It might be $1,000 to get that at $5,000. Then from 5,000 to get into 10, that'll be your first 5 figures that you have, generated and stuff like that from the market. Then there's 10,000 to 50,000. So you're like halfway mark to getting to that, 6-figure milestone, right? Then getting from 50,000 to 100,000, 100,000 to, $500,000, then $500,000 to $1 million, right? So what's the difference between $1,000 to 5,000 and $100,000 to $500,000, right? At every checkpoint, the same problems show up. And I'll get into what they are, but keyword, the same problems show up at each level, right? So we're going to talk about what those look like. My bad, I turned the drawing too long. But what changes at each level? The first one is going to be, the risk perception, right? So number 1, risk perception. Number 2 is the position size sensitivity. And then number 3 is the emotional attachment to outcomes. So the strategy doesn't change. The execution doesn't necessarily change. You do, right? And these are the things about you that changes, right? The universal psychological barriers. No matter what account size you have, traders run into the same 2 categories of internal problems when they are trading: greed and fear. So if anybody tells you differently, that like literally it falls under at least one of these categories: greed or fear. So there's expansion errors that take place, or contraction errors. So I'll talk about greed first. So greed looks like ego after a growth phase. So when you start trading and then you get to a point where you've grown. So you take in, let's just say you start with $2,000, you turn the $2,000 into $8,000, $9,000, $10,000, and you feel like you're on a hiatus right now. You feel like you're untouchable, you're invincible. You can't lose money. You can't lose anything when you're a trader, right? And then that turns into one of these next things, and it, like, watch this, it opens you up to be exposed to one of these next things. So your ego might take place in the growth phase, and then you start to get overconfident after your wins, which then leads to you potentially over leveraging your position size. Because watch this, if I told you that you couldn't lose, how much would you bet? If I said, like, if I laid it out for you, I said, I'm giving you $1 million to place one trade, And I'm telling you, in that trade that I'm allowing you to take, you can't lose on that trade. Are you going to take a small trade or are you going to take a big trade? Are you going to like utilize like 1,000 of that or are you going to use $1 million of that? If I told you you couldn't lose whatsoever, every single person is going to be like, yo, I'm levering that thing up, $1 million, because I can't lose. So the reality is you can in real life, but in that scenario you can't. So watch this. What happens is that scenario is what happens sometimes in our mind when we're trading. That ego overconfidence, that inflated ego towards like you can't lose in trading, that's real to you. It don't have to be real in general. It can be real to you. If it's real to you, you will act on that reality in your mind, and then you'll take that out in the market. Meaning, if you're overconfident and hear your ego like driven in your mind, and you're saying like, yo, I'm untouchable. Whether you're saying that directly or not, if you think that, then watch this. If I can't lose, what's stopping me from sizing from 2 contracts to 10 contracts? Think about that. What's stopping you? Nothing. So guess what you do? You do it. And then, or if it's not over leveraging, it's over trading to maximize momentum, or it's euphoria after you have a strong run up, or it's forcing trades that aren't even there. So you start to like ego, your overconfidence and stuff like that will start to blind you from the actual opportunities in the market, and you'll start to see things that's not there because you're so like you're driven for like a specific result. Ask me how I know, right? I've been on both sides of the fence with greed and also with fear. Fear is a contraction issue. So I'll break down expansion and contraction. So this is expansion. You're trying to grow. You're having errors when it comes to growing. Then you're having errors when it comes to contracting, like going inward to yourself, right? This is the fear of giving back profits. This looks like hesitation after you succeed. So after you take a winning trade and then you hesitate after that because you want to keep that win. You want to keep that streak going where you're hesitating after that. Risk aversion at new equity highs, meaning you reach a new plateau in your account, but then you're more risk averse when you start trading. You're like, I don't know if I want to, increase my risk yet. I don't know if I want to like size up higher and stuff like that. Even if you're not sizing up crazy, you might only be sizing 5% of your account. But if your account is $100,000, that's $5,000 that you're sizing, right? And on one trade, that might mean you're risking, for example, $5,000 on a trade or $2,000, $4,000 on a trade, and you might not be able to handle that. So that like you might start being risk averse at those new highs, taking profit, too early and stuff like that when you're trading. That also takes place as well. Like I actually, matter of fact, one of my problems is that when I reach new plateaus in my account or with trading the profit and stuff like that, my problem is I'll take profits way too early. Like I'll take profits, that's fine, but taking profits like exiting the whole position, right? Which is the next one, which is cutting winners short. That's a problem. If the market didn't tell me to exit, I shouldn't be exiting, right? And then avoiding valid setups to protect your gains. So you'll watch this. There will be a setup that lines up with your strategy, but you won't take it because you're trying to protect your gains. You already won, so you don't want to give anything back. Even if you're going to take a small loss on a trade, you still won't take the initiative to take that trade because of fear. So it's either greed or fear that's driving your decision making, right? The only difference is when they appear, right? So for example, if I'm trading, so for some traders, these emotions show up at 2,000. Right, if you're starting out and you're a complete beginner, you might be working or something like that, you might have $2,000, you put that in your account, cool. These emotions might show up at $2,000. For some traders, it's $20,000. For some traders, it's 6 figures. Like I work with a trader 101. He already had made 6 figures already. He did that with options, but he was trying to get into the future space and stuff like that and learn how to do that. But for him, it was 6 figures. So getting to that 500,000 mark, like those emotions might start coming up around there for him, most likely like $250,000, $500,000. That's when it starts to kind of build up for him. But other traders that I've had, it might be like that 5-figure mark, 10,000 to 20,000 ish range, right? For some people, it's that beginning amount. But the only difference is when they appear. The trigger isn't the number, right? It's like, when the money starts to kind of mean something to you, right? So why size amplifies your emotions. When you're growing capital, fear gets louder, greed gets stronger, and mistakes get more expensive. Because again, when you're at $2,000, for example, your account, if you lose 10%, let's say you lose 20% of your account, you lost $400. Okay. If you have 200,000 in your account and you lose 20%, that's 40 grand that you lose of your entire account in one trade. So fear gets louder, greed gets stronger, and mistakes get more expensive. You implode after you succeed, you give back big gains, and then you change rules that were working already. It was literally working and you change them. And then you force trades to protect your money. This is the complete wrong approach. And I see a lot of traders make this same mistake over and over again. And then they wonder why they can't like kind of grow and succeed and stuff like that when it comes to the market. So again, like I said, the only difference is when they appear. But here's how to stay mechanically consistent as you grow, right? So the first thing is discern. You have to identify when psychology is blocking your growth, not your edge or your strategy. Edge is like another word for your advantage, right? You have to identify whether it's your mind or if it's the market, or it's either your psychology or it's the strategy. So you do this the same way you did in the beginning when it came to paper trading, right? So if your strategy is working in paper trading, for example, right? But then it breaks down like when you're live trading, the issue is not the edge. The strategy didn't change. So and this is the thing, okay, because I've traded options, Forex, and futures before. I have traded crypto futures, but that don't count as crypto necessarily. I've traded 3 of those assets though. When it came to paper trading, all of them, the only one that I experienced where like paper trading in a demo account versus in a live account were different was in options. That's because the pricing of the contracts and stuff like that was completely different. I can paper trade, and everybody that trade options, you know what I'm talking about. I might take a paper trade and I place that and I'm immediately in the green as soon as I place that trade. When I take an options trade and I'm on a live account, man, as soon as I place that thing, I'm automatically in the negative, even if I get it at a good price. I'll still be down. I'm like, bro, what are we doing? Like, how am I down 5%, 4%? And I just got into the thing, right? I've only seen that on options. When you're trading price actions like just strictly price-based things like futures, where you enter at a specific price, exit at a specific price, those are specific entries and stuff like that, right? You know exactly where you entered and where you exit. You can calculate that. There's literally no difference from paper trading to live trading except emotions when it comes to trading futures. That is why I tell you in the beginning, I'm like, paper trade. Get the strategy down, paper trade, double your account, triple your account, prove to yourself that you could do it. Because once you do that, you can't, I did this in my mentorship, the reason being because a lot of people in the beginning years of me like putting together the mentorship and stuff like that in the beginning stages, I had a lot of people that would make excuses. They would paper trade, but then they'd be like, oh, it's not translating to my thing. And it's like, well, did you do that in their account? Well, no, I can't do it on either or. And my thought process was, if they couldn't do it in paper, you shouldn't be trading live account anyway. So you need to do it on your paper account first. You need to prove to yourself you can do it. That way you don't have that excuse anymore. Because my job as a mentor is my goal is to eliminate your excuses so that you can go down this path that will allow you to succeed. Because the problem is, for example, you can work out by yourself. So like, you can work out by yourself. It's like losing weight or gaining weight or whatever you want to do, gaining muscle. It's the same thing. Eat healthy, work out. Watch this. Eat healthy, eat less, work out more, and do the right workouts. You will lose weight or you will gain muscle, period. So if that's all we need to do, then why is it so difficult? Because most people need that accountability, or most people need somebody in their ear or telling them to do it. Because it's different when you got to do it on your own. It's completely different when somebody's telling you, hey, lift that weight, come on, push it, come on, push it. Like, it's different. So my job is literally just to remove all your excuses. So if I'm a trainer and somebody give me an excuse, oh, well, I'm sorry, I'm trying to lose this weight, but it's not working. Well, what did you eat this week? Oh, I had some donuts on Monday, and then Tuesday I had pizza. Well, duh, then why are we doing that? Oh, well, I didn't, no. Let's remove the excuses. Let's eat well. This week, 5 days, let's eat well. So for myself, what I'm teaching y'all is like, bro, just paper trade. Because once you have the evidence that you can do it, you can't come back to me later and say that that's the excuse is that you can't trade it. You have proven to yourself that you can do it by the fact that you've taken the account from, let's say, for example, $1,000 to $2,000 or $1,000 to $3,000. You've proven that you can do it. If you traded the strategy correctly, you have the evidence of that. Now, it's just translating that to the market. So you do the same thing you did in the beginning with paper trading. If your strategy works with paper trading, but you break down when you're on a live account, the issue is not the strategy. The strategy didn't change. The rules didn't change. The only variable that changed is that there is real money at risk. Money is connected to your emotions when it comes to trading. How much so depends on like where you're at. Some people, like I said, is 2,000. Some people is 20. Some people is 200,000 as an example. The number is different for each person. This means that the blocker is psychological, not technical. So the simple diagnostic for that is this. If you can execute cleanly and grow in a simulation, but you struggle when money is really on the line, then emotion is interfering with the execution, right? So this is the first part. You gotta identify whether it's psychology or strategy, because most people like that I've seen in the space, and you're probably doing that right now. If you're watching this video, you've probably this is what you've probably done. You've probably misdiagnosed yourself and switched your strategy instead of actually switching your mindset. You tried to learn a new strategy instead of like figuring out, okay, wait, was it my mindset that was the issue or is it the strategy? You can literally see if the strategy, watch this, if the strategy ain't complicated and got 50 million things in it and it's simple enough, you can literally check the strategy and see if it was the strategy's fault or yours. You can see that visibly. With the strat, I love it because I can clearly see if I was right or wrong because I know what a winning trade looks like and a losing trade. So I can clearly see the difference and I can see whether it's my fault or whether it's like my execution of the strategy was the problem, right? So once you identify that, okay, bet like it's the psychology that's blocking my growth, then we need to recognize it, right? So you need to recognize when you're hitting a psychological plateau. So you'll see it directly in your results versus your compounding plan. So we already created that compounding plan as an example, like I talked about this before, like what it looks like to compound like on a week by week basis, like what that looks like. So based on your compounding plan for you, right? Examples of what this can look like, right? Losses are larger than your, like, well, for example, let me change this real quick because that's bothering me. These bullet points, I need them to be black. All right, losses are, larger than your plan allows, right? So you might be risking too much or over leveraging. Your losses are more than you're supposed to be taking. That's over trading. Your performance no longer matches your expected growth curve. Meaning you're not following the strat. You're not following the strategy that was building your account in the first place. So at that point, ask, did I follow the strategy exactly? Did I follow my risk rules? Did I change my behavior after wins or losses? Watch this, if execution drifts, the solution is not a new strategy, it's returning to what was already working. Most people this is the funniest thing, because most people, when the strategy don't work, the solution is creating a new strategy. Instead of just saying like, okay, bet, if this was working before, why is it not working now? Is it the strategy's fault or mine? And most of the time it's yours. So if it's your fault, don't change the strategy, just change your behavior, change the execution, change the way you're going about it, right? So again, number one, identify that psychology is blocking your growth. Number two, how to recognize when you're hitting a psychological plateau. You can literally look at your compounding plan and look at how you're executing and then just see kind of where you are in terms of your growth, right? You can see that based on the trades you're taking. If you're taking the trades you're supposed to take and you're risking what you're supposed to risk and stuff like that and it's just not working, that's fine. That happens. But you still need to be able to recognize what that is. And then number three, how to maneuver, how to move through each plateau instead of stalling out. So plateaus are resolved each through review. So you need to review like yourself at each week. So each week, review what you did right, review and identify where you deviated. So deviated means where you changed. So if you were supposed to do this and you did something else, identify that and ask yourself, why did you do it, right? And then again, make small, specific adjustments and then carry those adjustments into the next week. An example of what this looks like. Let's say, for example, there was one of the days of the week where instead of risking, let's say maximum I'm supposed to lose in a day is, let's say, for example, it's maximum I'm supposed to risk in a day is 10% of my account. If there's a day that I risk 15 to 20% of my account, then that's a problem. That means I'm risking too much on the trades that I was taking. And I was being a little too lenient with my risk. So what I need to do, that small adjustment, is literally just saying, all right, bet. There's a maximum amount of points I can risk. Like there's a maximum stop loss I can have on a trade. And then there's a maximum amount of contracts I use. And I need to abide by that. I don't change anything else. I keep following the strategy. I keep doing everything else. I just make that one adjustment. Size down on my contracts or have a smaller stop loss, or just play around with that. Whatever you need to do to make sure that you don't like over leverage and risk too much of your account, right? So that's the small adjustment. That's what that looks like to make a small adjustment. So again, you don't break through plateaus with brute force. You break through by being consistent, right? So again, there's examples where brute force is applied, but repetition is the thing. So if I'm trying to break a door, for example, right? I don't have to get necessarily one big kick. I might have to just do one kick to weaken the door, second kick to weaken the door, third kick to weaken the door, and then boom, fourth kick, boom, kick it in automatically, right? And this just is an example of kicking the door. But sometimes just repetition. I don't have to put all of my energy into just one thing, right? Sometimes just those little small improvements, those 1% growths, that small compounding effect in yourself and in your strategy and in your execution, that also translates into compounding in your personal account, right? So again, that's pretty much everything that it looks like, but that's how you navigate growing pains, right? And I see a lot of people, they deal with that. They struggle with fear, they struggle with, greed and stuff like that, and they don't know how to navigate that. But literally, like, I'm not even gonna lie to y'all, there's nothing more to it. There's literally literally everything I showed you, there's nothing more to it. You have to identify when psychology is blocking your growth, and then what aspect of that is it greed or is it fear? And then you need to recognize, like, obviously when you're hitting a plateau. So how are these emotions affecting your current trading? So for example, if your losses are larger, then you're risking too much. If your losses are more than they're supposed to be, you're over trading. If your performance does not look like your growth curve, then that means you're probably not following the strategy. So the emotions are not allowing you to be disciplined. So you ask these questions. This is literally the process. I take myself through this. I coach like my mentors, my mentees to do this. Like, this is it. I don't give them anything fancy. This is what they have to do. Because once you have the strategy down, like in the previous section, once you've made a few $1,000s from the market already, the thing to make 6 figures and 7 figures is not necessarily like just doing a new strategy. It's doing the same strategy long enough until you can reap that benefit. But the thing that's going to block you from getting there is these growing pains. And they don't change like from plateau. That's like, oh, bet I'm going from 10,000 to 50,000. There's a new hurdle that I got to do. It's not like growing a business. It's going to be because you're the business. You're the owner. You're the one that's running it. And the thing that's going to be the bottleneck is this up here. But the same issues come up. It's going to be fear, and it's going to be greed. You're going to get either fearful, you're going to get emotional, like in a greedy way, right? And that's going to prohibit you from like moving forward, like get into that next plateau. So if you go from 50,000 to 100,000, right? But then you can't get above that $100,000. Okay, bet. Diagnose yourself. Like, what's going on? What's different from me growing from 50,000 to 100 versus me growing from 100,000 to 500,000? What's the problem right here? Oh, I'm starting to get a little more fearful because I've never been that 6 figures before. So now let me identify what aspect of fear is kind of holding me back. So if that aspect of fear, for example, is I'm starting to take profits too early, how can I tell if I'm taking profits too early? If my compounding plan is showing that I'm hitting trades that are 100 points or 150 points or like 200 points, 300 points, but I'm only hitting wins that are 25 points, 30 points, 15 points, 5 points, something like that. And it's like, I'm doing that on a consistent basis, and that's what it looks like over the course of weeks. It's like, okay, there's a problem. If it used to be this many points that I was catching, but now it's this, it's like, bro, what are we doing? Why are our sizing out? And then you make that adjustment, but you need to identify what that is first, and then you go, again, you identify what it is, you recognize what aspect of your trading it's affecting, and then you literally just make that adjustment to fix it. And then you work on that for the next week. That's what trading looks like. And you might be like, well, Sean, this sounds boring. It kind of is. But guess what? Would you rather be bored not hitting the goals that you strive to hit when you set out to do trading? Or are you willing to do the necessary thing? Like, this is not even a hard thing to do, honestly, really, real talk. It's not even a hard thing to do. Because again, we're still pressing buttons. The fact that I'm so grateful that I literally get to press buttons. I can press buttons from my desk in my house or from anywhere. Like, go upstairs and I can just go out somewhere, just bring my laptop, and then I can just press buttons, and that's all I need to do in order to make a few grand. What are we talking about? I bet. Let me just review this trade. Let me see what I did differently. Let me see what I need to change. Let me see what I need to adjust, because that's the only thing that needs to happen in order for you to get to the next level. You don't need to get like some like fancy strategy and stuff like that. It's just doing the same strategy for a long enough period of time and increasing contracts. The problem with increasing contracts is some people increase contracts too early, and then it enhances that fear or enhances that greed. So now you blow accounts. That's the only reason people blow accounts. Unless there's a technical issue with a broker or something like that, but usually that don't happen with futures. That's more of a Forex thing. But futures doesn't really happen like that. So again, these are the steps that's necessary, the growing pains you have to navigate when it comes to going from one level to the next. But once you apply this to your trade, I don't promise a lot, but I promise you literally if you just navigate like your trading through this framework and use this to navigate it, like I promise you, like this will tremendously help your trading. I don't care if you're trading futures, options, or forex. Especially with futures though, this will definitely help your trading. But again, this is what it looks like to navigate these growing pains. And then once you navigate this literally, you will just naturally move up the rank. You will naturally grow your account from $1,000 to $5,000, $5,000 to $10,000, $10,000 to $50,000, $50,000 to $100,000, and then $100,000 to $500,000. And then from 500,000 to $1 million, like each of these plateaus happen. And I'll be completely transparent. I'm literally in one of these plateaus. I'm in the, like more so the getting to the, what's the plateau? Between like, I'm in like the weird plateau between 100 and the 500, where it's like, because it's like, for some reason, it's like, I get, my problem is fear. Before it was greed. So from like 0 to 100, it was greed. I'm just like, I'm just trying to, I'm over leveraging, oversized, going crazy. Once it was a 6, once I hit the 6, it's like, all right, now it's trying to navigate from 100,000 to getting to that 500,000 and navigating that, but not trying to over leverage, because I don't want to risk a whole bunch to do that. But it's like, as I'm hitting new levels and to hit new bigger numbers and stuff like that, I have to put on more contract. I have to. Right? So it's just navigating that fear. And I'm literally walking through this process that I'm showing you right now. That's why I'm telling you, that's why I know for a fact that this works, because I'm doing this for myself progressively. And I know this works for you no matter what level that you're at. So again, I hope this was helpful. And then, I'll see you in the next section. Trading is very simple, but it is not an easy thing to master. This was a class that I hosted recently covering what it takes to grow as a trader. And I uncovered that people, are lying to you about strategies, being the ticket to your success, but it's actually something much simpler, but actually harder to master. But once you do, you unlock the keys to the kingdom. This video really goes deep, and you might see a different side of me that you haven't seen yet, so enjoy. How is everybody doing this week? How's everybody doing this week? I see everybody here. Let me see. LaShawn, London, I see you, Nas. Delu, Chrissy, what's good, Tyree? How y'all feeling about this week? About trading, about the price action, about life? Like, how y'all feeling? I just want to get like a temperature check real quick, kind of see how everybody is. You could drop it in the chat, or I don't know if y'all know how to like raise your hand and do it, and then I have you unmute. But I kind of want to see where everybody is. I'm good, hanging in there. Okay, hold on. What you mean? What you mean by hanging in there? What you mean by hanging in there? Can you unmute, Chrissy? I don't know if you can unmute.
You sound kind of low.
Oh, can you hear me?
It's probably me though. I think it's mine. But yeah, I'm good. I'm hanging in there. Hanging in there.
Hey, let me
Well, somebody else said you low too.
Oh, low for me too. Got my phone on max. Okay, hold on. Let me try to put it. Hold on a second. Test 1, 2. This is better.
Yes.
I don't know if I'll be able to. I'm not gonna be able to. I don't know how this is. Can y'all hear me still good? Put on my hat today. Much better. All right, cool. Yeah, it was the setting that I had the microphone at. Ugh. That's another. Oh my gosh, the market is going down. 26 points. Anyway, focus. But yeah, what do you mean by hanging in there?
Like taking it one day at a time.
Did you trade this week?
I traded a little bit. I
Okay.
traded a little bit. I don't know what it is with me. I just don't know what it is. It's like charts be on point, always hitting price talking and stuff, but it's something about me. I'm sorry about this noise in the back. You know them grands.
Oh, they can't hear it. Well, I can't hear it
You
on my
can't
end.
hear 'em? Oh,
No, it's
good.
good.
Okay.
Yeah, audio good.
Um, but yeah, no, I did a few trades and futures. I did get me that account with Lucid. So
Okay.
pray for me. Okay. I'm up, but I'm just like doing little moves at a time because I don't want to like blow nothing or and I think I do a lot of stuff really like I'm better off telling somebody else what to do. If that makes sense. It sounds crazy.
No, it don't.
It's like the minute I do it, it's just different. I don't know, but I'm hanging in there. That's what I mean. I ain't give up. I'm still here.
I'm not
But I
mad at you.
got me a Lucid account and I do have a TopStat account. My Express account that I had with TopStat is like I ain't even touching no more because it's literally almost about to be blown. So it was like, but I had that for a long time. So I'm just leaving it there because until I get another one. You know what I'm saying? Before I even touch it again. Because I'm trying to get to 5 past accounts.
Mhm.
Trying, but I every time I get to the Express, like what we talked about last week, because I looked at your tape, that was really good, a good class. Um, so yeah, I just been, you know, I'm figuring it out.
Okay. I want to like I specifically want to speak to that too because I know who else who else feel the same way. I was opening it up for that too because I want to make sure I want to see who if everybody else feel the same way. Um so like for everybody else, like do y'all feel like because that she said something good. I feel like I could tell somebody something, but when it comes to me doing it, it's like, man, I don't know like what happens. How many of y'all feel that way? Where it feels like you know it, even enough to tell somebody else to do it, but it's just you executing it. Like for some reason, you just can't execute like the way you're supposed to. Like it's always an issue. It's always hard. It's always difficult. Um, because like I mean, and we're in a weird market environment right now. I feel like that sometimes. Okay. And the reason I ask that is because I know we're in like a very interesting market environment where we are the market's been very, how do I say this? Not unpredictable because it's still like predictable. It's just like because how do I say this? So, for example, recently we've been having as soon as the market opens, we just gun in a certain direction, right? On futures. And then it'll play around. Sometimes I might get some correction and stuff like that. And then we just play around a little bit. So we've been getting that. But sometimes we won't break. Sometimes we'll break in one direction, reverse the other way. It's going back and forth. So it's still doing broad informations, but it's just doing it. It's like we're switching up a lot. Like we're still doing broad informations, but we're consolidating days. And then we're doing broad informations, but we're taking out lows and highs. And then we're breaking in one direction and trending upwards, but then chopping our way upwards after we make that initial move that you didn't get the entry on. And it's like it's a lot. So I get it from that aspect. Um so I want to speak to that tonight because I understand, like, I know, like, because for example, how many of y'all drop a one in the chat if you're trading like a funded account? Like, if you're trading either a combine or a funded account, drop that in the chat. I want to see everybody that's trading because I know some might be trading a personal, some funded account. Okay, so Delu, you're trading a funded account, LaShawn, XFA. Nice. Oh, you passed it. Nice. Come on. London, Chris. Okay, Tyler. All right. So everybody's trading the XFA. All right. So what other things? Like, so if it's not necessarily Chrissy, where it's like, you might feel like you have it and know and stuff like that, but you just can't execute it. What else is it for y'all? Um, What else do you feel like it is for y'all? I'll ask holding trades. Okay, so speak to that, London. Like, why do you feel like it's harder for you to, like, I guess, hold trades and stuff like that?
Um, for me, it's probably watching the P&L. I can't lie. It's probably the P&L watching. I haven't got to where I just changed it to ticks yet, so I probably will do that probably this week or next week. But
Yeah.
that's probably it for me though, because today when you see the market tank, I took a trade and I don't know if you can bring up that chart.
Mm-hmm.
So yeah, on the 5 minute, I took the
Where was it earlier today?
yeah, it was a bit after like yeah. So it was I took that. I think it was that first two. What time was that? 9:30. It was the second candle after that. I believe. Yeah, that. So right after that 221, I took the 212 right there, and then I got out. I think just after that candle, yeah, on that little pullback.
Okay. And how many contracts?
I have four, five, four.
4 contracts. Okay. You were in profit.
Yeah, but I was more watching the candle than just because prior to that I've been caught a couple times like it just coming back and just stopping me out.
Yeah. So you're thinking about like, oh, I took this trade and then it reversed against me before and I got
Yeah,
stopped out. I don't want to get stopped out. So how do I
yeah.
get stopped out?
Cause for a little while I've been I see most of my trades, for example, on the 4 hour, not the 4 hour though, but like this is an example. Like you know how that one the candles up, it's got that wick at the top.
Yeah.
Usually most of my trades work if I put the stop up there. I just be thinking about risk. You know what I'm saying? That makes sense.
No, I
But
get it.
usually I don't go that far. I just put it at like where the continuity of the candle changes.
All right. So for that, obviously it's a fear thing. Um, And I get it. It makes sense. I have that same thing. Like I have spurts where I still do that same literally exact thing. It's like, bro, I've lost on these other ones. I don't want to lose, especially if the loss is substantial and it's like a lower risk to reward trade. And then you got to go through that. Then I get it. Um, but still, it's like there's a better way to go about that. Um, does anybody else deal with that, like holding trades, like struggling to hold trades and stuff like that? Or this might be another thing too, struggling to enter or re-enter trades. That's also another thing too, struggling to enter or re-enter trades. I don't know if drop a one in chat if you dealt with that. Because I know it's like because of how the market is, it's like, do I want to enter this? I don't know. Like, I don't know how it's gonna go in my favor. I don't know if I'm gonna win. I don't know if I'm gonna lose. And if I lose, I don't know if I'll be able to deal with that. So you don't take it, then it ends up going in your favor. Not even gonna lie, because I'm not gonna lie, I do go for one-to-one risk to rewards on these combine accounts to try to pass these things and get the 15, right? Today I took some, but like did a lot of them where I was trying to reduce my position size and then make sure I trail my stop loss to break even sooner and trail it in profit just to make sure that I don't lose on a trade that I'm already winning on. So that led to a lot of trades. But one thing I've noticed is I hesitate too long to enter a trade when I'm supposed to freaking take a trade. Like I need like 18 points. 19 points. It's like, bro, if you don't take that freaking trade, like just take it. Like even today, I had an issue with that on the 1 minute time frame. Because it already dropped. So we're in a limbo. I'm gonna share it. We're in a limbo where it's like we already dropped. I had this two reversal right here. And because I didn't have any targets over here, I didn't know if we were going to like obviously wick and come back. Or be able to go far enough like that I would need. Because I needed for my one-to-one risk to war, I needed like 18 points. So I was risking 18.75 points to make 18 points. So I was risking about this to make this. Now in hindsight, it's like, bro, you definitely could hit that risk to reward. On this trade, you definitely could do that. But I didn't, because I didn't see the target over here, I just didn't take it. I could have taken that. The 2 into reversal, because I only needed 18 points. I also could have taken that too. This 2 to reversal, I didn't take specifically because I was like, it might play around first before it like fully goes through that. And that's a bullish candle, so it's not like a failed 2 either. And then it ended up not really working. And then we had this 3 to 2 right here. This was like text, but it's a 3 to 2 freaking reversal. You better take that. Didn't take that either. So it took me a while to like actually take it. I think it was either this one or this one that I took. I think it was one of these. I think it was this one. It was this one. I reduced it. No, I had taken this one. I think it was a 10 a.m. candle. So it was around, I did take this one though, where we had I took it here and then it pulled back, stopped me out, and then it kept going, and then I re-entered this back down because I forgot this is a 10 a.m. candle, so I wasn't paying attention to that. And then I was like, all right, we're gonna get our drop. And then we ended up doing that. But point is, like, I get like just not holding it or not taking trades and stuff like that, hesitating. And I feel like I go break even too soon. Yeah. But I want to kind of speak to all of that tonight because all of it kind of comes down to the same thing. I already talked to y'all practically already about what it looks like to actually navigate getting the accounts and stuff like that. Just navigating, passing those, getting the payout, stuff like that. But at the same time, there's still an agenda that you have. You have an agenda to hit a certain amount in a day. You have an agenda to get a certain payout. You have an agenda behind it, right? And that agenda will cause you to deviate from your plan, deviate from what you're supposed to do. So one thing I will say to everybody in here, if you're not, so matter of fact, this is a question I want to ask. How many of you trade for a living? And be honest, drop a 2 in the chat. If you trade for a living, meaning like you trade and that money takes care of bills. Okay, so Sean, you trade for a living. Okay. Chrissy, you trade for a living. Okay. So like y'all are trading and majority of like the money you use to pay bills and different things like that comes from trading. That's why. Okay. So just Chrissy, I think just Chrissy and just LaShawn. Okay. So for London, Nas, and Duluth, right? And I think and Christian, I see you in here, and Anthony as well, and Tyree, right? So if y'all don't trade for a living, then that means that what you need to take care of bills and pay things and stuff like that doesn't come from the market. So there's not a requirement for you to necessarily, you can literally do technically quote unquote bad in the market and you'll be straight because you're working, you could take care of it outside of that, right? If that is your situation, technically speaking, like I'm not talking down on, because again, I fall in the category of trading for a living, right? So I'm not saying anything to you, LaShawn, or anything to you, Chrissy. But if you work and it's not attached to trading, you have an advantage over traders, like people that are actually trading for a living. You have an advantage. The reason being is because you have the money you need to live is not connected to the market. So that's another thing that your emotion doesn't have to be attached to. Because Chrissy and LaShawn, y'all probably can feel this. When it's like, I gotta pay for this thing, you start trading. It's like you start trading for that because you do need to withdraw this out of your account to do that. So there's like a expectation that you kind of do have towards the market on terms of what you need to do and stuff like that, and you put that's more pressure. But if you don't need to trade, then you should, honestly speaking, be blowing it out of the park, literally, because if you don't like, because there's no emotional thing. Like it's almost like you're literally taking, because your job is basically your investor. You take care of your business stuff like that, and whatever you have left over, you can put that and reinvest that back into trading to figure it out. Now, granted, you want to figure it out sooner, but you still have the leeway to do that. If you're living off of it, it's a completely different thing, right? So you have an advantage. So the way you take advantage of that advantage is you look at it from the perspective of, okay, there's certain things that I need to do in order to make certain things happen, whether that's passing an account, whether that's getting like funded and then getting a payout. There's certain things that you need to do. That stuff doesn't change. If you have a certain strategy and a certain approach in terms of time frames you're looking at and stuff like that, everybody here pretty much y'all already went through the archetype thing. Y'all already know y'all pretty much your archetypes already. Whether you took the assessment or not, you know if you're a scalper or not. You know if you're a day trader or not. You know if you'll day trade but you'll hold stuff for hours and that's naturally how you trade. You know if you're an overnight trader and you'll take a trade, hold stuff overnight. You know what type of trading style you are. You know what has worked in the past. If you've been journaling your trades, you know what is good and you know what works. So since you know what works, then you know what you should be looking for and doing on a consistent basis. There shouldn't be a deviation if it's rigid. If you have a complicated thing, that's a whole different story. That's why I tell you how to keep it simple. Because if you keep it simple, then you just look for the same things. Now, if you have it simple and you know exactly what you're looking for. So for myself, I like taking the failed 2-2 reversals, and I like taking anytime I see a 3-2 reversal set up, I should almost immediately be taking that immediately. Like 3-2 reversals are my A plus setup. Like whenever I see them, I take them. I don't care because I know the bottom of the broad information is the 3. It is the most beautiful. I love it. It's beautiful. 3-2 reversals, I love those. 3-1-2 reversals, also I like those as well. But those are my favorite setups. Time frames that I use. If volatility is stupid and I can't get anything on the 5-minute, then it's the 1 minute for me. So it's the 1 minute and the 5-minute, and then the time frames that I look at to see continuity and stuff like that primarily is the 15-minute, 60-minute, and then the 4-hour. I'll sometimes check 30, but 30 is usually lined up with the 15-minute for the most part. So those are the time frames that I look at, and I have a purpose for those. So I have a way of going about the market a certain way. Everybody here should have the same thing. When it comes to trading, that actual strategy, you have to focus on the actual process of what you're supposed to do and completely disconnect from the outcome. That is why I told y'all to make it slow. Like even the last class. How many of y'all watch? Drop a 1 in chat if you watched last class. The last Q&A we did last week. Drop 1 in chat if you were either there or you watched it. If you were, what was I talking about? Somebody drop in the chat or unmute. What was I talking about? What was the theme of the actual class or the lesson? What was the theme of it? Somebody drop in the chat. Oh, where's the reply? Huh? Oh, the replay. Oh, the replay's in WAP. I always drop it in the WAP dashboard under the Q&A recordings and stuff like that. I'll show y'all like a tutorial and stuff like that on how to do that, but it's in the thing. It's where I have like all the like Q&As and stuff like that. But I'll show you, like I'll just let me know if you need help getting that. But yeah, it was basically risk management, but basically like scaling the accounts and stuff like that with funded accounts and stuff and with risk management, right? Like if you start with one account, boom, take your time with passing it. Then once you pass it, get a payout, get a small get something, get a small payout, reinvest that small payout into getting more accounts, and then you take those, you group trade them together. You don't go for the big win, you go for the small win, you go for whatever you can get because we're trying to optimize. You have to do stupid stuff to hit stupid numbers for the most part. But if you have a simple target to hit, then you just need to look for a simple thing. So even today, what I was looking for 18 points on NQ. It's NQ. I could do that on a 1 minute time frame. I just need one signal. Literally, y'all saw how many signals I had that fit like how I like to trade. And all I had to do was just take one. It took me forever, but eventually I did it. But there was plenty. I just had to go for one base hit, boom, hit that, and I was done. Right? That's all I had to do. So, but I kept it simple. And for y'all, it has to be like simple and stuff like that as well. Right? But the whole theme is you have to do the good stuff for a long enough period of time to be able to see the fruit from it. Like how many of y'all, like matter of fact, for example, how many of y'all deem yourselves impatient? How many of y'all feel like y'all struggle with impatience? Okay. Chrissy's impatient. Nas is impatient. I'll drop. Hey, look. Let me just put my name in there. Been fighting back and forth, being patient. Yeah, I know. Like Anthony, shout out to you, bro. Because I know, like, I know, like, 'cause I think when you joined, like, I was like, you gonna be patient. But then I know this market been testing your patience. I know the market been testing your patience, dog. I know. We're in an interesting market. You know what I'm saying? We're in an interesting market with Trump and everything. It's a lot. It's a lot. But let me I want to read y'all. Okay, I want to read y'all scripture real quick, and I want to. And this scripture ties into this, like what it takes to, like the answer to all of our like problems and stuff like that when it comes to these issues and stuff like that. When it comes to trading and stuff like that, this speaks to. I believe that this speaks to that. Let me find it real quick. Um, okay, I have it right here. Let me see. And I'm telling y'all, so it's in Galatians 6, if y'all wanted to look at it. But this scripture, honestly, I feel personally that it honestly would speak to where we are, and I think it would help. Um, so let me read it to you. I'll start from Galatians chapter 6, verse 8. We'll start from verse 8 and we'll go to, I think, verse 9 and verse 10. But I'll just read it out. For I'll actually put on the thing. Do not be anxious in the script. Yep. Right here. For the one who sows, for the one who sows to his flesh, his sinful capacity, his worldliness, his disgraceful impulses, will reap from the flesh ruin and destruction, right? But the one who sows to the Spirit will from the Spirit reap eternal life. Let us not grow weary or become discouraged in doing good, for at the proper time we will reap. If we do not give in, keyword, if we do not give in, right? So, and then obviously going forward, it talks about basically like if you have the like we have the opportunity to let us do good to all people, be helpful, but also doing that which promotes like their spiritual well-being and stuff like that, right? So the whole point is to not grow, like keyword, let us not grow weary. So weary means tired. Let us not grow weary or become discouraged in doing the right thing, for at the proper time we will reap, and do not give in. Let me ask y'all a question. How many times have you ever failed a funded account, either an XFA or a combine, and you got a little bit discouraged when it happened? Drop a one in the chat. You felt discouraged. You felt like a sense inside of you where it's like, oh, it's trading for me. Like, I don't really like, am I good enough for this? Like, or you start to feel like you crazy. It's like, I've seen all these people do it. Why the heck can't I do it? Like you, and then don't get me started. If you fail, and then as soon as you my camera, as soon as you hop back on social media, soon as you get on Twitter, as soon as you get on Instagram, it's like, hey bro, I just got two Lambos, three Lambos. I just got a McLaren with this trade that I just took today. I just took the trade, made $5,000, took the money out, and then I just bought this car. This price action was amazing today, and da, 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 da. And then it's like that pisses you off even more because it's like, bro, and it's like it two things. Either it's like you start to feel like, bro, like what am I doing wrong? What's happening? Like, is it me? Is it the market? Da, da, da. And you're starting to get upset. And then watch this. You start to get upset, and then you get in a space where you're either rushing it, or you enter into two different phases: greed or fear. So you start trading the accounts, and there's two things that happen. You'll trade the accounts, and then you'll be fearful to take the trade, right? You'll be fearful to take that trade that you're supposed to take, right? You'll get fearful and you won't take it. Then you'll miss it, and then you're like, bro, I should have taken that trade. Da, 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 da. Then when a B tier, C tier setup set happens, you're like, you know what, this is good enough. Let me get in the market. Let me get in this trade. Then you become greedy. You take the trade. You probably put on more sides than you're supposed to. Take a loss, and then it's like, bro, like if I had just gotten in before, I wouldn't have had to watch this. If I had not been fearful before, I wouldn't have to reap the consequences of being greedy now. Oh my gosh. That just punched me in my face. If I was, watch this. If I wasn't fearful before, y'all, if I wasn't fearful before, I wouldn't have been inclined to be greedy now because I wouldn't have missed the trade. I wouldn't have hesitated. I would have taken it and done what I was supposed to do. But watch this. I grew weary in doing the right thing. So what is the right thing? So in the scripture, it said, I'll read it again. For the one who sows to his flesh, aka his sinful capacity, his worldliness, his disgraceful impulses, will reap from the flesh. So if you whatever you sow into is what you reap. Period. Whatever you have, this is gonna hurt some people's. This is gonna hurt some of y'all feelings. I'm gonna look directly into the camera. I don't know how to say it. I want to say this nicer. But to an extent, it's true, right? Everything that has happened to you in the context of trading, because in life is a completely different thing. There's stuff outside of our control in life that we have to deal with. I get it. Everything that has happened to you in trading that was not the result of a prop firm being stupid or just being an issue or a broker malfunction, everything outside of those two things, everything that you have gotten in trading has been because of what you've sowed. So everything you have reaped is what you've sown. So if you're not getting what you want out of trading, then there's something that needs to change. That because like literally, if you're getting, watch this, if you keep getting apple trees, but you want orange trees, you should probably look at what seeds you're putting in the ground, because you only get what you sow. You only reap what you sow. You only reap, watch this, you only reap big losses when you take over leverage trades. You only reap big big losses in a day if you sow over trading or taking too many trades, over leveraging or over trading. That's the only way. Can someone else explain? Matter of fact, somebody else explain. Explain to me, right? You have to say it plain. Whatever you sow, you shall reap. Exactly. Whatever you sow, you shall reap. How many of y'all, watch this. Somebody explain to me, how can you take somebody explain how you can take a big loss. I'll say it like this. Can you take a big loss in the market if you don't over leverage and if you don't over trade? Yes or no? And then if it's a yes, then what is it? Drop your answers in chat. Yes or no? No. So there's only two ways you can get a big loss. So if you end the day in a big loss, then that means if you reap a big loss, then that means you've sown over leveraging or you've sown over trading. It's one of the two, period. Or there's, and again, this is so rare or not often that it isn't even a factor, because it's not even your fault. If there was an issue with like your broker or something like that, and it wouldn't let you get out of a trade or something like that, that's a whole other thing. That's not your fault. But majority of the time, can we be honest? Drop a one in the chat. If majority of the time, if you take a big loss, it's because you over leveraged or over traded. So watch this. If that's the only way you can take a big loss, and you take a big loss, and it's because of you over traded or over leveraged, then that means that to some extent, you either one, didn't have rules in place, so you were just acting based on, watch this, your flesh, what you wanted to do, whether that was be fearful or greedy, right? Or, well, that's it. Yeah, that's it. I mean, that's it. Oh, yeah, that's the other one. You don't have a strategy, so you just do whatever your emotions tell you to do. Or you have a strategy and you just don't follow it. You have rules. You have rules to follow. You have rules to do. You have things that you're like, you have a list. Everybody who drop a one in the chat if you have a rule book. If you got a playbook, drop a one in the chat. You got a set of rules. You got a set of things that you follow to trade. If you don't have one, drop a two. And then everybody should have a one. Because I help all of y'all set up the freaking playbook. If y'all need to update to the playbook, let me know. But everybody here should have a playbook in terms of what setup you like to look for, and then the time frames you use. That's pretty much it. So if everybody has a playbook, then if you take a big loss, then there's a problem. That means you didn't follow the strategy. That means you didn't follow your rules, because I have nowhere in my rules, in any of the strategies, whether it's success protocol or just trading the strat regular, literally the foundation of the strat is small losses. Like cut your losers, hold your winners. Small losses, Like, and then small wins, big wins. That is literally the foundation of the strategy. So if you aren't trading that, then you're trading outside of your, watch this. You're trading misaligned with the strategy that you're trying to trade. Because that's not what the strategy is for. That's not what the strategy is for. It's not. It's not. So if I'm gonna switch my, hold on, let me switch my microphone real quick. Let me do a little cool down. Let me switch my microphone. Switch this out. But put this away. All right, can you hear me? Drop a 2 in the chat if y'all can hear me. Should be okay. All right, cool. If you have rules and you don't follow them, then obviously you're not following them because it's your emotions, period. So that's why I give, like, you notice how, you know what's funny about everything that I do for y'all in terms of like when it comes to teaching and stuff like that and the frameworks and stuff, everything that I do is to make it easier for you to not be emotional. It's easier, I try to make it as easy as possible for you to not be naturally who you want to be. When I say naturally who you want to be, this is what I mean. If you don't have a strategy and you want to make a lot of money, that is a dangerous recipe because you don't have a system. So guess what? I'm like, all right, bet. But then if you need to have a system that matches your personality. All right, bet. Let's put a system together that matches your personality. Let's do that. I make sure every single one of y'all like, all right, bet. Let's put that strategy in place. Let's do that. Let's do X, Y, Z, right? But after that, it's like, okay, well, I have the strategy now, but it's like, I don't know if it works. So because you don't know if it works, you don't treat it like it works. So guess what? Guess what I tell y'all to do? I give y'all a strategy, then I have y'all paper trade first. The first thing I have y'all do, get the strategy, paper trade, practice it. And I want y'all to double y'all account at least paper trading. Before y'all even move to live trading, at least double the account. So if you start with 1,000, double to 2. You got 2,000, double to 4. The reason I say do that is because now when you move to live, you can't hit me with the excuse that you don't know how to trade the strategy because you just did it. You just did it. You had to. You had to double your account. You had to take it from 2,000 to 4,000 before you even hopped on a live account. Now, if you followed your strategy and you just didn't do some stupid trades and stuff like that to turn the 2,000 to 4,000 and you did everything you're supposed to do and you journaled your trades and all that stuff, then guess what? That means that you have a strategy that works for you that you know how to use and that you have used to double your account. So when there's no emotions involved, you are able to do a certain thing in the market. Now, when you hop on a live, when you hop on a funding, when you hop on these things, what's the thing that shows up? Emotions. But again, the whole point of the way I structure it is that it's like to give yourself evidence that you don't like because I told y'all like everybody that's passed the account before, I told every single one of y'all. Once you pass the funded account, passing it is not the hard part. Getting the funded part is the hard part. Like Chrissy, for example, was it hard for you at first, like to pass the accounts when you were first starting?
Yeah, say that again. Say it one more time.
Yeah. So was it harder for you in the beginning to like pass the funded accounts?
Oh, absolutely. Yeah.
But now, do you feel like it's?
I don't feel like it's as hard to pass the funded account, but it's something that happens with me when I get to the express account. I'm like, girl, do the same thing. And it's just like, I don't know. It's just like I just fall apart with that. I'm like, come on now.
No, but like, watch this. So notice what you did,
Okay.
and this is a development, and I want to stay here. You just said, and this is beautiful. You just said it was so hard to pass the funded accounts, right?
That reminds me of the part when you almost home. Yeah.
No, literally. It's like
I'm en route every time. En route every time.
But now you're just in the repeat, you're just in the same exact phase you were before. You said it was difficult to pass the combines, and now you said my problem now, meaning that the thing that was a previous problem is no longer a problem anymore. necessarily. Like it's easier for you to pass those accounts and stuff like that. It's not an issue. Once you get to the funded stage, that's when it becomes like a problem. Is that fair to say?
Yes, yeah, correct.
So that means that what was once difficult for you is now easy.
True. Right.
To the point where you just breeze past it. But in the beginning, when you didn't have evidence that you could do it, it was harder. Once you
It
did
was
it,
real
it was
hard.
easier.
Yeah, yeah.
So it's just, but again, what did you watch this? What did you do in order to pass it the first few times?
Now I definitely have more patience. I think that when I get to the express, I'm so excited. I'm just like, oh yeah, I'm getting ready to get a payout. I'm almost there. And it's like I trip right at the finish line. Like, girl, you didn't even hit the. Yeah, it's like that for me. I don't know about everybody else. That's what it is for me.
No, I think that I can speak for everybody else. I think that it is for drop a impatient in the chat. If that's your issue too. You just want that payout badly. Bad and like as if it was a name, Bad Lee. Last name Lee. But Chrissy, I don't want you to realize that you just answered your question. You just answered the problem. You just gave yourself the solution. You just said, let's put it together. You said it was difficult before to pass the accounts. You said now you're at a point where passing the accounts is not your hard part. It's getting funded. So you move from step 1 to step 2, and now it's getting from step 2 to step 3. I said, what did you do to get from step 1 to step 2? You said, because it was hard at first. What was the thing that got you over that hump? Being patient. You just said you decided to be patient. And then once you did it, watch this. A little like patience once allows you to now make the thing that was once difficult easy.
Yeah.
You had to be patient once.
Mm-hmm. That's good
To the
stuff.
point where now, watch this. You know what's funny about that? Did it take you longer to pass your newer accounts that you have now or the older ones?
Man, the older ones. You should see how many accounts there were. I'm telling you, I was getting accounts like I did have a real job. Like, oh, gotta get another one up. Blue Devil, gotta get another one up. Gotta get another. Oh, they on sale. Let me get 3. Man, it was terrible.
So watch this. You slowly burn those accounts, but now you can quickly pass these accounts now.
Yes, but I still be trying to practice patience because I feel like, yeah, the way I practice is the way I will perform.
Correct.
So I'm trying to move a little slower. You know what I'm saying? To help me when I do get to the fund that I don't be as excited and just blow it. Like
Sure, but it's a mentality.
it
So
is.
you
It
didn't have
definitely
that
is.
in the beginning, because in the beginning you were impatient. It was like I'm just trying to get this passed. So you were
What?
getting a lot
I
of
was
the
killing
accounts.
it in the practice accounts, like the ones like paper trading. So I'm like,
Yeah,
oh yeah, man, I was at $30,000 last week. Like, you know.
I can go to the
So it
funded thing
sure ain't
easy.
hard to get 3,000. That ain't gonna be a problem.
Yeah,
Okay. And I messed around and found out.
and then you found out that patience is the key. And then once you became
Patience is
patient,
the key.
once you did it once, I'm telling y'all just gotta do it once. Then it just became easier. You just said it became easier. Now you just pass the account. Now the problem is just getting the freaking payout. But the secret to getting the payout ain't nothing different than what you did to pass the accounts. It was the same thing. To get from 0 to 1 was the same process.
You right. I told you because I realized this, and I did write about that recently. Um, because I was like looking around, like, okay, I'm like, it's definitely me. It's definitely me. It's not my mentor. It's not the market. It's not, it's me. The 3 M's: mentor, market, and me. It's me. I am the Eminem for real. Like I'm like, this is my fault. So, because I had to write about it because I'm like, what am I going through? What am I feeling at the time when I'm doing this? It's like because it frustrates me to a major level where I'm just like, that's why I'm like, all this it does help. A major part of trading. The biggest part is the psychology. It's my mental state. It is. I know that. And that's why I said, no, it's definitely me. Yeah, it's me. It's me.
But we now identified that it's impatience. So, but again, that's the hard. So, what do you think? So, and I told y'all this on the prop firms. So, what do you think that prop firms are optimizing you to do? Rush. They're trying to optimize it for you because they know you want to get that payout. They know you want to. They want you to get that payout.
And remember, I told you when I did Top Step, what threw me off, like I said, that's how I know it's mental. Because when I would look at it at first and was the 50,000 getting to the 53,000, making you feel like, oh yeah, I got $50,000, I can get 53, that ain't no problem. Then when you get the real account, then it sit up and say 2,000. I'm looking like, I want to see this. Now I'm like, oh God, I'm losing $20. Let me get out. This is going against me. Like,
Yep.
you know.
That's why I said in the thing, I was like, look, that is not a $50,000 account. That is a
Exactly.
$2,000 account. That is a 2,000. They have 2,000, 3,000, and $4,500 accounts, and that's it. I think maybe like you might get like with the 300K accounts, they be like you have 9K in drawdown, but like that's a 9K account. But again, those are like that's you gotta look at it from that perspective. But again, the psychology of it, you can't treat it
And
what
that's why,
like
and that's exactly why they do that. They know that it probably messes with people mentally.
yep.
Even to
They get their
see,
money.
like, oh, I only got 2,000 now. I was working at first with 50. You get what I'm saying? So it's like, it really would mess with your psychology. You sitting up there like, oh man, I only got $2,000. I can't leave. I can't lose this. I don't want to get 4 contracts. I
Yep.
sure ain't getting 5. Let me just do this one. Add on 2. Like, yeah, it mess with you.
How many of y'all feel like that's your issue? Like impatience. Drop one in the chat if you feel like that's your problem. Like you get to the funded stage and you get impatient. And then you thinking about how much you can make. You thinking about how much like how to get that. Like I'm gonna get this payout. I'm gonna do this. Like drop one in the chat. Like real talk. If you feel like your problem is impatience, you feel like your issue is you just can't like because you have a goal that you need to hit with a certain time within a certain time period that you set in your mind. Not or maybe the prop firm set in your mind. And you feel like you gotta hit it at that time. Or you feel like the longer it takes you to like get this payout, the longer you're gonna be in the situation you're in. Keep it a bit. I'll keep it a buck. It's like longer. Like you feel like if you don't get this payout now, the longer those student loans are gonna be eating away at you. The longer I don't get this payout, I won't be able to take care of my parents. The longer I don't get this payout, like I won't be able to like provide for myself. The longer I don't get this payout, I won't be able to quit this job. The longer I don't get this payout, I won't be able to this. Like as long as I this is so watch this. When you say it like that, the payout, you're positioning the payout away from you and you're chasing it. Anytime you put anything outside of yourself to chase, you'll never catch it. That's why like you'll never make there's no amount of money that somebody can make them be satisfied. Because it's always a thing. It's like, oh, like this dollar amount, I'm gonna chase that. I'm gonna chase making money and stuff like that. It's like, no, you're never gonna stop. Everything that you watch this. If you chase anything outside of watch this. Oh my gosh. This is crazy. If you're ever chasing anything outside of yourself, how do I say this in a PG-13 way? How do I say this? If you know what? If you see some watch this. If you see somebody running down the street, and let's just say there's a truck. Let's say I don't know a better analogy for this, but so please forgive me by the way. Like please just drop forgive in the chat. Drop forgive in the chat. Just want to know y'all forgive me for how I'm about to word this. It's not gonna be like cursing or anything like that, but the analogy is gonna be a little interesting. Okay, cool. I forgot. Yeah, we grown here. You know, I'm one of the don't forget, I'm like one of the youngest one here. I'm still like I'm trying to, navigate that. But let's say there's a truck, and let's say there's cocaine, drugs, heroin, all that stuff is just in the back of the truck. The cloud of smoke of the coke is literally coming in the air, and the cars are zooming down the street. And there's a guy just running down the street just as fast as he possibly can, like I gotta get. He looks crazy. But you also watch this. Watch this. The thing that he's pursuing is the thing that he'll sacrifice. Watch this. He'll sacrifice the dignity that he does have internally to go get this thing externally. So you'll sacrifice. So watch this. What does that look like for trading? Like there's in any situation in life, now that I think about it, if there's for example, right? If there's a grown man chasing a little child, like a little boy or a little girl, something like that, that looks crazy, right? Like that's predatorial. If there's an animal, there's a tiger chasing an antelope, that's chasing, right? That's predatorial. So literally, bro, we're not doing that. That's not how we're supposed to position ourselves in the market. The market is supposed, watch this. If wealth is supposed to flow to us, then that means that we're supposed to position ourselves for it. So you chasing yourself for it. Watch this. When you chase something, you're automatically out of position. If you're chasing something, then that means you're out of position. If you're chasing something, anything in life, you are out of position. So how do we position ourselves in the market? Watch this. Think about this. In order to watch this, to reach at least 10 million, anything beyond 10 million with this strategy in terms of the strat and stuff like that, with futures, specifically futures, there's a limit with how many contracts you can trade without manipulating the market. Then you have to switch the strategy. Up until that point, I showed y'all the amount of volume that's traded on like NASDAQ and stuff like that on a daily basis is literally hundreds of thousands of contracts. So the only way you can move the market, quote unquote, is if you trade it at least over 1,000 contracts at once. Like you immediately put 1,000 contracts in the market. That's the only way you can move the market. Anything below that, it doesn't move the market. So technically speaking, if you caught, for example, today we dropped 200 points at least. If you got at the top 250 points, if you got in 250 NQ contracts and held it for 200 points, you just made $1 million on the trade on futures. No one, and you watch this, you ain't moved the market, so no one knows who the heck you are. You can make $1 million and be gone, done for the day. So watch this. That means that, so okay, you got to think to yourself, all right, cool. What strategy? Because you have to be confident to put 250. That's 5,000 for those who don't know. That's $5,000 a point. If you have 250 contracts of NQ, that is $5,000 a point. I know because I calculated. Because I plan on getting to putting 250 contracts in a trade at one point. Eventually, I'm going to get to that point, right? I calculated. That's $5,000 a point. What do I need to be doing? What do I need to be trading in order for me to be that confident to put 250 contracts in a trade? So it's not about, watch this, keyword, it's not about the strategy, it's about what I feel confident in. Because I can ask y'all, hey, so let me ask y'all real quick. If the trades that y'all taking today, the trades y'all took today, who traded today? Drop a one in the chat. Well, drop one in the chat. Because I'm about to, this is probably going to ruffle some feathers and it's probably going to check you a little bit. Drop one in the chat if you traded today. What's good, Vincent? If you traded today. All right, cool. Everybody traded today. Drop one in the chat. If I asked you, would you put, if you had the means to, would you put 250 contracts into that trade you took? What would your answer be? Yes or no? On any trade. So if there was a trade that you wouldn't have done that with today, don't take it. Then you wouldn't have taken it. How many of y'all? So Vincent said 1,000%. Vincent, but he's like, I know what I'm trading. So you would have put Vincent would have put 250 contracts. Would y'all have put, so LaShawn, Duluth, Chrissy, London, would y'all have put in 250 contracts into your trade if you had the means to? Were you that confident in that trade that you took, yes or no? Drop it in the chat. Not for me. LaShawn said yes. Chrissy said no. Okay. So I'll speak to this. If your answer is no, then you probably
shouldn't have been in the trade.
You shouldn't have been in the trade. It's as simple as that.
Yeah.
Because you should only be in trades that you
love
confident
it. Yeah.
But that's real though. But watch this. That keeps you from doing stuff. Watch this. Woo! We'll date. Watch this. Okay, okay. Yeah. Oh my gosh. I hope I don't offend anybody, but because I've been in that situation before with relationships. So please forgive me, everybody. I'm not even gonna look at the camera for this one. you sit here and watch this. You'll sit here and be selective with who you date and who you marry and who you be with, but you won't be selective with the trades you take in. You'll be real
You
selective.
better go ahead. And I'm real specific.
I need my man to be this. I need him to be this. I need him to
Yes,
be
yeah.
shaped this way up top and then this way at the bottom. And for all my guys, I need her to be shaped like, if she don't look like a wine glass, she can't be with me. She got to be this. She got to be that. She got to have this hair. She got to that. Blah blah blah. We're real picky about who we marry. We're real picky about who we date. We're real picky about, like, keep it a buck front. Some like, we real picky about who we sleep with. We be real picky about all that, but we won't be picky about our trades we take. We won't be picky about that. And then watch this. It's crazy. We won't be confident about that, but then we wonder why we're not getting the results that we want in the market. You should only be taking trades you're confident in, regardless of if it works or not. Regardless of if it works or not. Because you don't know if it's going to work. How many of y'all put a 1 in chat? If you haven't, my risk wouldn't allow me to risk even more, worry about that. No, Vincent, you're right. That's good. I missed the question about the trade today. Yeah, I said if you took the trade today, right? If you traded today, if you took your, like, if based on the trade you took today, would you have, if you had the means to, and still managing risk and stuff like that, would you have put in 200? Would you be confident enough to put 250 contracts into the trade? Yes or no? If you're trading NQ as an example, like NQ, that's $5,000 a point. Would you have been that confident to take that trade with 250 contracts? And I'll say, if the answer is no, that means that you shouldn't be taking that trade, because either you shouldn't be taking a trade, or you need to be more confident with your trade. Simple as that. So either the trade need to change, or you do. Either one. But you need to be confident in what you're doing, because, and the reason I say you need to be confident, and the reason I position it like that, is because the trade you take. If I take a trade with 1 MNQ and I catch 25 points, I made $50. If I take a trade with 1 NQ, 10 MNQ, whatever, I made $500 if I catch 25 points. If I take 10 NQ, 25 points, that's $5,000. 100 NQ for 25 points is 50 grand. 1,000 contracts for 25 points is $500,000. What changed? The amount of contracts. What didn't change? The strategy it took to get to that 25 points, because I can take up to 1,000 contracts without moving the market. So the strategy doesn't have to change. So if the strategy doesn't have to change, then do y'all realize that the same thing that y'all would do to grow an account with 1 MNQ is the same thing that you can take for 1 NQ, 10 NQ, 100 NQ, 1,000 NQ? It's the same thing. It's the same. It's literally the same. There's nothing different. So if there's nothing different, then then your only goal is to say, what is the thing that I'm confident in working, that I've seen work? That's why it's proof. Prove it to yourself. Prove it to yourself that you're confident in this thing. Prove it. What am I confident in? What setup am I confident in? For me, I'll ride a guy behind failed twos. Ride it out definitely if it's a 3 failed 2 reversal. Oh yeah, take it that all day, every day, twice on Sundays. I'll ride because I have evidence of that. I have evidence of so many. You know how many trades I've like hundreds of thousands of trades where just failed twos on any time frame, and they just go crazy. Like, that's for me, right? So I should be confident in those trades. So why am I not taking them? Because I'm focused. Watch this. I'm focused on the outcome instead of focusing on what I'm supposed to do. I'm focusing on the output instead of the input. I'm focused on. So watch this. Because you have that same talk. I know y'all. I know y'all. I know what y'all probably have done. You pass the account. You say, I passed it. And then after that sigh of relief, you get that huff of puff of greed. Like, now it's time to make some money. It's time to get that payout. It's time to get that thing. It's time to get da-da-da-da. And you start thinking about like what you gonna do with the money once you get it, and you ain't even get it yet. Or you already starting to think, oh, I'm gonna do this, I'm gonna do this, I'm gonna do this, I'm gonna do this, I'm gonna do this. So then you get discouraged when it don't happen, when you blow the account. Because it's like, I was supposed to get this payout, I was supposed to get this thing. But your expectations were, watch this. Your expectation, oh my gosh. Literally in life, if my expectation is based on what you can do for me, I will live a miserable life. But if my expectation is connected to only like my character and what I will do for you, then I can live a joyful life. You ever, hold on a second. You ever, watch this. You ever expect something from somebody and then they didn't meet up that expectation and then you got mad at them? You expected them to be a friend to you in a certain way. You expected them to care about you, love you a certain way, stuff like that, and they didn't do that for you. And then you got upset. Why did you get upset? Because you had an expectation that was unfulfilled. But the problem is you put that expectation outside of yourself. Literally, the Bible says don't trust man. First off, that's one thing. So, but you put your expectation and trust into something that's external. Why are you trusting something external? But if you say, you know what, watch this. But if you have the posture of, regardless of how this person treats me, I'm still going to show up this way for them. And I'm going to do X, Y, Z. I'm still going to be kind to them. I'm still going to be nice to them. I'm not going to be rude. I'm not going to be anything else. No matter how they treat me, I'm going to treat them independent of that. Right? Watch this. That allows you to be at peace. When you're trading, like expecting to get a payout, then watch this. Your expectation is tied to what that you can get instead of what you're doing. So you're focused literally on what you can receive instead of what you're doing. So watch this. How many of y'all drop a three in the chat? We're gonna switch it up. Drop a 3 in the chat. If you had the expectation you were gonna get a payout, you had all this stuff in your mind, you start trading, and then you just start trading so horribly that you fail the account. So you're over leveraging or over trading, and you're losing you're grinding the account down, you lose the account, and then you get discouraged afterwards. Drop a 3 in the chat. Drop a 3 in the chat. You had the expectation you were going to get this type of payout. Then you start trading, you trade bad, you over leverage, over trade, and then you blow the account. And then you don't get, and then you're discouraged afterward because you didn't get the payout. Watch this. Pay attention to the pattern. You expected to get a payout, so your focus is getting the money. You watch this. You know what's funny? I'm gonna show y'all something real quick. It's gonna be a little weird, but I'm gonna show y'all something real quick. Watch this. If I focus on that wall, I don't see y'all. So me focusing on that wall, me focusing on this plant, like my focus is off of y'all. What you focus on, watch this. Whatever you focus on just like blurs out everything else. If you focus on the payout, guess what's also blurred out? The strategy. If you're focused on making money, guess what else is blurred out? Morals. If you're focused on building, like watch this. I'm not even gonna speak to the president. I'm not even gonna do that. If you're focused on padding your pockets, guess what you'll satisfy? Guess what you'll sacrifice? Morality. You'll sacrifice anything to get, because you're focused on this. And then when you focus, but the problem is with trading, and this is such a beautiful dichotomy for trading. The way to get money is to not focus on it. Like the funniest thing, the way to get something in trading is to not focus on it. The way to focus on getting money in the market is to literally focus on a strategy that has a high probability chance of getting you money and just trading that disconnected from the emotions. So I'll say that one more time. The way that you get money in the market is by trading a high probability strategy that has the ability to give you wins, give you more wins than losses over a period of time, and you have to trade it disconnected, and disconnect from your emotions. Meaning, you have a setup that works. Watch this. If your setup, this is so good. If your strategy didn't have you, oh my gosh. If your strategy didn't have you, your account would be growing right now. If your strategy didn't have you, you would have gotten a payout by now. That's probably gonna hurt somebody's feeling, but it hurt my feeling a little bit too. Not even gonna hold you. I don't know if that resonates. If you, oh my gosh. If you didn't, your strategy doesn't work because you aren't. The strategy worked. How many of y'all have reviewed, we dropping 4s. Drop a 4 in the chat. If you reviewed your trade, if you review the day, you review the trading day, and you're like, dang, the strategy told me to do this. If I had done this, I would have gotten X. How many of y'all said that? 4. Drop 4s in the chat. I went through the market. I went through this thing. I went through this setup. I went through this. I could have took this 2 to reversal right here. I could have took this. I could have held it based on this. I could have caught 300 points today had I just followed the strategy. Sean just talked about time frame continuity, and not cutting trades too early, I got it here. Why the heck did I exit the trade? I could have kept holding the trade. So why did I do that? Drop a 4 in the chat. There should be more 4s. There should be more. I know there's more of y'all that literally have looked back at the market, said what y'all could have done differently that aligned with the strategy, and you didn't do it. But had you have done it, you would have, watch this. How many of y'all, there was a trade you were supposed to take, but you didn't take it. But if you took that trade, you would have gotten the payout that you've been looking for. Drop a me in the chat. I need me. Drop a me in the chat. If there was a trade you were supposed to take but didn't take it, or there was a trade you were supposed to hold, you didn't hold. But if you hold, if you held it, if you took it, if you held it, you would have been got your payout by now. And you wouldn't be watch this. You wouldn't be having to try to make up for you missing it by taking another trade that don't align properly. You were supposed to be married. Oh, okay, that's a whole other thing. Anyway, you were supposed to do it and you didn't do it. And now, because you didn't do it the first time, you're trying to make up for it by doing it in a different, like in a way that you missed the opportunity. Move on. This is the time you're supposed to move on. But we feel like the market after us. How do you feel like the market after you when the market gave you an opportunity to take it and you didn't? The market gave you the 2-2 reversal already. You could have took it. You could have took it. Why didn't you take it? You could have taken it already. The inside bar reversal, you could have taken it. You saw it. You were looking dead at it. You were in it. You exited. Why? Oh, I was up this much money. But okay, bet. But watch this. You just missed out on this much money now. So that compounding sheet that I showed y'all, where there's certain days where you're winning and losing and stuff like that, guess what? Those winning days, technically speaking, you're supposed to have those. The 2K to 1.4 million, that's possible. In 3 months, that's possible. But the problem is, watch this. That's possible if you show up to the market and just trade the way you're supposed to. If you traded the strategy the way you're supposed to, based on what you see, not like on some, oh, if I was in the market today, I would have, no, because you don't know that. But based on where you were looking at, based on what you did see, what did you or didn't you do? All of that, you can look at that already. You got to look at it from that perspective. Like, does that make sense? Drop one in chat if that makes sense. Like, you should have, you had it. It was right there. And watch this. This is the thing. And I need y'all to like you had it and you didn't take it, and you were supposed to take it, and you just missed out on the opportunity to get that payout sooner rather than later. But guess what? The opportunity is going to come back again. It's going to come back. It's going to keep coming. They're going to keep coming back. They're not going to stop. So because they're not going to stop, the question for you is, are you going to stay this same person when that next opportunity comes? Or are you going to do the work to not even do the work as in like lifting and doing squats and push-ups and all that stuff? Literally, it's just following the strategy and not caring about the outcome. Y'all don't know if you're going to, watch this. You don't know if you're going to win or lose on a trade. But if the strategy tells you to take it, you take it. The trade that I was supposed to take this morning, the first one, the 2-2 reversal, it's a failed 2-2 reversal. I'm not supposed to care. I'm supposed to think about the magnitude and stuff like that. But guess what? It's a reversal in the direction of continuity, period. Take it. If you lose, cool. But it's a reversal, a bearish reversal in alignment with bearish continuity. And you have a short target. You don't have a long one. You have a very short target. Take it. I was supposed to take it. Now, granted, I passed the account and stuff like that, and I got my money and all that stuff. That's cool. But I was supposed to take, but I didn't have to go through all that work to take those other trades. I could have just took that one. It was right there. But the reason I didn't take it is because I was thinking about whether or not it would work. But that's not my job. My job is not to, watch this. Your job, okay, I'm gonna keep it above for y'all. Look at me. Your job as a trader is not to determine if the trade that you take is going to win or lose. That is not your job. If you thought that was your job, I'm sorry that I either misled you or somebody else misled you. Your job is not to determine whether it's a win or a loss. Your job is to take it and then let it play out and then manage it based on your strategy. The strategy, like I tell y'all how to exit and how to manage positions. If it reverses against you on a smaller time frame, take some profit, cut the trade. And then if it reverses back in the direction, you re-enter the trade if you want to. That's an example of what that looks like in terms of managing position. Or what do I tell y'all? Take profit, leave your stop loss. Take profit, leave your stop loss, let the trade run. Y'all can do that. But that's a part of the strategy. That's a part of the strategy. It's not emotion. Emotion shouldn't be dictating what you do in the beginning. You can start doing that once you're farther and stuff like that. But in the beginning, you should just be following the rules. Because literally, if you just follow rules, like I showed y'all what the compounding thing was, that's a set of rules. You're risking 25 points, 50 points to hit for 50 points, 100 points, 150 points, 200 points, 250 points on NQ. We just had a day where we dropped almost 400 points, if I'm not mistaken, 300 400 points in one day. There was entries at the top of that could have been taken to hold it to that downside, risking 50 to 25 points. Had I not been on the funding and trying to just go for that 1-to-1 risk to reward on the personal account, I'm supposed to do that. But again, what's the gap between where you want to be with trading and where you are right now? There's characteristics, but they're all connected to the same thing. I'm gonna read the scripture again. Galatians chapter 6, verse 8. For the one who sows to his flesh will reap from the flesh ruin and destruction. If you keep sowing to fear and greed, if you keep taking fearful trades, because like the Bible literally says that like God does not give us a spirit of fear. We have no reason to be fearful. In this, especially in the market, even outside of God, believing in Him, none of that. Like outside of that, your life is not in danger if you lose a trade. It's a different thing if there's a predator like after you, there's a bear or a tiger or stuff like that, right? That's fear. That's fear. Because there's a real threat, there's a real danger. You losing money that's not a danger. And if that's a danger, you shouldn't be if that's a danger, you shouldn't be trading. Because we have to expose ourselves to that danger every single day. Quote unquote. It's not a danger. It's not a danger. So when we trade, you're not in danger. So you shouldn't be trading like you're in danger. Because you're not. So if you're not in danger, one, greedy. We're not supposed to be greedy. Trading ain't even for you, for real. We being honest, technically speaking, bro, for real. This I'm telling y'all this now. You're gonna get to a point where you made money with the market, and it's gonna give you these things like you'll get the car, you'll have your bills paid, you'll have all the stuff taken care of and stuff like that. You'll be able to go do stuff and like all that, and then eventually it's gonna get to a point where you get unfulfilled. You don't know what to do with your life, and then you're gonna start getting some money back or just doing different things like that. Like, oh, I'm gonna support these people, or I'm gonna donate to this, or I'm gonna feed this, like different things like that. Like that's what's actually gonna eventually like bring you like some like more happiness and stuff like that after all that stuff gets tiring. Like I'm telling like that it's the same cyclical pattern. So even with trading, it's supposed to make your life easier, yes, but it's a skill nonetheless. And the skill is supposed to, but again, you're supposed to steward it well. Don't grow like the next part of the scripture is let us not grow weary or become discouraged in doing good, for at the proper time you will reap. If we do not give in. Key word in this, for at the proper time we will reap, not on your time. At the proper time. Watch this. What is the proper time connected to? The proper time, watch this. The proper time is connected to the first thing that was said and the last thing that was said. So what was the first thing that was said? Let us not grow weary, meaning don't get tired or become discouraged in doing good. That's the first thing. Second, don't give in. You will reap if you don't you will reap from trading. You will reap that payout. You will reap growing your account if you don't grow weary in doing good or become discouraged in doing good, meaning you don't get tired of trading your strategy. You don't get tired of trading the strat and trading your actual signal and looking for that and taking that in the market. You don't grow weary in doing that. And then you don't give in. When you want to be fearful and you want to be emotional, stuff like that, it's like, nah, like I'm scared of taking this trade, but does it align with the strategy? Bet. Take it. Oh, I want to put a lot of sides on this trade because I'm trying to make some money. Oh, but does that align with how much contracts I'm allowed to use? Oh, nah. Okay, cool. I'm just not going to do it. Bet. I'm going to just trade with 2 contracts. Okay, bet. I was about to trade with 5, but I traded with my 1 contract that I'm supposed to trade with, or my 2 contracts I'm supposed to trade with, and I just took a loss, but that loss would have been much bigger if had I sized up. You see how like that thinking literally prevents you from making certain mistakes that we have made in the past. So let us not grow weary in doing good. What is good in this case for trading? The good in this case is if you have a high probability setup that works, watch this, that works without you, follow it. So that's why I like it's the same thing with God. I treat the same thing with God. Not the same, definitely not the same thing correlated, but God is good. I'm gonna follow him. If the strategy is good, just follow it. You don't have to deviate from it. You don't have to be emotional, fearful, greedy, none of that stuff. If you have a strategy that works, because if you say, watch this, if you say you want these things, if you say you want to pay out, you say you want this, then optimize for it. What do I mean by optimize for it? If the strategy, watch this, if you can look, if you don't even take any trades and you just look at literally right now, you check Monday, Tuesday, Wednesday, Thursday. You'll see there's trades that you lost if you take it based on a strategy, and you'll see the trades that you won based on the strategy. If I asked y'all right now to go through all those trades that you saw that you could have taken based on the window that you trade and stuff like that, would you have passed an account or made enough money in your account to get a payout? Drop a yes in the chat or drop a no in the chat. Drop a yes in the chat. If you look back through this week, the trades, Monday, Tuesday, Wednesday, and today, Thursday, if you add up all the wins and losses, would you have enough to get a payout or to have some money to withdraw from your personal account? Yes or no?
I'm driving, but I can't type, but yes.
Lift it up. So that means you had the opportunity. That means that disconnected from you taking the trades, the strategy would have allowed you to get to those, get to that payout. You're not, if you were confused about it before, let me break that now. You, in the beginning stages, we haven't been trading long. I haven't even been trading long. I've been trading for half a decade. That is not long in this game. It ain't. I haven't been trading long enough to have the discretion of what I feel like the market should and shouldn't do. I can have theories and thesis and stuff like that, but I haven't been here long enough. None of y'all have been here long enough. None of us have. So you should be trading based on a system that, based on data, based on statistics, based on the truth, works. That's why I love the strat, because it's like it just eliminates all of that if you let it. If the strat by itself, because I've showed y'all compounding and what that looks like. And I've showed y'all can compound literally from $2,000 to $1.4 million in 3 months. Like if you're winning 60% of the time, and then also $2,000 to the $200,000 in 3 month time. If you took 2 losses and 2 wins in a no trade day, and you were still going for trades that were 50 points, 100 points, 150 points, and days like this show up, and you're still taking 25, 50 point losses if you're trading NQ, right? The strat allows you to take those trades disconnected from you. So if the strategy can do it without you, then the question for yourself is, how do I position myself to not get in the way of what the strat is going to do for me? How do I get out of the way? And LaShawn, you might have to write it down. How do I get out of the way so I can let the strat do for me what it is supposed to do? And this is where the expectation, because now the expectation isn't necessarily in the strategy and all that stuff, because you're not expecting anything over a trade by trade basis. You're expecting it over a long series of trades. The strat works. Period. The strategy works, like the way that you trade the strat, it works. You've seen that. Otherwise, you wouldn't have even gotten to the point where you've shown yourself even in a paper account or passed an account and stuff like that. You have taken trades that have demonstrated what the strat can do when it's customized to you. You've shown it to yourself, so you know it works. So now it's just like, all right, bet. I need to position myself to not be in the way of the strat working. That's your job. So that's for everybody. That's honestly what I want y'all to take from it. How can I position myself to not get in the way of what's working and what will get me what I desire? And then watch this. Once you do that, don't grow weary in being there. Because that's a position. You have to watch this. If you position yourself in the way of somebody getting past you, they can't get through. That's based on your positioning. You need to move yourself out of that position and let it through. And then also don't grow weary in not being in the way. When I say not grow weary and being in the way, bro, don't get tired. Don't get discouraged. Like, okay, bet you took a loss with the strat. Cool. If you did it based on how you were supposed to, you would have took a small loss. So if you took a small loss, cool. Call it a day, brush it off, move on. Don't grow weary in doing good. Don't say, oh, I need to make this money back. Or I need a revenge trade and stuff like that, and I need to get this money back. Don't get, because watch this. You got discouraged by the small loss, and then you went and turned it into a bigger loss. Drop a 2 in the chat if y'all have done that. Drop a 2 in the chat. If you had a small loss, you got discouraged by that small loss, even if you trade the strategy to right, you got discouraged by the small loss and you said, you know what? I don't like that I had the small loss. I want to get this back. I want to make this money back, and I don't want to be here anymore, because you got discouraged of doing good. Because you probably took that, because I'm pretty sure if you took that small loss, trading the strategy you were supposed to. You took the big loss, trading the strategy in the way you weren't supposed to. If you took a small loss, you traded the strategy the way you were supposed to. If you took a big loss, you traded the strategy in a way you were not supposed to. So again, don't grow weary in doing good. If you took a small loss, don't get discouraged. So notice how it says, let us not grow weary or become discouraged in doing good, for at the proper time we will reap. That means don't grow weary in doing the right thing, and don't get discouraged if you do the right thing and you don't and it don't work out the way you want it to right now. Don't watch this. Don't get greedy when you take a winning trade. Don't get fearful, and don't get revengeful, and don't get angry, and don't get upset, and don't get sad when you take a losing trade. Can I get an amen, somebody? Don't get greedy when you take a win. Don't get fearful and angry when you take a loss. That is that for us, in the context of what we are talking about right now. Let us not grow weary or become discouraged in doing good. Let us not get greedy when we make a win, or when we watch this. Let us not get greedy when we pass a funded account, because when we pass a funded account, it's like, oh, bet, like, I'm about to get a payout. Nah, like, simmer down. Like, I'm not about to get this payout. The strategy is about to get my payout. This system that I created, that's built for me, that's about to get my payout. So I'm about to just focus on that. Y'all don't watch this. This is funny. Y'all, I don't make. How many of y'all think I make money? I don't make money. First off, there's printing money, right? I didn't today. I took the $1,500 trade, passed the account. Cool. After I passed it, funded it, and went to the funded stage, I need to get my daily win. I took another trade, and then that trade made $393. So I got my win. I didn't make money today. The strat created an opportunity for money to come my way. I just took a 2-2 reversal both times. I took a 2-2 reversal to the downside. I took a 2-2 reversal to the upside, and I got my $1,500. Then I got the $400 roughly on the funded account. I didn't do that. The strat did. I took a 2-2 reverse. Watch this. I just allowed the strat to do what it's already supposed to do. Probability speaking, failed 2-2 reversals work from a probability perspective. With continuity, they work even more. With broadening formations, when they take out a low and they start to reclaim, they're most likely going to take out the high. From a probability perspective, the strat made me that money. If I didn't take, watch this. If I didn't take it, if I didn't allow the strat to work, I wouldn't have made that. If I didn't take the 2-2 reversal, I wouldn't have made that. The strat is what did it. My strategy that's customized to myself and how I like to trade and stuff like that, that is what did it. I want y'all to have that perspective. You aren't making money. You aren't the one doing these things, and that's okay, because you don't need to. You don't care. Would you care? Watch this. Would you care if you said like, oh, like, do you make like I just saw you pull like $100,000 off the market. Oh, like, how did you do it? Oh, I didn't do it. I mean, like, watch this. You have the $100,000 in your bank account. Oh, I didn't do it. I just did this, and you shout out the strategy or this. I just did this strategy, and this strategy did it for me, and then I just took that and just followed that. I was just being obedient to that. Doesn't that sound familiar to how blessings work? Like, oh, like, how do you feel like you got blessed to do da 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 da? Oh, well, I mean, I wasn't really trying to look for that. I mean, this person really helped me and put me on stuff like that, and then they just blessed me with da 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 da. I was just not focused on that. So again, that's the posture we need to have. You shouldn't be focused on the output. If you focus on that, that shows where your heart is. Focus on things like literally the Bible says focus on things that are above, right? But what that's talking about is focus on God. Focus on good. God is good. So focus on good. When it comes to the strategy, in terms of trading and stuff like that, in that context, focus on what's good. Focus on what's working. Focus on what got you here. You got the funded account. Watch this. You were paper trading, going stupid. You got the funded account. You passed that. You went crazy. Now you're trying to get the payout, and it's like, it's hard. It's like, guess what? Everything that has gotten you to this, like, if you did it in a paper account, if you did it on the combine, nothing changed in the funded account stage. Nothing will change on a personal account. Nothing changes. The only time that changes is when you start trading 10,000 contracts at a time. Does anybody in here, what is 10,000 contracts? 10,000 contracts, 10,000. So what is 10,000? 10,000 times 1,000, if I'm not mistaken. What is that? I think I know what it is, but I'm just to make sure. 10,000 times 1,000. That's $10 million per trade. Does anybody in here have over $10 million in y'all account? Nobody? Drop a no in the chat if you don't. Drop a yes in the chat if you do. If you do, I want to talk to you real quick because I got some I got some bills due. And you got it. So hey, not yet. Amen. Yes. Hey, Chris, I got some stuff I gotta take care of. You know what I'm saying? But okay, so if y'all don't have $10 million, then all you gotta do, whatever you did in the paper for futures, whatever you did in the paper account, because it's strictly price action based. If I have if I'm trading M&Q and it's $2 a point and I catch 50 points, I made $100. Period. There's nothing else. So a paper account doesn't differ from a combine account. A combine doesn't differ from a funded. A funded account doesn't differ from having a $10,000 account. A $10,000 account doesn't differ from having a $100,000 account. $100,000 account for futures doesn't differ from having a $1 million account for futures. It doesn't matter. Because any trade that you take up until that point, you won't be affecting the market. That means that you can trade your strategy. If you trade your strategy perfectly to the T, you will go from paper account all the way to $10 freaking million in your account without having to change a thing. So if you just have one thing that works, you just have to keep doing that long enough, you will get that result, period. Because it works no matter the market conditions. So if you have something that allow you, all of you right now have something that have the strategy and stuff like that that will allow you to do that. So you have something that allows you to do that, but now you have to allow it to do. Oh my God. If you have a strategy that makes you money, you have to allow the strategy to make you money. I need to write that down. If you have a strategy that makes you money, then you have to allow it to make you money. If you have a strategy that allows you to take $1,000, $2,000, $5,000, $10,000 trades, then you have to allow it to take $1,000, $2,000, $5,000, $10,000 trades. Period. You have to get out of your way. Because every single time I can almost bet my money on it. I can bet money on it. Every single time. It wasn't the strategy. It was you. You either didn't take the trade or you took the trade, you exited. When you weren't supposed to. But I love y'all, man. Like, I got this. Trading is just a reflection of what's going on up here and what you're able to just bring out. That's it. That's all it is. And for Chrissy, LaShawn, and me, like, bro, we press buttons for a living. Think about that. We press buttons for a living. And eventually for everybody else in here, if that's your goal, like, you will be pressing buttons for a living. So it ain't hard to press buttons. And then even if you don't got fingers, you can tell it, hey, enter the trade. They got that now. So it's like, all we got to do is press buttons. There's going to be some difficulty somewhere. If it ain't going to be difficulty physically, taxing, like, I see, like, bro, Nas, like, I see you right now, you're driving. That's physical. That's work. We have the ability to go in the market, press buttons, and have money flow into our account. And all we gotta do, we don't gotta kill nobody. We don't gotta steal from, well, technically speaking, we don't gotta steal from nobody. We're just transacting. It's a market. We're not, you know what's funny about that? We're not stealing because they place the set. Like, the only way that a transaction can happen is if, the only way a trade can happen is if there's somebody on the other side that's willing to receive it. I can't buy something that isn't sold. So that means that somebody's already selling it. So that means that watch this. That just means I had the better end of a deal for a certain period of time than they did. So we're not even stealing. We don't have to steal, kill, destroy anybody. We don't have to do any of that. We literally don't have to do any of that. We just have to press buttons based on a strategy that has already proven us with data that it works over a long period of time in different market conditions. And our only job is to show up and let it work. You just got to show up to the building, unlock it, and let it in, and then don't stop it from working. Don't stop it from painting. Don't stop it from setting up the drywall. Don't stop it from building. Don't stop it from setting it up. You let it cook. And that's hard because we want it set up a certain way, and we don't give it enough time to actually work. A house don't look good until it's finished. But the problem is we don't treat trading the same way. We treat like a small loss as like, bruh, I can't have this small loss. But it's like, bro, it's one loss. And it was small. If I ask all of y'all right now, would you rather lose $200 or $2,000? Every single person would say, matter of fact, drop it in the chat. Would you rather lose $200 or $2,000? Drop it in the chat.
$200?
Would you rather lose $200 or $2,000? Everybody, okay, 200. Chrissy, okay, everybody else apparently wants to lose $2,000. Chrissy wants to lose 200. LaShawn 200. Nas 200. Anybody else? Would y'all rather lose $200 or $2,000 on a trade? 200. All right, cool. If you would rather lose $200 on a trade, then why are y'all blowing y'all accounts? Why are we blowing our accounts? You have to change watch this. You have to change what you say you want or change for what you say you want. If everybody here is saying, oh, I only want a $200 loss, I don't want a $2,000 loss, then why are we blowing accounts? Because I know for a fact, I can bet money on this. There's nobody in here that has taken a $200 loss 10 days in a row. Nobody. And if you did, see me, please. I will do a one-on-one with you personally so we can fix it. Because that's the problem. Because how do you lose 10 days trading the strat? Not my strat. Not my strategy. We gotta fix this. This can't be in the street. We can't get this posted. Absolutely not. No, let's fix this. Let me know. Somebody, anybody, like, did anybody take 10 losses in a row? 10 small losses in a row with the strat, like keyword with the strat. I don't care about any strat. With the strat and blown the front of the account. I can almost bet money I haven't. And I know exactly how it's done. You either lose too much, too fast in a few days. I can almost bet that most of it was lost in either 2 to 3 days. I can almost bet money it was lost in 2 to 3 days. Not even 4, not even 5. Probably not even 2 weeks. Definitely not 2 weeks.
Hey, mine's is 1 day, bro. That's my average.
I'm already knowing. It be me too. I be quick, like quick. But watch this. How you lose also shows where your mindset is too. You rather lose quick. That's the opposite. opposite of the strat. We cut losses fast. So watch this. If the mentality is cut loss fast and you out here losing accounts fast, then it's like there's a disconnect. What are we doing? What are we doing? You're not aligned with the brand. You're not aligned with the mission statement here. So if you're not aligned with that, we need to give the program. Everybody in here says they would rather lose $200 than $2,000, but their trading doesn't show that. Our trading doesn't show that. We have that in the back of our mind. When we get in the market, it's not the same behavior. We need to trade that way. If $200, watch this. If you'd rather lose $200, then watch this. Would y'all rather lose $200 than $400? Which would y'all pick? $200 or $400? Depending on your account. If you're trading a 50K combine or something like that, or you're trading a 50K account, you would probably most likely rather lose $200 than lose $400 on a trade. So if we rather do that, then why would you take a small loss and then you say, you know what? I'm gonna try, like, watch this, not based on the strat. You did this out of emotion. You wanted to take another trade. And then watch this. You look back at it and you're like, I shouldn't have taken that trade because it was an inside bar on a higher time frame. And you shouldn't have taken it. And then it's like, you look back and you say, like, why did I take that trade? Now you just added a loss that was unnecessary. Because you were focused on getting that money back or taking another trade that was going to win instead of looking at everything that you were supposed to look at. So you saw one part of the strat and then you neglected the rest because you're focused on, because all you can focus on the bare minimum you need to get, that win that you're expecting, and then neglect everything else. So you saw the actual signal, but you didn't see the higher time frame inside bar. You saw the actual signal, but you saw that we were still stuck inside that mother bar and we didn't take out a previous high or previous low. And then the actual signal failed, and you're like, well, why the heck did it fail? Da, 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 da. And then you get mad at the strat, and then it's like, all right, let me try another strategy. And it's like, that's not the problem. We have to change what we say we want, and we have to change for what we say we want. Period. That's the only way. So the takeaway from this, y'all, like, there was a lot of takeaways, and I want y'all to go through this, and I'll probably have to go through this too myself, just to go through some of the notes. But like, bro, based on the scripture, again, let us not grow weary or become discouraged in doing good, for at the proper time we will reap if we do not give in. Do not grow weary in doing good. Like, don't grow weary in, like, taking a win and passing the count. Don't get discouraged when you take a small loss. Keep going. Keep trading the strat. Keep doing what you're supposed to do. The last part of that scripture is, for at the proper time we will reap if we do not give in. Give in means don't give up. Don't throw in the towel. Don't be like, I took the small loss and I don't like it. No. Like, keep going. Keep going. Keep pushing. Every single one of y'all got fingers, right? Y'all can press buttons. Y'all can press buy, sell. If you log into the Zoom, I mean, you have the ability to press it, because you had to log in. You had to click to log into the thing. You had to click the link. So you had to be able to click the link to join the Zoom and be here in the class. Then that means you have all the faculties that you need to trade. So if you have all the faculties you need and you have the strategy you need, then now your only job is getting out of the way. LaShawn wrote in the thing. I think she's gonna post it. But again, if your strategy makes money, then let your strategy make you money. That's the perspective. Your job is not to get a payout. Your job is to let the strategy get you a payout. How do you let it do that? If it told you to do something, just do it. You ever be at somebody's house and they put something together and then like, hey, can you go do this for me real quick? Hey, can you take the water from out there and put it in the cooler real quick? I'm trying to make sure I get that stuff cool, because we're gonna bring the drinks out there and stuff like that. Yeah, I got you. You not running the party, but you're doing a component that allows the party to be good, because then somebody can get a fresh cold, like a glass of water or something like that, or some cold water. You're playing a part in a bigger picture. And we'll do that with ease. You're doing the same thing with your strategy. Your strategy say, hey, we got an actual signal right here with continuity. Can you just press buy real quick and take that for me, please? Yeah, I got you. All right, cool. You know, it has you to do something. Just do it. It don't matter how it turns out. It was an instruction. You don't watch this. You don't know the outcome. And if you'll only do it based on if you know the outcome, then you shouldn't be trading. Because you don't know. This is a probability game. So if it's a probability game, what's the root word in probability? Probably. Not guarantee, not certainty, not this will happen. This is probably this will probably work based on evidence that this is not in the past. This will probably work. We're trading probablys, but that's okay because that's all you need to probably. We wake up to probablys every single day. We don't know if we're gonna come home the next day. We don't know. God willing, I pray every single one of y'all do, but we don't know. Nobody knows. No, every single one of the people on the call, y'all don't know when y'all last day is gonna be. You don't know when when something in your life is gonna happen. You don't know when you're gonna go to this trip in the next 15 years or something. You don't know what's gonna happen. You don't know the future. Nobody knows the future, but we're still here because we don't have to know the future in order to live. We don't need to know the future in order to know like how to do all the stuff and how to carry ourselves. We don't need to know. We just need to keep showing up. And we can show up the best way that we can. And that is what trading is. Just show up the best way you can. You don't have to know what's gonna happen. Because watch this, for the sheet that I showed y'all, the compounding sheet, that literally is random. It takes into account the probability of something happening or not. So the probability of you winning, the probability of you losing, the probability of you not trading and stuff like that. It takes the probability of that in and it still grows from $2,000 to $200,000. That means that even when the probability is quote unquote not in your favor, because that's a 40% win rate on that strategy, that compounding thing, by the way. That is a 40% win rate. If you want to call it 50% win rate, that's a 50% win rate. And it still goes from $2,000 to $200,000 in 3 months. Not a year, 3 months. So even when the odds are quote unquote stacked against you with consistency, probability will still win because you're trading the strat. And it will give you those opportunities to be able to make that in the money, if not more than that. Actually, it will give you an opportunity to make more than that. You just gotta get out your way. If you're trying to get a payout, if you're trying to make money from the market and stuff like that, so that you can reach a goal or reach an objective that you have, then just get out of the way and let the strategy cook. And then when you get out of the way and let the strategy cook, don't grow weary in letting it. Don't get discouraged when you let it and it don't look like the way you want it to look. Keep letting it cook. It's a probability game. You're not gonna win every single trade. And get off social media too, because they're showing you like, oh, I can win every single day. Da, da, da. Maybe you can, but guess what? You're eventually gonna take a loss, and you don't know what they did to do that. And it doesn't matter because you don't have to win every day to get that result. I just showed you. You only won for the 2K to 200,000. You're only winning 2 days a week. The other days are losses and no trade days, and it still grows to that. So that means that to win, you don't even need to win every day. Your job is literally not to win. That literally debunks the whole thing. You think I gotta win every single day in order to? No, you don't need to do that. You don't need to do that. That's the crazy thing. All right, y'all. This is gonna be like I think this is gonna be a really good class for y'all to go back to. Not gonna lie, cause this is literally it. Like there's nothing else. The strategy works. Showed y'all the data. Showed y'all what it could do. Y'all see what it could do. Shoot, taking the trade. I've seen every single one of y'all has taken a great trade. Delu, I know you're taking a great trade. Tyree, I know I see you on the thing. I know you're taking a great trade. LaShawn, I know you're taking great trades. LaShawn, you took a $10,000 freaking trade. I know you can take those. Chrissy, you taking great trade. You've taken great trades and gotten out of some, but like you can still you've taken them. So now the only thing is just holding those and letting them play out and stuff like that. But again, what does that go back into? Letting the strategy cook. Getting out of the way. Don't getting discouraged. Watch this. Growing weary and holding. Don't grow weary in holding a winning trade. If your trade is winning, take profit. I'm not mad at that. Exiting, no. Don't grow weary. Keep thugging it out. The shot ain't tell you to exit. Keep holding. Don't grow weary in that. If you lost, take a small loss. Don't get discouraged. There's no reason to. Was this helpful for you? Was this helpful for y'all? Drop a one in the chat if this was helpful, or yes in the chat if this was helpful. I want to make sure this is helpful for y'all. And if it wasn't helpful for y'all, I ain't gonna lie, I think it was helpful for me because it
Yeah,
was my mind. Shoot,
it was helpful, bro. It was helpful.
That's good. Double you in this bag. No, for real. I think I'm not even gonna lie, because I'm gonna shift some things and stuff when it comes to the mentorship and the style of it and stuff. But what I think I'm gonna do, I'm gonna do like consistent, like weekly calls for psychology. I think I'm gonna do weekly calls like this, um, weekly or bi-weekly, like just or even like obviously for y'all, but if y'all need me to do it occasionally, I don't mind doing it. But nah, because I realized going through the curriculum, going through the mentorship recordings and stuff like that, like y'all literally. I think LaShawn said it. She was like, "Bro, like, what do you need to add?" I'm over here telling like, I think I should add this. I think I should do this. She's like, "Bro, what do you need to add? What do you need to add? Everything's good." I just went through the recording and just did this. We need to add. But I realized that accountability portion, because it's good. I know for myself the information is good, and I know that when you apply it, I know what you can get. But it's also the application part. And I've been dwelling on the information part instead of the application. So I'm gonna optimize it. Definitely gonna work on optimizing it for that. Because obviously we're still gonna have the lessons and the mentorship class and stuff like that on the information and stuff like that, so y'all can apply it. But no, like I think this will be good for y'all because I know I used to do them before, but just doing those with the classes was hard. But I was like, bro, with this new structure, I think this will be very beneficial for y'all. Not gonna lie, because I got this. Like literally, you have all the information that you need. You have it all. You have everything you need. Now, the only thing I gotta do, I'm just be in your ear and hold you accountable to doing what y'all supposed to do. Because y'all know how y'all supposed to trade. I already know what y'all setups look like. So yeah. It was good, Nas. I just saw you
Yeah. Nah, what I was gonna say is one of the things that helped me is having that daily hard like uh loss thingy on Tradovate. Like you know how you can limit how much you can lose a day and how much you can make a day.
Mm-hmm.
Yeah. So I used to have a very hard time like following my rules, especially on red days. And I started like doing that on Tradovate and I started recording myself with the trades. Honestly, bro, I feel like I do way better and I trade better right like 30 minutes after the market open, which is that 9 a.m. for me, 10 a.m. for you. So
Yeah.
um yeah, man, I just feel like I've been doing a little better. I'm not gonna lie to you. With my live funded account, I lost like $700 or $800 this week, and I just stopped trading it. And now, right now, I'm just trading my funded prop firm account, trying to pass that. I got some money today out the market, so I only got like $800 to go to get this funded. But yeah, bro, I'm working on being more patient because I'm not gonna lie to you. Like you said, I had trades where I knew I should have taken it, but I was scared because I just took a little loss and it ended up playing out perfectly, you know?
Yeah.
So
They come, bro.
yeah. And like you said earlier, you reap what you sow. What I realized is, bro, every time I blow an account or I take losses, especially big losses, is when I don't follow my rules, start sizing up and revenge trading. That's the only time. So I'm working on that too. But thanks for the tip of trade recording myself while trading, bro. Cause I'll be just watching myself. And I'm
Well.
like, what was I thinking right here? Like, who is this guy? Who is this guy? But I appreciate that. But that's all I wanted to say.
No, for sure. I'll tell you, like, personal experience, like, because I never really wanted to look at myself or look at how I trade and stuff like that. But nah, like recording your trades and stuff like that. Um, you just screen record. Like, you can use you can screen record or even what I'm using for this class is Fathom. So you can use Zoom And you don't even need, I don't think you really need like the paid one either. You use the free Zoom, I believe. And then you set up Zoom, you screen share to your TradingView and stuff like that. 'Cause I think it limits at like 40 minutes to an hour on the free version. But then Fathom, that what I'm using right here to record the thing and stuff like that, is free too. So you can literally get both for free. Record your trades like that, kind of like a Zoom style. And then what I like about Fathom is I have notes from the calls and stuff like that. So you can actually do that. Or you could just, again, just screen record it, upload it to like YouTube and unlisted or something like that. Or you can do it on TradingView. Like use that TradingView publishing feature, and you could do that on TradingView. There's a thing, if you go on the top right corner on your, like on the chart, you'll see it literally says publish or something like that, or in like the camera icon. Matter of fact, I'll just pull it up right here just so it just for y'all can see it.
Yeah, let me see that. I never knew that.
Yeah, top right corner right here. There's the image, and then there should be publish. And then you just click right here, record video idea, create market moving videos. And now it's gonna ask me to like allow and stuff like that. And then I'll be able to, once I click allow, it'll start recording. And then yeah, it'll literally just pick up your audio and stuff like that, and then it'll literally record your thing. And I think if I'm not mistaken, it'll allow you to download it to your computer, and I think it'll upload it for you to your personal like library of stuff for your account. So yeah, literally
Okay.
you'll be able to have all that stuff in. I think you'll be able to have all that stuff in TradingView, if I'm not mistaken. My profile. Let me go to this real quick. Let me just see if I can do it. I'll show you kind of where it'll be hosted, but yeah, you can literally do that in here. Yeah, so I think yes, this is myself. These were, I used to do these on TradingView. You record them, and then I'll mark out like everything, and I'll talk about win, a loss, like when you're doing a solid trade and stuff, and then it'll be here, and I can have notes and stuff like that on it. I've been doing this for years, but yeah, so that's a way.
That's
You
good
do
stuff. I swear,
Yeah.
TradingView be having so much.
it. Look, I don't
Hey,
tell you
I
I do something I
appreciate
don't
that.
know.
Thank you. Thanks for even giving us a heads up that he even told you to do it. That was good.
Yeah, I appreciate you reminding me, because I just be giving advice to y'all just based on what I notice about what you're doing. But that's why I love group, because like I'll say something and I'm like, oh, this applies to somebody else, like that, because he just asked me, because he had asked me that advice like specifically on what he could do. And I was like, I mean, just journal your trades, like journal and document them, and just like look back at what you were doing right and wrong, so that you have a visual of like, oh, this was right. And that's just a random advice, because I do that, but I do a whole bunch of other stuff that will help. So that's just one thing. But now that he brought it up, I'm like, oh, man, I can share that with y'all. Show you how to do that. You saw I have stuff from like 2024, and I think probably like 23, 24, 22 or something like that. But yeah, I do that too. But that's why I love group. But yeah, that's what I do. Record your trades. Look at you. Like, because again, like the whole purpose is it goes all back to the same mission. Just confidence. Like you gotta be confident that it works. Watch this. The more confident, this is so good. Thank you for right. Shout out to you, Nasir. Appreciate you, dog. Cause you just put me on another place. How many of y'all have children? Drop a one in chat if you have a child. Okay. I want y'all to drop. Well, I think I know pretty much everybody that's a parent in here. But like, Vince, you got a kid? What? Hold on. Wait a minute. Oh. Hold on, I forgot. Wait, did I forget, or this is this new? Hold on. That's two? Hold on a second. Oh, this is oh wait, I think I knew, but I think because like Vincent, you young. Like you're not, you're pretty young. So I think like in my mind, I'm like, oh nah, he nah. I think in my mind, anyway, let me we gotta talk. We gotta talk. What we talk? He got twin. No, we gotta talk. Cause I think in my mind, because so I'm 23. So I'm like, I'm not having kids anytime soon. He said he grown out here. No, for real. I don't know why that slipped my mind. LOI got to start early. Hey, come on now. But no, like what was that just distracted me. But what was I gonna say? Okay, yeah. So if you got kids, right? When they first get in the car and you driving with them, bro, you scared it's a sugar honey iced tea list to have them behind the wheel because like they gonna crash this. You worried about them crashing the car, you worried about them hitting somebody, you worried about like a whole bunch of stuff. You just worried, just scared out your mind, right? I don't know if y'all can agree. I don't know. This is just at least my mom was. I was, and I'm not even a bad driver. Well, now I'm a bad driver, but like before, I was a nice driver. I was nice. You know, I was kind on the road and stuff like that. You know what I'm saying? But in the beginning, you weren't confident. You had no evidence that they were going to be able to drive this car properly. You had no evidence of that. None whatsoever. But over time, with repetition of them driving, you still might be getting on their nerves and they might be da da da. But then eventually, like my mom don't be complaining and stuff like that when I'm in the car because she's been with me driving enough to just be confident in me doing it. Confidence, the root word of confidence is confide. Broke that down. Con is complete. Fide is the word for trust, the Latin word for trust. Complete trust. I have confidence in my shooting ability. I have complete trust in my shooting ability because I have evidence. So again, with trading, it's the same thing. If you have evidence that you can do it, probably you gonna trust yourself more. Oh, I took this setup with the strat. Okay, like this was, and then it paid out this way. It did this for me. It was this. You know what I'm saying? But that's confidence. You build that confidence by journaling and documenting your trades. You publish them and you look back at them and like, oh, this is a trade I missed. This is a trade I took. This is what I need to do. And you visually can hear yourself, see it, and you like know the state of mind you were in based on because it brings back the memories. So it kind of puts you in the position of where you were when the trade was happening. That's why I say record the video. That's why I tell y'all journal. And I tell y'all to like record this stuff. Honestly, I'd rather y'all do visual journals. I think recommended going forward. I think y'all should do visual journals. I'm not even gonna hold you because they help so much. You don't have to make them public. Just make them private. But then you can just do that because it helps build the trust so that watch this. You can trust the setup enough to the point where you just let it happen. You see it again, bet I'm gonna take it because my strategy told me to. I trust it that much. I'm gonna just listen immediately. Oh my gosh, can you get to the point where you trust your strategy enough that when it tells you to do something, you do it immediately without hesitation? That needs to be written down. Are you at a point where you trust your setup and right where you trust your strategy enough to where if it tells you to do something, you do it immediately without hesitation? If the 2-2 reversal sets up with continuity, you should take it immediately. Period. Because the strategy told you to. Can you get to that? Like, are you at that point? And if you're not at that point, then you get to that point by repetition of seeing that you can do it and seeing that, and then repetition of doing it. Because seeing it allows you to do it. If you ever see a bear in real life right in front of you, that you're gonna run. Seeing it is what caused the behavior change. Because you can see it, and then you put the work in to actually do it because you have enough proof where it's just like, bro, I'm gonna just do it. So that's why I recommend y'all journal. Definitely recommend y'all journal. Recommend y'all like do that because that will honestly really, really, really help with that. That'll definitely really help. But again, long story short, basically tying everything back in. Again, let's not go where we ain't doing good. Don't get discouraged. Like, don't be greedy. Don't be fearful. Just allow the strategy to do what it is supposed to do. Just let it do what it's supposed to do. All y'all have y'all archetypes in terms of how y'all trade and stuff like that. So yeah. Quick question: are you getting the error on Tradingview while setting an alert? And I haven't recently. I think I set one earlier. I didn't get one. I can check again though, but I haven't. I'll check again though. But yeah, y'all. Yeah, that's all I got. This is all I got. But nah, I love y'all. Like, I want to see y'all win more than anybody. I don't care. None of that. I want to see y'all win. And that's why I was so excited tonight. Cause I'm like, I just need to share with y'all and remind y'all again, like what it takes for y'all to win. Cause I know what's possible. Trading is a beautiful thing. Like trading is like, it's such a beautiful thing. Like literally we press buttons. We press buttons. We press buttons for a living. We press buttons for a living. Press buttons for a living. And we just follow some strategy that has like a lot of evidence of being proven right. And that's our life. That's what we do. And we do it for like an hour, 2 hours a day, maybe longer if the strategy tells us to hold it longer. Sometimes we gotta stay overtime. Think about it. If a strategy tells you to stay overtime, like to not even stay overtime, check the like take a trade on like the lower time frame. You hold it based on a 1 hour time frame. It keeps going. It goes two down, two down, two down, two down. You check it every hour, 5 minutes before the new candle flips. If it's about to reverse, guess what? Exit. And you just do it like that. So sometimes we gotta like watch this. Sometimes we gotta put in overtime to make an abundant amount of money in the market, and that's okay. It might not be okay for you, and then that's completely fine. You can make $1,000, a couple $1,000, stuff like that, and do it like that. So yeah, I'm gonna let y'all go. I know this was a long, like kind of mentorship. I know this is a long one, like 2 hours, but yeah, I hope this was helpful. I hope this was, beneficial for you guys and stuff like that. I hope
Hey, it was good, bro. Appreciate you.
no doubt, bro. I appreciate it. All right, y'all. I'm gonna let y'all go. I know we were here for a minute, and I know y'all like, bro, I'm hungry. I'm trying to eat, trying to get me off here. But all right, y'all. And then I'll see y'all on the live tomorrow as well. All right, y'all. Let's get it. All right. I know this is probably gonna be the least viewed one out of all of them, but I gotta get it done. I gotta get it done. Taxes and preservation. All right, first off, before I even do anything, I'm gonna zoom in on this this disclaimer right here. CEO is not a financial advisor. Talk to a certified tax professional when it comes to taxes, ladies and gentlemen. All right, without further ado, tax preservation. So, trading taxes, the reality. If you are trading futures, right, and you live in the US, not including Puerto Rico, obviously, you owe taxes, right? So futures are taxed at 60-40. So 60% are taxed at long-term capital gains, and then 40% are taxed at short-term capital gains. So this applies regardless of how long you have held the trade. So I linked to an article kind of breaking that down, and I'll actually pull up the article and stuff like that. You can see it. We're just gonna use this image and stuff like that I have, right? If a futures trader is in a 30% income tax bracket and reports a $10,000 profit on trades for the year, $6,000 of that profit will be taxed at 15%, right? And then while only $4,000 will be taxed at the regular tax rate. So I'm actually going to see like what is the current 2026 tax brackets right now for short-term and long-term capital gains. That way we can see what that image looks like, and then boom. I think we'll be able to see it here. Okay, cool. So right here, this shows like, and I think this might be right, but you gotta obviously just check this for yourself. But again, if you're just a single person and you make under $49,000, right, trading futures, meaning if you trade futures and you make $49,000 for the year, right, that means that 60%, I believe so, right? Again, not a financial advisor. 60% of your gains are taxed at 0%. The other 40% are taxed at short-term capital gains, which would be, the regular tax rate and stuff like that. So they'll be taxed at that. That's significantly cheaper. Now, if you make more than that and it's 15%, then, obviously then you'll be taxed at 15% up to $545,000. So if you make less than $545,000, right, you'll be taxed at 15%. But this drastically reduces like your taxable liability like by a lot, right? And I'll show you an example of what that looks like. So again, if 10,000 profit, like 10,000, if you make 10,000 profit, 60% of that is 6,000. 10,000 profit, 40% of that is 4,000. So at a 15% tax rate for long-term capital gains that we had, seen right here, if you were making, over $49,000 per year, right, then you'll be taxed. Then you'll pay a $900 of tax on that $6,000. For $4,000, 30% tax rate, roughly, it'll be $1,200. So you'll pay in total like 21% in this example in taxes, rather than if you were trading options or like straight up, you would just be taxed at 30%. So you would literally have to pay $3,000. Now you might be like, that's not really a big difference. I'm telling you, let me get back to the camera. Hold on. It don't seem like a lot right now. Man, when you, okay. When you're getting taxed at a smaller amount, there ain't no difference between really like 2,100, 3,000. But when it's 21,000 and 30,000, or 210,000 and $300,000, and then you can also do deductions and all that other stuff to like write off different things and stuff like that. There's mark to market, trader's tax status, blah blah blah. There's other things you can do, but this fundamentally makes it much smaller. So this still is like still significant. Like this is really good. Now, estimating your taxes. This is the early stage of that and what that looks like. So while you're still under, around $50,000 in total trading gains, you can kind of keep this simple, right? So what you can do at this level, use ChatGPT or another AI tool to estimate taxes, or at least this is what I would do. I'm not telling you to do anything because I'm not a financial advisor, right? You can use ChatGPT or another AI tool to estimate your taxes. And then here's an AI prompt that I actually created. So you could say you're a conservative tax estimation assistant for futures traders. Your role is not to provide legal CPA or filing advice. Your role is to help me generate a reasonable planning level estimate of how much I should expect to owe in taxes from a futures trading profits that I should reasonably set aside. And then obviously you would just select, you would basically put in obviously the country you live in, the time period, state providence, so it can figure out state taxes and different things like that. What's the total net profit that you made? You can just upload like a CSV file. It's probably going to ask you for like a CSV file from your prop firms or your personal trading accounts. You can upload that into the thing and then kind of summarize your total realized P&L, per account and stuff like that. And then you'll, confirm. So is the income entirely from futures trading, or is it from something else? So this is what I do. So because I was doing, futures and options, futures was the 60-40, options was different. So I had obviously the taxes and like the calculation stuff was different for options versus for futures. I wasn't doing any leaps or like long-term stuff. So none of my stuff was like taxed at long-term. It was all taxed at short-term. So it's kind of simple in that regard, but they were still taxed a little bit differently. So I would just recommend in that part, you just be clear. So if you are trading options, like let it know that in the prompt, or if you're just trading futures, let it know that in the prompt. And then tell it where the profits are from, because if it's from a prop firm payout, that's not necessary. That's more like it's like a service fee, more so because you're doing a service, quote unquote, for the prop firm necessarily, and then you're getting paid and compensated for it. So usually it's like, I think the right terminology for that is like self-employment tax and stuff like that, like, or contractor tax. I think it's like a 1099 and stuff like that. It's basically getting taxed like that. So you got to specify what that is. But basically you can just copy and paste this whole prompt. So you just like Command A, copy and paste the whole prompt, put into AI and stuff like that, and then get the, that estimate and stuff like that. So rule of thumb, in terms of like a rough estimate and stuff like that, under $50,000 of gains, prepare to pay like, 25 to 35% owed in taxes. Sometimes, again, this might be significantly lower. This is definitely a conservative number. For me, it was around, this amount of stuff like that. But depending on where you live, the state and stuff like that, it can actually be tremendously lower. So this, again, like I said, this varies by state and personal situation. So set this money aside. Do not treat it as spendable. Keyword, prepare. Like, I'm not saying pay, prepare, right? Prepare to potentially pay. Everybody is different. So again, filing without a CPA at an early stage, you can basically, like, if you're still, early and profits are modest, you can file yourself. You can. I think I did originally, like the first year, you can file yourself. But then as you, start to, make some more, hire a tax professional. You know what I'm saying? But you can file yourself, and then you can use AI to kind of walk through the IRS forms, understand deadlines, and then calculate, estimated payments and stuff like that. This is cheaper, but requires, responsibility. So again, you must actually file. You must actually pay. Double check your work. I'm gonna say this on screen again. Do not play with the IRS, please. Do not play with them. You can play with the credit bureaus. Do not play with the IRS. Actually file. So I'm telling you, actually file, actually pay your taxes, double check your work. You know what I'm saying? Sometimes I learned that that'll help. what you can do is this, and this is actually really good. I actually learned this myself. You can have a CPA kind of check behind, what you've already done, and that will be cheaper because they aren't doing the work to actually go through all your stuff and, put it all together and stuff like that and figure out what that looks like. You would be doing that yourself. So having them check behind you is cheaper, right? So consulting and helping you do the final steps should be cheaper. So don't let no one charge you an arm and a leg for that, right? I think I had done this once. Actually, no, I didn't do this, but I learned that I could do this. But at that point, I just needed to hire somebody to do it. But yeah, you can basically do this work yourself and then have somebody check over it. Having them check over it is going to be cheaper if you go that route. So, and then after, filing, without a CPA early stage, now I'll talk about when to hire a CPA, right? So this is just a rule of thumb. Obviously, you can hire one before that. But again, once you're consistently above like $50,000 in trading profits, it's time to level up. Because at this point, there's more ways you can save money, with strategies. Therefore, there's, complexity increases slightly, and then there's optimization that, matters more. So what to look for in a CPA? Typically, you want to look for, somebody with experience with active traders and stuff like that. This isn't necessary, but this is, good. Make sure they're familiar with like futures, taxation, and stuff like that. Let them know you're a futures trader. Let them know like this is how much you've done and stuff like that, and just get there. Like, cause you can talk to them and do a consultation with them before you even start working with them to kind of see what they do know and where they are, and then that will also help you as well. Cause you're basically doing interviews and stuff like that with them anyway. So, comfort working with trading incomes. Confirm that they can work with trading income and stuff like that specifically, and they understand that. Not every CPA understands traders, so it's good to have one, who knows, at least enough for that stage and stuff like that, which isn't a lot. I know that once you get like deeper into this rabbit hole, like you start making like hundreds of thousands of dollars and then close to millions of dollars and stuff like that, then that's where you can, there's more complex ways you can start saving on taxes. But here's like a checklist that I created for hiring a CPA. So do you currently work with traders? You can just ask them these questions and stuff like that. It's not really like a right or wrong answer. You just ask these questions and stuff like that. Do you currently work with any traders? If so, have you worked with any traders who actively, traded futures? Are you familiar with Section 1256 for futures trading? For futures trading, this is the 60-40 tax rule I was talking about. And then if you are familiar, how would you apply it to my situation as a futures trader? It's not going to be like a really deep question because if they know about it, it's going to be a simple answer. So it's not like you're trying to like, oh yeah, explain to me what you going, like, it's not really that. Like, it's more so just confirming that they, do know that. How do you treat prop firm payouts versus, personal trading income? So explain to them that side of it. Ask them maybe, do I need an LLC or entity structuring for trading? Like, do I create, like, and this is where, remember I talked about in the beginning, like the very beginning, creating an individual account versus creating an LLC or account and stuff like that. What you might introduce later is creating an LLC and then having an account for Tradovate and stuff like that with your broker, and then do deductions and stuff like that as if it were a business account, and then deduct, like you can, again, if you're doing this, there's a couple ways, I guess, but don't hound me too much. I'm not the best at this, but I'm trying to do my best. But there's the mark-to-market trader tax status. If you're making majority of your income and stuff like that from trading, then you can file for this. And then what this allows you to do is operate like, as a business and stuff like that, where I can deduct my MacBook, I deduct my monitors, I can deduct the things that are reasonable and necessary for trading. So a monitor isn't like that's a reasonable thing. A MacBook, a computer, that's a reasonable thing. A processor or something like that for my computer so that my computer can run faster, so my trading can be better and stuff like that, that's a reasonable thing. A desk is reasonable. A mouse, I got the Logitech mouse, that's reasonable. Like even a desk chair and stuff like that is reasonable. So just different things like that are reasonable, and you can look up and ask, even a CPA, like what is reasonable to know what that looks like. And then ask, do I need to pay taxes quarterly, yearly, and just see what that looks like. And then how you help traders plan their taxes before the end of the year. And then you can break that down like this. Do you help traders plan or prepare for taxes? What information or documents do you need from me to do your job properly? So you can just ask some of these questions and stuff like that. It's not like like this is just basic questions you can basically just ask. Because again, if somebody's like really good CPA or something like that, you'd be straight. Like you just got to ask these questions just to verify. Because there's some people that literally they won't file your taxes, or they will mismanagement and stuff like that. So you just want to be very mindful of this, because taxes are like really important. I'm not even gonna hold y'all, it's important. So yeah, that's pretty much it. Again, like I said, disclaimer, I am not a financial advisor. Talk to a certified tax professional on this. I just wanted to, I guess, give my 2 cents in how I navigate like taxes and stuff like that when it comes to futures, options trading, whatever. But this is basically what that looks like. So you can use this information and stuff like that to kind of help you navigate that. Once you started making some, bread and stuff like that in the market, you want to make sure you navigate taxes and stuff like that properly. So, this section kind of covers that. All right, y'all. So this is the last section. We're going to be talking about building wealth, building long-term freedom after you have navigated the treacherous, amazing, unforgiving path of just trading futures and stuff like that, and just building yourself as a trader. Now I want to talk about long-term freedom and then what building wealth looks like. So can't wait to get into this part. So who this section is for: you've made pretty good money with trading, you paid Uncle Sam your dues, your bills and expenses are handled, and now the next question shows up: what do I do with this money long term? So I have a couple different things. So the first thing I'm going to talk about is wealth, right? Wealth isn't a big number in your account. Wealth is how long you can live without having to work. So here's an example of what that looks like. Let's say after taxes, debt clear, you have $60,000 in the bank or in assets, right? If your monthly expenses is $5,000, that means your yearly cost of living is $60,000, roughly. That's 12 months, right? A year. That means you've bought yourself 1 year of freedom, right? If you think of it from that perspective, like that's what wealth pretty much is. Like just buying ourselves time and buying ourselves life, in a sense. Like you can't really purchase life, but you know what I mean. The more time your money can support your life, the freer you are, because it's on your money, not on you. Because when you're, for example, if I'm working, what do you like even the terminology with working and stuff like that, it's like, what do you do for a living, right? What do I do for a living? If you do something for a living, then watch this. You're exchanging your time for money, so you can use your money to buy you time, right? Because you're buying yourself the ability to live in your house or have your car and have your things. But let's say when you're trading, if I do for a living, I literally put capital to work on my behalf. And then that capital, based on how much I have and stuff like that, buys me or grants me a certain amount of freedom, right? Because again, let's just say if my yearly expenses, for example, is, let's say, for example, it's $36,000 a year. Let's say I'm spending $33,000 a month, right? Well, let's say, that's probably not crazy. But let's just say it's $10,000 a month, right? My expenses are $10,000 a month, and I'm making, let's just say I make $120,000 in one trade. That means that one trade just bought me a year of life or a year of wealth, right? And if you think of it from that perspective, right? So that's what wealth is, or at least my definition of wealth, right? Now, there's a couple things you can do. Like I'll start with this: sustainability. So the goal is, again, go from make money to make money work for you, right? So don't stop the engine. Keep trading, keep compounding your account and stuff like that, and keep applying the same discipline framework, right? But now the point is to invest your capital. So you keep doing the same thing that got you there, and now you're trying to take that money and see how you can make it work for you. And the way you can do that is investing. So like here's where you can invest your capital. I'll say this first and give you this as a disclaimer. There are multiple ways that you can invest your capital. There's multiple ways that I did not mention. I'm only mentioning 2 because I'm not necessarily quote unquote qualified to speak on these things, but I've done these to an extent. Again, I fairly grant myself like smaller in the space of investing and stuff like that compared to other people, like some of my mentors and stuff like that. Like there's other mentors that I have that are really like way better at the long-term investing portion of it, and they understand that better. So I don't like teaching on stuff super deeply that I don't fully have an understanding of. I'm fine with technical analysis because I've been here for years. Now with the long term, I haven't really dug as deep as I could with that, but this is what that overall does look like. So yeah, in terms of the 2 that I'm the most familiar with, long-term investing and then dividend investing, right? Again, like I said, there's several, but I'll speak on 2 that I can, right? So the principle is simple, right? My goal is to buy high quality, Value companies like Nvidia, Meta, Google, Costco, Tesla, what you get it, right? And I recommend, watch Trapping Tuesday. My mentor talks about like high quality companies that he uses, Wall Street Trapper, shout out to him. Like literally his MO is the fundamentals, right? So wait for real pullbacks, like so 10%, 20%, 30% corrections on really good companies. So if, like, for example, if I pull up, let's say for example, I go on the weekly time frame, I'll pull up, let's say for example, let's say Nvidia. Let's say Nvidia. Keep it simple. We got Nvidia, and let's just say, I'm trying to see if I can find an example when we had like a really nice pullback right here. So around April of 2025, we had a really, really big pullback. So from that all-time high that we had a, let me go to my settings real quick and then put that in there, percentage. We had a 43% pullback from the high. We had a peak of 153, we pulled all the way back to 86. Even if you didn't get in there and you got in at 30% pullback or like a 25% pullback, right? Or you invested with this 122 reversal right here as an example, right? With the actual signal, shout out to TheStrat. That's a 27% pullback. If you just park your money in there, like as an example, right? If you parked your money in there at that price, so around $112, let's call it $112, right? I'm gonna lay that out. Let's say at $112, you got, let's just say, for example, you were investing, for example, and then you got, let's say 100 shares, right? Or no, let's say, because y'all made money at this point, 1,000 shares, right? So you got 1,000 shares. 1,000 shares is, well, actually, I'm not gonna say all at once. Actually, I'll say, I'm gonna speak good over y'all. I'm gonna speak good over y'all. Because I think, if I'm not mistaken, $1,000, $10, 100,000. Actually, I'm fine with that. I'll just do 100 for now, just for math's sake, because I can do the math on that. That means you invested. Actually, I'm just going to calculate. What are we doing? 112 times 100. Boom. Not the air mattress. $11,200. Okay, I was right to keep it. I'm gonna keep it. Back to this. 1,000 shares. So that's $112,000, right? So I invest $112,000 into Nvidia. I'm clicking on everything except that, right? $112,000 into Nvidia at that price, right? If the share price, watch this. This is beautiful. If I got in here at the 112 price, right? And price now goes up. Let me turn the magnet tool off so I can put it at the specific price. Actually go on the coordinates just to kind of show you what this looks like. Put it at 112 on the dot. Let's say you get at 112 on the dot. Boom. And then price eventually hit an all-time high. Well, I'll show you where price currently is. Price currently is up 58%. So if you just multiply this, I think by 58%, well, actually, I think it's like 58% or something like that. But let's just say 60%, whatever that is. So I think that's a $65 increase, and you do that across all those accounts. I can just ask it real quick. If I have 112,000 worth of Nvidia shares at 112 for 1,000 shares, and it goes up, I think it was like 58%. How much is it worth now? And I'm gonna see what the Google AI thing says. So now it turns from 112,000 to 176,000. That's a really good return, on your money and stuff like that. And that's something that you can have long term, right? So that's the power of long-term investing. And this is pretty simple because you're just waiting for these type of corrections and stuff like that to happen, in the market on good companies that you like. And then you wait for those real advantages and then obviously strong fundamentals. And I give an example also here for NVIDIA, like waiting for a 22% pullback, 35% pullback, 43% pullback. These are examples of what that looks like. So you can apply the strat to long-term investing too and pair the fundamentals, with that structure. And basically just use time frame continuity and then just get in on quality assets. So this is an example with Meta. I put a chart and I'll zoom this in a little bit bigger. Kind of move this out the way because, But right here on the quarterly time frame, you see we had a 2 down, 2 up reversal on the quarterly time frame in 2023. So when we went 2 up on at the quarter for 2023, and we also went 2 up on the year as well, right? So that means we're bullish on the year and we're bullish on the quarter, right? You could have got that at 142 on Meta, and the current price of it is $640. So you got it in there in 2023. They had a social media empire. They had no debt. They were sitting on a lot of cash. They still had a monopoly now outside of, TikTok and stuff like that. Great fundamentals as a company. And if we had a 2-2 bullish reversal on a quarterly time frame, that happened at the bottom of a broadening formation as well. We had a higher high, lower low, 2-2 reversal. What did we end up doing? Higher high, right? Strictly using the strat, you invest in Meta at 142.39 and hold it. It's now sitting at 640.93. It might be higher than that by this time that we watch it. So let me actually pull up Meta and see what it's currently at. Let's just see. Meta currently at 644, so roughly around the same amount, slightly higher. That is a 450% return in 3 years. That is the power of long-term investing and stuff like that, especially when you pair that with the strat. It's phenomenal. It's chef's kiss. But that's what that looks like. So again, you do the math on what 450% looks like return-wise, but that's over 4x your money, 4x and a half your money over a span of 3 years, which is phenomenal if you have that money invested. Because if you had, for example, if you had $100,000 invested in Meta at that price, it's now worth, or you made a profit of $450,000 over 3 years. So now you should be sitting at like $550,000, for example, if you had it invested specifically just in Meta, right? So yeah, that's what that looks like for long-term investing. Now, dividend investing, this is when you basically invest for a income. So you invest into a company or an ETF or something like that pays an income. So a dividend yield is a stock's annual dividend payment to its shareholders expressed as a percentage of a stock price. So let's just say the stock price, for example, is $1,000 as an example, right? And then it gives a 5% dividend yield. That means it gives roughly $50 per year for you to own the company. So this changes. So like they have like bigger ones and smaller ones and stuff like that. So for example, I'll actually increase this a little bit just so you can kind of see it. But actually, I'll increase both of these because these are kind of small. I'm trying to see this. You know what I'm saying? Let me actually move this down so y'all can see that. I'm over here just doing stuff crazy. But we do, I just deleted the whole thing. Oh my, hold on. How do I undelete? Hold on, technical difficulties. All right, so like I was saying, for these, there's different types, right? I'll give an example where there's a higher risk, higher reward dividend income example. So if you were using like ULTY, right? ULTY, this is the Yield Max Ultra Option Income Strategy ETF. You're like, what the freak is that? Just cook. Let me cook up real quick. What is it brief? It's a yield max fund of option strategies, right? So it generates income by selling options across multiple underlying stocks, assets that it's trading. Much higher income, but it's more complex structure, so it's very fluctuating in cash flow. It pays weekly, and the income can fluctuate. So the price of it currently is like roughly $35, I believe. The trailing annual income per share is $46. So the implied yield is well over 100%, which is, you know what I'm saying? The income math looks like this. So if it was annual income per share, $46, the monthly average per share would be like $3.84 per share. So if you had, for example, $100,000, the shares needed to make $100,000 per year with ULTY only. You would need about 2,169 shares, which roughly equates to you spending $76,000 on those shares, which is really not bad. Again, like I said, this is higher risk, higher reward. So the price fluctuates and stuff like that. So the yield fluctuates. So you have to factor that in, right? But you can make a good income from it. So just obviously it's just having a balance when you're doing that. This is an example of what a lower risk, lower reward one does. So SCHD, this is the Schwab ETF. So this is a diversified dividend equity ETF focused on high quality US companies. The current stats for this one is $31.50 roughly. The trailing annual income per share is $1. The implied yield is 3.3%. They pay out quarterly. So every quarter they, pay their dividend and stuff like that. So if you do the math on this, if you were to make $100,000 per year with SCHD and pay yourself a dividend of that, you would need 95,238 shares, which equates to 3 million. So obviously, again, you need much less for a higher risk, higher reward one. You need much more for a lower risk, lower reward one. But again, it's obviously just a balance of these, like higher risk, higher reward, lower risk, lower reward, just balancing out the portfolio and stuff like that. Again, I'm not the best when it comes to this. There are people that literally do this much better than me, and literally I'm learning from those people. So I'm still learning this too. Because I'm trying to do this for myself. I'm still young, so it's like, all right, bet, let me just put some money in to some of these ETFs and stuff like that to structure out, obviously growth, but at the same time income and stuff like that. But just do it strategically. So I recommend, just get with somebody or learn with somebody that really like has this dialed in. But this is just an example of what this looks like, or at least what I'm doing for myself, right? To enhance your dividend portfolio, you can strategically leverage margin by borrowing against your stock or margin via your broker. However, the whole other thing that, kind of, comes with that is, obviously this is unique per investor, and also you're using margin. This is, I'm not the most, like I said before, I'm not the most well-versed in dividend income, but I'm still strategizing how to build out mine, but this is still something that I'm looking into doing as well. More so with adding the leverage portion. The dividend part, like that part, I understand that part I got. The long-term stocks and stuff, that's cool. But just adding margin into that, you have to be very strategic. So yeah, that's the dividend investment part. So that's how you would basically go about investing your capital and stuff like that. And I'll go over here real quick. You can realistically keep trading the same way for a very long time. And you truly don't start moving the market until extremely high account sizes. So when you start building wealth and you're investing and stuff like that, and you have the ability to still keep trading and stuff like that, what that looks like is literally insane. Like, so if you don't move, and this is so beautiful, I love this part. If you don't move the market, then you can literally increase your contracts and trade the same strategy. If you do move the market, you can increase your contract, but then you have to adjust your strategy in terms of how you do it. So for example, with the strat, at least for futures, you can immediately enter like 10,000 contracts, for example, all at once. So your strategy will have to, you can't, I said it right here, my bad. You can't immediately enter like 10,000 contracts. So if you're trading, let's say I'm trading NASDAQ, right? And right now, when you're entering a trade with NASDAQ, you can trade, for example, 1 contract, 10 contracts, 100 contracts, and you won't move the market. I can place those in the market and it won't make a dent. It won't move the market myself. I won't move the market myself, right? I need at least like 1,000, 10,000 contracts at one time to be able to move the future. So when I say move, I talked about this before, but when it comes to moving the market and stuff like that, remember I said the market moves because there's aggressive buyers or an aggressive seller. So there's an aggressive buyer that's willing to take the offer. So somebody's selling it at a higher price. They're willing to take the offer, right, and buy it at a higher price. Or there's a seller that's willing to hit the bid and sell it at a lower price. So if I want to move price higher, I need to, remember I said, like, let's say there's 10 people, right? Let's say I'm trading price at, I'm gonna visually show this actually just to make it a little bit, easier and stuff like that, right? Let's just say price is at, let's say we're trading NQ, right? And price is at 20,000. Boom. Let's just say there's 10 people that are sitting, that are like kind of selling and stuff like that at 20,001. And then there's like 20 people sitting at like 20,002. And then let me actually try to move this down a little bit. Cool. But let's just say that's basically what it looks like. If I wanted to move price to 2002, like 20,002, I have to get these orders filled. So that means that I would have to place a buy order, right? So I have to take the offer with 30 contracts. When I take the offer, that means I have to buy 10 of them at 20,000, then I have to buy the other 20 at 20,000. So that's the only way to move the market. So when it comes to contracts, right, with trading futures, let me show you this real quick. This is gonna blow your mind. I'll go to cmegroup.com. This is the market. So when you're trading ES or NQ and stuff like that, this is the exchange that you're using to trade. So I'll go to markets. I'm going to go to NASDAQ 100, and then I'm going to go to the NASDAQ futures contract. This is, watch this. I'll go to the volume real quick. This is the average volume and open interest. So volume means like how many contracts are being traded, and then open interest is how many contracts that people are like willing to trade or looking to potentially trade and stuff like that. That's the open interest, right? How many contracts are open to being traded and stuff like that for NASDAQ. This is the average. Look at this. The average. This is January 23rd. 500,000 contracts of volume in one day. $500,000 in one day. 500,000 contracts. 451,000 contracts. 430,000 contracts. 513,000 contracts. It had peaks of $707,000 in contracts. 609. That's a lot of contracts. So in order for you to, watch this, in order for you to move the market, me or you to move the market, we need to be at least trading. I looked this up. We need to be at least trading or at least placing a trade with at least like 1,000 contracts or something like that, at least, in order to be able to move the market. So that means that, so in 1,000 contracts, for example, of NQ, think about that real quick. That's $20 a point. What's 20,000? Watch this, $20 a point. What's 20 times 1,000? What's 20 times 1,000? That's $20,000 a point. Meaning, if you place this trade and you catch 50 points, you made $1 million in one trade, trading NASDAQ. And guess what? You might have barely moved the market, barely. And with 50 points, you catch 50 points, boom, you made $1 million. That's the power of trading that many contracts and stuff like that when it comes to trading futures. It's crazy, right? So with that in mind, again, if you don't move the market, so this is for us, this is for me and you, we don't move the market. So we can increase contracts and trade the same way. This is important because that means we don't have to change the strategy. So how is that important to us? So again, I talked about this already. So the minimum, so how minimum of a big position size would I need to have to affect the market? I talked about this. We at least go between 300,000 contracts daily. So here's a rough idea. We would need, like I said, at least 1,000 contracts. You can look this up with AI or you can look this up on the thing. How much would you need to do to move the market? But again, I already talked about why price moves, right? Price only moves when orders hit the market. So the more orders, meaning the more contracts I use to, for example, take the offer or hit the bid, right? That creates more movement in that direction. The fewer orders, the less movement. So another name for orders is liquidity, right? So NASDAQ is very liquid because a lot of people are trading it and orders are being bought and sold. So under a certain amount of contracts, you won't even move the market because that isn't enough orders. If in order for me to move price from 20,000 to 20,001, that means that I need to fill most likely at least like, I'm gonna just probably spitball and say 300 orders. There's probably 300 sellers, passive sellers, sitting at $20,001. They're passively selling it right there. I need to fill all of those orders before I can move to 20,002, right? So think of it like that. So again, 10 contracts, generally, this size would have a minimal impact on the market. 100 contracts, this is relatively small, and in context of daily trading volume and stuff like that, and you would likely have a negligible effect. 1,000 contracts, this size can start to influence the market, especially if executed in a short time frame. But would it be considered a moderate trade? Keyword moderate? Yes, it would still be considered moderate. Now, 10,000 contracts, this size is significant because that represents almost like 5 to 10% sometimes, 5 to 10% roughly of the trading volume in one day, depending on the type of day we're having, right? This size is significant and could noticeably impact the market. particularly if executed in a short time frame. So if I place all those 10,000 contracts in one trade, right, then that's going to start affecting it. But let's ask the question real quick right now. If, let's say, 1,000 contracts starts affecting it, right, what's the margin that you would need per contract if you're trading in queue? You would need, let me get back here. You would need 1,000 contracts times $1,000 of margin per contract. That's you need to at least have $1 million in your account. And technically speaking, if we're using the rule of only using 10% of our account, the same way we did to grow our account, if we have, for example, if we have $10,000 account, you should only be trading at least 1 NQ contract or 10 MNQ maximum, 10% of your account. So technically speaking, you need to be at 10 million, technically. And even that's still kind of crazy because if you lose that on trade, you lose 10% of your account. That's $1 million, right? So you need at least 10 million in your account to even be thinking about putting 1,000 contracts on and moving the market. So that means, as a rule of thumb, and I created this, as a rule of thumb, if you're making, right, this is so crazy, if you have less than $10 million, that means you can keep trading. If you have a strategy that works, you can keep trading that same exact strategy and not change it. And the only thing you have to do is increase contract size and increase the mental fortitude to handle that much contract size. That is the only thing you got to do. When you think of it like that, that is so beautiful because you don't have to reinvent the wheel. If anything, you keep getting better at it. So here's an example, right, of what that looks like. This is an example of trading the strat, right? We have a higher high. What do we have? We have a higher high that's created. We have a 322 actionable signal. This is a 2-2 reversal to the downside, and we take out that low to finish off the broad information. That is a 200-point move. That is a 200-point move. My bad, I'm not sharing my screen. That's a 200-point move. We have NQ, 15-minute, right? This is crazy. This is crazy. This is crazy. We just talked about this. 10 contracts won't really move the market. 100 contracts, 1,000, yeah, that'll start moving it. 10,000 is like, all right, that's gonna start moving the market. 15, just trading the strat. We have a higher high, lower low. We have a broad information. We have continuity at that point, and we have an actionable signal. That is a 25-point stop loss. That is a 200-point take profit. We go over here. If we had one contract of NQ, our stop loss, because it's $20 per point. Remember, NQ is $20 per point. So it's $20 per point for whether it goes against us or in our favor, right? So 1 NQ, that means our risk on this trade would have been $500. Our take profit would have been $4,000. For 10 NQ, our risk would have been $5,000. Our take profit would have been 40 grand. For 100 NQ, our stop loss would have been 50 grand. And our take profit would have been $400,000. If we had 250 contracts of NQ, our stop loss would have been $125,000, and our 200-point, we would have made $1 million in a trade. $1 million. What's that guy? He take the glasses and he throw them, right? I like these glasses though. But $1 million in a trade. And watch this. Remember I said 1,000 contracts starts to move the market. That means, technically speaking, you can make $1 million in a day trading futures and no one would even know, like in terms of like, because you wouldn't move the market. Because you could say, oh, who just put that big order in to move the market? But you wouldn't be that person. You could have made $1 million and coasted by 250 contracts. You could put those all at once and you're not going to really move the market like that. And you could have made $1 million in a day and nobody would have known because of what you're trading specifically. Now, obviously, depending on the thing you're trading and stuff like that, it will be harder to do that. But again, with NQ, it's very liquid, so you can do that. But that's the power of just the contracts and stuff like that, and the fact that you don't have to change your strategy. So that's why I wanted to kind of drill in when it comes to building long-term wealth. Keep sustaining this. Keep trading. Keep compounding your personal account, and apply the same discipline framework to do that. Because you're not going to move the market until you hit 10 million. So watch this. If you're below 10 million, then you can keep doing the same thing that got you there and just increase your contracts and keep taking the same type of trades. And that's all you got to do. Now, once you start making like all this money, you start going crazy in this market. and you start investing that capital and stuff like that, then I recommend, again, you get into philanthropy. Like, again, once money is no longer a problem, meaning becomes the question. So at this stage, trading should serve, your calling, your family, and just other people that's, in your life. I'm just a firm believer in that. And that might look like you building a business. That might look like you funding a ministry. That might look like you giving back. That might look like philanthropy. That might look like taking time away to reflect. That might, sometimes, the most productive move is to step away, travel, and get clarity. I love doing that. Even if it's just simple things of me just going on a walk, or if it's like, all right, you know what, let me go to Miami, or let me just go on a trip. Let me just go somewhere just to step away for a little bit and then come back and then recoup, right? I love doing that. Money gives you the freedom to think, right? And just give yourself that space to be creative as possible, right? And after a certain point, wins don't feel the same. You get used to them and they stop fulfilling you. Right? This is strictly my personal philosophy towards wealth creation. You can take this with a grain of salt if you choose to, right? What replaces that fulfillment is service. Helping people, teaching people, building something that outlives you. Like, that's literally why I created this video right now. Like, literally, I was like, let me be honest with y'all. Like, I literally took a break from just making videos and just trying to trade all the time and just all that stuff. And I was like, let me just sit still and see, like, what do I want to do that really brings meaning and stuff like that, that would not challenge me, not just challenge me, but like also just stretch me as much as possible and just try something new, right? And I wanted to like do this because like most people, like, they're charging you for courses, for information and stuff like that you can get on YouTube. And we have the notion that, oh, I can just get on YouTube, I can get on YouTube. Where can you get it on YouTube? Where can you get like this type of stuff on YouTube? I don't see a lot of the stuff where we go through, bro, I've not seen a video yet for trading where it's going in depth from beginning to end, starting like what the heck are futures to what the heck do you do with all this money that you made from futures, including taxes, including like what to do with your capital and stuff like that, and then scaling past that. Navigating the psychology, but also navigating the technical aspect. Like, I wanted to make sure all of that was included in this because that's the totality of what long-term freedom looks like. So again, this is just my personal philosophy, but I hope you just like try that. So even if you don't do any of these yet, at least take some time to reflect on like what you could do or what you could provide to the world that can outlive you. Like this video that I'm about to drop right now, I know that this is going to outlive me. There's going to be like, I'm going to be minding my business somewhere, and there's going to be somebody that watches this video and they're going to watch it from the beginning to the end, and they're going to apply everything that I said. And they're going to make money from this, and they're going to use this to be like, to, for example, create a church, or they're going to create a business, or they're going to give back to people, or they're going to be like giving back to the homeless and stuff like that, or they're going to be providing for their family, or they're going to be providing for their children, or they're going to start investing for their children and creating a custodial account for their children to invest for them. And they're going to be able to do that because of this seed that I planted with this. And this is going to be probably a long video, not going to lie. But I know that this thing is going to be very powerful for somebody if they apply everything that is talked about and taught inside of it. So again, like, I'm not even going to like just try to yap and act like I got anything else. Like, this is it. Like, this is the blueprint. This was everything that I wanted to, kind of cover for you guys. Again, like how to hit your first 10K. Literally, like, I talked about what to trade, futures, the trading paths you could take, setting up your platform, learning the charts, learning the strat, figuring out what archetype is for you, creating a strategy, testing the strategy, going live, getting your first win. And then from there, how to scale with platform accounts, how to scale your personal account, the growing pains of actually scaling your accounts, and then how to keep your money, and then also how to get freedom from it. I want to make sure I cover literally every single basis of like, what the heck do I do to now what the heck do I do now that I made all this money? That was my goal with this video, and hopefully I accomplished that. So yeah, like, I hope I just did the best job that I can. I hope that you got a lot of value from this. Like, drop in the comment section if you feel like there was anything I was missing or that I can touch on better. And then I can make like other videos and stuff like that that can support this if possible. But yeah, I pray that you stay blessed. I pray that you use everything that I talked about. And if there's one word of advice I would give you, it's not give up, and that you just keep pushing. Like, literally, just trading doesn't have to be hard. It's already naturally difficult because of the emotional aspect, but it doesn't have to be, right? You just have to put in the work in a strategic way And that will allow you to navigate these ups and downs and stuff like that. I wish I had this information, stuff like that when I was first starting, but I'm glad that I get to give that to you right now. And I hope this was valuable for you. And yeah, apply this, make some money, and show somebody else how to do this. Spread this and show somebody else how to do this. If you found this video valuable and stuff like that, and you see other people that's not really giving this type of game and information and stuff like that, share this out with them. It's free, it's on YouTube, so share this out with them, and so they can see how to also do this for themselves. But yeah, I hope this is valuable, and yeah, I'll see you when you make some money. Peace. All right, y'all, so that concludes the video. If you watch this thing to the end, I'm genuinely impressed. You know, this was definitely a lot for me to create, so I know this was definitely a lot to, you know, kind of consume. So yeah, just actually, hold on one second. I gotta move outside because that lighting is terrible. My bad, the content creator part of me. What was I saying? Yeah, if you were watching this thing all the way to the end, shout out to you, because man, this was a lot of content to create and stuff like that. And honestly, if you went through this whole thing, I genuinely think, like, not even gonna lie, I think you're somebody that I want to work with. And I know I talked about the mentorship a little bit in the videos, but I'll give a little bit more clarity in terms of like how the mentorship I have it structured. So it is one-on-one. You get my personal number, you get personal access to me, and then our sessions are going to be centered around 3 core things. So the first thing is going to be crafting the strategy to you, and then overcoming like what are the psychology things. So if you're dealing with fear or dealing with greed, we'll attack that specifically for like how it's affecting you and affecting your trading. Number 2, the goal of phase 1 is to help you be able to get that profit cushion. So whether you're doing payouts, like with prop firms, I'm gonna help you get your first few $1,000s or build up your personal account to a couple $1,000s, so that way you have a profit cushion. And then from there, the next thing we're gonna pretty much do is help you scale, right? So, because again, once you have the strategy, once you have a profit cushion, scaling is literally just doing the same thing that got you there in the first place, but just doing it at scale with more contracts and stuff like that. So that's how I have the mentorship structured. If you're somebody that kind of wants to fast track this process of implementing all this stuff and you feel like you need hand holding or that accountability, I would highly recommend you know, you apply. You can actually, I'll put the Typeform link in the description of the video so you'll be able to see it. Just fill it out, be honest. You know what I'm saying? And then I'll look over it, and then I'll be reaching back out to you, or you'll be able to see like a calendar link to schedule a call with me. If you have questions though, I'll put my Instagram in the description so you can just reach out to me. I run my Instagram. I don't have anybody else running my Instagram. It's just me. So literally you can reach out, we can chop it up and stuff, and then yeah, I can answer your questions. But no, I created this video literally for the people that can't necessarily work with me one-on-one or might not qualify to work with me one-on-one, but I still want to provide that information and like the tools and different things like that of what it takes to literally go from I don't know how to trade futures to now I know how to trade futures. But if you want to work with me one-on-one to implement all this stuff that we talk about and then some, I would love to work with you. So yeah, you can just hit the Typeform in the description of the video. And yeah, everybody else, like, comment, subscribe, and yeah, I can't wait to see you in the other videos that I get to post and create. And I'll make sure to, this is gonna be fun to edit, not gonna lie. This is gonna be a lot, but it's gonna be fun to edit. So I'm gonna get on editing this, and then yeah, if you're seeing this, the video is done. And yeah, I can't wait to work with you one-on-one if you choose to apply. Let's get it.